Very good morning. You're watching India Market Open, and this morning is all about Trump and the trade deals. He's, signing off those deals with everyone. We're still waiting for our turn. India ka abhi baki hai. But one pattern, guys, and I don't know what you think, is that he's ending up lower than what was promised on August 1st, but higher than what was initially expected. So, for example, Japan, instead of a 25%, you have a 15%, but then the hope would have been around a 10% comfort. That base case of 10% is not there. The base has lifted. So I think that's one thing to keep in mind, even when we're thinking about in context of India, that we might settle between 15 and 20%.
Yeah, it was 25, right? It was 25. Sorry? Earlier it was 25.
For the expectations you're saying from
which earlier?
Which earlier?
The real earlier or
the actual earlier?
The fake earlier.
The fake earlier was 26%.
26%.
Yeah. But Japan 50, and by the way, Nika is up and about, and I know we'll talk about that, but there's some talk of a 19% tariff for Philippines. Vietnamese stocks are doing very well because there is trade deal optimism there. Besant has China tariff truce in Sweden next week, and hey, India, UK. There's something brewing.
So the India-UK deal has already been announced, but the details are yet to come. So we don't really know, and the Prime Minister expected to be in the UK. I think he lands tonight, midnight.
Very close to midnight, yeah.
Our time. And then we'll have some clarity on what's happening there.
So Trump ne bhi kiya aur Paytm ne bhi kiya.
Paytm is a different story, I think.
अच्छा वो tagline के हिसाब से आप बोल रहे थे Paytm करो. Okay.
No, I think for Vijay Shekhar Sharma today, that one very famous clip of his where he's dancing at an office party comes back and says, how the world takes a 360-degree turn. So today is the day where he can actually come out and say, I deserve to break into a dance. I mean, turning a profit, going PAT positive for the first time. And such optimism there. So yeah, is Paytm going to be the eternal of the day? Yeah, all that and more on the show. But let's just start with a quick global update of what we saw overnight. So it was a mixed day of trades in US market. Nasdaq dropped as chip stocks did take a hit. And let's pull up those indices. The trade deals came actually after markets closed. So you saw some impact on futures. But you saw the Nasdaq down and S&P 500 and Dow Jones actually up in the green. Trump has announced the largest ever trade deal with Japan. He's calling it the largest ever deal. US tariffs on Japan will now be at 15% versus 25% earlier. This is what he posted on Truth Social. Trump says, we just completed a massive deal with Japan, perhaps the largest deal ever made. Japan will invest at my direction $550 billion into the United States, which will receive 90% of the profits. This deal will create hundreds of thousands of jobs. There has never been anything like it. Perhaps most importantly, Japan will open their country to trade, including cars and trucks, rice, and certain other agricultural products and other things. Japan will pay reciprocal tariffs to the United States of 15%. I think the big relief here for Japan is that it's a 15% flat on automobiles, one of their biggest exports to the United States. Now, bond yields have moved lower ahead of the Fed interest rate decision next week, 10-year at 4.36%. Oil prices did drop as uncertainty persists. There is no clarity on the final numbers and what is happening with which country. So Brent was below the $69 mark. As far as Asia is concerned, it's all about Japan. Maybe Prime Minister Shigeru Ishiba has got reprieve, an extension, thanks to Donald Trump after that trade deal with the US. Asian markets are in the green. Nikkei also zooming over there. Come off now a fair bit. But remember, for Mr. Ishiba, it's since he lost majority in the upper house and said he will stay on to complete the trade deal, this could be some kind of relief. I'm going to pull up the implied open for India as well and tell you what's happening there. We look like we're opening in the green. 70 points up. We did that yesterday as well, but the slew of really dismal earnings which came in closing changed that mood and soured that mood. Now I'm going across to Seth Freeman, Senior Managing Director at Glass Ratner B. Riley, joining in live from California. Just get his sense about this latest slew of trade deals that are being announced, especially the one with Japan. Seth, great to have you on. As always, does it seem like there will be a settling, but perhaps higher than the earlier mark? The 10% base case seems to have lifted to 15% as far as tariffs are concerned?
Well, it's important. I want to point out at the very beginning here that Japan has had a 0% tariff on U.S. automobiles prior to all of this. So all of the noise about Japan has nothing to do with cars.
So, okay, but the implications of that, it seems like more deals are being struck, Seth. And so therefore, I guess from our perspective in India, where perhaps one of the only major economies that is still waiting for a deal to be struck. And so the sounds are all right. And there is anticipation that there will eventually be a deal struck, but we're still waiting.
Right.
Do you say directionally that the things that were worrying the street and global investors are getting mitigated somewhat? Of course, Donald Trump continues to attack the Fed chair, but the market seems to be seeing through that as well.
Absolutely. Anything that can help reduce the uncertainty and especially, I would say, the volatility of various tariff rates is very positive, not only for the U.S., but for the global economies, because we saw the kind of disruption when the original tariff tantrum was announced several months ago.
Seth, so of course the Nikkei is reacting duly to this deal being reached. I was reading on one of the global websites that Vietnamese stocks are also up on the optimism of the trade deal. Could it well happen that as the deadline nears, a flurry of these get announced and equity markets by and large take that constructively and positively?
Yeah, I think the U.S. government's been working very hard to try to close deals by this August 1st deadline, because it's not helpful and it doesn't look good for the administration to have not achieved many deals. So I guess we could look at the Japan deal and hope that this is a sign of some momentum, which would obviously, should a deal be cut with other emerging markets countries, that would be very positive.
Just to come back to the point that you first made, that tariffs on imports from Japan into the United States on automobiles used to be 0. It will now be 15%. So if I extend that to India, we're hoping for a favorable deal. Maybe we land at around 15%, 10% is the base case. But if you compare it to what the tariffs were, the average tariffs were, it is going to be a hike. Do you see that as a negative impact coming in at some point or the other?
I think any increase in tariffs is negative. I'm a free trader myself. I worked actually in helping pass NAFTA years ago when Clinton was the president. It's just negative. However, what's most important is getting this resolved, so at least all the countries and importers know what the rules are.
So much, Seth Freeman there, speaking on what we can really, expect going further. I just want to quickly pull up the Asia rates once again for you and tell you what's happening there. There we have the right rates now. Nearly 3% up on the Nikkei, Shanghai, Hang Seng. And just on the basis of that, maybe you can expect a slightly better start for us, because that push coming in and that momentum coming in.
Yeah, I wonder whether that will pan out. And I was trying to find the implied open was 70 points in the green. Was that right? Yeah, okay, so 70 points in the green, that could be a good start for the Indian equity markets. The question is, does it hold? And let's talk about what happened in trade yesterday. First, as we normally do, let's start with the fund flows picture. And foreign institutions selling to the extent of about 3,500 crore rupees, more than mopped up by domestic institutions. But let's talk about the benchmark. It ended marginally lower in a pretty listless session overall. Of course, there were big movers in the underlying constituents of the benchmark, but the Nifty itself did not move too much. It stayed above that 25,000 mark, but dropped about 0.1%. It remained within a 150-point range through the course of the session. The broader markets underperformed, but the losses there as well were not too large. 0.5% for the mid-cap index, about 1/3% or so for the small-cap index. Eternal was the stock of the day, gaining over 10%. And it contributed 44 points to the Nifty 50 and balanced out the contribution from Reliance Industries. So Reliance on the downside contributed about 20 points or thereabouts, 23, 24 points, more than made up for by the surge in Eternal. ICICI Bank and HDFC Bank continued to contribute on the upside, and interestingly, all the other constituents of the Nifty Bank ended in the red. In fact, most sectors ended in the red, and PSU banks were the biggest losers. I'm not counting media really because of the kind of constituents. And of course, Z lost ground yesterday, but PSU banks ended lower by about 1.6%. Realty and Pharma also lost ground about 1% each. IT lost on a second day on the trot. I wonder what the reaction will be ahead of Infosys and also on Thursday after the Infi results. But as things stand, yesterday was a bit of a weak session. I wonder if that turns around today.
Yeah, I mean, one would suspect that the trade deal momentum, and they're just reflecting on what some of the Asian markets are doing because of that, could actually aid the sentiment, despite we've actually seen fairly range-bound Nifty activity, right? Support at 24,900. Yesterday from the highs, we actually came off a little bit. So maybe we're seeing range-bound activity for the Nifty, but this sentiment could be aided by this trade deal momentum and what's happening. And while rightly so, in the initial half of the earnings season, we were talking about how earnings is looking tepid. I'm just trying to extend that argument to the broader end of the spectrum. And yes, we are seeing a Blue Jet and a Good Luck and some of the other disappointments. But Eternal, much better. Paytm, much better. So some of the cable and wire companies, exceptional strong numbers, even in Havells, embedded in this whole disappointment for Havells, the cable and wire division actually did much better than what was anticipated. KEI today is looking good. Polycab looked okay, the numbers that were the initial estimates that came out. So that segment too. So I think the non-Nifty names, we're actually seeing fairly decent numbers.
Let me add cement to that list of yours. Dalmia Bharat
Dixon did well
today. Yeah, Dixon, okay, but then Dixon is one of those, how high can you go, and the expectations are now sky high. But
But the reportage numbers
are not bad.
Seems to be okay. So we're actually not seeing necessarily a bad earnings season. We're seeing a mixed earnings season for now. And it'll be interesting to see as the two heavyweight banking names have come out, as some of the others come out and SBI comes out, do we see banking perform well, and then eventually metals and auto, all eyes out there. But so far, I mean, the last few days have been pleasant, and just that pocket, I just thought, Tamanna, at cement, we spoke about it as well, but cables and wires, guys, there's something out there. The space got smashed because of the entry of a large corporate, right? Adani is coming in. But the numbers thus far are looking okay. And maybe the street may want to reward those stocks again. So it could be very interesting.
I would say the verdict is still out on results because, yes, you have some good ones that you've highlighted, and then you've had some complete howlers as well. So we'll have to wait.
Axis, Lelo, some of the others, Lelo, there have been bad ones as well.
So
but
I wonder
recently.
I wonder if it's a case of a few very large companies, and RIL wasn't the best set of numbers either. Axis was bad. And so some very large, eye-catching numbers that have been bad, and so it draws attention away from quite a few smaller companies that are doing reasonably well.
A lot of small companies have also done badly and have had bad set of results.
We'll have to do a scorecard.
We'll do a scorecard because that's the best way to actually figure out where we're landing up, and that will keep getting updated as well. But what are the other factors to watch today? Of course, results continue to be in focus. Tata Consumer will report. You have quite a few big ones which will report. Right now, I think the action will shift to FMCG because your large consumer staple companies start reporting, and that is one space that you could see perhaps perking up. Meanwhile, the Nifty is remaining under pressure. Analysts are warning of a potential slide below 24,900 after being rejected near the 25,200 mark. Persistent selling pressure and weakening technical indicators suggest a cautious outlook. 25,000 is the psychological support. Now, a breach below this could open the door to 24,900. On the other hand, if the Nifty reclaims and sustains above the 25,250, 25,350 zone, buying interest may push it towards 25,550. The RSI is below 50 with a bearish crossover. For the Bank Nifty, also appears to be in a consolidation phase, failed to sustain above the 20-day EMA. As long as the index holds above the 57,000 mark, a sell on rise strategy remains advisable, with downside targets placed at 56,000, 55,500, resistance at 57,140, support at 56,680. So those are the broad levels that you could look at. But let me go across to Puneet now for the F&O setup.
Well, thank you for that. So definitely the Nifty, Bank Nifty, as you rightly pointed out, maintaining those key support levels as of now, about 25,000, and we seems to be sustaining that level. We've seen, open interest just be down by 0.4%, but on the Nifty Bank as well, post all the news flow that has happened over the last 2 days, reactions to HDFC, ICICI, as well as the management change in Bajaj Finance, that seems to have been digested by the market. We seem to be at 56,700, 56,800, those levels. And we seem to be in the middle of the 2,000 point range that we've been talking about, between 55,500 as well as 57,500. But going forward, we will need another positive leg up. That'll be something to watch out for, at least in the next 2 to 3 months. What could that be? But at least on the earnings front, we largely seem to have come out unscathed. And maybe it's the SBI earnings, as you guys rightly pointed out, could be the next fillip of growth for the Bank Nifty. On the options, largely, the foreign investors hedging their bets here. Index as well as Nifty options has seen some buying from yesterday, but not enough to move the needle in the index long position as well. Because of that, our foreigners has been maintained around 14%. It is consistently falling since we started the expiry, and with the expiry tomorrow, we might largely see this go up again on Friday as well as on Monday with the new expiry coming in. So foreign investors largely using this as a hedging instrument, and on the PCR as well, it's largely maintained at the level of 1, which is neutral for both puts and the calls by foreign investors. When you look at something like the open interest distribution, and here is where the interesting aspect is, because for the calls, they've again continued to have that steady momentum at 25,100 and 200. 25,500 remains the key support in terms of calls, at least in terms of the higher end. So we could see some kind of positive momentum, if any, to come at that level. But we're long away from the 26,000 mark, which we saw a couple of days ago. So that will be the key aspect. When you look at some of the key stocks, open interest gainers, we're seeing some kind of short build up in 361. And this was largely on the back of a block deal yesterday. Delivery as well, seeing some kind of long build up along with something like an Eternal. And the open interest isn't enough to move the needle, but it was the results yesterday that drove the performance. In terms of open interest losers, finally, if we can put that up, we've seen short covering across a bunch of stock. Paytm might be again in focus, something like KFin Tech as well. So overall, we seem to be maintaining those two support levels of both on the Nifty and the Bank Nifty, indicating an implied open of 64 points. But largely, it's positive of being about 25,000 with the end of the expiry tomorrow.
Okay, so largely positive with the end of the expiry tomorrow is something that we can hope for. 65 points up on the imply. Let's talk about stocks. Paytm in focus. Will it be the eternal of the day? Maybe, maybe not. Well, it's a thumbs up on the basis of numbers. The top line growth is muted, but in line with estimates. It has turned EBITDA and PAT profitable. So that is exciting for the company. The only fly in the ointment is that this was being penciled in. So you have seen a bit of a run up in Paytm already. Does that continue is the question. Operational efficiencies are playing out. No mention of adjusted numbers, and they're expecting margin improvement going forward. I think these are some of the key factors. Now, what are the reasons for the turnaround? So EBITDA and PAT have turned profitable due to AI-led operational leverage. I thought this was important because, you're seeing real life proof of concept of how AI can actually help companies' balance sheets. Better cost structure and higher other income, of course, also helped. Revenue from distribution of financial services is up 100% to 561 crores. Distribution of financial services was driven by an increase in merchant loans. Trail revenue from DLG portfolio and better collections. Marketing expenses were down 65%. ESOP costs were down 88%. So that is aiding profitability. So the top line, of course, in line with estimates. Margins have beaten estimates. Profit has beaten estimates. Here are the core numbers. Revenue grew 0.3% versus 3% estimate. EBITDA at 71 crores versus an 18 crore estimate. Margins at 3.7% versus a 0.9% estimate. And PAT has been positive. Other income at 241 crores. A lot of notes on Paytm today. I'm just pulling up Citi. They've maintained a buy, hiked the target price to 1,215 from 975. They say it's a solid EBITDA beat on continuing cost efficiencies and healthy merchant business. Consumer business, while recovering, remains relatively tepid. Lower estimates as we remove UPI MDR from estimates, raise valuation multiple to 50 times from 35 times earlier on significantly lower policy-driven downside risks. Now, you'll hear from Vijay Shekhar Sharma and you know what he said on the con call. This is an old picture. This is an old video of Vijay Shekhar Sharma. And guys, you'll remember that at the worst times of Paytm, this was being used to troll the man. Today, he deserves that jig.
Yeah, I wish we could play the music as well in the background.
I wish he comes and speaks to us. Come on, Vijay, that, you know, let's come and do an interview on this turnaround. All right, KEI Industries is the other one that we're talking about this morning. It's a thumbs up. Numbers are in line. Strong revenue growth led by institutional and dealer network. Strong export growth as well. Here are the numbers. Revenue up 25.4% to 2,590 crores. EBITDA is up 18% to 258 crores. Margins have been flat, I would say, 10% versus 10.6%. So a bit of a pair down there. Net profit is up 30% as well. So cables and wires is what has done well. 827 crores versus 653 crores. Cables and wires in the dealer end is also come up at 1,326 crores. Morgan Stanley is maintaining an overweight with a target price of 4,300. They say in the first quarter, their strong execution, PAT beat is reflected in the strong cable and wire revenue growth and higher other income. Implied CNW, that's cable and wire volume growth, could be in the 20 to 23% range. Exports were stronger than our expectation. I have 3 thumbs ups today, United Breweries as well. So key takeaways over there, of course, strong volume growth, market share gains seen despite short summer, premium products driving growth, gross margins contracted, higher marketing and staff costs have impacted EBITDA margins. So here are the core numbers. Revenue down 15.7% at 2,864 crores. EBITDA is up about 9%. Margins at 11% versus 11.5%. Net profit up 5.9%. But the reason it's a thumbs up is that overall volumes have grown 11%. And look at the premium segment revenue. That's actually zoomed 46% year on year. CapEx has also stood at 140 crores. And of course, there were some costs and operational costs which hit the margins.
Absolutely. Well, so 3 thumbs ups. I'm going to start with the thumbs up as well. And for those that remember Sachin batting, there used to be this feeling of obviously you would understand the amount of scrutiny that he experienced, but this feeling of hope and the margin of error for Sachin was so low. He had to go out and score a century every time, right? And if he didn't, then it was a disappointment. I guess to a certain extent, Dixon Tech would be feeling that because
I was wondering where this is going.
The kind of pressure that they're feeling, right? Any miss from where they are sitting would be performance pressure, 100%. But they've actually managed to deliver. And take a look at some of the takeaways, right? You have the numbers that have beaten estimates, strong growth in the mobiles division, which has driven the revenue growth. Margins have been maintained at 3.8%, which is also a key positive. The new lighting JV with signifiers also set to help that segment, and the component acquisition and JVs are set to drive the margin story over the medium term. What are the key numbers? Revenue is up 95%. The EBITDA is nearly doubled as well. The margin is steady at 3.8%, and the PAT number is up 68%, 225 crore rupees. Now, if this was a one-off, then it would be amazing. But the thing is that they've actually managed to do this consistently over several quarters. And so as a result of which, a lot of people have said that it's difficult to sustain. There are a few exceptions. Investec is one of them. It's maintained a buy with a target price of 20,000 rupees. It says it's a strong Q1. The results have allayed competition fears. The Q1 is actually 2 to 4% ahead of their own estimates and 6 to 7% higher than consensus. The management sounded confident, they say, of mobile volumes continuing to ramp up. And with Dixon focusing on components, it is strengthening its competitive positioning and increasing customer stickiness as well. The forecast for EBITDA and PAT CAGR over the course of FY25 to 28 is 38% and 41% respectively. So 41% PAT CAGR. Of course, it's lower than what it has experienced in the past, but it's, remember, a pretty high base based on what they've grown at, right? So watch out for this in trade today. It should do well. Bear in mind that it's still trading at about 16% below its 52-week high. Dalmia Bharat from the cement pack is one to watch out for. Another good set of numbers for a cement company. Margins have improved sharply on lower costs. The EBITDA margin stood at 24.3% compared with 18.5% last year, 19% in the Jan to March quarter. The EBITDA has risen 32% to 883 crore rupees, but the revenue has remained flat. The net profit rose 179%, but bear in mind that there was an exceptional loss in the year-ago quarter to the extent of 113 crore rupees, and that is deviating or exaggerating the number somewhat. There is a note on Dalmia Bharat. Morgan Stanley is maintained an underweight with a target price of 1800. It says that the strong pricing has driven outperformance, and it looks like the company has prioritized realizations at the expense of volumes, and that kind of explains that revenue picture. This was supported by strong pricing environment in the home markets, especially in the southern region. So this is certainly a stock from the pack that you should watch out for. Cement space has been buzzing. The last stock is Credit Access Grameen, and this is a stock that is continuing to see consolidation. This is a thumbs down based on the numbers, but things are improving, albeit a little slowly. Consolidation seems to be continuing as the company attempts to improve its asset quality. The total income has dropped. The net profit has fallen 85% year on year. The net interest income has dropped as well. The impairment has risen to 572 odd crore rupees from 175 crore rupees in the comparable quarter. Asset quality has improved marginally. There are a few other takeaways as well. The ROA, the return on assets, has improved just a tad bit, but it still remains much below what the company has been guiding for. Incidentally, the NIM, the net interest margin, has dropped on a year-on-year basis but has improved marginally on a sequential basis. The ROA stands at 0.9% versus 0.7% in the fourth quarter of FY25. Just a couple more points. The credit cost guidance is 5.5 to 6% in FY26. The ROA guidance is actually moved up quite significantly from where they are right now to 2.9 to 3.4%. This is something that they experienced, if I'm not mistaken, only in FY24, and it dropped off very considerably over the course of FY25 as they continued to guide lower as the asset quality issues that they were facing it got exacerbated. But some of those markets, those key markets, are improving, and so one might argue that if it's not necessarily the worst over, it is heading in that direction at this juncture. But at least now, for now, the numbers are a thumbs down.
Okay. Well, I've actually a good number to start off with as well, signed DLM. And the reason I thought it good was, I mean, there are 2 or 3 takeaways within. So revenues were up about 8% YOY. Margins at 9% versus 7.8%. Not a big beat or any stretch of imagination, but decent margin. And the margin expansion was led by a better business mix because aerospace was a higher percentage. Aerospace was about 40% of the mix, which is actually what helps Science margins. Now, order intake was about 5 billion or 500 crores, which is the highest quarterly order intake in the past 10 quarters, which is actually very good. Then net profit was down 30% because of higher accelerated depreciation and use of the IPO proceeds happened. So the other income came off, but they've also guided for a revenue compounded annual growth rate of 30% over the next 5 years. So ticks most of the boxes, but for the PAT number, let's see if the street rewards it. The second one was Blue Jet, which was down 10% yesterday. Or was it less than 10? Yeah, no, it was down 10% yesterday, even at close. Now, what happened is that there were one-offs, and which is why I thought it was important to highlight what brokers are saying about Blue Jet. Because Macquarie and MK both came out with the notes. So MK says that the Q1 FY26 top line was ahead of the street's estimates, but the EBITDA undershot expectations on account of a QOQ decline in gross margins. Now, the point is, both Macquarie and MK say that they expect a reversion in gross margins to 53% in the second quarter. So it was a one-off, it will get reversed, and then uptick in utilization in a dedicated capacity set up for an intermediate, would be the key driver of near-term earnings performance. I think both brokerages have a constructive view on Blue Jet Healthcare, so keep an eye out for this one. Lastly, JSW Infra, the other set of results of yesterday, expensive stock, but the numbers look okay. 21% uptick in revenue, margins at 47.5 versus 43, net profit up 32%. There are not too many players in this space, right? I mean, JSW Infra is a smaller version of what Adani Ports does, and then there's just very few such large infra players available. So maybe the street gives a thumbs up to these numbers despite the valuations. The numbers are good, just that the valuations are a bit stretched. So watch out for this one. But certainly, or rather not certainly, maybe an uptick in Blue Jet or a reversal in Blue Jet, maybe. Though it was down 10%, and signed DLM from this list certainly looks okay.
Quick follow-up on signed DLM. They had problems. Would you say, based on what you've seen, that they might just be turning the corner?
I mean, the order inflow was very strong. They are very confident about their guidance going ahead on the revenue front as well. If they hold up on the margin front, then yeah, could be okay.
Interesting.
All right, so many results to unpack, but I think the big one this morning continues to be Paytm and what has happened with it. The parent company, 197, reported a net profit of 123 crores for the quarter ended June 2025, marking its first profitable quarter across key financial metrics. Let me go across quickly to Harsh. Is this an optical illusion or is there really a turnaround, Harsh?
It's clearly a turnaround, frankly speaking. Tamanna, good morning. Let me first take you through the top 5 takeaways. The top line growth was muted. It wasn't as good as anticipated. And I'll come to the expectation versus the reality. They've turned both EBITDA as well as PAT profit. That's largely on the back of operational efficiencies which are playing out in the business. They're also saying, and this was new, no mention of the word adjusted, and Mr. Sharma was extremely proud of that as well. He said, we won't be using adjusted anymore, and expecting margin improvement going forward as well. We'll talk a little bit about commentary. Now let's talk about the numbers itself. There you go. The 1917 crore top line number, which grew just about less than 0.5% on a QOQ basis, was expected to grow by 3% on a QOQ basis. So maybe a very, very marginal miss, if at all I can call it that. But look at the EBITDA number, 71 crore versus the 18 crore number which was anticipated. That's a sharp beat. The margin has come in at 3.7% versus 0.9%, which was also a sharp beat. Other income has grown by around 8% on a sequential basis. That's important to understand only because EBITDA cannot be larger than PAT typically, but because of that other income number, it is. And profit after tax has come in at 122 crores. So just to kind of contextualize that, let me quickly take you also through what has led to this profitability. And let's look at the larger numbers here. You see the employee expenses come down by around 100 odd crore. You see marketing spend go down by around 40 odd crore, and you see a 20 crore increase in maybe revenue. So those are the key metrics. Other costs coming down by 89 crore, and that's what's led to this very, very sharp increase of 143 crore in profit in terms of EBITDA profitability. Let's focus on the larger numbers now. In terms of the differential in EBITDA last quarter versus this quarter, it's a 150 crore differential. The largest chunks of that is coming from employee costs as well as other expenses. You join the two and you largely have that 150 crore. So marketing spends coming down, which is in part of other OPEX. Marketing spends down 30% QOQ. And then you have employee benefit expenses, which is also down around 40%. On a YOY, 33% on a YOY basis. So those are the key pieces that one needs to understand. In terms of other metrics, also improving. Gross merchandise value up 5.4 lakh crore. That on a percentage basis gives top line to Paytm. Financial services revenue also inches up. The contribution is now at 29% versus 28.5% on a sequential basis. Merchant base has grown by around 6 lakh merchants, which is again 5% up QOQ. All of these are metrics through which they grow. So important to understand. And their cash balances have gone up by 63 crore. The cash balance now stands at 12,870 crore for a Paytm. So not only are they PAT positive, they have a huge amount of cash lying on the balance sheet. That is the 5-quarter journey, and I want to quickly take you through the con-call commentary. And you look at the revenue growth from 1,500 to 1,900 crore, but look at the PAT. It was negative 840 in Q1 FY25, now positive 123. Last off, top 5 on the con call takeaways. They're striving towards 15 to 20% EBITDA margin. FY26 exit EBITDA margins to be considerably better than what they've clocked currently. They believe the payment business is profitable even without MDR. Indirect expenses should not grow anywhere close to revenue growth. So that's going to be the lever for EBITDA. Consumer credit business has likely bottomed. So you'll start to see growth there.
Okay. Now, before we analyze the numbers with Sachin Dixit of JM Financial, let's just hear what Vijay Shekhar Sharma has said in the conference call. He believes that the payment business standalone can be a profitable one.
I do believe payment is profitable business. Like you're seeing, without UPI MDR, we are talking profits. And I do believe payment standalone is profitable and has a operating leverage. We continue to push operating leverage of creating more solutions and value adds on top of as basic as processing, if you will. And that's where the differentiation in the payment business comes. I continue to believe that payment standalone will be bottom line driver and a large bottom line driver once these MDRs also show up. In effect, today we are calling break even, and tomorrow we are going to call large profit from payment. And that's why I keep saying focus on the core, we have a great business.
Focus on the core, we have a great business. Well, that's the day for Vijay Shekhar Sharma to say it. Sachin Dixit, lead internet research analyst at JM Financial Institutional Securities, joining us this morning to break it down. Sachin, are you feeling the optimism that Vijay Shekhar Sharma is portraying in that conference call as far as 197 is concerned?
Vijay is generally a bullish guy anyways, so I will not doubt that. But largely, I think the optimism can be felt just in the stock movement that we have seen in the past as well. The stock has been quite an outperformer in the recent past. And thanks to this result, I think that outperformance could sustain because the company has not just given a good result. They have also been quite bullish on the commentary. They have talked about the fact that their contribution margins are going to be healthier. Going ahead. There's obviously immense operating leverage in this company at almost like 55-60% contribution margin and the revenue growth of close to 25%. That's a huge operating leverage that you can drive in a business. So which is the primary driver of profitability, right? As Harsh was showing some time back on a channel wherein basically how PAT had moved in the last 5 quarters is largely a function of that operating leverage being visible at 55-60% contribution margins.
So, hi Sachin, morning. The question then is that last point that VSS said in that bite that we played out, what we took from the conference call, that he's calling break even and going forward he's talking about a much larger profit. The question is visibility. When does that come in your opinion? And what will give you the confidence of that taking place? What are the metrics that you will need to see in Q2 and in the rest of the financial year for that to take place on a sustained basis?
Sure. So I think overall, when you think of that payments business being break-even to moving to higher amounts of profitability, a lot of it is going to be driven by the value add that the company is driving, right? Or a large part of that payments business is UPI, which is not yet monetized without any MDR on UPI payments. Right. So without that, basically the company has a large subscription revenue wherein their devices are like top of the street. And they are getting good amount of traction. Thanks to these devices, the company is able to cross-sell their loan products. They are able to cross-sell fraud detection and other services to their customers as well. So all of that combines to give you a large revenue pool. But I think a big boost to this revenue pool will need to come from UPI MDR in case it comes whenever it comes. I personally of the camp that UPI MDR is more of a question of when rather than if, because there is a pure play business case of why MDR should be there, right? There is obviously right now you see large offline merchants as well as online merchants. They are taking payments via credit cards, debit cards, where they are paying a lot of MDR compared to what is being, proposed on UPI. Right. So there is no reason for the government or the ecosystem to subsidize these large offline and online merchants in terms of their UPI transactions. So which is why I believe there's a business case of UPI MDR to come. Obviously, it's in the hand of government, how they want to bring it or when they want to bring it. But I think when it comes, it can be a very sharp driver to Paytm's revenue and profitability both.
Sachin, very quickly, it trades at what, a 30% discount to PB FinTech. Is that the right way to look at it? Do you reckon that could narrow?
I think it should narrow. After all, both the companies operate in segments which have longer term tailwinds, right? Insurance obviously is an under penetration story in India. Payments again, right? Assuming that India is roughly a 11-12% nominal GDP growth story, payments businesses will continue to grow slightly faster than that.
So Sachin, sorry, slightly stretched on time. So assuming that it opens slightly higher, and by the way, thank you for the explanation. It's been lovely talking to you today. But if it opens up slightly higher, right, 4, 5, 6%, whatever it does an eternal of yesterday, would you still be a buyer?
So I recently, like last night, I published my note. I have a TP of 13-20 rupees on this name. So in that sense, obviously, I remain bullish on this name. Obviously, there could be like a short-term profit booking sort of things can come up if the stock has run up quite a lot in the recent couple of weeks. So can't predict those technical things, but in a longer term or slightly medium to long-term perspective, I remain bullish on this name.
Okay, so bullish on Paytm, buy at these levels. Thank you for that, Sachin. Would have liked to talk to you more, but we're completely out of time. Maybe also talk about how AI has led to operational efficiencies. I thought that was a very interesting comment coming in. And is that a change that we're seeing? Sachin Dixit there of JM Financial saying that this is a well-deserved turnaround and you will see an upside on the stock today. Watch out for Paytm. Up in mid-teens in the last 1 month as well. Very short break. On the other side, we have so much packed on the show. Top trading strategies. What are the stocks that could buzz? Buy, sell calls. All of that coming up.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. It looks like Neeraj is going to have to make his way to the wall today for sure, because it's actually going to be some movement on the Nifty 50 at least on open. Unlike the past several days.
You have to, the day that's a really big opening, then you have to do that jig. Otherwise, there's no point.
He's getting ready. All right, but 70 points. It's better than no change at all, but not anything to yet celebrate about. We've got Saumil Mehta of Mirai Asset by Sher Khan joining in, Parag Thakkar of Fort Capital as well. Thank you so much, gentlemen, and very good morning to you. Saumil, is there any reason for Neeraj to get his dancing shoes on, or shall we say keep it in the cupboard for now?
I think keep it in the cupboard for now. It doesn't look like anything is happening. Good morning to everyone. Yeah. Nifty, we've seen Nifty at 25,000 levels since May, I think. Now it's been 3 to 4 months, and we are looking at this level from last 3 to 4 months. we have changed the range from 24,500, 25,000 to 25,500 and 25,000. So the range has moved up. The trend in the medium term outlook is still positive. We are making high tops, high bottom on the weekly charts, but on the daily charts, we have started making low tops, low bottom formation. We have closed below 20 daily moving average. Till the time from here on, I think till the time we do not close, Nifty does not close above 25,320. I think till that time, the trend in the very short term still remains negative. Yesterday, we have closed above 40 daily moving average. Yesterday, after a negative close, still we have closed above the 40 daily moving average, which is a positive sign. I'm hoping that this short-term trend reverses from here and we close about 25,300. Stock-specific action has been there. Sector-specific action has been there. IT has been a little weak. PSU banking has been a little weak, but I think on the other side, metals are doing good. Oil and gas is doing a little, some of the stocks are doing good. So I'm a little positive. Undertone still remains positive, and buy and decline should be the strategy in the medium term outlook. In the bank as well is the same thing. The lower end of the range is 56,200 and the upper end is around 57,300. Yesterday was the third time when we Bank Nifty took resistance at 57,300, which now becomes a very strong resistance.
Okay.
So still range bound. Yeah.
Okay, very quickly, top picks this morning, Somil?
The topics would be Indigo, small consolidation breakout on the upside. Stop loss would be 5860. Target would be 6080. And IOC would be the second pick. Same consolidation break on the upside. Stop loss would be 149 and target would be 158.
Indigo and IOC on track for his top picks. Parag, I will come to you in just a minute, but it's that time of the morning where we talk about what has been heard on the street. Samit Sarkar joins it.
Well, multiple stocks that remain in focus. Firstly, Sammaan Capital and Suzlon, and dealers are indicating in both these counters there are expectations of management changes, and dealers are indicating their clients to buy Sammaan Capital and sell Suzlon. When it comes to Syngene, the stock was down in trade in open yesterday, but that was because of a weak set of numbers that had come in from one of its global peer. But dealers are indicating that there are buy flows on HNI desk on expectations of strong Q1 numbers coming in from Syngene. For Nestle, dealers are indicating that large HNIs have been buying Nestle in trade. For Shriram Finance, there are buy flows on domestic institutional investor desk. For Kotak Mahindra Bank, dealers indicated there are sell flows on large HNI desk just ahead of its numbers. The Kotak Mahindra Bank will be reporting its numbers on July 26th, which is a Saturday. And lastly, when it comes to VST tillers, GE, Vernova and Marathon Next, there are buy flows on these counters on expectations of these stocks could potentially get included in the MSCI index. So keep an eye out for GE, Vernova, VST tillers and Marathon Next. And as we had indicated last week on July 17th, that Paytm is expected to report a profit that has come in, and there have been multiple upgrades and target price revision also, which has followed post the strong numbers that Paytm has reported yesterday.
You know, it's very interesting because the three names for the MSCI inclusion, they're not necessarily the most liquid names.
Right.
VST tillers is
and
hardly
hence,
liquid.
Exactly. And they could get included in the small cap is what the dealers are indicating. So if that happens, then there could be a big spurt in the volumes that we see.
And VST tillers, not to be confused with VST Industries, who posted its numbers yesterday, which were not good numbers.
Yeah. Right. A cigarette company and a tiller company.
Completely different. Completely different.
Okay, Samit there with the dealing room buzz this morning. But let me go across to Parag Thakkar. Parag Thakkar, I think the stock of the day to talk about is definitely Paytm. I don't know if you tracked this carefully or if you actually saw what the commentary was from the management yesterday. They seem to be saying that we told you so that this would happen and we're finally here.
Yeah, so good for Paytm shareholders who had suffered a lot in the past. Stock has recovered from 440 levels to 1,000 levels now. And I think based on the results, it will further go up. And based on the various sell-side commentaries which I'm hearing, But remember, see, it is a 67,000 crore market cap company which has done an EBITDA of 72 crores. So, of course, the business has a huge operating leverage. We don't own it, so I would not restrict my comments. But I would say that I'm happy for at least the shareholders who had applied in the IPO and the price is coming.
Okay. Okay. All right. In fact, let's quickly go through the earnings scorecard, and Paytm, of course, on top of that list. So these are the earnings which have come in post-market close yesterday and which will have some impact today. We're just telling you how we are looking at these numbers. Paytm, first quarterly profit, so definitely a thumbs up there. Dixon Tech have seen a doubling in their revenue and their EBITDA, thumbs up there. Dalmia Bharat, EBITDA has risen 32%, margins up 570 basis points in the green. United Breweries has seen strong volume growth, especially in the premium segment. That has gone up 46%. So United Breweries is a good set of numbers. Not so much for Jana Small Finance Bank. Recovery is still a quarter or two away. Credit Access Grameen will also see some pain coming in. AUM growth to remain muted in the second quarter. Wellspun Specialty has seen a margin contraction, and quite a sharp one there, from 6.7% to 2.1%. KEI Industries, though, strong revenue and PAT growth should be positive. There are a few more. JSW Infra would be a neutral. Cyan DLM is a positive. Operating performance beats estimates. Zensar Tech has seen revenue and profits beating estimates. Somil, some of these that we've talked about, any of them on the charts that you are tracking or are popping out for you, because they're going to be in focus due to their numbers?
JSW Infra is the one which I'm tracking. It is trading about 200 daily moving average, closed about 20 and 40 daily moving average. In the short term, it's looking great. If it closes above the breakout level for this consolidation, which is going on since last 1.5 months, the breakout level is around 325. Once it closes above 325, the next level in the medium term outlook would be 355s. So I'll be targeting 355 in the medium term outlook, and the stop loss would be around 305.
Okay, let's talk about Dixon Tech, because the numbers are out. Parag Thakkar, I'm coming to you on this one, and I'm pretty sure I know what you're going to say on the valuation front, but did you look at the numbers? And is there any comfort at all? There are some people that are giving a 20,000 rupee target for the stock. What do you think?
Yeah, sure. So basically, see, numbers are good, no doubt about it. The opportunity size is good, as I always keep saying. But market cap of 97,000 crore for a EBITDA of 2,000 crores is a little bit stretched in my view. Of course, the stock can do well from here also. But we are not, we are conventional value investors and contra investors. So I would say that I will repeat my top buys, which is DLF, Reliance, BPCL. Of course, Infosys and equal weight. Today, Infosys is going to report numbers. 4% dividend yield again, 5% OCF yield. I am keeping my fingers crossed that Infosys can report good, decent numbers. If they do so, definitely I am going to increase my weight. And the major concern in IT right now is, of course, because of the intense competition and lesser demand. There is a margin compromise which IT companies are doing. If Infosys negates that particular fear, I think I'll be very happy to add Infosys.
So those are your top picks. You've also consistently spoken about the cement pack, and quite a few of those names, Parag Bhai, have been posting reasonably good numbers. Overnight, or rather last evening, we saw Dalmia Bharat, and seemingly that they have sacrificed volume growth for better realizations, and that is evident in the improvement in the EBITDA margins that they've seen, and seemingly the pricing context is good for them as well in their market, in their home market in the south. What do you make of the numbers? And again, would you be positive on the cement pack as a whole? Which would you pick up?
So, luckily, by God's grace, in the middle of this Dixons and Paytms of the world, my cement has worked. So, from December month, I was extremely bullish on cement. Just one reason, that all companies were struggling. The cement prices were at all-time low. So, there was only one way to go, which was increase the prices. And that has happened in January to March in North and East. And followed by, from 1st April, it has happened in South. And Dalmia was a combination of South and East both. So 25% of their volume comes from South and remaining from the East. Nuvoco Vista is also East player. So I am basically very happy to share with you that luckily we have benefited significantly. I had 15% weight in cement in my portfolio. And I am actually in the middle of booking profits in many of the stocks because they have rallied significantly and given a huge outperformance to the portfolio.
Parag Bhai, yes, everything happens by God's grace, but you should give yourself credit because you spotted it in the middle of these Dixons and Paytms. Which ones are you booking profits in, if we could ask?
No, so basically, I would like to say that most of them I have booked profits. I'm sitting on very little amount of cement stocks now. And see, but recently I read a name like India Cement. After Ultratech comments that South is now new North, which was a very good comment, which suggests you that South there will be good pricing discipline and increased profitability. So very small quantity India Cement recently added, but I would say that what I am trying to say is that in the 2 months after 2 months of monsoon, also the prices have held on, which is what Ultratech has also said. That tells you that the longer term picture is also good. But as I always keep saying, when you have very good times, when you get 25-30% return, 25% alpha, you should book out some profits because ultimately, who can predict tomorrow? So
okay, just to very quickly close out this conversation on cement, then Parag Bhai, are you saying that there is nothing that can be bought in the cement pack as things stand right now at these prices?
No, I am not saying that. I'm not saying. It is just because that I got a very good alpha in my portfolio due to cement and I was terribly overweight, 15%. Can you imagine? 15% of the portfolio was cement. So that's why I felt it prudent and rational to cut down some exposures. Otherwise, I think there's nothing on the table or on the ground which suggests you that cement is the story is over.
Okay, just hold that thought, Saumil and Parag Bhai. We're going to take a very short break, but before we get into that break, just a quick run through on what's happening on the primary market. Let's not forget that a lot of action there as well. So IndiCube Spaces, the company will open up for today. Its issue opens today. Price band is from 225 to 237 rupees a share. It's a 700 crore IPO, which was a combination of fresh issue of 650 crores and the rest is an offer for sale. The company raised 314 crores from anchor investors. G&G Electronics also opens its issue today. Price band is 225 to 237. It's a 460 crore IPO, combination of fresh issue of 400 crores, rest is offer for sale. Company has already raised 138 crores from anchor investors. So some of those on track. We'll take a very short break. We're coming back with pre-open rates and much more.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI CDSL for the long term?
Buy, sell or hold.
Back with India Market Open right here on NDTV Profit, and it promises to be an interesting morning. A lot of reactions anticipated, but something that has reacted for a bit. Let's just dial back from the here and now to what's happened recently, right? And Strides Pharma is sprinting ahead of its peers, delivering about a 50% rally since the start of April. A lot of stocks have done that, but Strides has stood out because it's outpaced the broader Nifty Pharma index. US focus, margins, de-risking moves, well, a lot of things happening. Now, Varsha joins in because she's analyzed this very closely. Varsha, what's led this rally? Is it fundamental reasons and what's the outlook like?
Yeah, so basically it's a fundamental reason, but as you rightly said, if you see of Strides Pharma in the since April 7, the stock has given 53% returns to its investors, while Nifty Pharma was up 9% and Glenmark Pharma, which is the top stock in Nifty Pharma, is up only 42%. Let's see what is triggering this rally. One is the US business. So everything when it comes to Strides Pharma revolves around the US business and debt reduction. Let's see what are the expansion plans when it comes to US business. They want to aim $400 million of revenue in US in FY28, and this will be driven by 60 planned launches, including high value or rather high margin products. Now, only 71, the interesting point over here is only 71 of 260 filings are commercialized. That means showing significant potential that the company has in futures, and that's the reason they're giving a guidance of almost $400 million when it comes to US business. Now what they're doing is they're investing in controlled substances or nasal sprays where the opportunity is almost $600 to $700 million. Now this is for Strides Pharma, and these are high value, high margin products. So they are moving from low margin products to high margin products, and 7 to 8 of such launches are lined up in the next few years, rather in the next 3 years, and they are also moving away from partnership agreement, and they are relaunching their dormant portfolio, which will lead to increased market share. The next trigger point when it comes to Strides Pharma is the margins. Look at the margins from in FY22 a company had an EBITDA loss, and from there the margin trajectory has been fantastic, and one of the reasons is because of the decrease in interest cost and moving to high value, high margin products. Next, if you see, debt reduction is also one of the reasons why this company has been in focus, and Arun Kumar is known for his dealing with the investments and phasing out or existing or de-risking the business. If you see the recent agreement that Arun Kumar has done is spin-off when it comes to OneSource Specialty Pharma, and which is a major de-risking move that has been done by Arun Kumar, and which is also a value unlocking even for shareholders. Just on their business model, what Strides Pharma is famous for, so they avoid being first to launch in the market. They only launch the products where the market is stable, where they know that they can grab the market share, and this approach mitigates the volatility that every generic pharma companies goes through. And overall, if I want to talk about the revenue growth, so they're expecting a revenue growth at a CAGR of 12%. US market will contribute almost 52% of revenue share. Lastly, on the valuation, which is considering the guidance given by the company, if you see, EBITDA is expected at 1,000 crore, net profit is expected at 520 crore. So that comes, the EPS comes to it around 57 rupees at a 30x PE. Still, there's a lot of runway when it comes to a share price of Strides Pharma can go almost 1,691, and currently if you see, it's hovering around 800 to 900 per share. So a lot of scope still exists when it comes to Strides Pharma, and overall if you see, US business and the debt reduction are the key triggers, and of course the margins that has led to this fantastic rally by Strides Pharma.
Okay, a couple of stocks for you to watch out for. Dixon Tech starting off in the green, up about 4% or thereabouts, 4.3% up. Paytm arguably could be the eternal of the day. We told you about it. It's up 10%. I wonder if that stays the case over the course of the session. And so the last question to you, Saumil, before we have to thank you, if Paytm does open gap up as we anticipate that it will, what are the key levels to watch out for on the upside today?
For Paytm, in the very short term, I don't expect after the gap up, I don't expect too much out of it. But overall, the trend definitely remains positive. I'll be positive because on the monthly charts, on the weekly charts, heart up, heart bottom formation. So the levels to watch out would be 991. That is the support, and the next support is at 950 levels. On the upside, I'll be expecting a targets of around 1150, and for the medium term outlook, 1380.
Okay, thank you so much, Somil, for joining in today. We'll leave you be. Chandan Taparia is also joining in now, so let's get a quick call from him. Head Technical and Derivative Research, MOFSL, joining us this morning. We'll talk about Paytm, Dixon, KEI, all of that, Chandan, but let's get your view on the Nifty and the Bank Nifty first.
Yeah, good morning. Thanks for having me, Tamanna. So Nifty has been consolidating in a range. The good part is it witnessed some support-based buying in last two trading sessions from 24,880 marks, but at the same time, absence of buying is clearly visible. I believe that for the day point of view, if it manages to hold 25,000, it can attempt a bounce towards 25,250, and above that only the bullish resistance could drive the index towards 25,500. Looking at India VIX, that is at 10.5, quoting at the multiple months or almost 15 months lower levels, could continue to keep the market in a range-bound manner with buy on decline stance. So 24,880 or 25,000 to 25,250 is going to be the trading band for Nifty with positive to range-bound bias. And talking about Bank Nifty, that again got stuck in a range, has immediate support near 56,500. And with the support, I believe Bank Nifty has potential to rally towards 57,250 to 57,500 levels.
Okay.
Okay. Well, Chandan, what are the ideas for the morning, therefore?
Yeah, so Tamanna started with Paytm, and in fact, I like this counter and I've recommended, I think, many times. So we'll discuss about that, but let me give two preferred ideas. First, it is buy on Indigo. One of the strongest counter has been making high top, high bottom on the weekly chart. It has been consolidating from last 16 trading session. In last 4 days, we have seen a decent recovery and price pattern indicate the fresh leg of rally. So recommending to buy with support of 58.50, and Indigo has potential to rally towards 61.50 mark. Second trading idea, that is buy on Tata Chemical. In fact, selective chemical names are doing well. The stock has been moving in a rising channel with supports are intact at 900. Recently, it gave a consolidation breakout of last almost 30 trading session with a hold about 950 marks. So Tata Chemical could be the next idea. We have seen build-up of long position with rise in trading and the delivery, which indicate the bullish resistance. So with support of 943, Tata Chemical has potential to enter towards the 4-digit mark of 1,001.
And Chandan, we will come and talk about Paytm. In fact, we haven't gotten Parag Bhai's view on that as well, so we'll try and talk about that because Paytm deserves to be spoken about today. But it's 9:05, that time of the show, but we'll get you the big brokerage call of the day. So let's do that first. Jefferies has made it a buy rating on Adani Enterprises. They've kept the target price at 3,000, if I'm not wrong. Somit Johnson with details from this report. Somit, good morning.
Well, good morning. Quite a bullish note that has come in from Jefferies on Adani Enterprises, where they've maintained the buy rating with a target price of 3,000 rupees. Now, they're saying that the airport business is seeing multiple tailwinds going forward. Now, Adani Airports, which is the wholly owned subsidiary of Adani Enterprises, has seen key milestones recently. They are saying that the recent TDSAT ruling could imply higher tariffs at the Mumbai International Airport if the final ruling is also favorable. Apart from that, they're also saying that the airport's Economic Regulatory Authority of India has approved a new tariff for the Mumbai airport and an interim tariff for the Navi Mumbai airport, which provides a good visibility when it comes to the revenue and the profit going forward for the airport business. They're also saying that the regulatory regime in India for airport privatization has changed a lot in 2020, and current revenue share methodology has also changed from percentage to a fixed revenue, which is quite attractive as per the brokerage. Apart from that, they're also saying that the Mumbai International Airport has recently secured a $1 billion of financing among the other fundraisers that the group companies had done, which is also quite positive as per Jefferies. And they're also saying that soon the company will commission its Navi Mumbai airport, which will lead to a next phase of Mumbai's dual airport method going forward, and which will also lead the growth for Adani Enterprises overall. Now, when it comes to Adani Enterprises for FY26, they're expecting the EBITDA to grow at 14%, but for FY27, they're expecting a much faster growth coming in at around 29%, given the fact that all all the segments of the company will start ramping up, and hence they're expecting a stronger growth from Adani Enterprises in FY27. EBITDA growth of around 29% is what Jefferies is expecting.
Okay, standard disclaimers there on your screen as well. You're watching NDTV Profit, which is part of the AMG group. Chandan, let me come to you on some of the stocks that we talked about. Paytm, Dixon, let me add a United Breweries and a KEI.
Yeah, so I think let me start with Paytm first. We are quite positive on the name. In fact, recommended well in last couple of weeks. I think momentum is likely to continue with support of 1030, expecting this counter to rally towards 1100 marks. Talking about KI, I think one of the strongest mid-cap idea could be there, which has completed a rounding formation or similar to cup and handle kind of a small formation on the daily chart and the weekly chart. So with support of 3940, this counter can head towards 4180 kind of level. Talking about Dixon, decent recovery in last 4 weeks. I believe with higher support of 16,000, it can with support of 15,800, it can head towards 16,600 marks.
Speaking of KEI and speaking of the wire play, the wire and cable play, I'm just wondering what you think, because you had a couple of results that were absolutely fantastic. Even in a situation where a company is performing badly, the wire and cable business is doing good, but the consumer discretionary space is not doing good. So is this a space that you're tracking, and would you buy into any of these companies?
So, sorry, this for me?
Yes.
Yeah. So, I have bought Havells actually very recently in our portfolio. Because I feel that, see, a lot of this negativity around early onset of monsoon and so disrupting summer, and so the Lloyd's portfolio suffering, I think a lot of those negatives are behind. Now, as you rightly said, wire and cable business grew by 27% for them in this particular quarter. And plus, they have a lot of other portfolios. So lighting business, they are witnessing good traction. They are focusing on renewable business now. They're investing big behind it. It's a good company, strong brand, net cash balance sheet, 25% ROC. So, and stock has not done from, since long, stock has actually not done anything. I like such blue chips when they struggle. And so that's why, although it is also expensive on the optical numbers, but it's a time-tested business with time-tested promoter. So we have bought into it. The thing which attracts me to this particular company is a wide range of portfolio. Festive season is nearby, they can do well. And the worst is behind in terms of AC thing, whatever has happened due to this early onset of monsoon. And of course, 25% ROC and net cash balance sheet.
Yeah. Havells, we just spoke to yesterday, though. I must say that they mentioned that they are not as constructive on the festive season thus far, because his view was that in festive, people buy refrigerators and TVs and not air conditioners, and the inventory levels are very high. But he's very hopeful of a fairly better second half once the inventory is cleared off, because Lloyd's was the pain point, and that's where loss that thing could come back. Parag bhai, just wondering though, if cement was your high conviction idea, which you've gotten out of, rightly so because of valuations, where is it that you are now constructive on, or are you sitting on all of that in cash? So has cash gone up from 12% to even higher?
No. So cash is at 12% only. It has been deployed in companies like Havells, as I told you, something on India Cement. We have added Reliance on this in this dips. BPCL, as I told you, DLF. And of course, couple of IT stocks like Infosys, LTI, Mindtree, Wipro, kind of names. So basically, it is scattered, but it is not a concentrated bet like cement, which I did. Because these are multiple sector stocks, and wherever I see, I keep deploying some money. But it's not a thumping the table like cement, which I did 6 months ago.
Okay, you can't always have table thumping ideas. I wonder if reality is not a table thumping, but a halfway there idea. You have 2 block deals today. So let's just look at what's happening with Oberoi and Lodha in the pre-open session. And that pre-open session has ended. Obviously, because of that block deal, it's an Invesco clean out trade, which is showing that pressure, 3% down on Oberoi Realty. You'll have Lodha also seeing about 3% down. On the other hand, Valor's doing okay. A lot of action in the primary space also as far as real estate is concerned. Parag bhai, are you seeing an opportunity over here, or you'd stay away right now?
No, the DLF is right now we hold 5% of our portfolio in DLF. I remain very constructive. I think already I've said that 6,300 crore rental income where they own 66% stake in DCCDL plus 280 million square feet land bank. And of course, all these good projects in Gurgaon, now they have entered Mumbai also. So that makes me very bullish on DLF. And of course, Oberoi is one stock which I always like. I would definitely buy on dips. If it is due to some forced selling, definitely I will look to buy.
Okay, UBL on the charts. Chandan, IRFC, Sapphire Foods, any of these looking interesting? Anything that you're spotting in the pre-open session that you think has more to go?
Yeah, I think UBL looks interesting. It formed the multiple bottoms near 19, 20, 19, 50 marks in last 4 weeks and now turning upwards. So I believe with support of 2000, it can head towards 21, 20 to 21, 40 kind of level. Sapphire Food also could be in focus. It has potential to see the recovery of 5 to 7% from current level. As of now, it can head towards support. With support of 330, I think it can head towards 352, 355 marks.
Okay. And, Chandan, I'm just wondering, with Paytm doing what it is doing, could there be a rub-off effect on PB Fintech as well? And therefore, I think you said you're constructive on Paytm. Are you constructive on PB Fintech as well?
So I believe the entire news and business could be in focus, whether you talk about the Swiggy or Paytm or Eternal. We have positive view on most of the name. But yes, Paytm could be the preferred pick as well, apart from Eternal. I believe till it holds about 1000 marks, one can hold for positional target of 1200 kind of level. But for immediate point of view, use any small decline for buying opportunity. Stock has still potential to give the reward. And PB Fintech, I believe positive stance could be there. After that corrective move of last 4 to 5 weeks, the stock has taken support at 1740. So with higher base of 1750, one can look for an upside target towards 1818 PB Fintech Policy Bazaar.
Okay, PB Fintech 2, but Paytm positional targets of 1200. Let's see what it does. It's the Eternal of today, or to be fair, just so that I don't sound biased, Eternal was the Paytm of yesterday. But let's get the markets up. A quarter of a percent actually, not a third of a percent, with banks lying absolutely flat. So what is participating is interesting. Let's get the Nifty IT pack. Okay, quarter of a percent, interesting here. Mid caps flattish, small caps flattish too. Let's get the heat map up on the screen. IT is interesting. Infi ahead of the numbers. By the way, the sentiment and the positioning in Infosys is bullish ahead of the numbers. Keep that in mind. I was reading a brokerage note on the options data as well. It looks okay. Adani Enterprises, multiple news flow, including the Jeffries note. I read in one of the dailies that Paytm is gonna appoint Adani Enterprises for $100 million office premise, if I'm not wrong. Nestle is in the green. Tata Motors, Airtel and Reliance, interestingly, 0.5% higher, but a lot more green, very little red, which is constructive. The top loser is ONGC, which is hardly a loser, and Hero MotoCorp. And actually there's not too much to talk about in the index, but as Tamanna comes in, maybe we can just pull up Paytm because that is arguably the stock of the morning. And that one, no. What? Okay. Okay, it's actually started off very, very flat up. This looks very deceptive per se, but this is strange because Paytm really got blockbuster numbers.
No, but okay. You should then maybe look at it over the last 6 months, 3 months.
But still, this was a surprise, Tamanna. I mean, the fact that they delivered what they did, right? And therefore, it opening in the red is a bit of a surprise to me.
It is. I agree. How much is enough? But, the only explanation, if at all, is, and we'll wait and see what the pickup is like. Not necessarily this is how Paytm will end at the end of it. The only explanation could be that first quarter in the black, turning profitable, was something that was being penciled in for a while. So maybe that's what you're seeing, a sell on news. And this is something we talked about when we, analyzed the stock this morning as well, that this story is not a huge surprise. In Eternal's case, if at all, it was a huge surprise that you'd see that kind of a move coming in, and the commentary from Dipinder Goyal. If at all, there's an explanation for what the market does. I mean, we only try and understand what this piece means. All right. Exciting on the top line, I would say, the Nifty and the Sensex, but let's pull up the broader markets and then we'll revisit what's happening with Paytm. Completely flat on the mid cap 150. I want to quickly look at the small cap 250, flat there as well. this morning. No action, so to speak. Let's pull up the sectoral trends and the sectoral indices, tell you what's happening there. Nifty auto zooming. We'll pull up those components as well. IT seeing a spot of recovery ahead of Infosys reporting. Not really enough to boom, but today most of the screen is green. So even if you're not seeing a massive rally on the front lines, most of the screen is green. That's positive. Block deal impact probably coming on the Nifty reality. It's an index which doesn't have too many stocks, and there is a clean out trade in two large companies. That's Oberoi and Lodha, which is why you're probably seeing that impact over there. Otherwise, the screen's not looking bad at all. Let's look at results and result impact as we move ahead. Dixon, Paytm, Credit Access, Grameen, these are some of the numbers that have been reported, and let's look at what's happening there with them this morning. About 2% up on Dixon, Paytm with a measly less than 1% gain. I'm saying measly because after all of the hype and the expectations and the brokerage reports which came in, you'd think that it would be off to a rocking start. 2.5% up on Credit Access, Grameen, despite pretty sad numbers actually. So that's another surprise this morning which has been thrown up. Let me look at KEI Industries, IRFC, Cyient, DLM, United Breweries. All of them have reported. KEI Industries, decent set of numbers actually. Response is tepid. IRFC was also pretty okay, 3.5% up. Cyient, DLM we spoke about, 6% down, and the numbers speak for themselves. UBL, United Breweries, their premium segment did well. Volumes grew over there. Volume growth outlook is also positive, which is why 2% up on that stock possibly. We talked about Oberoi and Lodha as an impact of a block deal, a clean out trade there, both feeling the pain because of that supply coming in. Will it improve through the day is what you need to look out for. Blue Jet and Colgate are the other two that I want to pick up. Their numbers came towards the end of trade yesterday. Already got a slam dunk, and yes, pain does continue. 4.5% on Blue Jet, and Colgate about 2% down as well. So the street being a little tough today, I think, in celebrating too early, and little tough on giving slack to companies that have not reported well. That's what I would say on the outset.
And that sounds exactly right. There are a few surprises today. And I wonder with Credit Access, Grameen in particular, if the kind of beating that the stock has taken over the course of the last several months is something that is, to a certain extent, pricing in the weak performance that the company has reported in the first quarter. The outlook for FY26 is rosy, but I would hold my horses. I would look for the actual print, because remember, at the start of FY25, the company came out with very rosy guidance, and it revised it multiple times over the course of FY25. So till the time when you actually see an improvement in the asset quality and those actual numbers come through, you won't be able to convincingly say that this is a winning story. We have to cut across to the celebration of the closing of the SBI QIP, the largest fundraise, 25,000 crore. Let's see those live visuals.
Is a vote of confidence in SBI's strong fundamentals, prudential risk management, and customer centricity with the digital-first approach. The bank will utilize these funds to augment the capital buffers. Capital structure will be strengthened further, and also it will support credit growth across various sectors. This year, SBI just completed celebrating 70 years of its new avatar as State Bank of India. We said, Saat Dashak, Desh ke Saath, which also reflects in our philosophy, which is intertwined with the development of the country. And SBI played a significant role in India's economic development. So our rich legacy of over 219 years is testimony to the unwavering support of our customers, investors, employees, and other stakeholders who have stood by us through thick and thin. It is their trust that has propelled us forward, driving us to newer heights of success with the largest base of over 452 crore plus customers and about 40 lakh investors and growing. So today's milestone listing not only marks our enduring presence in the market, but also highlights the remarkable journey we have embarked upon since our listing with NSE in the year 1995. I think 30 years of NSE celebration also coincides with 30 years of listing of SBI on this. So 2 milestones, NSE, SBI, 3 milestones in fact, 70 years of celebration of SBI too. Listing on the exchanges has been pivotal in shaping our identity and fostering growth. It has enabled us to access capital markets, expanding our investor base and reinforcing our...
All right, that's the SBI chairman there, CS Sethi, talking about the listing of the QIP. Now, listing in the sense now that gets credited to everyone who invested in the QIP. Nothing changes too much for the stock, just more equity there to go around. But it marks an important point for State Bank of India. He also said 64% investors are, or those who subscribe were foreign investors, and it was a large QIP, one of the largest that India has seen. Parag bhai, any view on a State Bank of India?
So basically, I hold HDFC, ICICI, Kotak in my portfolios. I'm more bullish there because of the asset quality thing. Of course, in SBI also, I don't worry about asset quality too much. And valuations are very, very compelling. So I would definitely look to buy. The only concern which I had before this earnings season started in banks was NIM compression. It seems that from HDFC and ICICI results that NIM compression is actually priced in. Everybody knows about it. And in case of ICICI, as we all know, the NIM compression was much lesser than anticipated. Let's see in Kotak on 26th how much NIM compression they show. But it is for sure that for these 2 quarters, June quarter and September quarter put together, there will be a NIM compression of 25 to 35 bips for all banks. And I think that market has taken in its stride and market knows about it. So the only bank where we saw big disappointment was Axis, where there was an asset quality issue. But all the banks which will not have asset quality issue like HDFC and ICICI in future can do well, because NIM compression is a very well-known phenomena. So I would, and everybody knows that it will get reversed because of the CRR cuts and deposit and saving rate.
Okay, thank you so much, Parag bhai, for speaking with us today. Great to have you. And just a last word on Paytm from you, Chandan, before we let you go, because that was a bullish call. Is this an opportunity? Because Street's response has been a little tepid.
Yeah, so I believe it's good that the stock has not opened much higher, so one can continue to use the buy on decline stance in the counter, because on the monthly and the weekly chart we see a major breakout. In fact, the stock is trading at its 3 years high levels. In 2022 it fell to surpass 998. In 2024 it fell to surpass 1060, and now it's back to that 1060 1080 mark. So I believe a small decline could attract the fresh buying opportunity. The chart has shown the re-rating. However, the momentum was not seen in the morning tick, but I believe a buy on decline can be utilized till it holds above key support of 1000 marks. So now
definitely it's a buy right now, definitely declining about 0.5% down. It's a buy right now in your view?
Yeah, so buy with support of 1000 for upside target of 1100.
Okay, buy with support of 1000, upside target of 1100. Thank you so much, Chandan, for speaking with us. Let's just quickly take you through what brokerages have said basis the numbers. Bernstein has maintained an outperform, target price 1100 rupees. Because of the Q1 positive net profit. It's an important milestone is what they say. BofA has an 1160 target. The target has been improved as well. Citi has moved from a 975 to a 1215 target, and Jefferies has a buy rating now and has moved from 900 rupees to 1250 rupees as their target price. Vineet Bulinchkar joining us, someone who tracks that company closely, and I would say was one of the first few to stick his neck out and say that Paytm is going to turn around. Well, that definitely has happened. Vineet, let me start with the reaction we've seen this morning. Are you a little surprised with the lukewarm reaction to the results?
Not really, because it was all anticipated.
Yeah.
The only positive thing is that the profitability was pushed forward by about a couple of quarters. So, that's the highlight of the result that I would say.
Vineet, so point well made. Good morning, by the way. So would you say that broadly this was along expected lines? There's nothing to really cheer about. And what, according to you, is the trajectory going forward? You stuck your neck out back then. Would you like to do so again and say that this is still a buy, in your opinion?
Yeah, you still have around 20-25% upside over the next 12 to 18 months, according to what we are projecting. Upside about 1250, 1270 is what we are getting. And, the metrics, if you notice, have been improving considerably. They're deepening the pool. They're adding significant articles. So quite positive into my mind. 5 lakh crore of total GMV, 1,000 crores of profitability out there. Very, very strong numbers. And all three segments are doing very well. Merchant, penetration is also improving at 29%. They're adding they've added 4 million merchants, so they're also their financial services business is picking up. One of the interesting thing is that the ESOPs expenses are now going to be curtailed, and we are going to see very secular growth going ahead.
Now, if you look at Paytm in isolation, I've taken your view, but if you compare it with any of the other new age companies, earlier in the week we saw Eternal as well, and the kind of bump up that it saw based on commentary by the management. What is your top pick among these new age companies?
So, I'll go with Paytm because, they've climbed significant walls of worry. They've come back in a very strong way. There's more controversy around Paytm than any of the other stocks. If you look at Eternal, of course, they've done a lot of disruptive work. They have, very high cash pile with them, which they can use for, more acquisitions and pole vault growth. While Eternal looks very, very interesting, I think the valuations are stratospheric. So, I would like to just, do my deeper analysis before initiating anything on that stock. Paytm looks to be very, very firmly footed now to, just keep doing and chugging along, doing what they are.
Chugging along and doing what they are. That's what's important. Stay at it. Thank you so much for that, Vineet Bulinchkar there. All right, Eternal up once again today. I just want to pull up Paytm. Are you seeing a further slide? Because you saw some pressure coming in this morning. Yeah, just about 0.5% down despite very good results and a turnaround. The problem is, and why you're seeing that with the stock today, because it was widely anticipated. The street's not waiting for the event to happen. It's trying to react to it way in advance. All right, let's turn our focus on another set of numbers which has been punished really by the street. Blue Jet Healthcare has reported a mixed set with revenue growth driven by robust sales in its PI and API products. But before we get to the management, let's take a look at what those numbers look like. Varsha joining us for more.
Right, thank you so much for that. As you rightly said, the revenue growth was led by higher sales in their pharma intermediate and API product category. The street did not like because the EBITDA margins, because on the EBITDA margins, EBITDA was a mess due to gross margin weakness, and margin recovery is likely to be expected in second quarter. Also, if you see, there was even management also highlighted this, there was a lower quarter-on-quarter EBITDA margin due to phasing of production and of course change in product mix. On the segmental analysis, if I want to talk about, the contrast media intermediates grew 51% year-on-year, while the pharma intermediates and API, if you see, grew 250% year-on-year. And the high intensity sweeteners for the company, there was a degrowth in that of almost 0.2%. So overall, if you see year-on-year, on a revenue side, yes, it was a good set of numbers, but street did not like the margins that the company has posted because of the weakness in the gross margin overall.
You look at the numbers on the face of it, it's actually a decent jump up, but the expectations were high, and this gross margin fall, which has got the street a little, I would say, wary. VK Singh, CEO, Blue Jet Healthcare, joining in now. Mr. Singh, a very good morning. Thank you so much for joining us. Let's start by you taking us through the highlights for the first quarter and address the gross margin drop.
Hi, Tamanna. Thank you so much. Thank you for having me on your show. If you recall the last time when I was in your show, then Neeraj had asked me about how the year was, and I said that this would be a watershed year, and last year was clearly a breakout year. The quarter four of FY25 was an excellent quarter. It was like an outlier. But having done that performance, the quarter one of FY26, we've improved the previous quarter by about 4 to 5% on the top line. All our segments have done well. On an year-on-year basis, contrast media has shown about a 50% growth. The PI segment has shown about 200% growth, and the sweetener segment has also shown good resilience. Your question on margin compression, let me explain that there's no structural change. I mean, the average sales realizations have not gone down. Over the last couple of months, raw material prices have not increased. So actually speaking, the gross margins are pretty much preserved. There's a 6% margin compression on gross margins. About 1.5% and 2% could be attributable to the product mix. The balance, 4.5% is because in the previous year, there were high inventories and a lot of overheads got inventorized, which are now, getting plugged into the gross margins. So I don't see any cause for concern as far as this is concerned. I think people have to some extent misread it. And 3-4 years back, our EBITDA was about 41%. In the quarter four of last year, previous financial year, it was 41%. But we have never guided 41%. We have always said that our EBITDAs will be in the mid-30s. And I think that's a very healthy level for EBITDA for our type of business, which is growing and growing very rapidly. And even after this margin compression, we are in the mid-30s. So I think as far as profit is concerned, we are in a very good space. As far as growth is concerned, we are in a very good space. The company inflected 3 years back. Today, as we speak, we are at another inflection point. What is getting incubated today will fructify in 2 to 3 years from now and will be a game changer for the company because we were forward integrating even further.
Fair enough. You're seeing the weight of high expectations and a base case there. So a mid-30s margin is what you've preserved. You never guided for 41, but that came in. That's why it's optically looking lower. Having said that, some of this, you said about 1.5% is because of the inventory mix, etc. Do you see those conditions easing going into quarter two?
Contrast media has historically given us better gross margins than the PI business. And you would see that on an year-on-year basis, there is good growth in contrast media. On a Q-on-Q basis also, there is a growth in contrast media. So we are very confident that our profits will be pretty much in tune with what our historical performance has been for the last 18 to 20 quarters.
Mr. Singh, good morning, Neeraj here. You get back to what, 53% in quarter two, but you still believe you'll manage the gross margin range of 53 to 56? Because just remember, right now I'm talking about the gross margins, not the EBITDA margins. So, Mr. Singh, the question on the gross margins.
Yes, I think those gross margins will normalize in the next quarter.
Will normalize in the next quarter, and you probably stay the range of, 53 to 56, which is good to know. Does this quarter one performance in any way impact any formal or internal guidance for FY26 that you may have given, Mr. Singh?
See, Neeraj, as a policy, we don't really give a guidance. But then what you need to see is that quarter four last year was an exemplary quarter, was an exceptional quarter. The quarter one of this year, we have given a growth of about 4.5 to 5%, even on that previous quarter four of FY25. And I don't see any reason why we should not be able to maintain this trend.
Okay. Now, one of the notes suggests that an uptick in the utilization in the dedicated capacity for the bempedoic acid intermediate would be the key driver of near-term earnings. One, do you agree with the same? And if so, what is the color that you can provide on this?
See, the molecule is doing extremely well. When it got launched, it was with a limited indication. But today it has a much larger, wide indication, and it's a primary therapy for cardiovascular treatment. The patient population is huge. Today we are at 500,000 as far as the patients in the US are concerned. The addressable market is about 70 million. So there's a huge uptick possible over there. We are the primary suppliers for the advanced intermediate. And we are getting qualified with more sites of the innovator. The capacity that we have, I mean, if you look at our previous run rate of the previous year or the last couple of quarters, the capacity that we have, we can easily go to more than double. The traction that the molecule is getting is great both in US and Europe, and will get launched in Japan. New markets are opening up. So I don't see any reason. This will continue to be a very important ingredient of our good story. Nevertheless, as I said in the previous show when I was there with you, that contrast media as our flagship will continue to be the mainstay of the business. We would be there will be secular growth in the existing products that we have, and this year we are launching 2 new products. One has already been launched, and that's on the MRI side or the gadolinium side. We are making a debut on the MRI or gadolinium side of this business. Till date, we have been on the iodinated side. You can cite the numbers and the results of the previous quarter for this MRI side contrast media. We will be launching 1 more product on the iodinated side, which is a very large product, an advanced intermediate for that in the next quarter. So there are good, tidings for the contrast media segment also, and there'll be good growth in this segment.
PI and API, Mr. Singh, in the pharma intermediates, as you explained right in the beginning, that was the big one, right? 251% growth that you saw year on year when you compare the quarters. Do you see that sustaining? Or is that also something which was unexpected maybe?
It was not unexpected. I mean, this opportunity was incubated 3 to 4 years back. There is gestation in pharmaceuticals, particularly on the CDMO side. And we built up capacity in anticipation of this growth that you see in this PI API business. So this was not at all unexpected. We had very much expected these types of numbers. Going forward, I won't say that the growth would be same. You could say that whatever annual run rate we had in the previous year, we will certainly improve in that. It would be safe to assume that maybe a 15%, 20% type of growth on the previous numbers, but we wouldn't like to give any type of guidance. We see very good growth and traction on the end molecule, and being the primary suppliers, I think we'll be a part of that story.
Okay, thank you so much, Mr. Singh, for joining in. And I think high expectations is what has weighed on the stock, but exciting plans ahead. We're just going to cut across to this conversation with the SBI Chairman, C.S. Setty, very quickly.
Play an important role in India's economic growth story. And I think that is not affected in any manner. That was not affected even earlier also, I think. But this capital raising reinforces the confidence of the investing community across the globe in India's story as well as SBI's story.
A lot of foreign investors seem to be coming in for this. What is the messaging that you're getting from them? Was 25,000 crore enough for them?
So I think it is not about the size. The very fact that SBI has come to the market after a very long time and a quality paper being available, I think there's been a good response. They were probably waiting for issuance from the SBI. I don't think it's about the size. But the response, almost 4.5 times, shows that the appetite for the stock is.
And lastly, how long do you think this capital will last for you?
I don't think we will need capital. In fact, we mentioned that we have adequate capital structure to support the growth.
All right. Thank you so much, sir.
Okay, all right. Quick chat there with C.S. Setty on what is a big day for them. 25,000 crore rupees was the largest ever QIP, resounding response to it, and that's the conversation you heard. All right, the other company that we're tracking right now is NLC. Now, NLC has been on a hot streak yesterday as well, continues some of its buzz today. It's powering ahead with bold ambitions in the renewable energy space. Its green arm, NIRL, is set to launch a 4,000 crore IPO, and cabinet approvals are also unlocking fresh equity infusions. The company is also laying groundwork for a massive scale up from 2 gigawatts to 32 gigawatts by 2047. Before we catch up with the management, let's go across to Varsha joining us for more.
Yeah, thank you for that. So yes, the two things for which NLC India is in focus. One is of course their renewable arm IPO and the cabinet approval for green energy boost. Now starting with the NIRL IPO plans, which they're going to launch 4,000 crores of IPO in Q2 FY27, and this IPO is a part to fund their expansion plans, and they plan to file draft papers in Q1 FY27, and NIRL is positioned as the primary vehicle when it comes to NLC's green energy agenda. Talking about companies' renewable energy push, they operate 2 gigawatt of renewable energy assets, and they aim to ramp up capacity to 10 gigawatt by 2030 and 32 gigawatt by 2047. And they're also planning 50,000 to 60,000 crore of investment for 7x increase in RE capacity, which will be done through equity and debt. And NLC will also invest 7,000 crores into NIRL. Lastly, on the cabinet approval for green energy boost, now NLC can infuse 7,500 crores equity in NIRL, which was agreed by cabinet minister.
Okay. Thank you for that, Varsha. Prasanna Kumar Motupalli is joining us, the CMD of NLC India. Sir, thank you so much for your time here. And while we'll talk about the green energy IPO, all of the plans, I want to get a sense from you on if there's any movement on rare earth. I think that has been the big one focus right now because of what's happening around the world and the shortage, and China sort of hoarding all of those reserves. Can you give us any update on what part NLC will be playing?
Madam, as you know, NLC India is having a vast experience of over 7 decades in the open cast mining. So we want to leverage that experience in the critical minerals and rare earth minerals also. So we have been participating in the critical mineral auction in all the tranches, and recently we got 2 critical mineral blocks in the state of Chhattisgarh. Similarly, the rare earth also we are exploring the possibilities of entering into rare earth elements mining.
Which is what I want to know. Is this in the realm of possibility? Is this now exploratory? Is there any real chance of rare earth requirements being fulfilled by NLC?
Yes, madam. We are exploring the possibilities. We are exploring the mining of rare earth elements also, along with all the critical minerals.
Okay. And sir, I'm just sorry if I missed it, but are there timelines by where you believe the first line of success could come in for this particular piece?
This critical minerals, we set a target of production of 1 million metric ton by 2030. So our all actions are in line with that. So we will be achieving that target.
Got it. Now, this whole thing around renewable energy, and I believe you are currently operating about 2 gigs of renewable energy assets, but you aim to ramp up the capacities to 10 gigawatts, I think by 2030, if I'm not wrong. Now, how does this happen? Is this back-ended? Is it happening in a linear fashion almost every year starting this year? Can you tell us a bit about it? And how does that impact your earnings over the course of the next 2 or 3 years?
So as on date, we are actually operating around 1.4 gigawatt and generating more than 2 billion units of green power. And as you rightly said, we are targeting to achieve 10 gigawatt by 2030. So by 2030, our renewable and other green power generation will be more than 50% of our total installed capacity. And out of this 10 gigawatt, almost 3 gigawatt work is already in progress in the state of Rajasthan, Gujarat, Tamil Nadu. Work is already in progress, and we entered a joint venture agreement with Assam for 1 gigawatt of renewable capacity. And we entered a joint venture agreement with Rajasthan for 2 gigawatt of renewable capacity. So 1.4 gigawatt is in operation, 3 gigawatt already in work is in progress, which we are expecting to be completed in next 1 year. And for balance capacity also, we already having plans and already tied up with the different state governments for setting up of renewable power plants.
So, but the scale up even so, sir, is quite sharp in the next 5 years, even if you're going from 1.4 to 10 gigawatts. Is that the right target we have? 10 gigawatts by 2030? Okay. So
exactly, madam. Exactly.
So the scale up is quite sharp. What is the capex going to be looking like for that? How are you funding it? Is a lot of that coming from this NIRL IPO?
Yes, madam. Actually, we are targeting for 10 gigawatt, so we require capex of around 50,000 crores for these renewables. So this 50,000 crores, we are going to fund it through our internal resources and also the asset monetization through the NIRL route. Recently, we got approval of cabinet for infusion of 7,000 crores equity. That will be acting as a strategic catalyst for our renewable sector growth. As on date, we are around 26% capacity, but we are targeting to have capacity of more than 51% by 2030.
You have a timeline in mind for this IPO, NIRL?
Yes, madam. All activities are in fast progress, and we already got government's approval for the tax exemption for the bulk transfer of assets to NIRL. We are hopeful that by September that process will be completed, and by March 26 we will be completing the legal and financial due diligence, and by end of first half of the next financial year, we will be able to take it forward.
What is the quantum of tax exemption, may I ask?
The total amount is 4,000 crores, and we have to take a call whether we will go at one stretch or different phases.
No, 4,000 crores is the size of the IPO. I'm talking about the tax exemption that the government has given.
Tax exemption for transfer of the existing assets of 6,200 crores from NLC to NIRL.
Okay, thank you.
So that tax exemption we got.
Okay, thank you so much, sir, for that. And that is the NLC, chairperson speaking. Just want to pull up the intraday, and the stock has spiked as we were having that conversation, because I think, Neeraj, not too much focus on the rare earth play that NLC is coming. I mean, India is very, very serious of not being in a negotiation with China where we have nothing in our back pocket, and NLC is going to play a very strong role there.
Yeah, so NLC, GMDC, all of that space looking very, very solid. Well spotted, Tamanna. Okay, let's move on and talk about another stock in focus, IRFC, up, I think, about 4% right now. We spoke to the management. Harsh caught up with Mr. Manoj Kumar Dubey. Hear out a slice of the conversation.
Into what IRFC is up to. There's a transformation which is at play at IRFC. You're going from a single client to a multi and sector-wide reach, which you are trying to do in terms of lending. So before I do that, give us some lens into Q1 FY26 before I go into the diversification which you are playing out at on the existing business. What is the impact of the rate cut and how do margins evolve on the existing business for FY26?
As you mentioned, we came out with very good numbers, whether it is top line or the bottom line. In fact, our PAT has grew up in double digits on Q1 basis. Going forward, as you know, from March this calendar year, and precisely in this first quarter, we have shifted to the diversification model of lending. So overall, the quarter has been very heartening and encouraging for the fact that we are getting a lot of queries and a lot of businesses also. In fact, our order book is growing, and today we stand around 25,000 crore of the order book, which is all coming from clients in the railway ecosystem other than IR. As you mentioned about rate cut, yes, the sector is getting very competitive rates. In fact, IRFC having its very low overhead cost, we are competing with banks preferably for the good quality assets. And for the big ticket projects, of course, there are competition with our peers in the NBFC sector. Overall, as the country is growing with a lot of demands in the capex, we feel that the story is going to get positive every quarter. And I always mentioned that in the railway-centric sector, there is huge scope of investments, and RFC is well placed to cater to all those needs.
Got it. Sir, what was the growth like for Q1 FY26? Because I didn't see your investor PPT, and therefore trying to understand what the growth is looking like. Second, for FY26 full year, what's the growth projection going to look like?
Yeah. So, if you see my top line with the corresponding quarter as well as the trailing quarter, we have grown up of around 3%. While my bottom line has grown up in double digits, the reason I mentioned in my last con call also that we are now having the assets where the margins are better. If you look at my NIM, that is net interest margin, it has now grown up in cumulative more than 1.51%, which is up from 1.31%. So this net interest margin will keep growing because now we are going in high margin business apart from the railways where I was getting only 40 BPS. So far as my top line is concerned, going forward every quarter we will be having more of top line and asset under management also. And I stand by my guidance that I gave in the beginning of the FY that we will be disbursing something around 30,000 crore this year. And my sanction of assets will be something around 60,000 crore. And we stick by that, and perhaps we are moving a little faster than what we had given the target.
Got your point. Sir, with regard to the rate cut, what is the impact on your margin number?
I just told you things have got really competitive.
Okay.
But for the fact that we are having the lowest overhead cost in the market compared to any of the NBFCs or any of the banks, so we are having a little comfort. But yes, the total rates being offered nowadays, even for a tenure of 10 years, have actually come down by 20 bips to 30 bips in the competition that I'm seeing, which is very good for the country as such. And that was the precise reason why Government of India has gone for the cut. So the benefit must be passed on to the customers, and we are also doing it, and others in the ecosystem are also doing the same.
Point taken. So large part of that cut will be passed on, and therefore no margin accretion for you as a result of this. So how should you look at OPEX? You're going into a model where you will require a larger workforce to assess the loans that you're giving out, the rate at which you are giving it out. What happens to OPEX? Because the one big factor that I saw in your numbers is your OPEX to assets or cost to income is the lowest in the NBFC industry.
You are very right, Hers, and that is our mainstay, and that will remain in the focus. We are going to grow, but our numbers will be very low compared to our peers, and we will remain a company which will be having the industry lowest OPEX. Going forward also, we don't see my OPEX growing from 0.1 to more than 0.15. So that's the target. While my assets will be growing with more of the net interest margin. So if you have a comparison going forward with my top line as well as my bottom line, my OPEX will be, for years to come, will remain the minimum. And that is perhaps something which is giving us a more legroom to grab as many good quality assets in the future also.
Okay, all right. Sir, give us some color around this change in clientele. What comfort do you have that your NPA ratios won't spike? Because all this time you're lending only to the Indian Railway, where there's no concern with regard to where NPAs is a challenge. Now, if you're lending to the private sector as well as other PSUs, that could well be a challenge, right?
So I'm just correcting you. Right now, we are not directly lending to any private sector. We are having whole of government approach. So as you see, Indian Railway is one of the parts of the whole government. So now we are funding to everybody in the government who is having any kind of backward or forward linked with Indian Railways. And to our comfort, there is hardly any government department or the industry who are not having any direct link with either backward forward with the Indian Railways. So in a way, anything in the government who are doing business perhaps are going to have a link with the railways, and they are our clientele. Number two, private people will come in the picture only when they are entering into any kind of long-time concession agreement or some kind of joint venture with government, and those entities are as safe as anybody else. So the color that you wanted from me is the positive, in the sense that with the Indian Railways, we were bound to earn only 40 paisa or 35 bips on the project and the rolling stock. So that was the limit of our margins. Here, despite being very competitive for the best kind of projects that the government ecosystem is offering, we are here garnering more than 2x to even 3x also what I was earning from railways. So going forward, I'm emphasizing that our net interest margin will be showing every quarter a very healthy growth, which will be giving a very good bottom line for my investors, and that should be music to the ears.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live. Ask, decide.
All right, welcome back. Just a quick news update. MCX has halted all trading. They're not able to accept orders from brokers. The last update we got was it would reopen at 10:10. But is that now clear, Charu? Will trading start at 10:10, or are there technical issues that still need to be sorted out? What are you hearing?
Hi, so the exchange is in the middle of sending out a media release and speaking to us about what the actual reasons are. However, as per some people that we spoke to, this seems to be a technical glitch. While the website mentions that it will be cleared by 10:10, all trading remains halted. We must understand that since it is technical in nature and there is a lot of professional help that is needed on the back end, it is slightly unlikely that it would be solved in the next 9 minutes. We are still waiting for the statement for proper details on what kind of technical glitch it is.
Okay. All right. So 10:10 is what they've written as of now, but it could be updated, and we'll keep giving you those updates on our ticker as well. Thank you for that, Charu. Charu Singh on top of that story. All right. Focus on Dixon Technologies. Blockbuster Q1 revenue and EBITDA nearly doubling year on year, driven by stellar growth in its mobile division and steady margin performance. Before we speak to the company's management, Puneet is joining in with the top highlights of Dixon.
Well, thank you for that. So it was led of a very strong growth, 95% in terms of revenue. That beat estimates of roughly about 86 to 87%. That was from consensus as well as analysts we spoke to. That's one key point. That's largely led by the growth in the mobile division. The revenues are up 125%. Mainly from this particular chart, there will be three things I'll be watching out for. What is the strategy for the company in the component space? They've already announced an acquisition of QTech India, and that will be the key one for camera modules specifically. They've given some key numbers as well for QTech India, that the market is 470 million in terms of camera modules, and Dixon alone can consume a lot of that, of about 180 to 190 million units over the next 2 years. That's going to be point number one. The multiple JVs that they formed over the last 12 to 18 months are now bearing, some of them have already started bearing fruition, while the others are expected to come. Some of them are the JV with Longcheer. Vivo is going to be one of the key ones to watch out for, and that could stem some of the key degrowth of or some customers moving away to other EMS players. That's one. And the final one will be on how India maybe open to green light some of the key joint ventures with China at a much expedited pace compared to our older, and our colleague Shrimi had broken the story. So with Vivo as well as Longcheer and among other Chinese partners, the Vivo is with Dixon is partnering with, the faster approvals could be one of the key ones to watch out for. So these will be the three things to watch out from this conversation from my side.
Okay, all of that and more, of course, but let's first start by asking Saurabh Gupta, Chief Financial Officer at Dixon Tech, how is he managing to belt out these winners after expectations being so high, and so much of capex also in the last year. Saurabh, take us.
You want to tell Saurabh that we compare him to Dixon to Sachin?
Alex
compared.
Alex did, yeah. He talked about how the pressure to, hit those centuries. If you heard our commentary this morning and you've managed to do another one, that's now the bare minimum expected, Saurabh. This is the bare minimum that is expected from a Dixon.
That's too much of an expectation. Can't have that 100% kind of a growth maybe in future years, but definitely, yeah.
Yeah, so let's understand. Let's understand what's worked and if it can continue to.
Yeah, so specifically, sorry, I didn't get your question, sorry.
Let's understand what's worked this quarter and if it can sustain. Let's start from there.
Yeah, so I think so worked. We had a very strong order book. The momentum continued in our mobile business, which continues to be the largest piece for us. We see that momentum continuing in Q2 as well. Of course, our other verticals on washing machines, refrigerators did really well. And yes, we expect a strong order book. We have a strong order book ahead of this festive season in Q2, and there are some more customer acquisitions lined up. Third is our foray into this backward integration component should start playing out. Some of them will start playing out by Q3. Some of them will start playing out by Q4, Q1 of next financial year. So yes, we are sitting on a huge opportunity and exciting times ahead for us. Gradually and slowly, we'll keep taking some grabbing some export opportunities in mobiles, in lighting. So that also is on the anvil, and clearly, yeah, we're sitting on a very big opportunity right now.
So, of course, mobile and EMS has been the winner, as we've seen for the last several quarters. Consumer electronics and appliances has seen a little bit of degrowth, and lighting has also been a persistent, I won't say pain point, but yes, a bit of degrowth there as well. Are these two verticals that you're now focusing on, or the focus remains on mobile and EMS division?
So there's a focus on every vertical, and like the way we structured, we have a CEO for each of the businesses where they defined KPIs are there for them. So TVs, yes, LED TVs has been slow. One, of course, there are structural issues that industry has not been growing, but quarter one was significantly slow, which we expect now that the volumes in quarter two will grow by almost 3 times for us ahead of the festive season, and large part of that business will come from our own design solution. So you should see those numbers significantly coming back as far as LED TVs is concerned. The other part of consumer electronics, which is the refrigerators, it continues to do well. We are expanding capacities in our direct cool portfolio, adding more categories on side-by-side, frost-free, as well as visi-coolers. So clearly that should have a positive impact in the coming years. Second, as far as lighting is concerned, lighting continues to have an issue whereby there is significant price erosion which has happened in the last 2 years, and it continues to happen. So it has become a highly commoditized kind of an industry. But what we have done strategically is we have tied up with Signify, and it's a 50-50 J with them. So one, it helps us get into all the product categories. Everything gets consolidated into the JV. We move into the more premium product categories. So there'll be a trend towards premiumization. And third, we feel that gradually export opportunities with them will also keep opening up. And also, as mentioned on our earnings call, we mentioned that we're already working with a large retail chain for some kind of a product categories of strips and ropes, and that should hopefully get executed in this quarter. So, and once we get an order, I think so then this opens up opportunities for even more opportunities for us on the lighting side.
Saurabh, I'm moving a track lower to the operational metrics right now. Two questions. One, the mobile PLI is, I believe, expiring in FY26, but you've guided to same margins in FY26 as last year, and I believe you've retained your outlook of 120 to 150 basis points margin expansion in FY27 by the mobile segment, which is probably about 70-80 basis points overall, right? So despite the mobile PLI impact being seen, you believe there will be a margin expansion. How does that happen?
Yeah, it will all happen through this component play, Neeraj. Our focus into this backward integration play, deepening of manufacturing, creation of a component ecosystem. So our partnership with HKC on the display side, displays for mobiles, notebooks, automotive and TVs. Then a partnership with QTech on the camera module side. So both displays and camera modules form almost 10 to 12% of the bill of material of a smartphone. Third, our partnership with Chongqing on the precision components for mechanicals and metal parts. And fourth, we are pursuing one more component, which will be on the telecom side. And hopefully we should be announcing that shortly as well. So clearly combination of all these four components, we feel, and some of them will come at a double-digit margin, some of them will come at a higher single-digit margins. So the numbers that we have done is that yes, there can be a margin expansion between 120 to 130 bips in 26-27, even after taking into account the PLI benefit which goes away, which has almost a 0.6% contribution to our numbers. And since mobile is almost 75-80% of our revenues, so clearly any expansion which happens in mobile and also IT hardware, so any which is 80-85 broadly combined put together, will have a positive impact on the company level margins. Okay. And we see that 27-28, once a more expansion happens in these components categories, and there's a further ramp up in stabilization, there can be further upside to the margins in 27-28.
Got it. And Saurabh, would your return ratios stay relatively similar to what you've traditionally enjoyed? I believe mid-30s, right? If I'm not wrong. Do you reckon that continues to be in that range over the course of the next 2, 3, 4 years as well?
Yeah, Neeraj, we feel confident our return ratios, ROC is broadly at 48-49%, and we have grown from 2,000 crores to almost 39,000 odd crores, and we plan to double this revenues in the next couple of years. So we feel confident that, like the way we have done historically, we have not compromised on our ROCs. In fact, that has only strengthened over the years. The free cash flow, the current assets management. So there's a huge focus on that, and we see that this ratios will not be compromised, because all this component play, Neeraj, will come at a very good ROCs. Of course, the asset turns may be lower in this business, but when the margins are higher, so that higher margins compensates, and you get almost similar ROCs in the business.
When do you see this components play kicking in, Saurabh, like you're describing?
So camera module should kick in from Q3. We will close our definitive agreements in the next couple of months. Displays by Q1 of next financial year, starting of next financial year. The precision components hopefully by Q1 or somewhere between Q1 and Q2. And this telecom component play again can kick in the next 3-4 months. So yes, so some of them will kick in H2 and some of them will kick in by H1 of next financial year.
And then when it all plays out, what are the kind of margins that you're penciling in? when you have that backward integration plan actually playing out and being implemented? Because this is something that you've been talking about last few quarters.
Yeah, so as I mentioned, 26, 27, on almost 100 bips at an overall level, because a large part of that will happen in mobiles and IT hardware. And then 27, 28, there can be another additional 25, 30 bips. So that's the way you should look at it broadly.
Okay. Just trying to, harking back to one of your first responses where you talked about client acquisition and 6 to 7 more lined up. Obviously, you'll not give us an idea on who, what size, but anything that you can add in terms of details, in terms of timeline, are these going to be significant additions? Any color that you can add there?
No, I didn't specifically mention 6 to 7, but yeah, there are more customer acquisitions which are lined up. So that's a continuous and a critical.
I heard 6 to 7, so it's not 6 to 7.
No, not 6 to 7, but yeah, definitely in every vertical we plan to add more customers. So we have been doing that in across all the verticals, so whether it's refrigerators or TVs, and you will see some more. So in mobiles, it will be not customer acquisition, but yeah, our wallet share with those customers can potentially increase. So we are potentially hoping for closure of some JVs with a partner Longcheer on the ODM side. So that can have a potential upside on our mobile numbers. Then we are also looking to get the Vivo JV approval, hopefully in the next couple of months and next 3-4 months. So that should start consolidating from Q4. So yeah, so a lot of things ahead with us. Yeah.
Okay, just on that last bit, and I think we had a brief conversation on Press Note 3 and what the clearances that are being awaited from now. What we are reporting and what Shimi Chaudhary, my colleague in Delhi, is reporting, and what we're hearing is that some of those clearances, not specifically to your company, but for a few companies, a handful, will come in sometime soon. Are there more JVs coming in from China that you're looking at actively at this point?
Yeah. So HKC is currently being pursued, is appraised by the government. We are expecting the approval hopefully shortly for Longcheer, which is one of the largest ODM partners, and they have a large play with a lot of global mobile phone brands. And it helps us to get into new categories apart from mobile phones. It helps to deepen the level of manufacturing. Then this JV with Chongqing Yuhai on precision components, again, is a Chinese company, so that we will be filing our application shortly in the next couple of weeks. So this is what we are. On the telecom side, it's a non-Chinese company. And as far as the QTech on the camera modules is concerned, the company was already operating in India. So we don't require a Press Note 3 approval. So these are the 5 broad JVs, out of which 3 would require an approval and 2 of them will not require an approval. Yeah.
So, okay, 5 JVs, 3 need an approval. Those could come soon. So that's another trigger to watch out for when it comes to Dixon. Thank you so much, Saurabh. Always a pleasure to speak with you.
Thank you. Thank you so much for having me. Thank you.
All right. Let's move to the big market conversation. And we have a very exciting guest this morning. Nitin Bhasin, Head Institutional Equities at Ambit, joins in. Nitin, always a pleasure to speak with you. Wanted to know what you're making of the results, because we were having a bit of a debate this morning on whether it's a curate's egg. Are they good, bad, or a bit of a mix? What are you making of it?
The most often used word in the markets is mixed. So let's stick with that as mixed.
Safest.
Mixed. Clearly, no clear trends. I think number of companies which have released the results is not considerable enough one to actually form a view on that this is what's playing on. But definitely you are getting some cues on sectors like IT, some cues on sectors like banking, lending, credit growth. I think some specific sector cues are emerging, but for the overall as a country, I would say not yet. I would not form an opinion based on these results.
Okay. Nitin, good morning. It's been a while, but good talking to you. What's the skeptic argues that for the kind of growth that is evident in the last couple of years, or it is last year and possibly this year, the valuations are expensive. The optimist says that post-COVID, the average multiples have been about 24 times, and therefore at 24 times for an economy which is growing 6.5%, CAD is positive, etc., we are not expensive. Are we expensive to your mind, or are we not?
So yes and no both. If you look at the banking sector, appears to be again yes, and if you look at the banks, definitely appears inexpensive when you look at the last year's numbers. But if you look at the Nifty X banks or Nifty 100 X banks, and what you could see is the whole market at the large caps relatively is expensive. But markets don't move to valuations. Markets also move to what is the expectations and how are the market results coming out or numbers panning out to the expectations. And clearly, one has to follow what's happening on the upgrade or the downgrade cycle. With sectors, what's happening to the upgrade and the downgrade cycle. So clearly, what we are witnessing right now is though banks may be relatively inexpensive, performed very well in the last 1 year, but they are going through their own June quarter, perhaps even September quarter to some extent. Sort of a moderation in credit growth, continued pressure on NIM or expected pressure on NIM, and hence margin pressures possibly over there. So I would say mid cap, small cap appear relatively more expensive to large caps. Overall, the whole market to its own history is expensive, but the flows in India, remember we have keep on talking about this in the past, the flows in India are strong, which is domestic. Hence, that is the elevated new price earnings multiple of India. And
can I ask you on that? Because I know that you go out a lot to meet global clients, right? So what is the FI view here? Are they waiting for something to put in money into India? Anything that insight that you have?
So in the last 2 weeks, meeting clients across Singapore, Taiwan, Hong Kong, what you get a sense by meeting them is, again, depending upon what color of capital or what length of capital duration they have, but clearly not overtly optimistic buoyancy. Not many people sitting and saying, hey, India is very inexpensive and one should be actually putting a lot of money at work. We also see in the print that after a few months, FI volumes or FI flows have again turned negative. I did not see sense of exuberance, sense of optimism that everybody is jumping out of their chairs to buy India. On the sides, pretty cautious, I would say, and realistic that in these valuations or in sort of a slowing earnings EPS growth environment, one should be picking stocks. I would say that little somber mood of the institutional investors, even in South Asia.
Driving that caution, Nitin, that you are sensing, any specific indicators or a sense of fatigue as well on the India story? In your view, where is that caution coming from?
I think we as market participants read the tape also, read the economy also, and if you can see that for a while now, Nifty's been oscillating between 24 few hundred points and 25, 500, 25, 600. I think the market's also trying to find for itself a direction, given, because there are mixed signals where petrol consumption in India may be still tracking the GDP growth, but at the same point in time, there are so many other indicators which may be highlighting that the economy isn't actually, bustling ahead. So hence, because of which estimates, we spoke about this last time as well, in this fiscal of FY26, earnings estimates, below 10% for Nifty is one of the lowest ever. And in that scenario, downgrades or upgrades are not very consistent. So market is trying to find itself a feet, which direction to go to. So that's how I would answer that.
I want to come to this note that you've put out and where you focus on price momentum. I think in the context of what we've been speaking, where there is a lack of clarity, etc., why do you think price momentum is an important indicator when you're picking stocks? Let's just set the context for that.
Sure. So, this is based on a paper written in the developed markets, price movements of stock prices. Multiple times, we are looking at which stocks to buy, which stocks to sell through different strategies. Some are fundamental, some are quantitative. Even price by itself shows. So what we discuss in this note is a brief and not that well understood concept that over a period of time, two stocks can actually move and deliver similar cost sort of returns, whereas the trajectory of the price movement of the stock also speaks. Some stocks can move very wildly up and down, and some stocks move slowly. The strength of the trajectory from point A to point B shows you what is the strength in the stock price momentum. Every price momentum is not similar. So what we do is we highlight for clients following, trend following, clients following 1 to 2 quarter strategies, what sort of ideas to look at using a tool. This is that tool we've put out for the use of clients. They can actually marry this with earnings upgrades. They can marry this with earnings estimates, revisions. So this is what it is. We highlight a few stocks, 7 or 8 stocks in this particular analysis for our clients.
Let's actually come to those 7 or 8 stocks. Bharti Airtel over there, we can see Indigo and quite a few others. Is the basis largely on price momentum?
Yes, yes. So, as market has multiple sort of analysis, in a market like this, where we've been highlighting that it's a stock pickers market rather than a trend market of the index or indices, or for that matter, sector. This is another way to look at what is the price movement, and should one use momentum, what should be the reason and how one should be using the price momentum to focus on these stocks. Separately, we also took names of a couple of names like Bharti and Interglobe. We recently covered Interglobe in the as a fundamental coverage also, and we as a house are positive for the reasons such as a secular demand, industry structure with only 2 players, and the rising increase in share for the Indian airlines, especially for the international traffic. So that could be a bull story for long run, but price momentum speaks for the near term as well.
Okay, I noticed that you don't have any platform companies on that list. And yes, the Interglobe story, I agree, a lot of people coming in and speaking about it. I'm wondering what you're making of the platform companies back in flavor, I would say.
No, for sure. Platform as a company, or every company wants to become a platform company or position themselves as a platform company in India right now or across the world. We find all the platform companies, the more so which are discussed, such as an Eternal or a Swiggy, to be expensive right now. The kind of optimism that we hear, how the valuations are moving from FY30 based, SOTP based, anything is possible based. I think those sort of arguments are now coming through in companies such as Eternal. Great franchise, great business, great founders, but at the same point in time, what has to work out, everything has to work out for them, and no, it has to work out nothing for anybody. Perhaps those sort of valuations are visible today in Eternal. So we are relatively positive on companies such as Make My Trip or Paytm, rather than companies like Eternal and Swiggy. Presently, our analyst team finds them pretty expensive on the valuations. On the other hand, I would dare say, just about a month back, we had put out our note on banks versus IT, overweight on IT. I would say, could it be the time right now to look at IT services, which have lost market price performance or sector price performance to these new age tech companies? So relatively, I would say to own IT services for the next 6 months to 12 months over a Swiggy or a Eternal or the new age platform companies right now.
Anything specific in IT services you can identify for us?
We've been highlighting a few companies like Tech Mahindra, where we see that the valuations are supportive and there is a scope for margin expansion as the company goes through, sort of a rearrangement of their operating structure, improvement in their cost, etc. So Tech Mahindra could be one, but that is the name that comes to our mind. Companies such as a few ER&D companies, but largely that's one name that I would like to highlight. We are positive on right now.
So quite a few ideas there. Nitin, absolute pleasure speaking with you. Thank you so much. And I think an interesting contrarian view as well, Neeraj, where he's saying next 12 months, IT service companies over your platform companies, which is all the rage right now.
I think it's interesting that their note suggests that very strong seasonality factors for IT services in H2 versus H1. So could be very, very interesting to see. The markets are okay. And on that okay note, which is not so bad, we wrap it up on this leg of India Market Open. Up next is Ask Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew. Now, this show gets you answers to all of your stock-related questions. And to that end, you can write to us on the numbers that you see on the screen in just a bit. But for now, let's turn to an earnings conversation. Zensar Technology is reporting a better-than-expected performance in the first quarter. Puneet joining in to talk to the management. Puneet?
Well, thanks so much for that. We're now being joined by Mr. Manish Tandon, who is the CEO and the MD of the company. Mr. Tandon, a very good morning to you. Thanks so much for joining in. Let me first start off with this quarter specifically, because we've seen a difficult quarter essentially because of factors such as the tariffs amongst other, which has impacted the deal win. So, what do you continue to see spends by companies, or are you seeing some pullback in the market?
I think, Birpal, thank you for acknowledging the good results. We grew 3.3% sequentially in reported currency and 1.9% in constant currency, and we maintained our EBITDA margins in the range. So overall, a very good quarter for us, considering what we have seen in other results till now. The market, continues to be a tough market. It is not that, things are all hunky-dory there. There's a lot of uncertainty in the market because of this entire trade thing, the geopolitical situation, and so on. But we think that we will continue to see sequential growth to some extent. To what extent, I cannot tell you, but we are hopeful that we will continue to see growth in Q2 also. But the market remains fairly tough.
Well, Mr. Tanan, the other aspect is on deal wins. We've seen deal wins for you as well for the industry in the banking space, and that's been continuing. Do you expect that momentum to continue for banking and also deal wins from the other sectors? Because we've seen some pressures on sectors like manufacturing, retail, consumption, among others. So if you can give some perspective on that as well.
I think we are seeing reasonable. Our order bookings have increased to 172 million or so, which is 11.9% increase from the same quarter last year. So that is good. We continue to see momentum in BFSI. We continue to see momentum in healthcare and life sciences. We continue to see some flattishness in MCS and in TMT. And Europe, although was muted this quarter, we believe we have a decent pipeline there, and same is the case with Europe.
And could you just add a little bit more, Mr. Tandon, on the manufacturing sector as I spoke about? Because we've seen pressure because of the tariffs amongst others, and US specifically has been impacted by this. We've also seen some pressure coming in with this quarter from other IT companies in Europe as well for manufacturing. So have the transformative deals which were happening last year been on pause? And do you see that only the cost takeout deals are happening now in manufacturing, or are you seeing some pressure there as well?
At this stage, people are just doing mandatory projects that they have to do. When the environment is uncertain, then it is a natural tendency to try and do only what is needed, right? So anything related to which is non-discretionary, like compliance or regulation, or if you're changing, if you're doing an M&A, then the transition services agreements, keeping the lights on. Only those things are in play. Whether they are cost consolidation deals or anything which is discretionary is not in play.
And Mr. Tandon, we spoke about pressure coming up in Europe as well. So in that aspect, have you seen companies pause across the region in terms of other sectors as well? Or do you see that impact of tariffs only in USA, or has that started to impact the broad-based regional aspects as well?
So this is across the board. I think tariffs are a global phenomenon, and it's trade related. So it is both sides are impacted by it. Uncertainty goes both ways. So I wouldn't say that it is US specific. I would say we are seeing the uncertainty in all the markets that we operate.
Well, Mr. Tandon, thanks so much for joining in, giving us perspective on across the board aspects of Zensar Tech as well as the industry. We wish you the best and look forward to our next conversation. But, Alex, and that's largely been what's impacting all the IT companies, right? It's been that certain deals in manufacturing and retail and those have been paused, and Zensar also impacted by that. But the company is trying to maneuver with some more deal wins in the next couple of quarters. That's just the gist of what the management also affirmed yesterday in the conference call as well.
I wonder what Infosys says later today, and whether that conforms with what we've heard so far in the rest of the commentary. What specifically would you look for while you're sitting here with me? Because that's going to be the one big takeaway this evening when they post results. In terms of order wins and outlook for the rest of the year?
Definitely, and I think one of the most compelling point about Infosys has to be the guidance, because they were at 0 to 3%, and if they will increase it to 1 to 4, that's going to be one of the most debated points today for Infosys. But we also have Persistent as well as Coforge today, and those are the big mid-cap IT peers, and they are expected to, of course, outperform in terms of growth. But we'll see the commentary summation of that and bring that to our viewers tomorrow as well.
Yeah, thanks so much, Puneet, for laying that out for us. At this juncture, Coforge is flat, and so is the IT index, just about unchanged, barely nudging in the green. Infi, ahead of the results, is trading with gains of about 0.6% or thereabouts. And the equity markets as a whole, the broader markets, of course, underperforming the benchmark Nifty 50, but the Nifty 50 gaining only about 0.2%. And once again today, you have a pretty narrow range for the benchmark Nifty 50. You can look at the constituents of the benchmark and you will see that there are more winners than losers. And Reliance Industries is making a bit of a comeback after a couple of days of complete underperformance. It is contributing about 7 points or thereabouts. No real big movers like you saw in trade yesterday when Eternal really took the charge and completely balanced, more than balanced, Reliance Industries' fall on the other side. The broader markets, as I pointed out, underperforming. You have the mid-cap index that's down about 0.25% and the small-cap index down about 0.2% at this point. And let's also very quickly pull up the sectoral index. Realty as a pack is down quite considerably. A couple of those constituents not doing well. There is Oberoi as well as Lodha that are reacting to large deals, to a clean out trade. And that was reported earlier today. Those two stocks are under pressure, and that's really led to the rest of the underperformance as well. But the other counters that are not doing too well are more profit taking evident in defense companies. And let's pull up the constituents of the defense index as well. That index is also down about 1% or so, 1.2%, and all of the constituents on the defense index losing ground. What's doing well is the auto pack. And the auto index is up about 0.9%, the one winner in trade today. And Tata Motors, Maruti Suzuki in focus. Hero MotoCorp only gaining about 0.6%. Of course, it's in the news because it has launched a new 100cc vehicle. Now, these are all stocks that we've spoken about today, but there are also a lot of other stocks that are reacting to the numbers, not least of which Dixon Technologies, you have Cyient DLM, you have a few other companies that have also posted their numbers. Credit Access Grameen, for example, that has posted numbers. You have companies in the cement space as well that are reacting. And Paytm, everybody thought that it would pull an Eternal, but it hasn't really done that. In fact, at this point, it's down about 0.9%. Is this a scenario of buy the rumor, sell the news? It was anticipated that they would return to the black. And that is indeed what they have done, down about 1% or so right now. But let's get on board Lancelot Dicuna, who's a CIO of ValueX Wealth Connect. Lancelot, speaking to you after a long time, and pleasure is all mine. Vaishali, always a pleasure speaking with you. Vaishali Parekh of Prabhudas Leaders are joining us today as well. As you probably guessed, this is a show that gets you answers to all of your stock-related questions. You can send your questions to us on the WhatsApp number on the top of the screen, or you can call us on the number at the bottom of the screen. The first question today is from Ravi, who's writing in from Vizag, and he says that he wants to invest 1 lakh rupees in a couple of companies for a period of 10 years. Lancelot, this is a pretty large time frame. He's looking at NetWeb Technologies and Tata Elxsi. And he's looking at whether or not they can achieve a 25 to 30% CAGR. That's a pretty tough ask. Would you say that that is likely, that is possible?
So I don't know much about the NetWeb Technologies because I don't really do follow that in detail. But Tata Elxsi, I can tell you that yes, there is a potential for it to really grow over the next 8 to 10 years because they are focusing on specialized software projects. And they basically do what they call work for hire, right? So they do high-end technologies and then they hand it back over to the person who has commissioned them to carry out the software projects. And so there are so many projects which are both in the AI space, in the automobile space, in the space technology, in medical healthcare, where those segments have been growing. So while you see that revenues and profits may be a bit lumpy because sometimes project wins do not happen every quarter and sometimes may get deferred. Overall, the company will show some good growth going forward, and then it also has corrected quite a bit from its highs, and that could be an opportunity to start accumulating this stock.
All right, so that's the view on Tata Elxsi. Suresh is calling us from Vijayawada. Suresh, very good morning. Oh, okay. I believe that we've just lost Suresh. Suresh, maybe you can call again. The next question that I'm taking is from Vishal, who's writing in from Dubai. And I'm going to read this out. He says, would it be strategically beneficial to reduce my position in Grasim Industries and initiate a fresh investment in Ultratech Cement at the current market price? Given that Grasim is a holding company of Ultratech, does it make sense to hold both stocks simultaneously, or would it be more prudent to allocate them in specific portions? As a long-term investor, he seeks clarity on the optimal approach. Generally, the view is, of course, Vishal, that holding companies trade at a discount to the underlying, and Ultratech, of course, is a leader in the cement pack. So let me get a view from Vaishali on the levels that you should watch out for holding Ultratech Cement if you are to enter these levels. Vaishali, what's the view?
Hi, very good morning, Alex, and everybody else. I think Ultratech continue holding, and if you want to buy, look for a level of 11,500, because eventually I think the stock will surge high going towards 14,000, 15,000 levels. So I would say wait for a dip, because it's already moved right in the recent data from 10,500 to 12,000, nearly 500 levels. So wait for a dip to get into the stock, and for longer term period, look for a target of 15,000.
Okay, all right. Look for a target of, say that again, 15,000, huh?
15,000.
Wow, that's
yes.
quite a considerable upside. Lancelot, quick view on holding the holding company and the underlying. Is that something that you would do?
So I think, Alex, it's better to always hold the underlying, because you are focused on one business and you can evaluate that business. In a holding company situation, number one, there will be multiple businesses, and the valuations of those businesses, they get morphed into the overall valuation. And that also suffers from a holding company discount, as you mentioned. So given that background, it's always preferable to hold the operating companies, because it's much easier for you to see the value reflecting the growth in those operating companies. And since Ultratech is going to have a long runway of growth, there is consolidation happening in the cement industry. Smaller players are getting merged into the larger players, and they are the most efficient manufacturer, having the best EBITDA per ton. So I think it's better to move to Ultratech as opposed to trying to hold on to Grasim and saying that, yes, we are also having benefit of Ultratech growth.
Good point that you're making. All right, let's take the next question from Bengaluru, and Pradeep is calling us. Pradeep, very good morning to you. How can we help you today?
Good morning. See, I'm having 150 shares of granules.
Okay.
Bought at 316.
All right.
So I wanted to know whether I should book profits, or should I hold it for another 1 or 2 years?
That's a very good, very attractive buy price that you have. When did you buy it, Pradeep?
This was purchased in 2023, late 2023.
Okay. And so
No, sorry, late 2022.
22. So you've held it for a while. What was the thinking at that time when you bought it? Did you buy it from the perspective of 2 years, or did you buy it for longer?
No, because at that time I had a horizon of 5 years.
Okay.
I started off with a horizon of 5 years. Now it has come down to 2.
Right, because you've already made substantial gains. Okay, so let me ask Lancelot what he thinks. Lancelot, what are the prospects of granules going forward? Do you anticipate that further upside is possible on the back of the fundamentals? Should he hold for another couple of years?
So if you look at the annual revenues, they've been flat for the last 3 years. They've been from March 23 onwards, and it is trading at a 20-year multiple. While on a profitability basis, it has shown profits between which are again remaining flat over the last 3 years. So I think the stock, more or less, unless there is some change in the trigger to show growth, looks difficult that you will get a much higher price level at this point in time, because both earnings as well as revenue seem to be flat over the last 2-3 years.
Yeah, it's a point well made. Okay, in fact, I was looking at the performance, and indeed, March quarters, when they saw a bit of an uptick in revenue, but in the past 1, 2, 3, 4 quarters before that, they've actually seen a decline on a year-on-year basis in the revenue. So that's certainly something to watch out for. If you are to sell, though, very quickly, on the charts, Vaishali, what level is a good level to exit?
No, I would say actually nothing is happening in this stock. After a good corrective move, it's just oscillating between 400 and 480 levels. So if one has to hold, keep a stop loss of 400 since it's bought at lower levels, because overall, in my opinion, pharma sector has really not participated. And if this has to participate above 520, this would gain momentum. So either hold with a stop loss or you get into a better pharma stock.
Okay, and very quickly then, what would that better pharma stock be?
So I would right now focus on Natco Pharma. I would focus on Alchem Lab. These are the stocks which are, in fact, even Lupin looks quite good at these levels. So I would focus on these front line.
Okay, all right. Bonus questions being asked for you on that. Hopefully it benefits you. Nikhat from Bengaluru is asking about BHEL. I'm coming to you on this one, Vaishali. And he's got 50 shares at a price of 324 rupees. He's holding for a period of a year. He has been, and he's anticipating that he will hold for another 6 months. What is the potential upside, and what target would you put, if at all, and would you hold first of all, and where would you place the stop loss?
So, well, the trend has definitely improved since quite some time. We've seen a rally right from 190 levels to 265, 270. Now, currently it's consolidating. So I would say for near-term basis, since it's a shorter-term period, keep a stop loss of 240. And if the stock holds above 260, it gains further momentum to 270 and higher. But 240 stop loss is a must since it's for a shorter period. So okay. I would say hold accordingly.
Hold accordingly. BHEL, that's a view on BHEL, currently trading at 8% higher over the last 3 months or so. Dheeraj is calling us from Hyderabad. Dheeraj, very good morning to you. How can we help you today?
Good morning, sir. My query is regarding Ganesha Ecosphere.
Okay.
I purchased 165 shares of Ganesha Ecosphere at 1485 rupees.
Right.
So it is a recycling company.
Yes.
It touched an all-time high of around 2,350 or 2,400 levels. So the stock corrected a lot. So I took a position in this stock. So is it a right entry, or should I shift to something like Dr. Reddy's or Persistent, which are declaring results? Is my query, sir.
But completely different sectors. Why do you want to shift this? And this is a long-term investment that you have?
No, sir. Short-term
it's a trading idea. Okay. I understood. So what were the two stocks that you would highlighted?
Persistent Systems or Dr. Reddy's.
Okay, got it. Okay. So Vaishali, then to you, and from a trading perspective, would you buy in anticipation of the results, before the results, or would you trade it after the results? What strategy is better in your opinion? And between the three that he's mentioned, Ganesha Ecosphere or the other two, which is Dr. Reddy's and Persistent?
So as a rule, we never play results. We wait for the result outcome and then we take a call. I would personally say that yes, first let's talk about Ganesha Ecosphere. Long-term trend is very intact. This is in fact an opportunity to add more to the stock with 1400 as support levels. And when the stock gets into rally, it can retest 1700 or so. So if time is not the factor, this stock should be held on. But otherwise, for the other two stocks, wait for the results and then get it.
Got it. All right. So that's a view on Ganesha Ecosphere. Hopefully that answers your question, Dheeraj. We've got the next question from Rajan, who's writing in again from Bengaluru, and 310 shares of Pidilite is what he has. 2,100 is the buy price, and sitting on a considerable amount of gains at this point. He's wondering whether to add, hold, or exit. He's got the capacity, Lancelot, to hold for another couple of years. What should he do?
Well, I think one should hold, although the company in the last maybe 2 years or 3 years hasn't really done much, but this is mainly because, the entire consumption market or the home improvement market had taken a beating on the back of higher inflation, and that obviously had an impact on companies like Pidilite. But if you look at the outlook going forward, I think the outlook is going to be a positive for Pidilite, and you should see improvement both in revenues as well as in profits. and that should help in terms of it would justify the relatively higher valuations that exist for the stock at this price. Maybe if there's a bit of a dip, then one can look to add Pidilite for the long term.
Okay. Okay, so that's the view on Pidilite. We've got Tarun who's writing in, and he's still sitting on less than 1% of profit in Tata Motors. This is a stock that has gotten battered, to say the very least, because it's gotten headwind after headwind. And so he's wondering whether to exit at this point and move to another growth story, if at all. Lancelot, a lot of things have not worked for this company, unfortunately. Whether it's Jaguar Land Rover, whether it is the domestic story, which seems to be turning a little bit on the EV front, whether it's a commercial vehicle underperformance, relatively speaking, and the question marks about when that will take place, the restructuring that is yet to happen. What would you do? Would you hold in anticipation of things finally turning around, or would you switch to something else?
So, Tata Motors at the moment is trading at around 10 times its, trailing earnings. But what is more disturbing is that there are a lot of challenges for the company in the horizon. Like you said, China is definitely slowing down. You have this issue about tariffs because 90% of Tata Motors revenue comes and profits come in from its JLR operations. And since those are seeing a slowdown as well as this restructuring that is to happen, I think, from a valuation perspective, this could probably be closer to the lows that are there, but it could take maybe another 3-4 years before you start to see the benefits of actions that are being taken today. So in that case, either if one has a very long, investment horizon, then one can look at accumulating at dips. But if one is looking for returns in the next 2 to 3 years, I think one should just avoid the stock for now.
Okay, and a very quick answer. I will probably come back to you to ask justification later. What would you put money in if you remove money from Tata Motors?
Well, I think if one has to look at the same sector, then definitely one can look at, maybe a TVS Motors. That would be a better option given that they have various ventures with BMW, etc. They're moving into the premium segment. They also have an electric business which is doing well. So I think that could be a better option as compared to Tata Motors in similar auto sector.
Got it. Shivam is calling us from Hyderabad. Shivam, very good morning to you. How can we help you today?
Good morning, sir. I am holding Neogen Chemicals.
Okay.
So I just want to know, for long-term perspective, 2-3 years, is it good to hold?
Okay. And when did you buy this?
Around April.
April. Okay. All right. I'll come to you, Lancelot. Coverage on this one. Neogen Chemicals, not done too much since he bought it. He's planning to hold for 2 years, though. Should he do that?
So I think it's trading at a very high multiple, and given the background in the sector, all the chemical companies are struggling because of, let's say, supply overhang in the global market. There is, the challenges of tariffs again looming on the company. So I think this sector is going to see a lot of pressure, and since the valuations are high, it's better to avoid, making an investment at this point in time.
But if you're holding, would you exit?
If you're holding, you would look at exiting, and especially if you're even flat or to profit, it's better to look at sectors where the growth is there and maybe companies where there is specific growth opportunities.
Got it. All right. Ananta from Vijayawada has got the next question asking about Keynes Technology. 12 shares he's got at a price of 6,233. Now he's incurring losses about 5,800 rupees. Should he hold or exit for a period of 3 months? Vaishali, on the charts, what's the view?
So I think, this stock too is consolidating. So as long as 5,500 levels are held on, I don't think it should be a cause of worry. But keep a stop loss of 5,500. And if the stock moves above 6,000, it's showing strength, further on strength, going towards 6,500. So that would be the view, hold according.
Got it. We have to slip in a very quick break. On the other side, we'll take more of your questions, so do stay tuned.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
CDSL
for the long term? Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
Welcome back. You're watching Ask Profit, and the next question we're taking, or the first question on this side of the break, is on Bajaj Finance. And Shashi Kumar from Bengaluru is planning to buy the counter for the long term. He's asking whether he should do so. Vaishali, I will ask on the technicals because ultimately he's looking to buy a large cap company, and track record of Bajaj Finance is not in question. So therefore, would you suggest that now is a good time to buy?
I would definitely agree because as a disclaimer, I think this stock we have recommended also, and I think they should be bought at every decline. Keep 900 as your support and keep accumulating because for longer term perspective, you will definitely get good returns.
Force Motors is the name of the counter that we're talking about next, and Bharat Marfatia, who is writing from Mumbai, wants to know, he wants to buy 10 shares and he wants to know whether to buy today, before the results or post the results. Now, I must point out, Bharat, I'm sure you know, but viewers, take a look at the long-term charts on Force Motors. If you can pull up the year-to-date chart for Force Motors just to see the kind of run that it's had, it's doubled over the course of the last 12 months, and most of that doubling has taken place since March of this year. So the question to you then, Vaishali, on the charts, Force Motors, would you buy 10 stocks today? Or would you wait for the results? You've already answered that question kind of, but then what level would you buy?
So I would say if one has to keep a disciplined trading strategy, take 17,000 as a stop loss. And the way the stock has been moving, I am quite sure this can go higher towards 18,500 or so, but stop loss is a must.
Okay, stop loss is a must for a stock that is run up. Wait, is that right? 168% this year. Yeah, well, there you go. That's why stop loss is a must, more important than anything else on this kind of a trade. Joining me in studio now is Mahima Vachrajani, my co-anchor. Hi, Mahima.
Hi, Alex.
You want to take the next question?
I'll take the next question. The next question is from Amar Krishna, who's writing us from Bengaluru, and he's asking about two auto space counters, that is M&M and Tata Motors. He wants to know if M&M is a good bet to move out of Tata Motors. Lancelot, hi, a very good morning to you. Good to see you after such a long time. Which one would you prefer, M&M or Tata Motors?
So I think I would definitely prefer M&M at this point in time because, M&M not only is an auto stock, it also has some exposure on the defense sector, and that would, definitely grow and give it an edge. Plus, if you look at its growth potential at this point in time, because it's focused on the domestic market, you are seeing better growth in terms of sales growth and profitability growth as compared to Tata Motors, because as I explained earlier, Tata Motors is mainly about JLR business, and that is seeing a very difficult future given that there are a lot of challenges in China as well as in global markets because of tariffs, etc.
Right, so that is the view on M&M. Tata Motors, of course, Lancelot had already said that it's going through a little bit of a tough phase, and he would actually prefer TVS in the automotive space, so bear that in mind as well. Geofinance is the name of the counter that we're talking about next, and Rajiv is writing in from Warangal, I believe, and asking about whether or not to hold this. He's got a he's got a long-term view. He's bought at levels of 228 rupees per share, and so he's in the green right now. He's got 100 shares. Lancelot, earnings came through, and of course they're making moves finally in the AMC space, Geofinance. They've launched a bunch of mutual funds in the fixed income space, and they've got new fund offers in the equity space as well. Of course, because of that tie-up with BlackRock, they're primarily focusing, or rather singularly focusing on the passive space. So I'm wondering whether they will be able to generate the kind of assets under management that certain other entities have managed. But be that as it may, you must have seen the numbers. Would you hold for the long term?
So I think if I don't know whether it's the valuation really justifies it as a hold, because at the same time the momentum is positive, and every bit of positive news that comes into the market on the stock will always drive the prices further. So from a momentum perspective, yes, the stock should see good momentum. But if you look at it from a valuation perspective, one should hold it, but look at maybe booking profits at some point in time.
Okay, so that's the view with regards to where Geofinance stands. Our next caller, Shankar, is calling us from Kolkata. Shankar, hi, a very good morning to you. How can we help you today?
Good morning, ma'am.
Good morning.
I'm having 200 shares of Khaitan Chemicals.
Okay.
Purchased at 112 rupees about 3 years back.
Okay.
Now the stock was languishing much below my purchase price.
Right.
But recently, about 2 months, from 2 months onwards, it has started making an up move.
Right.
Now the chemical sector as a whole is trying to recover.
Right.
So I just wanted to know, should I hold on to it for another 1 or 2 years, or should I book my losses at this juncture?
Okay, Shankar, I got your question. I'll take this up with Lancelot quickly. The stock is up 2% right now as well, Lancelot, and he's been a patient investor. Should he continue to hold for the next 2 odd years to see some profits?
Well, I would look at, the valuations are, a bit on the higher side, and while there is some improvement, maybe in profitability, that improvement in profitability could easily change, given the pressures that chemical companies are facing in global markets, as well as, the pricing that we are seeing. So it's best to book profits and take, profits off the table.
Does not have profits actually, unfortunately, and I think the quarter gone by, they suddenly and I don't think they posted their numbers for the first quarter yet, Lancelot, but from what I can see, they saw a 200% jump in their revenue or their sales in the March quarter, in the March quarter, and 56% in December as well. It's not a very large company, 1,000 crore market capitalization company. He's more or less recovered his buy price, and he's been holding, I think, if I'm not mistaken, for a couple of years. So you're saying you should just take that money off the table?
Yes, I think so. It's better to, you've recovered your capital and you're out. Just move on and probably find other opportunities, because any negative surprise, the stock could again go back down significantly, right?
Because the last 3 months, the stock is up 80+%. So bear that in mind. And certainly something to watch out for. Raj is calling us from Delhi. Raj, very good morning to you. How can we help you today?
Good morning, Alex. Thanks for taking my question again.
My pleasure.
I have to congratulate your team. Your weekend programming is outstanding.
Excellent.
One would think we'd get free time from trading, but I guess your channel just gets us back on again.
I'm glad to hear that. I'm glad to hear that. Considering that we just started live programming over the weekend, and we now have multiple bulletins through the day, so I would encourage you to spread the word. And by the way, if you're tuning in right now, if you want to get the live news on Saturday, then you can catch that at multiple times through the day. 12 o'clock, 4 o'clock, 7 o'clock is when we have live bulletins. All right. What's your question, Raj?
All right. If you bear with me for about 20 seconds,
yes,
I have a bit of a longer question. So I had bought Vedanta when the buyback had failed.
Okay.
My buying price is about 128. My stock is virtually free because of the dividends that they paid off. Now, my concern is that, this is the second news flow with that report which has come out about Vedanta's finances. I have a couple of quick pointers. The promoters have reduced their holding by about 12% in 2 years.
Yes.
Even the FI, since the last quarter, has started reducing their holdings as well. The other thing is, there's a bit of an anomaly where the back dividends are being paid off, but the debt is also increasing as well. So I'm sitting on a substantial profit as well, but Vedanta doesn't seem to be, letting up in terms of going down at all. Now, is this a hold, say, with the purview of the next 2, 3, 4 years? Or should one exit and probably look at a re-entry, if this news flow actually does pay out and Vedanta does kind of dip?
I understand your question, and it's a fair point that you're making. Lancelot, you heard the context, and his holding, he says, is free, and the numbers bear out. He's sitting on a gain of over 11 lakh rupees or thereabouts. Should he take that off the table?
Well, I think, he's made a good amount of profit. As he says, the shares are practically free. He's got earned dividends. So I think he should definitely look at, taking profits off. Given the risk return, from this levels is going to be, the risks are a lot higher than the potential returns that you may see. So it's better to take money off and look at, other opportunities which are relatively better in terms of risk reward.
Okay, so that's the view with regards to where Vedanta stands. Our next question is from Usha, who's writing us from Hyderabad and wants to know the entry level for ITC for the next 1 to 2 odd years. Vaishali, I'll come to you on this one. What's the kind of entry point that you would, pick when it comes to ITC?
So ITC, well, it's always been hovering between 400 to 440 levels. So I would say wait, because right now it's anyways consolidating. 410, 400 would be a good band where one can start accumulating.
Okay. Our next caller, Jitendra, is calling us from Hyderabad. Jitendra, hi, a very good morning to you. I believe you have a question on UCO Bank.
Yes, madam.
Go ahead.
Good morning to all.
Good morning.
I'm having 3,200 shares. Can I expect any short-term rally within October?
Till October is what you're saying, correct?
Yes, madam.
Okay. Vaishali, your view on the charts for UCO Bank till October?
See, actually, technically, it is very well placed. We are looking at PSU banks because they have hardly participated. So I think for long term, but it's very hard to tell whether you see any movement in 3 months, you get good returns. But I would say all the same, keep a range of 28 rupees to 34, 36. That would be the range which would be real for 3 to 6 months.
We've got a question on MGL, Mahanagar Gas, and the numbers came through just not too long back. And the stock is trading with cuts of about 0.7%, a little choppy, a little volatile in trade today. We've got Sarthak, who's bought at levels of 1,546, so slightly elevated levels. He's got 530 shares. He's wondering what to do. He's not really given us a time frame. So therefore, I'm going to come to you on this one, Vaishali. What should he do on the charts?
So your chart, well, it has been showing some profit booking. Keep a stop loss of 1450 because the trend would be damaged below those levels. Till then, just wait it out because overall the trend is quite strong and it is consolidating. So once you see the stock moving above 15.20, then it's back on track for a good upside move. But keep a stop loss of 1450.
Okay, the numbers of course came through, and the issue seemingly was on volume growth. Despite the fact that you saw an EBITDA margin improvement and a significant improvement in both EBITDA as well as PAT numbers, gone up by 28% each approximately. It's not really something that is reflected in the stock price, but you did see a big spike when the results were announced, I would think. Very quickly on the fundamentals, any view on this one, Lancelot? Would you hold on to this?
So, see, one is the issue of volume, but I think volumes may pick up, over a period of time. The other question is about the supply and the price increases that they may have to pay on terms of the, gas that they have been procuring. So if that happens, then definitely it has a negative impact on the stock because they may also not be able to improve or increase their prices. And if they do some price increases, then volumes may contract. So I think being a commodity with restrictions in terms of procurement and having a very niche base, one should wait for correction in the price before looking to buy into the stock. And at the current levels, it seems to be fully priced in. So I wouldn't want to buy it at this point in time.
Okay, so not a buy as of now on MGL where fundamentals are concerned. Okay, our next caller, Shailaja, is calling us from Hyderabad. Shailaja, hi, a very good morning to you. How can we help you today?
Hi, Mahima. How are you? Hi, Alex.
It's been a long time, Shailaja, since we talked to you.
Yeah, it's become tough to catch you.
Yeah, okay. Go ahead with your question.
Yeah. I hold 250 shares of Reliance Power at price of 65. So after results, its price is going down and today it's around 2% down. So I want to know technical view from Vaishali ma'am regarding this. So can I add now that is it's around 59 to 60 or else I should hold the stock?
Okay, got your question, Shailaja. I'll take this up with Vaishali. Vaishali, her buying price is 65 and the stock is hovering around that 60 rupees mark right now. Will she be able to recover that and maybe see some profits on the charts?
I see no worry in this stock because it has already given a good run up. Currently, it is sitting on a cluster of moving averages. So I think makes sense to averaging out right from, if 55, even if there is a dip of 55, it's worth accumulating because in times to come when the stock moves above 65, you will be seeing a return of 75 and higher because even the weekly chart is showing tremendous strength. 55 should be the support and accumulate accordingly.
Okay. Okay. The next question then is from Pakshar Jain, who's writing us from Bellary. He's asking whether, so he's already holding Polycab shares, 7 shares at 5,700 rupees. And he's saying the results were great and we saw that strength in the stock as well. Wants to know if we can add more in the cable and wire segment and wants to know if Polycab is the right theme to play if you want to, play the cables and wires theme versus a KEI. I'll come to you on this one, Lancelot. It's very different, cables and wires is more towards, less towards infrastructure, but KEI is more towards infrastructure cables. What is your reading here and which stock would you prefer in the space?
So I think definitely would prefer Polycab over KEI because as you said, it is a space where there is going to be considerable growth because of the electrification that is happening as well as renovation that is happening, and everywhere Polycab, has a significant market share in that space. They've also added, some new product lines, and that will help because the brand will enable them to push forward in that space. So from a long-term perspective, yes, Polycab definitely is an option to accumulate. They've also set up a couple more plants which will come on stream that will help them reach the market in more centers. And if you look at valuations at the moment are fully valued, the price is fully reflecting the future growth. So you can wait for some kind of a correction and then one should accumulate the stock.
All right, so that's the view on Polycab. Snigdha is calling us from Hyderabad. Snigdha, very good morning to you. How can we help you today?
Hi, this is Snigdha from Hyderabad. Hello, everyone. So my query is regarding Mastech.
Okay.
I have 130 shares at 2720.
Okay.
Currently at loss. So I just want to know if I could exit from this and purchase HCL, or else if I continue to hold this for the next 3 months.
Okay, short-term perspective is what you've got. Vaishali, I'll come to you on the chart. She's incurring a loss of about 17,000 rupees. Stock is down in trade today as well. 2.6%. I think the drop started after the earnings. What would you say about this and switching to an HCL Tech?
I would say the stock is already run up and it's currently at resistance level. So a little bit of retracement is, of course, quite likely. This can even go towards 2,500 to 2,400. But I see the way the stock is moving, it can go higher towards 3,200. So I don't think you should be in a hurry. Rather than focusing on only one stock, get into HCL Tech also, or a Persistent, because these are also the frontline good stocks. So I would say get into a basket of few stocks.
Okay, the next question is on water recyclers. The question is from Astha. No, okay, the question is from Vikram, and he wants to know about Ion Exchange. The stock has dropped 11% as we speak. Can we pull up the stock and see how it's doing in trade today? And wants to know if this is the right counter. Yes, it's down 10% as we speak, and wants to know if it's a good time to accumulate the same. And this is to play the water recycling theme, or to pick something like a Vartech Vabag. Lansard, I'll come to you on this one. What's the view, Ion Exchange or Vartech Vabag?
So I think Ion Exchange is presently it's expensive. It still trades at close to 30 times its earnings, and for a water company, purification company, I think that is high, because these are like infrastructure projects, so the profitability is not that high in terms of percentage wise. So I would probably stay away from investing at this point of time in Ion Exchange. But the other alternative, which is Vartech Vabag, is an infrastructure-based company where there's a huge outlay that goes into the infrastructure space. So that has lower profitability, lower margins, and I think it would be better to even stay away from that at this point in time.
Okay, so Sunny from Goa has got the next question. He's looking for a technical view on Gland Pharma. He's holding from 890 levels, and he's asking if there's finally the sign of an uptrend in the stock. The stock is currently trading at 2027, so he's got a fantastic buy price, but he's looking for a chartical view. Vaishali, what's the view on the charts?
So this stock has got a tremendous strong uptrend going on right now. I think this can go further high also, but well, keep a stop loss of 1950, because that is the consolidation level, the recent consolidation level. And shorter term period 1950 should be the stop loss, and hold for target of 2200.
Quick view, Lancelot, on the fundamentals, since he's asked both. Very quick view though. This is a bonus question, since Sunny is a very old viewer of ours.
So I think, the pharma sector has been seeing some pressure, and one should probably wait for a while. Maybe a next quarter would give you a better indication of what's likely to happen going forward. It also trades at a little higher multiple at this point in time. So it's a bit, it's a wait or avoid at this point in time.
Okay, the next question is on the stock that has been in focus since the past 2 days, that's Eternal. Shantanu from Kolkata is writing, he's got 600 odd shares of Eternal, bought at 243 levels. The stock is currently almost touching the 300 mark, but not able to, cross that today for sure. Lansard, I'll come to you on this one. In the morning today, I was discussing with one of my colleagues, the biggest overhang right now is the FII buying part, because if they cross the 49.5% mark there, it will be removed from the MSCI index. Is something that the street is hearing for sure. That is the only overhang. Otherwise, this quarter has been great for Eternal. What's the outlook like? Should you continue to hold or book profits?
So I think, the stock has got a market cap of almost 3 lakh crore, which is a huge, market cap. And the profitability is still fairly low compared to the market cap. So if you try to analyze what is driving the performance, it is purely on the basis of expectation that profits will grow significantly over the next 4-5 years. But when you look at the price at which you're paying for that expectation, and if And as and when, if there's any change in the expectations, you could see a huge downside. So given that the risk is very high, buying into a stock at this level, I think it makes sense to just stay away for now. And if you're already holding, look at the momentum, and whenever the momentum changes, one should book profits and exit.
Sampath is calling us from Chennai next. So that's the view on Eternal, by the way. And it's run up quite considerably, so bear that in mind as well. It's trading not too far away from all-time highs. Sampath, hi, very good morning. How can we help you today?
I have 800 shares of L&T Finance bought around 55, Alex.
Okay.
I need to add more. Can I buy another 1,000 at current rates?
55 is an absolutely fantastic acquisition price. When did you do this, Sampath?
I've been holding on and buying it for the last 4 years or so, averaging it around 55.
Okay. And what has given you that conviction to stick with L&T Finance?
My wife is working with L&T as a senior manager.
Okay. All right. That's a good enough reason. Forget about the fundamentals. Your wife worked there. You know the ins and outs of the company then. Okay. So let me... So what do you want to know now?
At current levels, Alex?
Yeah. Sorry, say that again, please.
Can I add more at current level? I plan on buying another 1,000 L&T Finance.
Sure. So let me get you a technical view on this one. Vaishali, on the charts, he's bought at 55 levels, so he's really asking whether he should add more at the current juncture. I think he intends to hold.
Well, I must say that this is a very attractive stock and must be on everyone's radar. This stock is actually on the verge of giving a monthly time frame period breakout level, So if it sustains about 215, so in my opinion, I would say accumulate, because a little bit of profit booking cannot be ruled out. 190 should be taken as the support, and once you see the stock sustaining about 215 levels, this would be ready for higher targets of 280 and so on. So I think it's a very strong stock, but wait for a dip or accumulate. That would be the way at every dip, and 185, 190 would act as a strong support. And wait for this stock to sustain about 215. That gives you a confirmation that yes, it's ready for higher projection.
Got it, Sampath. Hopefully that helps and keeps the wife happy as well. All right, let's talk about the rapid fire round now. This is where we throw as many questions at you as possible over the course of the next 2 minutes. And the first question is on Paradeep Phosphates. Long-term views being sought from Rohan, who's writing in from Thane. He's bought at levels of 68. Should he hold, Lancelot?
So I would think that, one can hold for the time being and then take a call after one more quarter.
Okay, Tejas Networks is the next counter. The average buying price is 1150, 401 shares is something that Balaji has. Vaishali, on the charts, what's the view?
It's weak, so avoid for now.
SpiceJet for the short term. Sunita wants to know whether to enter the current market price. Would you do that, Vaishali?
I'll just have a look quickly. I would say rather focus more on Indigo than SpiceJet.
Okay, BEML is the next counter. Seema from Jodhpur is holding 10 odd shares at 4,450 a piece. Wants to know the view for next 2 odd years. Lancelot?
Well, one can continue to hold it because the longer term growth outlook is good. Although short term, we did get some pretty difficult results, but long term one can hold on to.
Sterling Wilson and Solar bought at levels of 350. Kumar from Frankfurt wants to know whether to hold for the long term or accumulate. What's the view, Lancelot?
I think for the long term, one should continue to hold this stock. You will see improving ratios as well as profitability going better, so one should hold up.
Okay, Deepak Fertilizer is the next counter. Rajiv Mukherjee is holding 400 shares at 1360 a piece. Wants to know if he can hold or sell. Your view, Vaishali?
Hold.
Vaishali, IEX is the name of the counter. Sanjay Patel from Vadodara has bought 210 or at 210, 5,000 quantity. Short-term view is being sought. What should he do?
180 stop loss. He hold with 180 stop loss.
Okay, SW Solar, Sterling and Wilson is the next counter.
Done.
Sorry, it's done. Okay. The next question then is on Eternal is also done.
Bharat Forge is the name of the counter. Short-term view is being sought. 3 months. Swapan Mukherjee is bought at levels of 1247. Vaishali, what should he do?
Can dip further to 1180.
Okay, all right. That brings us to the end of the rapid fire round and indeed this show as well. Lancelot, Vaishali, always a pleasure speaking with you. Thanks so much for joining in and answering all the questions you did. And that brings us to the end, as I said, of Ask Profit. But up next is Know Your Company from Mahima and myself and the team that put the show together. Thanks so much for watching. Do stay tuned. This is NDTV Profit.
That's huge. That is a biggie. It's out of
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising.
Hello and welcome. You're watching KYC. Today we're going to speak about a cable and wire company which has come out with numbers, and honestly it does extremely well in terms of its return ratios. It's done 20% plus over the last 5 years in terms of ROCEs, and not just that, they generally guide extremely conservatively as well and generally exceed guidance. Now, some of these cable and wire companies in India are doing extremely well, even in general, given the macro tailwind. But this one is also going to do exports. So KEI Industries is what we're going to talk about. There's been a sharp ramp up in exports in Q1 FY26. And that is not just the only trigger, frankly. And what I want to know is the first piece is competition. because you have a couple of players who are likely making large investments in cables and wires in India, given the setup that I've just given you. High ROCs, very good macro and strong tailwind, and there are maybe just 2-3 large players in the space. So the opportunity size is also quite large. But is competition a concern? One, to the industry, but also to KEI Industries. That's going to be my first question. Second one, will the 20% plus kind of ROCE number continue? Why? One, with competition coming in, could this be the new paints? Second, a fundraise. They've done a 2,000 crore rupee equity raise. And does that in some form or shape hamper the return ratios is what I'd want to understand better for FY26 and FY27 especially, because FY28 onwards probably growth will take care of that, but at least for the near term. Now, in terms of downside risk, is there a downside risk to export market? There's plenty happening on the geopolitical side, and therefore that could be one risk. Capex plan, whether that one is on track. It's a large capex that they are planning, and therefore we'll want to understand that. How quickly do capacities come on stream? Is all of that on track? Sadanand phase 1, that project should at least get done by H2 of FY26. So want to understand whether that is on track. Margins on export versus domestic, this I'd want to know, because they're shifting base towards exports in a big fashion. Now their export is around 13% of the mix. That will likely continue to inch higher. The aspiration is to get to 20% in the next couple of years. If export is going to do well, and if margins are better there, you could well see a margin upside from here. But there's a margin downside. Raw material prices is a key risk. For the moment, they've been able to hedge raw material prices, pass it through to the customer, but is that at all a risk going forward? Cash flow in FY25 was a concern. They reduced the number of or the amount of payables they had because of the large cash balances that they held. Well, is that likely to reverse at some point is what I would want to understand. Will they go back to increasing payables, and therefore will there be an unwind at some point of that large cash flow that went out from operations in FY25? So some of these I'd want to know better. But let's quickly understand the company, and Puneet will join me shortly with regard to this. It was founded in 1968. It's been public since 1992. It's the second largest cables and wires company in India. It commands around a 9% market share in India. They intend to rigorously defend that market share is part of the commentary that we've got. Supplies to infra, power, industry, real estate, exports and retail. So across the board, it has a pan-India presence and it has a growing global presence with 60 plus countries is what it is present in. Let's look at some of the products, and we'll quickly have that in one slide maybe. Okay, so let's look at revenue distribution first. Okay, 94% is from cables and wires. EPC has come down sharply to 4% now, and stainless steel wires is 2%. EPC at one point was late teens. In fact, not too long ago, maybe FY18 or FY19 was a large chunk of the top line, maybe 18 to 20%. Now it's just down to 4%. They're granularizing their top line more, and that granularity is giving them margin tailwind. So all of that has started to play out. Let's look at the revenue mix as well, and within that mix, retail is now 52, institutional is 48. That allows for better margin upside because retail will always give you better margins, the B2C. Now let's look at products, and let's pull up that slide, and that will give you a full picture of all the products they do. Largely into almost every product within the cables and wire space. So it has a large plethora of products. Wherever they don't have an R&D or they don't have a specialization, they have tie-ups. And that kind of helps, especially in the EHV cables, where some of the higher kilovoltage cables is where they have a tie-up. So well, that too is likely to drive numbers. When I'm looking at customers, retail customers through distributors is what they tap into. They currently have around 2,100 dealers, and they do both international as well as domestic. I did speak about the mix. Around 13% is what the international mix number currently stands at. In terms of value chain, they do manufacturing, warehousing, B2B and B2C, and thereafter also exports if at all. Now, they manufacture through 6 plants. One is in Rajasthan, Silvassa, Sanand. We spoke about the Sanand plant and the capex that it's going through. It sells via dealers, which is B2C. They also do direct to industries and governments, which is B2B. They do exports. 52% is retail, 35% is institutional, and 13% currently sits in that exports basket. Raw material is largely commodity driven, and it follows pass-through pricing, and therefore you'll see very, very limited impact on margins is what the management has guided for very, very comfortably. But that's the holistic picture with regard to what KEI Industries does. Let's get into the metrics now, and let's start off with the metrics themselves: income statement, balance sheet, cash flow, return ratios, shareholding, street cred, street coverage, and valuations. We'll cover all of those 8. And as always, Puneet joining me for that analysis. Puneet, let's start with the income statement.
Well, definitely, Harsh. And the key aspect is the strong growth in revenue that we've seen for the KEI Industries over the last 2 to 3 years. So it's definitely grown steadily, and post the slight dip in which we've seen post the pandemic, it has recovered very well. Like the other cables and wire companies, we've seen a 19% CAGR in terms of revenue. EBITDA has grown in line with a similar percentage. It's very difficult to do that because it's a very highly commoditized industry. Copper prices are very volatile, and we saw that impact post the pandemic as well. But company has been able to maintain that margins. Slight blip which we saw in FY25, and is expected to be around 11 to 12% in this year as well as the coming year as well. So that'll be something to watch out for. But that's driven by the profitability growth of 23%. So we've given this a thumbs up. No two ways about it. It's been a strong product profile over the last 3 years, and that's reflected in the growth in revenue as well as profits as well.
Okay, so that's with regard to the income statement. You can see the journey. Do we have maybe a 3-year or 5-year chart with regard to how the income statement, margins, etc. have moved? Let's pull that one up as well. That'll give our viewers better perspective on how the top line, the margins, as well as the PAT has moved. Okay, let's quickly move on to the balance sheet. And in that balance sheet, if you see the way in which your equity has moved, it's inched higher because of the 2,000 crore fundraise that happened in November of 2024. The other equity number also rising significantly as a result of, one, the strong profitability that we saw in FY25, but also as a result of that fundraise. So both of those reflecting on the book value currently, which is sitting at sub 6,000 crore. It's a 38,000 crore market cap company. Just something to keep in mind. The borrowing number is at around 178 crores, so fairly healthy balance sheet. They've repaid some part of their borrowing, post the fundraise, and the cash bank balance currently sits just below 2,000 crore at the end of FY25. Of course, the Q1 numbers still need to get adjusted in the balance sheet. We don't get that disclosure. So broadly, it's a thumbs up. No question, no worries with regard to how the balance sheet looks at the end of FY25. Cash flow, Puneet.
Well, cash flow is very interesting because, we've seen a slight impact in FY25 numbers. And that's largely because of what's happened, in terms of operating cash flow. It's visible that FY25 was only negative 32 crores, while over the last couple of years, it's been above 500 crores of cash generation from operations. Now, that was impacted due to working capital changes. Inventory has moved up to over 390 crores, and that's largely because of the volatile copper prices that we've seen the last year. So the company did go out to have higher inventory of copper. It's similar to what they did in 2022 as well. At that time as well, the copper price and the inventory was over 300 crores for the company. Because of that, there's been a delay in receivables as well as payables as well. So we've seen that impact happening on the company's cash flow to EBITDA ratio as well. But largely, this should be solved into this year because we've seen that within copper prices, it is still at a high, but the companies are managing their way into maintaining their inventory of copper in this particular quarter. So it will be something that we can quiz the management on as well. but largely we've given this a neutral rating because of what's happened in FY25. FY22 to 24, this was largely stable in the metrics that you can see on your screen, but hence the cash flow to EBITDA conversion was delayed because of working capital impact.
Okay, so that's with regard to the cash flow. We've given that a neutral. We want to see how quickly that unwinds. We spoke about that as well. Let me talk about return ratios. They've been consistently above the 20% mark. No concern there. Not going to discuss this too much. Going to give this a thumbs up and quickly move on to shareholding, Puneet.
Well, shareholding as well, largely been stable. We've seen the promoters maintain the 35% stake over the last couple of years as well. So we've seen a slight increase, and you can see that in the from what happened with domestic investors as well. In FY24, we did see some selling, and that could be one of the key reasons why we've seen an increase of that to 20%. But even from those levels, we've gone back to 26% of ownership from domestic individual investors. This includes all mutual funds amongst and HNI investors as well. So we're seeing that kind of positive impact. For the public, there's been some kind of selling, but that's largely because the stock has also done so well in the last 5 years. But overall, we've given this again a thumbs up, stable ownership by the management, maintaining that kind of view in terms of the strength towards the business, and hence giving this a thumbs up as well.
Yeah, we track number of shareholders as well. That's reflecting on your screen. See how the number of shareholders have inched higher. Let's look at Street Cred now. 1 month, 6 month, year to date, 1 year. You look at the performance, it's been okay. It's been a flattish kind of a move over the last year or so, plus minus 12%. But you look at the 5-year picture, and that's where you will really see the kicker. It's been an 11 bagger over the last 5 years. So some real solid tailwind. And that performance is reflecting on the income statement, very, very frankly. So it's not a surprise to see the kind of compounding that we've seen. It's been one, a PE multiple re-rating that's happened. And you've seen very, very strong tailwind even in terms of growth. So both of those are playing out as we speak. But talking about valuations, Puneet.
And, in terms of valuations now, it's important to look at the relative valuation of the other peers as well, because while KEI Industries trading at 35 times price to earnings for FY27 would seem expensive, when you look at the other players as well, they are valued very well as well. For someone like a Polycab, it is the market leader, has 26% market share, but maintaining that kind of valuation. And we've seen over the last 2 to 3 years, for KEI Industries, it has now become, in terms of valuation, on par with someone like a Polycab. It was always the second largest player, but we've seen that kind of valuation in terms of KEI to be maintained at 35x. Let's also look at the other players like Havels as well as, in terms of Finolex. And for Finolex, we see that valuation discount largely because of the company's slow growth. So the market not rewarding as effectively as someone like a Polycab and KEI. And for Havels, we've given this a comparison. But for Havels, there's also the consumer discretionary and the AC business that takes a higher valuation, and hence at 48 times. The wires and the cables is one part of that business now. So for Polycab as well as KEI, we've seen that inch up. For RR Cables, it was a stock which was trading around 24 to 25 times before the last couple of quarters, seen that inch up as well. So a high growth industry with industry leaders and players participating very well. So we've still given this neutral only because of the higher number, but the growth aspirations of the company to have till FY30 is what they mentioned as well is very, very high. So we have to look at that aspect with the growth coming in. The market is hence okay to give us a slight premium to someone like a KEI Industries.
Absolutely. So that's the take with regard to valuations. And quickly on to what analysts are saying about this one. 18 buy calls, 4 holds, no sells, 1.5% upside. So the upside in that sense seems capped, which is why we've given this a neutral. Let's quickly look at all of the rating parameters we've just discussed. Pack it in a couple of slides. There you go. Income statement. Across the board, what we're seeing, and one thing that really stands out is no thumbs down, Puneet. And that is truly the mark of a good, solid company. The KYC rating is 6 out of 8, if I'm right. So 6 out of 8 on the KYC rating with regard to a KEI Industries. Let's go across to Anil Gupta, Chairman, Managing Director, KEI Industries, to talk to us about, one, the quarter gone by, but overall, the big picture as well. Mr. Gupta, you set this up from scratch. You joined this place in 1979. what is your take with regard to incoming competition? You have a fantastic grip on the business as well as on the industry. Give us your honest take.
Good morning.
Good morning, sir.
I think that we have established ourselves very strongly in this business. We know the business, how it is to be run in all fronts. So I agree that some big players are have announced their entry in this space, but the market is substantially growing. Economy is growing, and I think there will be a space for one or two large players to come in. Will not much make difference to us. We know how to diversify our product portfolio and diversify our markets and market geographies. So, even if we have to face competition in domestically a little bit, we will cover it up from other geographies for the growth purposes. But I'm sure that we will be able to maintain our market share and even grow our market share domestically as well.
Mr. Gupta, a very good morning to you. Thanks so much for joining in. It's Puneet this side. I just wanted to take a couple of questions on the new Sanand facility that's coming up. And, you've given a very detailed outlook in the past as well. But on phase one specifically, you will have, the low tension as well as the high tension cables coming in. In that context, what is that expected to do for KEI in the medium term? Because you've given a strong guidance till FY30 for about 20% revenue growth. So essentially, with the phase one coming in, how do you expect that to benefit KEI? Because there is some competition in this particular segments as well. So how would you be catering to that?
See, our phase one of this project is likely to be operational by September 25, and a full project will be operational. So phase two will be operational by end of first quarter of FY27. But about the competition, I think the demand of our products is quite significant. We are actually, struggling to meet the orders timelines because of the capacity constraints. And a lot of international customers are waiting for us to start catering to them. We have a little bit slowed down on our export customers because I don't want to lose our domestic market as well. So as soon as our capacities come up, we will full-fledged go for the grabbing the market in domestically as well as international.
So what is the margin picture like, domestic versus international? Do you enjoy far better margins internationally? That's my first question, and let me wrap a second question along with it. What helps you stand out internationally, sir? You're in 60 plus countries. You're growing market share. You've guided 20% of your revenue coming in from global. So give us that picture.
See, first is that we are going all the way out to get, product certification in different countries. Product certification in electrical industry is a must, and we must comply with the technical standards prevailing in that country. So we have to, like in India, BIS. Similarly, in most countries, they have their standard body, and we have to obtain country-specific approvals. So that is one thing. And all these things takes effort and cost money, and also the backup manpower who can handle all these aspects. Secondly, the creating agent network and other marketing network to handle different geographies. So and also making our product compliant to that, including customer audits, including specific specific audits like ISO type, which customers do. So these are the things which we have done correctly in last few years, which has enabled us to get into different markets.
Mr. Gupta, in terms of exports and continuing with the part that you mentioned that you'll have to obtain these certifications and once you get that, you'll be able to supply those products. You mentioned that roughly about 13% is coming from there. You're looking to 17 to 18% of revenue from exports very, very shortly. So in terms of the advantage to you, will it also be twofold that because of Sanand coming in, you'll have those kind of products to cater to the export market as well as have the cost advantage versus the players who are in these export markets? Will that be a right assessment?
Yeah, because in Sanand, we will be closer to the seaports. So our logistic costs of inward and outward freight should go down. So that, and also the time required to ship our goods will also go down. So that will be beneficial because in exports, the customer needs the material. They give very short time to manufacture, and you need to have capacities to cater to large orders. And that is why large capacity and proximity to the port is always beneficial.
And just one question on your second phase of Sanand that, as you mentioned, you will have the high voltage cables, HVDC as well as EHV cables coming in. Will this be higher margin compared to the current 10 to 11% that you do, or will it be largely in terms of product? I'm asking, not for export specifically. In terms of product profile, do you think that will have just slightly higher margins compared to the current margins of 10 to 11% that you operate in?
Yes, they will be having higher margins compared to current products. And but also they will, they take little longer time to, even after the production comes, then we quickly have to go for type test and other product certifications of the factory.
Would it be materially higher? And sir, export margins also, are they materially higher?
Yes, a little bit higher. And I can't quantify, but definitely they are better.
Got it, sir. Sir, this cash flow unwind that's happened in, or rather cash flow wind up that's happened in FY25, you're obviously sitting on surplus cash, so it makes sense. Does it at some point unwind, sir, as the capex goes through fully? Is that how you visualize it? How should one see it?
See, cash flows will always be, changing, because as the new capacities comes up, then we will be pumping a lot of money into the working capital. And the one way is that we, fund the working capital by debt. Or the other way is that if we have the cash flow, then we are using our cash flows to fund the working capital. So the visibility of cash flow will be there, but either in terms of stocks or debtors or in terms of free cash flow.
Okay, sir, thank you so much for coming and speaking with us. We'll let you go on that note, and wishing you all the very best, of course, for the rest of FY26 and beyond. Viewers, it's obviously an interesting company, and let's again pull up the ratings one more time. That's how it stacks up. Return ratios ever so healthy, 20% plus. Cash flow, we did speak about just a couple of minutes back, but that's how it all stacks up, and that gives us a final rating of 6 out of 8 on our KYC ratings for a KEI Industries. But with that, out of time on this edition of KYC, from Puneet, myself, everyone who puts the show together, thanks so much for watching. Stay with us.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks. Welcome to NDTV Profit. I'm Mahima Vachrajani. The earnings that we're focusing on today is United Breweries. It's been a great quarter for the company. Strong volume growth is something that we have seen, and that is also penciled in the kind of strength that the stock is also showing in trade today. And to discuss this as to how the quarter has gone by, we're joined by Vivek Gupta, who's the MD and CEO of United Breweries, joining us now. Mr. Gupta, always a pleasure speaking to you. You know, before I go on to company specific and operational metric specific questions, just want to get your sense as to how the quarter has gone by as per your internal expectation.
No, good morning, Mahima, and thank you for having me. No, we are absolutely delighted on the quarter results. 11% volume growth, 16% net sales growth, led by 46% premium growth, 10% EBIT growth, 6% PAT growth. I think you can't ask for more in a quarter. There's always an opportunity to expand margins, but I think we invested in the growth. At the same time, I think our market share has also gone up by more than 300 basis points. So overall, I feel proud on how this quarter went, and we planned for it. We planned for the summer season. It could have been even better if we didn't have disruptions because of rains and in between during Operation Sindoor, some disruptions were there. But having said that, I think extremely proud of how the quarter landed up, and now we're already focused on the quarter we're already in.
Right, Mr. Gupta, 3% of market share gains is quite impressive, and I must, congratulate to you for that. In terms of your state-wise performance, because that is something interesting. The Maharashtra liquor policy did not cover beer, and that is something that has been a positive, note for the entire segment as a whole. How has that worked out well for this quarter? And going forward, are you expecting anything, any kind of regulations to work in your way? Is that on the cards?
No, first of all, I really want to thank Maharashtra government on behalf of the Brewers Association of India, because they made a really bold and right call. Because in the last decade, Maharashtra used to be the #1 state on beer, and it dropped to #4 state. And beer is a natural drink. Beer is a drink of moderation. Beer is a refreshing drink. So I'm glad they did not increase the duties on beer. At the same time, this quarter results have no impact of that policy, because that policy was announced only late June, and the implementation is only happening in July. In fact, we saw the stocking up of spirits by the retailers in the end of the quarter. So they actually had a little bit of negative impact, if I have to say, in the end of June, but that's a short-term hiccup. On other states, I think it has been the tale of two halves. In some states, the category declined double-digit. Like states like Karnataka, West Bengal, Rajasthan category is really struggling because the excise duties on beer have significantly gone up. At the same time, there are states like Uttar Pradesh, Andhra Pradesh, Assam, even Madhya Pradesh, where category is doing well. So it's a combination of two halves. We have to consistently and continuously work through Brewers Association of India and represent us with the government on how beer adds value to the economy, how beer is local, how beer is natural, how beer creates more employment, how it helps farmers, and we are consistently working on that. And one thing is very clear to me in all of this, that affordability of beer is a #1 driver to drive category growth on beer. And we need to somehow preserve that.
Interesting. And Mr. Gupta, what do you think are the reasons as to why you've seen a significant amount of market share gain this time? Any specific reason or any specific strategy that's worked for you?
Yeah, I would say it's a combination. First of all, we have great products. I would say that the growth we are seeing on our products of Ultra and Ultra Max and our international premium brands like Heineken Silver and Amstel is really very, very heartening. Last year, we grew premium portfolio by 34%. We thought it was, a beginning. And this year, we are already up by the same percentage on the first half basis. This quarter, we grew 46%. Second is the localization of our production. We work with almost 35, 36 breweries in the country. Now we are actually bringing many of these brands locally produced, and thanks to our partners also who have invested in capital on that. The third is our programs, like Kingfisher brand is back. The amount of work we have done to bring back the King of Good Times and the campaign around IPL. I would say there's a lot of fundamental work we have done to do that. The cooler placements, we have placed more coolers in the stores than what we placed in the full year last year. And the number of coolers, the beer coolers in the stores, or the stores having beer coolers have actually tripled in the last 2 years because of our investment. So we've called ourselves to be the category maker because we are the market leaders. So we need to expand the category. And I think that strategy is working for us.
Interesting. Apart from that, margins have taken a slight hit, as compared to Q1 of FY25. The margins have come at around 10.9, 11%. Just want to get your sense in terms of what's the kind of margin trajectory that you're looking at, considering that there's higher OPEX also that is in place. There's also CAPEX that you're doing. There were times when your margins were at that 14-15% mark as well. What is the kind of margins that you're penciling in from a longer term perspective, considering everything that gets stabilized, your OPEX, your CAPEX, everything, 2 years down the line, what's the kind of margin trajectory that you see?
Yeah, I think one of the challenge we have is because we are a listed company and I have to come here every quarter and explain, which our competitors don't need to do in India. But we want to keep the focus on consumers and really, really want to drive the category growth. As I said, the first priority is to have 6 to 7% category growth and double-digit revenue growth. And we will invest in our brands, we'll invest in our breweries, we will invest in, and we're investing that to ensure that the category grows. And we will have sequential margin increase. So even this quarter, our profit after tax went up by 6%. And this is the money we take back, it's the absolute profit to do that. We have opportunity to do more on margins, yes, and we are consistently working on both the efficiency program as well as working on being more predictable in certain states. Like this time we also had an impact on, we had to actually import many bottles in Andhra Pradesh because we didn't have local capacity, which we have already invested in. Karnataka, the category declined double digit, which also had an impact on our margins. We are investing in premiumization, so which means many new bottles go into the system, which also impact our gross margins. But we need to find a way to have this margins increase sequentially. But overall, we are quite pleased with the results we have and the progress we are making against our strategic priorities.
So for FY26, you will be doing the same range of margins that you've done in FY25. Is that reading correct?
No, I think our focus will be on the growth and margin expansion. So we will sequentially keep expanding the margins bit by bit, and wherever we have to reinvest, we will reinvest. But having said that, the biggest driver for the beer category growth is the policy framework, and we need to consistently evaluate that, because in some cases we took the hit to absorb the pain for the consumer, and which I believe was the right thing to do, because if we would not have done it, the category would have further declined. And we see that when beer becomes very expensive, consumers switch to country liquor or even hard liquor, and in many cases, some of the things, which we don't want consumers to drink. So I think those are the right choices, but we need to work harder with the governments to understand that beer is local and natural, and the taxation has to be more palatable here.
Understood. And what are the bottle return rates looking like? Because that is something that will help you, control your cost as well.
Look, we had a very good start to the quarter on the bottle return rates, but a little bit of hiccup in June because of the rains this time. And when the rains happen, then you have to input a lot more new bottles. But I would say versus last year, we are doing better on the return bottles. But at the same time, we're also investing in premium new bottles as well. So it is slightly behind our glide path, but we are doing better than last year. That's what I can tell you now.
Okay. One last question, and I'll try to get that answer from you, Mr. Gupta. You closed FY25 at around 8,900 crores and bottom line of around 440 odd crores. What's the internal target that you're penciling this FY26? Where will that number go from 8,900 crore to 440 crore? I mean, for top line and bottom line.
From a top line point of view, we are very focused on delivering double-digit growth on revenue growth. And I said it really depends on it. I think bottom line, whatever I deliver, you will say it's not enough. So, and it will be a sequential growth. So I think we are working on making the progress. But I think this is a long-term category which needs high capital investment. So we are already looking at what is needed for next few years. And we are making some strategic interventions to ensure the supplies of beer, the infrastructure on beer, and what is required on backward integration is being done. So,
correct.
So overall, feel good about the progress we are making.
Okay, so when you say double digit, you did 15% this quarter. That'll be higher at the end of FY26?
No, I don't think it will be much higher because there is bit impact of elections last year. So I don't want to take all the credit just because we have done everything right. There is also a base impact there. Because last year, same time, I mentioned to you that a large company gets more impacted when there are restrictions on elections.
Right.
There is a positive, but again, there is a potential of beer categories, but it also depends on the policy framework, what comes out in West Bengal and Orissa and Rajasthan and some of the other states as well.
Good afternoon. You're watching Markets at 12 with me, Shreyansi Singh. Let's get started by taking a look at the markets. First things first, of course, that was the management of United Breweries talking about their growth roadmap. But let's take a look at the Nifty holding up quite well above that 25,100 level. In fact, Sensex also similar picture coming in. So you're seeing gains come in there as well. But when you take a look at the list of top losers, you have Realty making it to that list, defense, media also on the back foot in terms of sectors. On the flip side, you have auto that is in the fast lane. Other than that, there's, of course, pharma, finance and bank that are doing quite well. Even IT is holding up quite well as well. Let's take a look at the list of top gainers. And making it to that list, of course, is Tata Motors, Bajaj Finance, Maruti Suzuki, Apollo Hospital as well, up anywhere between 1 to about 2% thereabout. So those are some of your gainers. From the list of losers, you have from within the Nifty 50 pack, there's a Tata Consumer, there's a BEL, HUL, ONGC, as well as Ultratech and ITC on the back foot. But tell you what, let's take a look at the list of stocks that we'll be talking about later on the show as well. Of course, there's Dixon Tech, that counter is buzzing away in trade. Stellar Q1 is something that you saw coming in. Margins, in fact, have remained stable. So on the back of that, 3% thereabout uptick coming in on Dixon Tech. Other than that, there's Paytm, of course, that is in focus. 2.2% uptick coming in on Paytm as well on the back of that first quarterly profit since its listing. So seems to be cheering that. But you do also have an Oberoi Realty, a Lodha as well on the back foot, on the back of that equity changing hands. That's also something that we're looking at in terms of factors. And other than that, of course, there's Infosys that we should be keeping an eye on. But tell you what, let's zoom in on the realty space. Big block deals in the realty space, then Lodha Developers as well as Oberoi Realty, like I mentioned, in the spotlight. Anushi is standing by with the answer.
Hi Shreyanshi. So if you take a look at the Nifty Realty, the index is under pressure. Almost 3% of cuts is what we are looking at currently, and some bit of pressure also building in on the back of these block deals that we are seeing. In fact, if you talk about Lodha Developers, 1% of shares traded in a block today. This was about 9.95 million shares traded in this block. If you see, the deal size expected was around $165 million, and this was with a floor price of 1,384, which is a 4% of a discount to its last price that we are looking at. In fact, with Oberoi Realty, also 11.1 million equity shares traded in the block. So about 3.1% of equity changed hands is what we are seeing. The deal expectation was for $230 million in this one. And again, if we look at the floor price, that was also at a discount of 4% is what we are seeing. Now, in both the counters, if we are looking at, it is a cleanup trade which was going to happen. And this was by an undisclosed institutional investor. It's what we are seeing. In fact, the name that pops up in this list is Invesco Developing Markets Fund is the likely seller in both Oberoi Realty as well as Lodha Developers, while Goldman Sachs is banker to both the deals that we are looking at. Oberoi Realty also in focus on the back of its con call commentary which came in post-market hours last night. Brokerages remain positive on the kind of launch pipeline it has in the subsequent quarters. In this particular quarter, if you see, there were no new launches that we had seen. So Q1 numbers also in effect for Oberoi Realty is what we are seeing.
Those are the two counters from the realty pack that are on the back foot. In fact, that entire pack is the top sectoral laggard at this point in time. But time now to take a look at the list of other stocks that are abuzz in trade. In fact, there's Denta Water, JSW Infra doing quite well. On the flip side, there's a Dalmia Bharat not doing all that well. Vansh, tell us a little bit more about the triggers for these.
Yeah, the first one on my list is Denta Water. Now, the company has received orders worth rupees 183 odd crores, and the order is to execute 7 projects, which consists of irrigation, road projects and a subcontract for water management. And the order book for the company stands at 745 odd crores post these new contracts. Second on the list is JSW Infra. Now the company has reported its Q1 FY26 numbers. The cargo handle volume for the company stood at 29.4 million tons. That is up 5% YOY. And the domestic cargo volumes are also up 11% on a year-on-year basis. If we talk about the numbers, the revenue is up 21%, EBITDA is up 32%, and margins are up 47%. And then the net profit is up 32%. If we talk about the outlook, the company has guided that they aim to scale up their current 177 metric tons per annum to 400 metric tons per annum before 2030. Now, last one on my list is Dalmia Bharat. Now, the company has reported its numbers and they have missed the estimates, and the revenue growth has been offset by the lower sales volumes. If we talk about the numbers, the revenue is up 0.4%, the EBITDA is up 32%, margins are at 24% versus 18%. The net profit stands at 393 odd crores versus 141 odd crores. Morgan Stanley has also maintained underweight on the stock with a target price of 1800 rupees. The brokerage believes that a strong price have driven the outperformance in the stock, and this was supported by the strong pricing environment that is coming in from the home markets, especially supported by the southern region. So these are some of the stocks that are to be kept in focus today.
All right, and those are some of the counters that you should be keeping an eye on. Tell you what, let's also take a look at Dr. Reddy's Labs. Of course, you do have pharma that's almost the top sectoral gainer, doing quite well for itself, and it's DRL as well that is in focus on the back of the street, anticipating a mixed set of numbers for the counter this time around. In fact, profit is expected to jump over 8%. Margins expected to contract from 28% to 26.8%. In fact, Varsha is standing by with the detailed expectation Varsha, what is the street penciling in?
Yeah, overall, a steady numbers is expected, from Dr. Reddy's. Just talking about the 4 numbers, revenue is expected to rise 13%, while EBITDA is expected to rise 9.4%. Margins are expected at 26.8% versus 28% or last year, and net profit is expected to rise 8.7%. Just talking about the key highlights, steady number is expected, and growth will be led by strong performance when it comes to India, Russia and rest of the world markets, while US sales is expected to decline 11%. This is on the back of Revlimid, that is a cancer product. The pricing erosion in the cancer product called Revlimid. India is expected to see growth of 11%, which will be led by good performance when it comes to key therapies. Profit may be under pressure. This would be led by higher R&D expenses and of course operational cost. Key factors that investors should keep in mind is update on the potential launches when it comes to US in the next 12 to 18 months and status of the biosimilar products that the company has or the pipeline that the company has, and lastly to track the effect of licenses and partnership formed in recent years. So overall a steady number is expected, but yes, US business may decline on the back of Revlimid price erosion.
All right, and lots to watch out for when it comes to DRL. Revlimid is also something that we're looking at, but let's also take a look at some of the key buzzers as promised. Let's take a look at Dixon Tech, because the strong order book from the mobiles division is something that in fact led revenue growth in the first quarter. That is the word coming in from the management of the company. We caught up with Saurabh Gupta, who's the Chief Financial Officer of the company. Let's go across and listen in to what he had to say in terms of key triggers for growth.
We had a very strong order book. The momentum continued in our mobile business, which continues to be the largest piece for us. We see that momentum continuing in Q2 as well. Of course, our other verticals on washing machines, refrigerators did really well. And yes, we expect a strong order book. We have a strong order book ahead of this festive season in Q2. And there are some more customer acquisitions lined up. Third is our foray into this backward integration component should start playing out. Some of them will start playing out by Q3. Some of them will start playing out by Q4, Q1 of next financial year. So yes, we are sitting on a huge opportunity and exciting times ahead for us. Gradually and slowly, we'll keep taking some grabbing some export opportunities in mobiles, in lighting. So that also is on the anvil, and clearly, yeah, we're sitting on a very big opportunity right now.
All right, and sitting on a very big opportunity, exciting times ahead, and the stock looks quite excited as well, 2.5% uptake on Dixon Tech. But another counter that is in fact in focus is Blue Jet. That particular counter is down in trade at this point in time, taking it on the chin. Let's go across and listen in to some management commentary. Then VK Singh, who's the CEO, talks about the roadmap for margins. Let's go across and listen in.
We have never guided 41%. We have always said that our EBITDAs will be in the mid-30s. And I think that's a very healthy level for EBITDA for our type of business, which is growing and growing very rapidly. And even after this margin compression, we are in the mid-30s. So I think as far as profit is concerned, we are in a very good space. As far as growth is concerned, we are in a very good space. The company inflected 3 years back. Today, as we speak, we are at another inflection point. What is getting incubated today will fructify in 2 to 3 years from now and will be a game changer for the company because we were forward integrating even further.
All right, then a dip in Q1 margins is something that you saw on the back of inventory normalization. That was the management talking about the roadmap going forward when it comes to margins. But let's take a look at Strides Pharma, because that is sprinting ahead of its peers, delivering a stellar 53% rally since the month of April. In fact, outpacing the broader Nifty Pharma index with a sharp focus on the US market. Margin recovery as well as strategies, de-risking moves. The company, in fact, is building a competitive moat through niche plays. Let's go across to Varsha, who's standing by with the update on that one.
Basically, it's a fundamental reason, but as you rightly said, if you see of Stride Pharma in the since April 7, the stock has given 53% returns to its investors, while Nifty Pharma was up 9% and Glenmark Pharma, which is the top stock in Nifty Pharma, is up only 42%. Let's see what is triggering this rally. One is the US business. So everything when it comes to Stride Pharma revolves around the US business and debt reduction. Let's see what are the expansion plans when it comes to US business. They want to aim $400 million of revenue in US in FY28, and this will be driven by 60 planned launches, including high value or rather high margin products. Now only 71, the interesting point over here is only 71 of 260 filings are commercialized. That means showing significant potential that the company has in futures, and that's the reason they're giving a guidance of almost $400 million when it comes to US business. Now what they're doing is they're investing in controlled substances or nasal sprays where the opportunity is almost $600 to $700 million. Now this is for Strides Pharma, and these are high value, high margin products. So they are moving from low margin products to high margin products, and 7 to 8 of such launches are lined up in the next few years, rather in the next 3 years, and they are also moving away from partnership agreement, and they are relaunching their dormant portfolio, which will lead to increased market share. The next trigger point when it comes to Stride Pharma is the margins. Look at the margins from in FY22 a company had an EBITDA loss, and from there the margin trajectory has been fantastic, and one of the reasons is because of the decrease in interest cost and moving to high value, high margin products. Next, if you see, debt reduction is also one of the reasons why this company has been in focus, and Arun Kumar is known for his dealing with the investments and phasing out or existing or de-risking the business. If you see the recent agreement that Arun Kumar has done is spin-off when it comes to One Source Specialty Pharma, and which is a major de-risking move that has been done by Arun Kumar, and which is also a value unlocking even for shareholders. Just on their business model, what Strides Pharma is famous for, so they avoid being first to launch in the market. They only launch the products where the market is stable, where they know that they can grab the market share, and this approach mitigates the volatility that every generic pharma companies goes through. And overall, if I want to talk about the revenue growth, so they're expecting a revenue growth at a CAGR of 12%. US market will contribute almost 52% of revenue share. Lastly, on the valuation, which is considering the guidance given by the company, if you see, EBITDA is expected at 1,000 crore, net profit is expected at 520 crore. So that comes, the EPS comes to it around 57 rupees at a 30x PE. Still, there's a lot of runway when it comes to a share price of Stride Pharma can go almost 1,691, and currently if you see, it's hovering around 800 to 900 per share. So a lot of scope still exists when it comes to Stride Pharma, and overall if you see, US business and the debt reduction are the key triggers, and of course the margins that has led to this fantastic rally by Stride Pharma.
All right, and 53% rally since the month of April, 4.4% thereabout uptick coming in today as well. So that's Strides Pharma for you. But let's take a look at Infosys. In fact, that's one of the top gainers within the Nifty 50 pack. Ahead of its earnings, expected to post a decent quarter supported by deal momentum as well as inorganic contributions. In fact, Puneet is standing by with the update on that one.
Well, largely Infosys will be decent only because of the relative outperformance versus the other large cap players. Only a 2% revenue growth expected, but amongst the large cap 5-6 companies, it's going to be the only company expected to report a positive growth in terms of revenue, both in terms of that as well as constant currency. So that's one aspect. And margins expected to be at 20.8%. We could see some impact because of wage hikes in this particular quarter, but net profit as well subsequently is expected to see some fall largely because of that aspect. Now, the other aspect is in terms of inorganic growth, it's roughly 1.8 to 2% quarter-on-quarter constant currency. Roughly 0.4% of that will be in terms of inorganic growth, but the impact on margins will largely be, taken care of going forward in the subsequent quarters. In terms of guidance, and this is the most important of that aspect, 0 to 3% for FY26 what the company had given. But some brokerages anticipating it could go to 1 to 4%, and that will be a huge positive news for someone like an Infosys. But watch out for the earnings. It's expected to come right just after post-market hours. We're expecting the press conference to start by 4:15. So a key earnings to say the least for the IT major today.
Well, absolutely, Puneet. That just about sums it up. We'll watch out for Infosys as well, but that's all the time that we had on the show. Thank you so much for tuning in.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Hello.
welcome to Profit Buzzers. I'm Anushi Vakharia and with me is Puneet Javeri. Puneet, it's a rather lackluster day of trade that we're looking at in terms of, where the benchmark indices are concerned. If you look at Nifty 50, currently facing some bit of that up over 0.45% is what we are looking at now in terms of this is Sensex mirroring similar moves is what we are seeing over there as well. In terms of how the point contribution table is shaping up, let's get a look at that. Now we have HDFC Bank right at the top. Since the last 3 days, it has been in focus, and this is also on the back of the Q1 numbers playing into effect. Reliance, Infosys, other stocks in focus as well. Infosys, in fact, coming out with its Q1 numbers. While what is not working out so well is something like a HUL, BEL. Now, overall, if we see the defense index has been under pressure today, even Tata Consumers is facing some bit of that pressure. In fact, it's also the other company which is reporting its Q1 numbers as well. So this is in terms of the Nifty contribution chart, but also let's take account of the Nifty 50 heat map. So if we look at that, so in terms of which are the top stocks in focus, we have Tata Motors right at the top, seeing gains of over 1.8%. Bajaj Finance also seeing some bit of those gains. That is what we are looking. While what is not working out so well as Bharat Electronics and Tata Consumers both down about 1.7% each. Now, in terms of where the sectoral indices is concerned, now that's where the real pressure is building. We are seeing Nifty Realty down about 2.7%, and this is on account of a couple of block deals which have taken place. Other than that, the other stocks in the index are also under pressure. Nifty Media also down about 1%. FMCG, not a similar picture is what we are looking at. But right at the top, we have Nifty Auto, which is seeing gains of around 0.7%, while Nifty Finance and Nifty Private Banks are seeing an uptick of over 0.5%. So this is in terms of the sectoral indices is what we are seeing, but a lot of stock-specific action, and this is attributable to the Q1 numbers as well as other developments as well. So Puneet, talk to us about that as well.
Well, definitely. And today, actually, we've seen that kind of recovery in the Nifty at this in the last couple of, at least the last hour or so, with the Nifty Auto being the biggest gainer, as you rightly mentioned. See that last blip. We've continuously inched up during the day. We are at the day's high point. Let's quickly first look at the constituents of the Nifty Auto, because Maruti is definitely one of the big ones. We're also seeing some positive momentum on Tata Motors. Samvardhana Motherson is going to be in focus ahead of results in this week, so that's going to be a positive as well. Some pressure, but very minuscule on something like a Balakrishna as well. In terms of the mid cap and the small cap, they have been mirroring their performance, to say the least, because again today, while it's in a downtick, almost flat, 0.06 to 0.07% on the mid cap and the small cap. Let's also quickly look at the BSE 500, as Anushi correctly pointed out. A lot of individual movers based on results as well as news flow. Something like LG Equipment is up 7.4%. MRPL, after was in focus yesterday on weak earnings, it's up almost 6% in trade today. Something like a Credit Access, Grameen is also the other one, which is up 5.4%. And something like a Gland Pharma up 3.5%. On the loser side, it's the Realty Pack, and we'll just address that in a bit. Both Lodha as well as Brigade Enterprises down 6 and 4% each. Colgate, after their disappointing set of earnings, is down almost 3.8%, while the results came during market hours, actually during the show itself. The conference call was held post market hours, and the commentary is something that the street is not liking in Oberoi Realty as well as the other realty major, and something like a Dalmia Bharat in focus after their earnings as well. But Anushi, with real estate, that's been one of the key aspects, right? Because while the numbers are coming in, pre-sales have been strong, but we've also seen some more action in real estate space today. Talk us through that.
So what we are looking at is a couple of block deals which have taken place, and if you talk about the specific ones, Lodha Developers and Oberoi Realty should be on your radar. Specifically Lodha Developers, if we see 1% of equity changed hands in the block today, this represents about 9.95 million shares trading in that block is what we are seeing. Expected size, if we see, was around $165 million, and the floor price was expected to be around 4% of a discount compared to its last closing price. Oberoi Realty also, if we are looking at 11 7.1 million shares traded in this block, which represents about 3% of equity changing hands as well. Now, the block deal expectation for this one was around $230 million of size is what we are seeing. Floor price was also at a discount of 4%. Now, interesting over here is the buyer name that we are seeing, the seller name that we are seeing, wherein Invesco Developing Market Fund is the likely seller for both of these counters that we are looking at, and Goldman Sachs is acting as a broker between both the deals that we are seeing. But other than that, Oberoi Realty, it's just not the block deal peg that we are looking at. Yesterday there was the con call also which took place, wherein if you look at the overall commentary in that remained healthy. Now the expectation is for more launches to take place in the third quarter and the fourth quarter of this financial year. This is on the basis of, and in fact over there even higher revenue recognition is expected over the 361 project that we are seeing, which did not take place this quarter, which led to that miss in terms of where the revenue recognition is concerned. But other than that, if we check the booking numbers, now that remained on the healthier side. In fact, that was up over 54%. Launch of Elysian Tower in Goregaon contributing to that pre-sales number of 1,639 crore that we are looking at. So that's the overall picture that we are seeing. However, the pack in general is down about more than 2.6% in trade today. That's the overall stance that we are seeing on the Nifty Realty.
Let's also quickly pull up something like a Dixon Tech as well. Now, the company came out with its earnings yesterday, a stellar performance to say the least. 95% growth in terms of revenue is what Dixon Tech has done. It's also interesting because the expectation was also higher of about 86%. So even at such a number, they've come out and beat estimates. The other one was the strong growth is largely driven by what they've done in the mobile division. The mobile division revenue is up 125% in this particular quarter. Margins were one of the key focal points in this particular result, even a 10 basis point impact, which was largely some brokerages were anticipating that. It's not coming. It's coming flat at 3.8%, but it's a key positive because the base has gone up materially. So we are seeing the EBITDA also increase by almost a similar amount of 95% as well. We've seen the new lighting division also with Signify, which is erstwhile name of Philips, going to be helping margins going forward. Currently, the lighting business around 900 crores of revenue. They're expecting it to double with this joint venture. And the other fifth and key point is the component aspect, and that's because we have a new scheme of about 22,000 crores for the component scheme that will help the other for the margins as well. So revenue as well as the other aspect visible on your screen. If you can pull up the revenue chart, the table as well, the revenue split by vertical, we can see that the mobile division currently 11,600 crores in terms of revenue, up 125% on that aspect. And very interestingly, before I move on, the one aspect of Dixon, which is the component play of one key acquisition they've done in this particular quarter of Q-Tech India. That's another positive because we've seen a 51% stake that the company has done in this particular quarter. Q-Tech largely manufactures camera modules, and they've said that, in India, it's a huge market for them. So we also saw a positive view being maintained by Investec, a 20,000 rupee target price on something like a Dixon Tech as well. But we also, spoke to the management today, Mr. Saurabh Gupta, who's the Chief Financial Officer at Dixon Tech. He spoke about some of the key aspects what led to growth in quarter one. Listen and what he had to say.
We had a very strong order book. The momentum continued in our mobile business, which continues to be the largest piece for us. We see that momentum continuing in Q2 as well. Of course, our other verticals on washing machines, refrigerators did really well. And yes, we expect a strong order book. We have a strong order book ahead of this festive season in Q2. And there are some more customer acquisitions lined up. Third is our foray into this backward integration component should start playing out. Some of them will start playing out by Q3. Some of them will start playing out by Q4, Q1 of next financial year. So yes, we are sitting on a huge opportunity and exciting times ahead for us. Gradually and slowly, we'll keep taking some grabbing some export opportunities in mobiles, in lighting. So that also is on the anvil, and clearly, yeah, we're sitting on a very big opportunity right now.
Let's now welcome in Gaurang Shah, the head investment strategist at Georgia Financial Services. Gaurang, a very good afternoon to you. Thanks so much for joining in. Let's quickly, I'll come to you for Dixon. Let's quickly pull up Gaurang's disclaimer as well. Gaurang, specifically on Dixon, while we've spoken to you on the strong EMS opportunities, I think the last time we spoke, you mentioned about PG Electroplast as one of the key opportunities that you like in the space. Could you give us some views on Dixon Tech specifically? How did you view the Q1 result? And mobile division definitely leading the growth with 125% in terms of revenue. But what was your view on the result?
Well, thank you, Puneet, for having me on the show. Good afternoon to all the viewers of NDTV Profit and to all of you all. So a small disclaimer from my side, all recommendations that I'll be sharing with you on the fundamental side are a part of our research team recommendation. Our company, Geojit, or myself, we don't have any investment interest, nor do we have any financial benefit, or nor there is any kind of conflict of interest, but we give similar recommendations on similar lines to our clients. They might have their investment interest in them. So talking about the entire EMS segment, yes, you're absolutely right. We spoke about PG Electroplast. We still have a positive coverage on PG Electroplast. And I think the opportunity is huge for the entire sector. I was listening into Mr. Gupta's commentary in terms of business outlook for the second half. Order book looks to be very, very strong across different verticals that they are into, and a possibility of export as well. He also referred to the tariff-related issues with Taiwan and China, if I'm not mistaken, competitive to what they are doing in India. And he was quite optimistic about the tariff not being as much of a negative impact on the outlook of business going forward from here on. Dixon Tech has performed extremely well in terms of last one and a half year. Opportunities there for the sector. India was a net importer of chips, semiconductors, and PCBs. Possibly, if everything goes well, by the second half of this calendar year, we are likely to see a made in India chips, semiconductor, and PCBs coming into the market, which will also open up export opportunity if everything goes well at ground level. So the sector looks good. Dixon Tech outlook for the business in the future is extremely strong. No specific comments in terms of buy, sell, and hold since we don't have coverage on Dixon Tech, but yes, PG Electroplast is something our research team is positive on.
Okay, so PG Electroplast in the EMS space is the preferred pick over here. But Gaurang, before we go to the next story, also let's talk about real estate. Now, we are seeing that this one sector is under pressure today. In fact, it's down about 3%. And stocks in particular in focus include the likes of Oberoi Realty, which just came out with its results 2 days back. Along with that, even Lodha developers seeing that pressure on the back of block deal, which has also taken place. Your view for the sector, if you have any picks here?
Well, so I think, Anushri, the problem this morning, you're seeing a little bit of downward move in the real estate pack, especially Oberoi Realty in Lodha, is because of that deal that happened. But overall, if you look at the reports in terms of registration of commercial and residential properties, they are looking quite strong. Just I think last month we had a record being broken in terms of a project getting sold out in 10 days. Worth about 11,000 crores, if I'm not mistaken, by DLF. In Bombay, there was a report this morning that high-end property market, residential market is looking extremely strong. We are positive on the sector overall. DLF, Godrej Properties, Oberoi Realty, Shobha, and Prestige Estates. These are some of the stocks in the real estate pack on which our research team is positive from a long-term point of view.
Names that we are seeing in the real estate space that Gaurang is positive on, but other than that, there are a couple of stocks which are also buzzing on the back of positive developments. That includes order wins along with the Q1 earnings as well. Let's go across to Walsh for more details.
Yeah, so let me start off with the first, Credit Access. Now the stock is up 6% in trade today as the company has reported set of numbers. The net interest income from the company has down 2% on YOY basis, and the profit after tax is up 27% on sequential basis. If we talk about the NPAs, the gross NPA for the company is down at 4.7% versus 4.76%, and the net NPA for the company stood at 1.78% versus 1.73%. Now, if we talk about the guidance, the company has guided for a NIMs of around 12.6 to 12.8% and a gross loan portfolio growth of around 14 to 18%. And in terms of management commentary that is coming in, the company expects the credit cost to see improvement in Q2 FY26. Now the second on my list is JSW Infrastructure. Now the stock is up 2.2%, and if we talk about the key takeaways, the cargo handle volume stood at 29.4 million for the company, and the domestic cargo volumes are up 11% on a YOY basis. Now if we talk about the numbers, the revenue is up 21%, EBITDA is up 32%, and the margins are at 47.5% versus 43.6%, and the net profit is also up 32%. If it turns out in terms of outlook, the company aims to scale its operations from the current 177 metric tons per annum to 400 metric tons per annum by 2030. Third on the list is Delta Water. Now the company has secured orders worth rupees 183 odd crores, and the order is to execute 7 projects inclusive of irrigation project, road projects, and a subcontract for water management. Post this, the company will operate 21 ongoing projects, and the order book for the company will stand at 745 odd crores. So these are some of the stocks that are in focus today.
Okay, thank you for that, Vansh. So those are the key stocks which are up in trade. Gaurang, let me come to you. Any of these counters that you have a positive view on?
So credit access Grameen is something that we have an accumulate stance on, Anushri, and we're quite positive on the entire BFSI segment overall, whether it is public sector bank, private sector banks, strong diversified NBFCs, payment banks, small payment banks like credit access Grameen, or as a matter of fact, AU Small Finance. Our sense is that lower interest rates and high credit demand is likely to show positive impact on the earnings front. On JSW Infra that your colleague mentioned, well, we had covered this company some time back when the IPO was there. Currently, we don't have coverage on JSW Infra, so no specific coverage. These are the 2 stocks that I can possibly comment to a limited extent.
Got that, Gaurang. But we've seen quarterly earnings coming in, and we've seen some key stocks like Dalmia Bharat, Jana Small Finance Bank, as well as something like a Cyan DLM. Largely under pressure today. We've seen roughly about 6.8% fall in terms of Jana, while we've seen some kind of recovery actually from the day's low point on Cyan DLM. Let's get in my colleague Varsha to give us perspective on all these quarterly results and what didn't work for them. Varsha.
Yeah, thank you for that. So let me start with Jana Small Finance Bank, wherein weak set of numbers that the company has seen, and maybe the things will improve from next 2 quarters. The top takeaways, if I were to talk about, credit cost is to improve in quarter 3. Q2 will be better than Q1 according to the management, and they are expecting margins to improve in Q2. Net interest income was negative. Other income, if you see, aided top line for the company, and the provisions remain elevated, and also the PAT fall that you're seeing is due to a higher OPEX. Also, if I were to talk about the FY26 guidance that the company has given, they are expecting a loan growth of 20%, deposit growth of 18 to 20%, and PAT growth of 30%, while ROA at 2% and ROE between 15 to 18%. Next on the list is Cyan DLM, wherein if you see the revenue, though there was a revenue growth because revenue was up 8%, this was led by aerospace and defense electronics segment, and the net profit impact that you're seeing is due to less favorable revenue mix, that is a change in product mix and higher input costs, and lower other income also impacted net profit for the company. Just to speak about the 4 numbers, revenue was up 8%, EBITDA was up 25%, but margins were at 9% versus 7.8%, but if you see the net profit was down almost 30%. Last on the list is Dalmia Bharat. If you see, company had missed estimates on all the fronts. Volume, revenue, EBITDA and PAT were below estimates, and the revenue growth actually was offset by lower sales volume. Just to speak about the 4 numbers, revenue was up 0.4%, EBITDA was up 32%, margins were at 24% versus 18.5% last year, and net profit was at 393 crore versus 141 crore. Morgan Stanley has a note on Dalmia Bharat, wherein they have maintained underweight with target price of rupees 1800. They say that Q1 was a strong pricing drove outperformance, and it looks like the company prioritized realizations at the expense of volumes. This is according to MS, and this was supported by strong pricing environment in its home market, especially the southern region. So these are the 3 stocks which, rather 3 companies which posted weak set of numbers, and that's the reason why we are seeing all the 3 stocks are under pressure.
Well, thanks for that, Varsha. Gaurang, let me come to you on Dalmia Bharat specifically. It's been a quarter that's expected to be quite strong for the cement makers, and we've seen that with Ultratech as well as something like an India Cement. some kind of miss in terms of volumes from Dalmia Bharat. Do you have any specific view on Dalmia as well as your top pick in the cement space?
So Puneet, we are quite positive on the entire cement pack. We have investment ideas in the large cap, in the mid cap, and in the small cap universe. Specific to Dalmia Bharat, I think they are improving the performance because last year, if you actually go to see, I think it was the third and the fourth quarter, including the second, third, fourth quarter, were a little bit disappointment in terms of reported earnings, and hence we saw the stock correct from I think 2000 levels to 1700. Then it stabilized between 17 to 2000, and then on fallback of possibly good operational efficiencies, we've seen numbers improve. So our take on the entire cement pack is the demand for cement is likely to go up. Despite of monsoon, the construction activity is not slowing down. Post the monsoon, I guess construction activity should pick up. Infrastructure projects being taken up by the government at the center, infrastructure projects being taken up by the state level, and the most important thing, we were talking about the real estate pack. Real estate pack happens to be the second largest consumer of cement. Real estate pack doing well will also reflect good upon cement manufacturing companies. So we have a buy recommendation on Dalmia Bharat from a long-term point of view, and remain positive on select large cap, some other mid cap names like Ramco Cement, Shree Cement, the smaller names like Nuvoco Vista and Sagar Cement. These are some of the stocks that feature under coverage.
Got that. Gaurang, just one follow-up actually on Sagar as well as Nuvoco. How did you make your view on the earnings? Sagar was still, the EBITDA per ton was really strong compared to the same time last year, as well as being profitable and for the first time in the last 4 quarters. Do you continue to maintain the positive view on these stocks?
So Nuvoco Vista, we have maintained a hold recommendation on Nuvoco Vista. And on Sagar Cement, also we have an accumulate stance. So, one quarter, according to us, should not be a reason or a judgmental factor for a long-term investment. I think it is prudent to look at 2 or 3 or 4 quarters of earnings rather than look at one particular quarter. One quarter can be missed for any particular sector or any particular company. That should not be a reason. You should look at longish growth and the commentary from the management in terms of business outlook.
Okay, so that's the overall commentary that we are seeing in the cement space. But let's also focus on KEI Industries. Now, this is also the company which came out with the Q1 results, currently up over 0.8%. Now, the company, if you are seeing, is awaiting its Sanand facilities capacity expansion project completion, and this is before ramping up its export business. Listen in as the company chairman and managing director, Anil Gupta, talks about the company's expansion plans ahead.
In Sanand, we will be closer to the seaports. So our logistic costs of inward and outward freight should go down. So that, and also the time required to ship our goods will also go down. So that will be beneficial because in exports, the customer needs the material. They give very short time to manufacture, and you need to have capacities to cater to large orders. And that is why large capacity and proximity to the port is always beneficial.
Okay, so that was the management of KEI Industries. In fact, let me go across to Gaurang. Gaurang, your view on this counter. Now, just a few months ago, there was a lot of buzz about new entrants in this space, which resulted in that correction that we are looking at. But if you are seeing the current stance of the company remains on the stronger footing with its capacity expansion plans, also the plans to increase their mix in terms of where the dealer network is concerned in terms of cables. What's your overall view?
Well, so sector looks positive, Anushri. We had a buy coverage on KEI Industries some time back. Our targets were in place, and now we have changed our stance from buy to sell on KEI Industries. Yes, you are absolutely right. Some time back, there was a huge capacity that is coming up in terms of new entrants and overcrowding in the market. But a lot of participants mentioned at that point of time that there is enough room for other players to come and participate in the sector. One particular company in this sector wherein we have an accumulate stance, Anushri, is Phenolex Cables. We have an accumulate stance over here.
Got that, Gaurang. And we've done a KYC episode on this company, KEI Industries, which aired at 11:30 today. You can catch the full episode on YouTube as well. But let's pull up a Strides Pharma as well. As the counter is sprinting ahead of its peers in terms of fundamental business performance. It's delivered a stellar 53% rally since April, outpacing the broader Nifty Pharma index of a single-digit return, with sharp focus on the US markets, as well as margin recovery and strategic de-risking moves. The company is building a competitive moat through its niche plays. Let's get in my colleague Varsha, who's standing by to give us more on this. Varsha.
Basically, it's a fundamental reason, but as you rightly said, if you see of Strides Pharma in the since April 7, the stock has given 53% returns to its investors, while Nifty Pharma was up 9% and Glenmark Pharma, which is the top stock in Nifty Pharma, is up only 42%. Let's see what is triggering this rally. One is the US business. So everything when it comes to Strides Pharma revolves around the US business and debt reduction. Let's see what are the expansion plans when it comes to US business. They want to aim $400 million of revenue in US in FY28, and this will be driven by 60 planned launches, including high value or rather high margin products. Now only 71, the interesting point over here is only 71 of 260 filings are commercialized. That means showing significant potential that the company has in futures, and that's the reason they're giving a guidance of almost $400 million when it comes to US business. Now what they're doing is they're investing in controlled substances or nasal sprays, where the opportunity is almost $600 to $700 million. Now this is for Strides Pharma, and these are high value, high margin products. So they are moving from low margin products to high margin products, and 7 to 8 of such launches are lined up in the next few years, rather in the next 3 years, and they are also moving away from partnership agreement, and they are relaunching their dormant portfolio, which will lead to increased market share. The next trigger point when it comes to Strides Pharma is the margins. Look at the margins from in FY22 a company had an EBITDA loss, and from there the margin trajectory has been fantastic, and one of the reasons is because of the decrease in interest cost and moving to high value, high margin products. Next, if you see, debt reduction is also one of the reasons why this company has been in focus, and Arun Kumar is known for his dealing with the investments and phasing out or existing or de-risking the business. If you see the recent agreement that Arun Kumar has done is spin-off when it comes to OneSource Specialty Pharma, and which is a major de-risking move that has been done by Arun Kumar, and which is also a value unlocking event for shareholders. Just on their business model, what Strides Pharma is famous for, so they avoid being first to launch in the market. They only launch the products where the market is stable, where they know that they can grab the market share, and this approach mitigates the volatility that every generic pharma companies goes through. And overall, if I want to talk about the revenue growth, so they're expecting a revenue growth at a CAGR of 12%. US market will contribute almost 52% of revenue share. Lastly, on the valuation, which is considering the guidance given by the company, if you see, EBITDA is expected at 1,000 crore, net profit is expected at 520 crore. So that comes, the EPS comes to it around 57 rupees at a 30x PE. Still, there's a lot of runway when it comes to a share price of Strides Pharma can go almost 1,691, and currently if you see, it's hovering around 800 to 900 per share. So a lot of scope still exists when it comes to Strides Pharma, and overall if you see, US business and the debt reduction are the key triggers, and of course the margins that has led to this fantastic rally by Strides Pharma.
Well, thank you for that, Varsha. Gaurang, not sure, but do you have coverage on Strides Pharma as of now?
Yeah, we do have Puneet, and Varsha was absolutely right in terms of de-risking and debt reduction and focusing into high margin products. But all this futuristic numbers are going to tell us how the company is going to progress. Since our target was in place in Strides Pharma Science, we have a sell recommendation currently on Strides Pharma Science.
But on the business, Gaurang, you are positive on business, despite I think the valuation concerns definitely is one of the key ones. But on the business, do you feel that this has the strength and the legs to go forward in the future as well?
Well, I think the way the management is planning the strategy forward, a couple of triggers, as Varsha was mentioning, reducing the debt, de-risking, and focusing on high value products. Well, if your strategy works out right, then I think numbers can do wonders. So while the business looks good, but valuation wise, we believe that it's a little bit stretched. Hence, we've given out a sell recommendation.
Got that, Gaurang. Gaurang, stay with us. We'll be right back with more on the other side. Stay tuned to NDTV Profit.
That's huge. That is a biggie. It's out of it.
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
हेलो
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome back. You're watching Profit Buzzers. Now let's talk about something like a Colgate Palmolive, which is in focus, and this is in the back in the spotlight as brokerages reassess their outlook for like a weaker than expected first quarter. In fact, the stock is seeing some bit of pressure today as well. It's down about 4%. Now HSBC has trimmed its target to 2,600 while maintaining a hold rating, and JP Morgan remains overweight but lowers its target to 2,625, expecting a back-ended recovery in the second half of this financial year. Mahima joins us with a more detailed outlook on the same.
Right, so as you rightly mentioned, brokerages had gotten bullish in Q4 because Q4 performance for Colgate was outstanding, and because of that, they, quite a few brokerages did upgrade the counter and also raise the target price. But Q1 has been disappointing, and this is because volumes have not picked up and urban demand remains under pressure, and that is why we are now seeing EPS cuts as well as ratings downgrade and target prices being lowered for Colgate. I'll start with HSBC first. They've maintained a a hold but cut the target price to 2,600 from 2,700 earlier. What they're saying is that moderation is more than what was anticipated, and that drives the overall target price cut. Colgate expects a gradual recovery in H2 FY26 is what the management has said, and they expect improvement, but structural growth potential now remains low according to HSBC. JP Morgan on the other hand has maintained overweight, but again here they've cut target price to 2,625 from 2,750 earlier. What they're saying is that overall the H1 is expected to be a tough first half of FY26. They expect back-end recovery in second half. Volume growth pace should improve again in second half of FY26, and EBITDA margins to hold out at the 32 to 33% mark. They're reducing FY26 to 27 estimates for revenue overall by 6% and this is mainly due to lower revenue that this particular quarter has shown. So this is the overall view as to why brokerages are turning bearish on the counter.
Okay, thanks for that, Mahima. But let me go across to our guest for today to get a more detailed outlook on this as well. So we already have Gaurang with us, but let me also welcome in Gaurav Sharma, Associate VP and Head of Research of Global Capital as well. Gaurav, let me come to you on this one. What is your view for Colgate?
Hi, good afternoon. Colgate is underperforming from quite some time now. It is a couple of weeks that the stock is hitting lower lows. All recent attempts to trade at higher levels and reverse the ongoing negative bias have went into vain. Still, the stock looks weaker. After it posting its quarterly numbers, a good 4% cut is witnessed in today's trade, and I see it heading further lower towards 2080 odd levels in the near term.
Okay, so that's the view that we are seeing for Colgate Palmolive. So stock under pressure today as well. But let's also see a overall picture in terms of how the FMCG companies are expected to fare in the first quarter of this financial year. Mahima tells us why.
Right, so overall, in terms of the revenue growth, there will be some revenue growth on the back of price hikes, but the value growth versus value growth will remain divergent. Overall, in terms of margins, they'll be under pressure. And this is because of inflation hitting the overall margins, both in terms of gross margin. EBITDA margins will also see contraction because of gross margins being under pressure, but that will also be on account of higher ad spends. Now, in terms of demand, there's gradual recovery that's taking place in the rural demand, but urban demand still remains under pressure. Well, companies which are expected to outperform double-digit revenue and PAT growth will be seen in Marico, Tata Consumer as well as Gillette India. Margin expansion also expected in ITC as well as Nestle. But companies that will underperform, there's negative revenue degrowth that will be seen in Imami as well as ITC, and significant margin contraction expected in Gillette, Marico, Tata Consumer as well as GCPL. Lastly, what lies ahead? Well, second half of FY26 is expected to be better on the back of rate cuts, tax cuts as well as the 8th pay commission coming in. To end with, Tata Consumer is expected to post its earnings today, and that's something that one should keep in mind. Overall, revenue and PAT will see a double-digit growth. Margins to remain under pressure. Revenue may rise around 11%, EBITDA may fall 3%. Margins to see almost a 200 basis points contraction, and profits may see a growth of 23%. Key things to watch out for: tea inflation plus impact of pricing interventions in the international market, and of course growing competitive pressure from the unorganized space. So this is the overall view of what you can expect from FMCG sector as a whole, and of course from Tata Consumer as well.
Okay, thank you for that, Mahima. Let me go across to Gaurang. Gaurang, first, Mahima did give us a detailed picture on how the FMCG companies are expected to shape up. Specifically, if you are seeing for today, Tata Consumers will remain in focus on the back of their Q1 numbers. First question would be on your key expectations for this stock, and overall the FMCG space also. What's your view?
Well, Anushri, so we all know that semi-urban and rural areas do contribute to a great extent as far as the volume numbers are concerned, the top line. Monsoons, as expected by the Met Department, are doing well. They have had a good spread as far as the pan-India coverage is concerned. A good productivity in terms of agri output would translate into good income for semi-urban rural India, and that will translate into savings and spending as well. Coming to the metro cities, well, metro cities have been contributing to a great extent. Tier 2, Tier 3 cities are also likely to do well, as the announcement made by the Honorable Finance Minister during the budget of no tax about 12.75 lakhs this should also start showing ground level green shoots by October, November, December. That is the third quarter I'm talking about. And as a sector, we remain positive on Tata Consumer Products. We have a buy recommendation. That's a disclosure from our side. Other than that, we have coverage on Colgate. You were discussing with your colleague sometime back. Marico, HUL, ITC. These are some of the other names, including Nestle and Britannia. We are positive on all these names as far as FMCG sector is concerned. And our sense is that, yeah, this quarter could be a little bit difficult for the FMCG pack, but second, third, fourth quarter should look much more stronger on fallback of volume growth as well as demand outlook.
Okay, so recovery expected in the subsequent quarters is the view of Gaurang. But Gaurav, your quick take as well in terms of any picks that you have in this space.
Yeah, we are too bullish on the FMCG pack, and we expect that the later half of the year will bring some jubilation in this space. Dabur, Britannia, and Nestle are the three stocks that we are clearly eyeing at. Dabur is where, at current levels can be a good buy for a short-term pick that can, levels towards 560, 580 are possible. For Nestle, it is just at the onset of a breakout. 2500, 2520 is a breakout point. Once that is taken out, the stock has good potential to test 2750 levels. For Britannia, I'm just waiting for a slight more dip here. Another 200, 300 rupees dip will get down to take it towards a very attractive trajectory there. So buy on dips on Britannia.
Got that, Gaurav, but let's stick with the earnings as well, because Infosys is expected to come out with earnings today. We're expecting the results to come directly post-market, but it'll be a very short turnaround as well. Infosys is going to be in focus, and because this company is going to be the only large cap company, is expected to report growth in terms of revenue as well as profits in this particular, in revenue specifically of about 2%. EBIT margins will also impact by 1.6% on the positive side. That's something to watch out for. Overall margin, the absolute margins will see some blip because of the wage hike impact in this particular quarter, while profits is expected to fall by 3% because of a similar impact as well. There are two key aspects to watch out here in terms of Infosys. One is that in terms of revenue growth, that is expected to be around 1 to 2% on a constant currency basis. We are also seeing the other key important one, which is on guidance. It's 0 to 3% is what the company said at the end of quarter 4 of FY25. Some brokerages anticipating that this could be inched up to 1 to 4% and could provide that kind of positive fillip on Infosys. We've seen the lower end of the guidance being raised for HCL Tech. It was 2 to 5% earlier, now it's 3 to 5%. But for Infosys, we could see the upper end of the guidance being raised, and that could be a positive compared to the last quarter. Apart from that, of course, stuff like the other aspect of deal wins basically will be one of the other ones to watch out for as well. The other couple of counters that will be in focus is Persistent as well as something like a Coforge. Let me start first with Persistent Systems. Both results are expected to be strong for the mid-cap players. We're seeing revenue to rise by 3.4%, while EBIT margins are expected to expand by roughly about 3.7%. Margins overall will come at 15.6%, and profits is expected to rise by almost 6% as well. So that's the top 4 takeaways. But let me go across to Jasmeet real quick. Jasmeet, apart from the 4 numbers that I just mentioned, what will be the key expectations for Persistent Systems?
Well, right. Thank you for that, Puneet. Yes, as rightly said, the results are right around the corner. And as you rightly mentioned the numbers, let's quickly understand what more to expect in terms of qualitative terms from the management. Firstly would be the CC growth, which is expected to come around 3.5% on QOQ basis, while this will be the second highest in terms of mid-cap earnings that Coforge, after Coforge, Persistent is supposed to report, while the margins are expected to fall flat by inch up by slide in Q1 FY26. While what can be under pressure will be the healthcare segment. The BFSI and the high-tech segment will lead the growth, but the healthcare can be under pressure. Healthcare contributes to 27% of the overall revenue. While why would the sector be under pressure would be, as of Q4 FY25 management had reported some of the top clients are showing a bit pressure, and as of the US Doge withdrawals, so that's something to watch out for in Persistent.
Got that, Jasmeet. Thanks so much for that. But let's go across for exclusive conversations, and the key question that our audience is ditching the sofas finally for theatre seats as well, and it's the Sanyara fever real. Now it's minted almost 100 crores on day 5. What are some of the movie trends as well as some of the other aspects for that to watch out for? My colleague Aishwarya is now joining in with Sanjeev Kumar Vijli, who is the executive director at PVR Inox. Aishwarya.
Well, this film has touched a nerve. It struck a chord. The reactions and expressions of fans have been going through the roof. Some of them have been crying, carrying even their IVs to the theaters. And very, very heavy emotions coming through from Sayyara. The poster, big poster is right behind us. We're at director's cut, and joining us on this live is Mr. Sanjeev Kumar Bijli. Thank you so much for joining us here, first off. At the counter, I was just asking one of your colleagues here, and you know, she's told me the whole film booking that has been done for the day, at least it's midweek, Wednesday, and everything is houseful.
Yes, yeah.
Right?
Yeah.
But first impressions of Sayyara and the freedom of expression that's coming through from the audience and fans of this film, what are your first few thoughts?
Oh, it's incredible. Actually, I think it's a phenomena. We've been in this business for like 25 years, and we haven't seen such hysteria that has surrounded the film, especially for debutants. You know, I mean, these kind of hysteria normally comes for established actors when they come out of film after a long time. But to new faces and making such waves across the country is just incredible, and something we haven't seen in a long time. Of course, my heartiest congratulations to the Yash Raj films, Adi Chopra, Mohit Suri, and of course his brilliant, talented two new actors, Ahan Pandey and Aneet Pada, for just like making this movie not just a success, but a phenomena, a total phenomena.
In fact, while we were in a conversation earlier, Sanjeev did tell me that he did have a little bit of a tear at the side of his eye. Emotional point for you, and what do you think Sayyara did right to get this kind of audience, fan base, and kind of, so much love for this film?
Well, guilty as charged, and I'm exposing my vulnerability and emotional quotient here. But of course, I was teary-eyed for a large part of the film, and I think it all goes down to the writing, the way the film was written. The direction by Mohit Suri, and the exceptional visceral performances by these two new leads. And the music, of course, which really in our films also just uplifts the emotions and accentuates it even more. I mean, all of that put together was something that's resonated with not just the Gen Z, but even people of my age and demographics, and made us really sit up and notice the kind of film that's been made. And the kind of emotional roller coaster that the film takes you through. Yeah.
Let's also talk about footfalls and some of the numbers. Where does it stand at? I believe as of yesterday, it had crossed about 100 crore or so. For PVR, what are the footfalls so far? How has it been received so far?
Oh, brilliantly. I mean, it's only, the fourth day now, fourth or fifth day, and I think the box office numbers, all India I'm aware of, not the overseas numbers right now, and it's about 165 crores already, which is a phenomenal number. And we've done about more than 50-60 lakh admissions since Friday, which is just incredible, yeah.
And today is houseful, midweek, Wednesday. Is that a usual picture?
No, not at all. And it's just not Wednesday. I mean, Monday normally a film drops by at least 30-40% occupancy. But the Monday was more or less or more than Friday when the film came out. Tuesday, yesterday, we alone did about 8 lakh admissions, and we did a contribution of about 10 crores GBOC. So that's an unheard of number, 8 lakh people coming to our cinemas throughout the country. And Wednesday being today, we're at 1 o'clock right now, and we've already clocked in 2 lakh people. So I think it's going to end at a good number as well today.
So between PVR, this is director's cut. Let's walk a little further also and kind of get a view of what this director's cut looks like also while we're having this conversation. between PVR, the other formats and this particular one, the audience really differs. So do you see this kind of expression only at the other formats, or even at director's cut you have some really film appreciation kind of a crowd coming here? So
I think it's everywhere. I think it's the Gen Z, the demographic to whom obviously this movie has resonated, and now it's also percolating to the other generations, just like myself also. Even I've gone to see the film. The demographic essentially is the Gen Zs. You know, they're the ones who are coming and watching the movie, loving the cast, loving their acting, loving the music, and loving the storyline. It's the same kind of crowd everywhere, and it's the youngsters who are just going hysterical. And as we can see through a lot of social posts, even going.
You have a lot of fans coming through an audience also. Yeah.
Yes. Yeah, and really doing all sorts of crazy things. So it's quite good to see that. Yeah.
Let's get out of the way a little ahead. But do you think the definition of a hit is 1,000 crore now in Bollywood as a big ticket film? Is that the norm now for the success of a film?
Yes, there are a lot of movies that in the past couple of years, post-COVID, have done 1,000 crores, be it RRR, Pushpa, Jawan. And that's a big, big number. What used to be earlier 100 crore, 200 crore, 300 crore number, a club. Now you can reach 1,000 crores if you can resonate with an audience across the country. And this one, I mean, it's poised to do about 400, 500 crores.
That is domestic, you say?
Domestic, yeah, given the current love and the trajectory it's on. And we'll be so delighted if it does end up doing 1,000. We all hope for that, yeah.
Do you think your worldwide estimate would be 1,000 crores?
Yeah, absolutely. I think it can do that, yeah.
And that despite not being one of the Jawans or Pathans or an SRK film, new debutants. Do you think Bollywood is back to the big screens in the world of OTTs now? Is this a comeback?
I mean, we've always maintained that there is a market for both, right? It's like there is a market for out-of-home entertainment, and that's where we come in with cinemas, and at-home entertainment, and that's where the OTTs come in. And I think it depends on the film that comes out and what connects with the audiences. The cinemas are a very good and a preferred destination for them to come and watch movies and enjoy cinema. So we've always said that it's cinemas is the first choice because it's a community event. You like to go there with your friends, enjoy the film, enjoy the sound, and all that frills that come with it. I think that is something which is getting better and better now with the kind of films that we are seeing and the kind of pipeline that's been coming in the last 3-4 months.
Well, just to wrap it up, occupancy, by the end of it, occupancy, and say it'll go on for another few weeks, footfalls, occupancy, where do you think it'll stand at in a couple of weeks or so? And do you think this is just the beginning of Bollywood being back to the big screens?
Specifically for this film, I mean, we're currently hovering around 55-60% occupancy, which is huge, which is massive actually. And I think it will sustain for at least another 2 weeks. Those kind of numbers will sustain for sure for another 2-3 weeks. Where the box office reaches, we've discussed already, 500-600 crores. We're all hooting for more. And as far as your next question about Bollywood films, I think the pipeline is very, very strong. Pipeline is very, very strong, and there's a whole set of nice films coming out, and that's only going to help propel and strengthen the theatrical business going forward. Yeah.
We'll just get a couple of reactions from a few of the people who have come here to watch the film.
Yes.
Hi, are you all here to watch Sayara? Okay, what's the enthusiasm here and the motivation for you to come and watch this film? You're with your parents, so I want to know your take first and then maybe your parents also.
Yeah, sure. I mean, I've been watching Alana Pandey's vlogs, so we just got to know that his brother is doing a movie, so we came here to watch the movie.
So you're a fan of
Yeah, we watch the vlog.
Right. And so you?
For me, the motivation, my daughter brought me here. I mean, I have to go where she takes me, so.
Right. So, enthusiastic crowd here at PVR. Sanjeev Bijli joined us here this morning. Pleasure speaking to you. Thank you very much. Maybe Bollywood is back. We'll see in a couple of weeks how those numbers pan out.
Well, thanks so much for that, Aishwarya. And definitely the dad reaction is every dad's reaction. But let's get ready for a star-studded IPO. Sri Lotus Developers, backed by Bollywood legends Shah Rukh Khan and Amitabh Bachchan, plus investment ace Ashish Kacholia, is hitting the markets on July 38th with a focus on ultra-luxury dreams in Mumbai's western suburbs and a glittering track record. Can this celeb-powered real estate giant win over investments as well? Let's go across to my colleague Sajid to get us more perspective on this.
That's right. Sayyara may not be having a Pathan or a Shahenshah, but this IPO has both of them. And that's what we are seeing. This IPO of Sri Lotus Developers. It's a Mumbai-based western suburb developer which is into luxury residences. And that IPO is opening on July 30th and closes on August 1st. It's a 792 crore IPO. But what is important for them is the kind of investors that came in the private placement prior to filing of the DRHP, which was in December of 2024. In that DRHP, we saw nearly 400 crores being raised, 2.66 crore shares given across to a host of celebrity from Bollywood and the Dalal Street at 150 rupees per share. If you look at some of them, we have celebrities from Shah Rukh Khan's family trust, which invested nearly 1 crore there. We have Ekta Kapoor to begin with, her brother Tushar Kapoor, and then father Jitendra Kapoor. They have invested close to 50 lakhs in this IPO as part of the private placement. Then you have Manoj Bajpayee, Tiger Shroff, and then Shah Rukh Khan, who has invested nearly 1 crore over that. And then you have Amitabh Bachchan, who has invested in his personal capacity another 1 crore or so in the IPO. We have the Hrithik Roshan and his father Rakesh Roshan both investing in this IPO. And from the corporate, we have Dishan Pitti, who has invested roughly around 50 lakhs. And Sajid Nadiawala is another one, a Bollywood director who has invested nearly 10 lakhs there. But what is also important is some of the market veterans who have invested in this IPO there. We have Jagdish Master, who has invested nearly 1 crore. We have DR Choksi, which is Devin Choksi's firm, which has invested 1 crore. And Ashish Kacholia, who is the market veteran and investor who has invested 5 crores in the IPO. So the total raise is around 792 crores, of which 550 crores will be used for various projects in the western suburb of Mumbai. The IPO is opening on July 30th and will be priced roughly between 150 to 200 or rupees. That's what we expect. It's opening next week.
Okay, thank you for that, Sajid. So let's see if that celebrity influence on this IPO can pull those subscription numbers and for the IPO that we are looking at. But moving on to some national news now, relief for SpiceJet from the Supreme Court. Now the top court has dismissed a plea by Sun TV owner seeking damages of 1,300 crore rupees from SpiceJet. This brings an end to a long legal battle that began a decade ago when Maran sold the airline to Ajay Singh. Nupur Dogra has the details of this verdict.
In a major setback to Kalanidhi Maran and Kal Airways, the Supreme Court has rejected their appeal against the Delhi High Court decision where it had dismissed the 1,300 crore claim in damages against SpiceJet. Now, the core issue of the dispute was between Kalanidhi Maran and SpiceJet, specifically regarding the non-issuance of warrants after the transfer of ownership of SpiceJet to Ajay Singh. Now, both the parties have been embroiled in a legal battle over the years, but today the Supreme Court verdict rejecting Kalanidhi Maran's appeal against the Delhi High Court order seems to have brought in a conclusion to this prolonged legal battle. The Supreme Court has today rejected the appeal by Kalanidhi Maran seeking damages worth over 1,300 crores. Now, implication of this decision of the Supreme Court is that the demand, the appeal by Kalanidhi Maran for additional damages beyond what the initial arbitral award had granted has been rejected by the top court today.
Well, thanks so much for that, Amur. But that's all the time we have on this edition of Profit Buzzer. Stay tuned to NDTV Profit for more.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profit.
Hello and welcome. You're watching Top Trades on NDTV Profit with me, Somit Sarkar, and my co-anchor Varsha. Well, Varsha, if you look at the markets, the benchmark is up around 100 odd points, but the Nifty Realty Index, it's down around 3%, the top sector loser in trade today.
Yes, exactly. And you know, just to talk about Nifty 50, it's up 0.45%. Let's see the contributors when it comes to benchmark index. On the gainer side, though, you have HDFC Bank, Bharti Airtel, ICICI Bank, RIL, which are gaining when it comes to Nifty 50. On the loser side, though, you have HUL, you have Tata Consumer, which is expected to post its numbers. You have BEL, ITC, which are losing when it comes to Nifty 50. Let's see what sectors are buzzing. Let's pull up the sectorial heat map. Barring Nifty FMCG and Nifty Media and Nifty Realty, everything is in green. So to talk about Nifty Realty is down 2.93%, while Nifty Media is down 1.05%, and Nifty FMCG, if you see, is down 0.65%, while Nifty Bank is up 0.6% and Nifty Auto is up 0.63%. Let's see what broader markets are doing. Let's pull up Nifty Midcap 150, it's down almost 0.1%. Let's see who are the gainers when it comes to Midcap 150. You have MRPL, you have Gland Pharma, you have Dixon Tech, Max Health and L&T Finance, which are buzzing when it comes to Midcap 150. On the loser side, though, you have Colgate, which is under pressure. This is on the back of a weak Q1 number that the company has posted. Even Dalmia Bharat is under pressure. This is on the back of, again, weak numbers. You have Oberoi Realty, Patanjali Foods and Thermax, which are losing when it comes to Nifty Midcap 150. On the small cap 250, let's see what that counter is doing. It's down almost 0.18%, and LG Equipment, MRPL, Credit Access and JM Financials are buzzing when it comes to small cap 250. On the loser side, though, you have Triveni Turbine, you have Brigade Enterprises, you have Mastek and Honasa Consumer, which are under pressure when it comes to small cap 250. So overall, Somit, if you see, considering the broader markets, a lot of companies are in focus on the back of Q1 numbers.
Right, and one company that has been in focus is Orient Pro Solution. The stock is down 6% after the company reported a 29% growth in its revenue. Let's get in Ashish Rai, the Group CEO of Orient Pro Solution, to give us more details on the quarter gone by. So Ashish, coming to you firstly on the revenue front. Yes, it's a solid growth of 28.7% that we are seeing on a YOY basis, but it is slightly below compared to what the guidance the company had given of 30%. So are you confident of achieving the growth guidance of 30% for FY26, which means that for the remaining 9 months, the growth number should be a little bit higher compared to what it was in the first quarter?
Hey, Sumit. Hi. So first of all, thanks for having me. I think between 29 and 30%, not a lot of difference. We feel good about the start. We feel good about being able to deliver to the guide overall. So we give guidance for the full year. We normally don't give a quarterly guidance. I think from one quarter to the next, and we always give guidance within a band. So from one quarter to the next, there may be a little bit of variation, but we feel good about the full year. Q1 is a solid start. So seasonally, it's a slow quarter for us, especially for the TIG side of the business, which is always a bit soft coming into the year and builds up into H2. Right. So I think I would say for the full year, we remain on track. It was a solid Q1 from the sales standpoint. We picked up 16 new logos, entered many new markets. The channel is working. The products are working. Right. And we stay on track.
Right. If you could also take us through what has been the order inflow for the company in the first quarter currently, what is the order book size? Any details on that front?
Order book is at the largest we've seen, right? So order book now stands at about 1465 crores, which is a very, very strong order book. Typically, the way we declare our order books, it is essentially largely what is deliverable over the next 12 to 18 months. And we normally keep out the long-term AMCs and all this stuff out of the order book. So 1460 crores is a pretty strong order book to deliver the next 4 quarters and gives us a very, very strong visibility on what is to come.
But what was the order inflow, if you could share that detail?
So the way to look at our order inflow is typically, so if we've delivered a 330 crores quarter, so that is getting reduced from the order book more or less as it stands. And then you add on top of it. I think we finished last quarter at slightly over 1400 crores. So net addition would be, I would say, the revenue plus, let's say, another 50 crores, right? So the net addition is like 50 crores, 50 or 60 crores, right? So the overall addition to the order book would be what we consumed plus 60 crores.
Hi Ashish, this is Varsha here. Good to have you. Just wanted to have your view on margins. The current margins, if you see, is at 20% versus 21% last year. So considering the whole FY26, what is the margin expectation that you have?
Yeah, so Varsha, hi, thanks for the question. Look, our guidance for the full year remains where it is, which is where we said revenue will grow north of 30. EBITDA will stay between 20 and 22. PAT will stay between 15 and 16. I think we more or less we stayed within those bands in the quarter. The reason we give a 2% band on those margins is it's very hard for us to, at the pace at which we are growing, it's very hard for us to calibrate it down to a fine point. So from, especially on the year-on-year comps, they will vary for various reasons, right? So, and the margin will go up and down. If you're growing at 30%, you're building product at breakneck speed, and we expense out all the product build out. You're actually going into new markets, we're expanding the channels. So there'll always be a little bit of variance from one quarter to the next. Right now, the big moving, if I was to look at the comp, the year-on-year comp, I think the big moving part for us has been the sales channel expansion. We've invested heavily. I would say the sales channel probably has gone up 80 or 90%, the expense on that line, over the year, especially the expansion into Europe, which was a place we were not in. Now we've got a fairly good sized sales team and the associate support team in Europe, various places, UK, Nordics, in France, etc. We built out sales presence in North Asia, which we did not have before. We built out sales presence in Africa, we did not have before. So I think there is a lot more on that expense line. And there is obviously slightly elevated R&D expenses first half of the year, as I mentioned, in terms of or the vectors that we are, the two vectors we're investing on the AI side, right? So I think you'll see those variances, but by and large, I think it stays within the guided range, and within the range, it will go up and down.
Right. Ashish, also on the geographic mix now, I believe that the revenue mix is roughly stable at 60%, which comes from India, and 40% global. What are your expectations? I mean, in next 1 to 2 years, do you see this changing, or you want to keep the ratio same?
Yeah, so look, we've been, both sides of the business have been growing at more or less the same clip, and that's the reason why the mix, it goes up or down by a couple of points, but it's not really materially changed. We believe we've got over the next, let's say, 6 quarters, that will change into something closer to a 50-50 or maybe 52-48. The reason for that is, one, I think the US side has been grown reasonably well. We are making very significant investments in Europe, in Asia, excluding India, of course, in Southeast Asia and North Asia, and in Middle East and Africa, right? So I think over the next 6 quarters, the mix should change. And it's very hard to call how much that is, because, of course, we can plan things, but if both sides of business are growing at a very rapid clip as they are, I don't know of many organizations which, for 5 years have grown at 30% plus. A lot of it changes. So it's not that the global pie does not grow, but the India pie continues to accelerate as well, right? So we'll see how it falls, but I feel reasonably sure that the mix will change in favor of rest of the world versus India.
And of the total markets that you cater, including India, which is that key market which will be the growth driver for Aurionpro going forward?
So we feel Europe will be a strong growth driver this year and next year. That is for sure in terms of geography. We are now expanding. We had our first wins in Q1 in 2 markets in Africa. We are now pushing heavily into North Asia. So I think some of that will grow as well, but I think Europe will be a key driver from a geography standpoint. In terms of the product mix, I think banking will grow very strongly globally. Transit will go strongly globally, and as well as in India. And the rest of the TIG businesses will go strongly in India, right? So I think that's roughly how the mix would be.
Right. And lastly, before we let you go, sir, the recent acquisition that you had done of Phoenix, sorry if I'm pronouncing the name wrong, how much did that contribute to the top line, and what is the kind of contribution that you're expecting from this new acquisition for the full year?
For Phoenixes? So Phoenixes is a key acquisition for us in Europe, largely to sort of propel, have a much stronger sort of presence out in Europe to be able to deliver against the banking portfolio that we're taking there. From a revenue contribution standpoint, in the quarter, it's less than 1%. So it's not significant from a revenue standpoint, but I think overall, in terms of how it helps the rest of the Aurionpro businesses to expand in Europe, I think it would have a much bigger impact.
And just sorry, one more question here. What are the new product launches that you have planned?
So a lot of it, right? So on the transaction banking stack, we probably have one of the leading products in the market already globally. We intend to expand that in terms of presence around liquidity management, around supply chain finance. So I think that becomes a big area. We, together with Fintra, which is an acquisition we did in Q1, we intend to build out a very strong front to back trade offering in the trade space, which we are very excited about. On the transit side, lots of new product launches, especially as we are going in on the back office side and the software side. So there again, a lot of launches. Plus, on the AI side, we have made heavy investments around 2 different vectors. One is around the enterprise AI stack, including the investments we have on the explainability, interpretability side, where we run one of the top lab, basically the top lab, explainability lab in India. I think lots of offerings coming out there, as well as the AI enablement of the application stack overall, right? So that is the second vector. So there is a lot to come in FY26 in terms of new product launches. Very, very excited about that.
Ashish, also recently have signed a deal with the South African bank. Can you just help us with the deal size and any updates on that?
Yeah, so I don't know if we declared the deal size, but it's so normally we declare deals of those size if typically it's north of at least 30-40 crores, so it's a significant deal size. It is the first win for our brand new corporate digital banking product in Africa against a fairly competitive field. So I think it is really a landmark win. It allows us to really get in on a fairly significant space through a cutting edge brand new digital banking product specifically focused on corporate banking. Very positive on where that could go. A fairly significant win.
Right. Well, thank you, Ashish, for answering all the questions and all the best. Well, this was Orient Pro Management, which is expecting 30% of growth when it comes to revenue year on year. Well, on that, let us invite our guest for the show, who is Astha Jain, Senior Research Analyst at Hem Securities. Hi, Astha. Welcome to the show. You heard, Orient Pro Management speaking about the outlook and about the Q1 numbers. Are you tracking Orient Pro? What's your view?
Hi, good afternoon to all of you. See, talking about this counter, although they were sounding very positive, but I think order book is still not very strong, because if I take their FY25 revenue, it is almost at around 1175 crore. So order book is just 1.5x of their FY25 revenues. So I mean, they on the order book front, it is seems to be a okayish kind of order book, not so strong. And in fact, the results which we have seen were also not very encouraging. So I think markets are not liking that part, and hence we are seeing a fall in the prices also. Idea here is not to make an entry into this counter at the current level, because we believe that this counter is poised to move more downside from here. So it's better to wait for some more time. Let this counter fall till the level of 1450 to 1420, and then one can think of making entry into this counter, because we still believe that this company has a lot more to show before getting a good momentum in the stock prices. So idea here is to just wait and watch and not make a fresh entry at the current levels.
Right, Pokarna is another stock which remains in focus. What's the latest news that has been buzzing the stock? Let's get in Jasmeet with more details on the company.
It's down 13% over last 6 months. Let's quickly understand what does the company do and how the recent updates of news are impacting the company's share performance. Well, firstly, the company is in the manufacturing of grenade business, and they manufacture and export natural grenade, while the company has presence in over 23 companies, and they have been in this business in the last 30 years. Now, as far as the group companies are considered, the company has two main group companies. One would be the Stanza and second would be the Quartz Surface. Now, as per the US tariff announcement, the company remains under pressure. Let's quickly understand why is this happening. Firstly, as the company majorly exports to the US, and US tariff tension creates a lot of tension for the company's performance. Secondly, the underutilized capacity of the management would lead to selling the goods at a lower price, creating a competition for the management. While thirdly, this creates a pressure on the average selling price. Now quickly, let me brief you all with the recent updates as of May of what's exactly happening with the US tariff. Firstly, the US import of Quartz Surface had slowed in May month as of FY25. This slowdown has come after a spike in demand from Jan to March. So basically what has happened is the US has imported the goods before the tariff has come up, but now the May they have seen a 18% drop in the imports. Now even on the other hand, the macroeconomic factors remain at focus, given that the company is into grenade business, which would come under a discretionary spending, and people would focus on reducing that, so it would even impact the management stocks and the performance. While when we look at the financial performance of the company, as of FY25, the revenue is up 35% and trading at 930 crore versus that of 680 odd crores in the previous year. Now in terms of margin, the margin stands roughly at 38% for FY25. Now in terms of the segmental growth of the company, when you look at the grenade segment, which has degrown by 24%, while the quad segment has grown by 39%. Now, as per management guidance for FY26 forward-looking, management expects and guidance to be maintained margin at 35%. So this is something to watch out for. It'll be interesting to watch out how the Q1 result turns out for the company, and we get more data on how did the exports work out for the company.
Well, coming to you, Astha, on Pokarna, any views on this counter?
So they are basically the leaders in the quad surfaces, right? And in fact, their granite business is also very good. They have a state-of-art integrated manufacturing facilities, etc. In fact, they are expanding. I mean, their global footprint is very, very strong. And now what we are expecting from the results, which will arrive on the 30th of this month, I think in the quarter 4 of FY25, the results were average because we have seen a rise in their financials. So I would really like to see the results, which will be arriving on 30th of this month, and then make any sort of decision regarding the making new entry into this counter. However, those who have already making already have their exposure in this counter, they can continue to hold this counter, because we believe that this counter will hold a northward direction, and it will move till the level of 1110 to 1150 in the coming days, provided if the results are up to the mark.
Right. Thank you so much for that view, Astha. Well, moving on, Arfin India is buzzing on the street, rallying 16% today and clocking its biggest 7-day gain since 2020, with plans to ramp up capacity to 1.13 lakh metric ton by 2033 and a focus on premiumization as well. The company is betting big on high margin growth. Well, Vansh joins in with more details. Vansh, over to you.
Right, so the stock is up 32% in the past 7 days and is up 55% in the past 1 month. However, we have seen profit booking in the today's session. Now, if we talk about the business of the company manufactures aluminium and ferro alloys, and they caters to automobile and power sector. If we talk about the clients of the company, the clients include strong names like Tata Steel, L&T, SAIL and JSW. And company has an installed capacity of 71,000 metric tons. And if we talk about the financials of the company, 3-year revenue CAGR for the company stands at 5%, and margins are in the range of 5 to 6% for the last 3 years. If we talk about the outlook, company aims to reach 113,000 metric tons capacity by 2033 by focusing on high margin products. And if we talk about the technical details of the stock is sustaining about 200 simple moving average after June 2024. And if we look at the charts of the stock, there has been a breakout of a downward falling trend line as of March 2024. So these are some details for Arfin India.
Astha, any views on Arfin India? Have you tracked this counter? Any outlook whether should one invest at current levels or not?
So in their portfolio, they include copper scrap, brass scrap, etc. And what we think that this stock from last few days, we are seeing that this stock is not holding its upward direction. In fact, in today's trading day, also we are seeing it is falling 8%. So idea here is to just wait for some time while making a fresh entry into this counter, because the results were also, not very strong. So we are not recommending a buy at this point of the time. Let's wait for the this counter to cool down more, because we believe that it is quoting at 35, so maybe it can fall to the level of 32 to 31. So there we can have a chance to make a fresh entry, but not right now.
Right. Sambhav Steel is another counter which has been buzzing in trades since the company has listed on the exchanges. Vansh is joining us again with more details on what has been driving this move on Sambhav Steels.
So the company has already listed at 110 rupees a piece, and they have already listed at a premium of 34% since the IPO price, and they have further saw gains of 30% since its listing on 2nd of July 2025. Now, if we talk about the business, company manufactures electric resistant pipes and galvanized iron pipes, and their major revenues accounts from North and Western India, and their competitors include strong names like APL Apollo, JSW Steel and Hariom Pipes. If we talk about the financials of the company, the 3-year revenue CAGR for the company stood at 22%. And company recently reported its Q4 FY25 numbers, and the revenue was up 34%, EBITDA was up 2%, margins were at 9.7% versus 12.7%, and net profit was up 57%. And company also came up with the business updates, and the total value-added products were up 47%, and the total intermediate products were up 50%. It's also important to note that company has better margins in the value-added products. So this is how the picture is shaping up for Sambhav Steel.
Right, a solid move that we have seen in Sambhav Steel. Astha, any view, should one look at investing at the current levels or wait for some correction here?
Maybe till 24th of this month, because results are expected on that day. Although this counter has shown a very strong momentum, because their even quarterly updates were also very good, because they have shown the growth in their sales figure. So overall, as we know that it is a manufacturer of ERW, electric resistant welded structural pipes, etc. And they have got a very strong capacity also. And in fact, the Q1 updates were also very strong. So yes, this counter is looking good. It can move till the level of 160 to 165. But if anyone wants to make a fresh entry, just wait till 24th, because we believe that results will be announced on that day. So I think it's better, if you don't want to take the risk, better to see the numbers and then make a entry into this counter. Meanwhile, those who have already exposure in this counter, they can hold it for the level of 160 to 165.
Right. Sand DLM, which reported its numbers, Q1 numbers, the net profit was down nearly 29%. The stock is also down more than 2% in pre. Let's get in Puneet with more details on what went wrong with Sand DLM in the first quarter.
Well, thank you for that. It's a lack of growth as well as the increase in cost, especially for employee expenses, that's impacting Sand DLM. Now, it is largely an EMS company, but the growth is very different from the legacy EMS companies like Dixon, amongst others. So revenue's just grown about 8% in this particular quarter. We've seen the EBITDA for the counter go up in this particular quarter by 25%, but the final profit is down 29%. And the key reasons are that one, the employee expenses are up 78% at 57 crores, while the other expenses, which include marketing amongst others, that expense is up 140% on a YOY basis for something like a Sand DLM. Now, a lot of the revenue largely comes from the aerospace and the defense space, and that has been one of the slow growing areas for the company over the last few quarters. Now, margins, while growing to 9% in this particular quarter from roughly 7.8, it's still away from the 10% target that the management has set for itself in the last year. So it's not been able to achieve that kind of growth, and margin growth hasn't come through as well. So even though they are now integrating a couple of acquisitions that they did last year, it still might be a tough road for the company. We'll watch out for some more key comments coming from this result in terms of growth outlook for FY26, but the stock definitely impacted today because of this aspect.
Right, Astha, how are Sand DLM numbers looking like? Is this drop in the profits and the revenue just one-off, and should one consider this fall in the share prices as a point to accumulate this counter?
Sure, because what we believe that they have got the highest book-to-bill ratio of 8 times in the last few quarters. So excellent number that is. Yes, we are seeing that the numbers posted were not very strong, and hence the stock is getting punished. But we believe that now there is no more downside left in the counter. We have already seen a strong fall. So if anyone wants to take the risk, because we really need to see upcoming quarterly results, how they are panning out to be. But if anyone wants to take risk, then they can make an entry at the lower level of around 450 or so. But here the price target can be set at around 500 to 530 at the initial levels.
Well, thank you, Astha. That would be all. Thank you for joining us and giving us your perspective
so
over
much.
the stocks that we discussed. With that, it's a wrap on this edition of Top Trades. Stay tuned and keep watching NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit. Do you really know the company you invest in? What is the real picture behind presentations and claims? Hello and welcome. You're watching India Market Close here on NDTV Profit. I'm Harsh Saita. Let's look at the Nifty, and at least today we're seeing some bit of buoyancy on the Nifty, 125 points higher on the Nifty 50 index. We're holding firmly above 25,000 now, 0.5% on the Nifty, and it's driven to a certain extent by the Bank Nifty as well. 0.7% higher on the Bank Nifty. Let's look at it intraday as well, and it's been that way a fairly resilient day. We're up from the day's lows. We're currently at the high point of the day. Let's look at the heat map as well. And I would reckon there'll be some financials participating today. And HDFC Bank is up 1%. Shriram Finance up 1.5%. Bajaj Finance up 1.5%. Auto also taking the lead today. Tata Motors up 2%. Bajaj Auto up 1% as well. Maruti as well perked up in trade. So those are, and the breadth overall also looking far healthier than we've gotten used to seeing, at least over the last few days of trade. So all of that is contributing to the zing on the index, if I can call it that. Just 11 losers, Tata Consumer being the top one. You'll have results for Tata Consumer. Some of the FMCG names actually not doing as well, an ITC, a Trent, an HUL, a Tata Consumer and Asian Paints. So consumer is one space which is not looking as bright on a day like this. Let's look at sectors now. And within sectors, of course, you have the auto index up. The Fin Nifty and the Nifty Bank are some of the key gainers in terms of sectors. What you're also seeing is that the Realty Index is now down nearly 3%. So among the losers, Realty, Defense and FMCG is really dragging to a certain extent the market as well as the broader markets respectively. So and now let's pull up the advanced decline, see where the broader markets are shaping up. You're seeing a healthy or rather not so healthy advanced decline despite all the positive trends we've just spoken about. So we're seeing 1200 declines to around 1000 advances, but nearly 1:1 nonetheless. And it's been fairly stable. If at all I can take a positive cue from this. Let's pull up the Nifty mid-cap and small-cap indices as well. And those are not showing any sign of strength. A 1/10% lower on the Nifty mid-cap, so absolutely flat. And the Nifty small-cap too, very similar kind of a chart structure on the Nifty small-cap. So that's how the broader markets are playing out. Neeraj, with regard to stocks.
Yeah, I mean, the simplest thing to do, I think, would be just to get this heat map up on the screen and just show what's happening. So, this real estate cut that we spoke about, and while both were supposed to be clean out trades, there is some serious pressure on Lodha, right? But just the fact that the real estate bucket as a whole, AB Real Estate, which is the erstwhile Century Textiles or Oberoi, all three are down in trade. Now, remember, these are clean out trades, and therefore, will this same pressure last tomorrow? Remains to be seen. But clearly there was some weakness, more so in Lodha than Oberoi, which means that the demand wasn't as strong, presumably, in the session. And Z's reacting to its numbers, and the disappointment thereof continues out there. Similarly for a Colgate. On the other side, interesting moves from MRPL, a bit of a bounce after what was a sluggish performance by standalone refineries, right? So that was one. And some capital market plays like JM Financial, etc. have come out. The one last thing, I mean, I don't know if you highlighted Paytm or no, but we should bring up the intraday of Paytm, because that was arguably, to our mind, the stock of the morning. It's still a surprise, but what I was really surprised was the stock starting off in the red, by the way, then went down all the way despite what seemed to be optically pretty good numbers. Currently in the green, 1062 was a consensus buy. Maybe we'll ask our guest as well to tell us about it. Lastly, PCBL on your screen, and the numbers not looking the strongest, unfortunately. Net profit down 20% at 94 crores versus 118, and the revenues down 1.4% as well. Remember, UBS has the buy call on this one, but for the last couple of quarters since that note has come out, somehow this stock really hasn't performed. Kush Bora joins in with his thoughts on the markets and on specific names. Kush, actually, before we get to the micro, since PCBL numbers have just come out, the stock is sliding 4.5% as we speak. Could you look up that stock and tell us what do the charts suggest here? Good afternoon.
Hi, good afternoon, Neeraj. Hi, Harsh. What's happening right now is consolidation. The bias clearly is negative, but if you see the medium term structure, there's a rising trend line support that the stock is looking at. So yes, if it does close above or close below rather this 400 mark, you could see further continuation of this downturn that started about 2 weeks ago. So I will be a little circumspect. On the whole, as I said, there is a rising trend line support, meets at 400, so it remains not only a psychologically important mark, but also a technically important one. So stock should hold 400. If it doesn't, then you're actually looking at much lower levels of 380 and 365 as well.
Okay. Well, currently, kind of circa 400, 3.5% lower and stabilizing there. Thanks, Kush. Thanks for that. Now, is there a trade in the indices, Kush?
On Bank Nifty, there is, because if you see the kind of setup and the risk reward ratio, it still seems a little favorable. Although I'll, like a broken record, maintain that same track that for the last, in fact, for the, better part of this month, the index has actually hovered around the 57,000 mark, give or take a few hundred points. And that trend continues. So on the upside, 57,300, 350 remains, a near-term resistance. But if that is taken out, you would actually see a spurt towards 57,700. So won't be surprised to see Bank Nifty actually outperforming the Nifty, in the coming few sessions, maybe a couple of weeks. Nifty, on the other hand, a slightly different, creature, where we've spoken that 24,900 on the downside and about 25,250 on the upside remains the range. Even today, if you see the high that the stock that Nifty has hit is very close to the 25,200 mark. Currently where we are. Heartening to see that the PCR has improved and now trades close to 1. Largely because we've seen very sharp bouts of call option short covering that we've had at 25,000 and 25,100. Also now 25,100 has a very significant base. So what was turning out to be a pivotal level will actually now turn into a support, which is 25,100. But as long as 25,250, maybe even 25,300, if I'm pushing it a little, does not get taken out, I think this consolidation would continue. And we have very clear supports at 24,900 and 25,000. So no clear trades on Nifty just yet because it's recovered and close to the resistance mark. But Bank Nifty is still something that you can consider. On the downside, keep a stop loss near 56,700.
Okay, so that's the Nifty, the Bank Nifty. Kush, your picks for this afternoon?
Two of them, both of them on the long side. First is Jindal Steel and Power. Very, very good, price action for the last 5 sessions. Volume action also picking up today. You're seeing a continuation of that trend. So on the upside, you have targets of 990, 1015, 940 is your stop loss. The second one is SPML Infra. Here too, for the last 2 to 3 sessions, we've had a very interesting volume action. Today also, if you see in the first half, the stock actually did rather well, and had a nice spurt, crossed the 300 mark as well, but has seen some profit booking along the way. So a good re-entry point as well. 296, 305 are your targets. 277 is where you place that stop loss. So Jindal Steel and Power and SPML Infra.
Okay, so those are 2 names. The one which will likely come out will be a Tata Consumer later today. And Kush, what's the take there? Because clearly looking weak on charts on a day when in any case the result is not expected to be very impressive. So what's the take with regard to charts?
Yeah, as you rightly said, certainly looking weak, and the 1 month support zone that it had near the 1065 mark, that's been taken out today. So you're very immediately looking at a 200 DMA support of 1045. But what I'm more concerned about is the selling pressure that keeps emerging on this one at higher levels. So if you see for the last month or so, barring a couple of sessions, the 20-day moving average itself has turned out to be a resistance, or now that sits at 1095. So any rise that has come about has been taken as an exit or a selling opportunity in Tata Consumer. Maybe you could see a short covering bout from the 200-day moving average of 1045. But other than that, the trend doesn't seem to be very strong with it. So yes, if you have a short position, you should continue to hold. But for a long position, I would suggest 1045 as a fixed stop loss. And if that is hit or breached, you're better off exiting this one.
And what's the take on a Colgate? Because some of these FMCG names in general looking very weak. Do you have a general view as well on FMCG? Is it an avoid at this point? Is this an opportunity? Colgate and then thereafter FMCG, Kush.
So yes, I do have a broad view, but let's start with Colgate particularly. I had a positive view on Colgate some time ago, and that's been negated, especially after the move that it's made today. The stock is close to an 18-month low. If you see the medium-term structure, the last time around the stock was at these levels was close to December 2023. So any hope of recovery that was coming about has been negated, and you're seeing such pressure not only on Colgate but broadly on the sector as well. So yes, I think we've discussed a couple of times where the time is long gone of being long on a particular sector, or even short for that matter on a particular sector. It's about being very stock specific, but that applies even more so when it comes to the FMCG sector, where a lot of stocks are seeing a downtick. Here or there, you could have a Britannia, perhaps showing some glimmer of hope. But other than that, I think most of these stocks will come under a bit of a pressure. We need to be extremely stock specific when it comes to the FMCG space. There was a rally emerging, has given away in a lot of these names. So now you have to be a little cautious. I would be a little circumspect before initiating a long trade on some of these things.
Well, you have to be cautious, you have to be stock specific is the call on charts, and that's what we're going to try to dissect here over the next 10 minutes. We'll have Kaustubh Pawaskar joining us very, very shortly. But let me bring in our in-house expert on FMCG, Mahima, joining us this afternoon from the studio. Will we see a gradual recovery from FMCG companies is really the question, Mahima, which I'd like to pose to Kaustubh. But before we do that, give us the take with regard to a Tata Consumer first. What are the expectations like and what is the likely outcome looking like for this quarter?
By the way, just before we get to that also, Westlife numbers are out.
I'm just seeing that.
And Mahima, what do you make of the numbers? 6% uptick in revenue, but the operational metrics look weak.
Yes, they look weak. Net profit down quite significantly. And it's the same case with Sapphire Foods as well. Sapphire Foods has turned loss-making this time because cost of raw material, other expenses has gone up overall for Sapphire Foods. I think the same case has happened here as well. It was slightly expected from Sapphire Foods, but not from Westlife. So I think we'll see that reaction soon on the stock as well. Net profit down almost 62%. I'll have to see if there is an exceptional item there, but the numbers prima facie don't look very positive. But speaking about the FMCG space, before I go on to Tata Consumer, just a brief view of how FMCG as a sector is expected to perform this quarter. Revenue growth might be seen because of price hikes being taken, and value versus volume growth will still be divergent. In terms of gross margins and EBITDA margins, they remain under pressure because of inflation playing its part. Gradual recovery in rural demand has been seen in the past few quarters, and that will continue this quarter as well, but urban demand is expected to be tepid. In terms of companies that will outperform, there is double-digit revenue and PAT growth expected in something like Marico, Tata Consumer and Gillette. Margin expansion expected in something like ITC and Nestle, but overall companies that will underperform, where negative revenue and EBITDA growth is expected, that is Imami is one of the counters which was a surprising one, and significant margin contraction expected in something like Gillette, Marico as well as Godrej Consumer. So that's with regards to the FMCG space as a whole. But Tata Consumer, as I mentioned, there's going to be double-digit revenue as well as PAT growth, but margins are expected to take a significant hit, and this is because of tea inflation playing its role. The expectations are that revenue may see a growth of 11%, PAT growth of 23%, margins will come down to 13.4% versus that of 15.3%. Overall volume growth will be in mid-single digits, it's around 5 to 6 odd percent. Beverages, because of unseasonal monsoon, might see a tepid growth. Tea value growth will be seen rather than volume growth, and salt and value-added products is something that will augur growth for the counter. International business will see pressure because of pricing interventions that's been happening for Tata Consumers, and overall tea inflation will play its part, and plus growing competitive pressure from the unorganized space, especially in the tea coffee space, is something that will be a key monitorable to watch out for. So that's with regards to where the entire FMCG pack stands, and of course where Tata Consumer stands.
Well, thank you for that. Westlife, by the way, perked up in trade. Let's pull it up in terms of the stock. It was up 1% maybe just a few minutes ago, but yes, there you go. So you're seeing that large spike. I'd want to wait for it to settle, because numbers clearly not looking looking exciting of sorts. But let's bring in Kaustubh Pawaskar, lead analyst, ICICI Direct. Kaustubh, first onto the stock which has just declared numbers. Do you at all track Westlife, and do you have a view with regard to any of these names?
No, we don't have coverage on Westlife Foods, but QSR space, I think for past few quarters has been the growth has been quite muted, and I think it will take another quarter or two for QSR to come back on track, because still the urban consumption is under pressure, and I think that will put a toll on some of these QSR players, and also the competition which is there from the online or online players, digital platform players. So I think that will continue to put some pressure on the same-store sales of these companies.
Kaustubh, hi, Mahima also joining in. Just want to get a sense on your, view on the entire FMCG staple pack. TCPL will be the first one to post its earnings today. What do you think, is the growth looking like in terms of revenue, demand? I think it's, while I was seeing the commentary from a lot of reports, the commentary remains the same. There's gradual rural recovery, but tepid urban demand. Is that something that you're also taking up?
Yeah, so we are also expecting around 11% kind of revenue growth. And if you further dissect that growth from the business perspective, I think the India beverage, which largely includes your tea, it is likely to grow by around 9 to 10%. Your ready to drink, I think that particular space might see some slowdown in this quarter because of the unseasonal rains, but barring that, that particular segment is doing good. Your food business will grow by around 12 to 14% organic growth. We have Capital Foods and organic fruits which were recently acquired. I think those together might contribute around 250 crores kind of revenues this quarter. And your international business, I guess around 4 to 5% growth will be there. non branded business, I think that might see some low double-digit kind of growth. So overall, I think we expect around 10 to 11% growth for this quarter. In terms of margins, I think margins will be under pressure because raw tea prices, coffee prices continues to remain high, and that will continue to have impact on the margins for another quarter or two. So this quarter also we are expecting gross margins to be down by close to 300 bips and operating margins to be down by around 200 bips. So overall we are expecting EBITDA margins to be at around 13.1% and adjusted PAT to grow by around 7 to 8% for the quarter for this quarter.
Got it, Kaustubh. Kaustubh, where is the growth here? We're talking about this large addressable market that India is, and I'm taking maybe a couple of steps back. We're not seeing growth, and this is across companies within the consumption space. What is it that's going wrong? Are we pretty much fully maxed out in terms of reach and penetration? Is that the challenge? Is new product innovation in the listed space a challenge? Where is the challenge? What are you seeing?
I think urban consumption is under pressure. Rural is seeing gradual recovery. So I think till the time urban consumption remains under pressure, I think the growth will be moderated for the FMCG sector, because prior to that urban was doing good, but rural was under pressure. Now rural is recovering, urban is under pressure. So till the time both these markets see consumer sentiments improving and demand coming back on track, I think the volume growth will remain muted. But there is a expectation that whatever government interventions have been done, and monsoons are quite favorable, inflation is going down. So I think we should start seeing pickup in demand from the second half of the year. But it is going to be a gradual. There are two things which has been seen in the market. One is the competition in certain categories, which is really hitting hard to some of the players, and large growth has been happening in the premium categories. So I think in highly competitive categories, I think growth will be very gradual. But premium categories, I think growth recovery would be much faster, where there are only few players, category penetration is quite low. I think those categories might grow much faster compared to what the highly competitive categories.
Kaustubh, just want to get your sense on the price hikes that these FMCG companies have taken. Of course, they don't match the kind of inflation that is on the rise, but there are still price hikes that have been taken in the past few quarters and will be taken this quarter as well. But a lot of these raw material have come off from its highs, be it cocoa, be it palm oil. Do you expect that the trend of price hikes might go down in the few odd quarters going forward, and then there will be margin expansion on cards? Because on the other side, there are managements coming out and saying that they'll prefer growth over margin expansion. That's something that HUL came out and said. What's your view with regards to that?
Yeah, so we should start seeing price cuts happening. We have already started seeing that in the edible oil, because since the government has reduced the input duty on palm and other edible oils, and even the edible oils globally have seen some bit of stabilization. Because of that, we have already seen cut in the branded edible oil space, and most of the players have done that. And I think it will start helping these companies to see volume recovery in edible oil spaces. Similarly, we should start seeing wherever the companies are taking price decreases, I think that should help them to claw back the volumes. I think volumes is something which most of the companies are currently focusing on. That if raw material prices stabilizes, I think volume growth recovery will be more focused on by the companies, and I think that will happen. But it will be gradual. And as I said, that we should look second half as a better. Second half of the year of the fiscal will give us a better picture, where we might see volume growth to be much better compared to first half. And I think there are a lot of triggers or drivers which are going to be there, which will help to drive this volume.
Your quick take on competition, Kaustubh, because you know this is just my analysis that a lot of unorganized players from the unlisted space as well are giving competition to these large FMCG companies, be it tea, coffee, ice cream, etc. Is that you know something that is also one of the reasons as to why the demand of these products is not picking up? And if this continues, do you think this could be one of the factors that could you know be a major headwind going forward for all of these companies?
Certainly. See, in some of the categories which are largely commodity linked categories, there is certain pricing premium which the branded and the unorganized players have. When this pricing premium goes up, over your average mean, then we see this unorganized and regional players getting more preference in the inflationary environment. But once this pricing premium reduces and it reduces to the average level, or it reduces beyond that because of the price cuts or favorable raw material scenario, the preference again goes back to the branded players. So I think if raw material prices continues to correct from current level, if we see that pricing discretionary environment coming back on track. On the other hand, consumption sentiments improves because of various factors such as inflation has cooled off. You have government incentives which have come up. I think that will help to drive the category growth. And as I said that the categories where penetration is quite high, we might see growth to be gradually improving, or it will be a limited growth, but the category where the categories are quite new or penetration is quite low, where more and more companies are expanding their spaces or penetrating deep into different markets. I think in those categories, growth will be much better compared to what in the highly competitive category is. So I think it depends on category to category. But as I said, that if the price deflationary environment comes into the market, I think that we might see the branded players start seeing recovery in the volumes.
All right, Kaustubh, top picks at this point, value versus growth, and what's the best way currently to play consumption?
I think it is always better to remain selective in the space, and I think give more preference to the companies having better growth and even the earning growth visibility is much better. So in that context, we continue to like companies like Tata Consumer Products or Marico, where the earning growth visibility is much better compared to what it is for large FMCG companies. In the large FMCG companies, we continue to like ITC mainly because of the fact of its discounted valuations. But in terms of growth, ITC might do much better compared to the other companies, considering its portfolio and its focus on expanding into the categories where they have large room to play.
All right, thank you so much, Kaustubh from Mahima and myself for joining us and giving our viewers that perspective. We'll let you go on that note. Neeraj, what's clearly the consensus seems to be that it has to be bottom up, even in consumption. That seems to be both the technical as well as Kaustubh's view.
And that seems to be the analyst view as well, right, across?
Yeah. Correct, absolutely. But what do you make of the macro? Because just consumption, the numbers are extremely tepid. So what should one make of it?
Hopefully they pick up, because there is all eyes on consumption, not just in India but also in China, right? Because they are trying to boost GDP growth via consumption. So let's see if that works out. But for now, yep, certainly tepid. At least the QSR ones have been tepid. But Mahima, thanks so much for joining in for this conversation. Lovely having you. And we asked Kush about some of these stocks, so we'll not do that right now. What we'll do is take a break, come back and try and kickstart that segment with some special stories and the dealing room check.
हेलो
बोलिए मैडम, डब्बा टेलिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Thanks for staying with us. Welcome back. Thanks for staying with us here on India Market Close. I'm Harsh, with me, Tamanna as well as Neeraj this afternoon, and of course Somi joining in as well, because it's that time of the show where we get whatever he's been listening to from dealing rooms and what the chatter is like. Heard on the street. Somi, what are you hearing?
Well, firstly, some Religer enterprises where dealers are indicating that the RBI approval related to the lending business might come in anytime soon. In fact, dealers are saying as soon as the fund infusion happens of the warrants, the 25% comes in, they're expecting the RBI approval to come in. So keep an eye out for that counter, because that counter has been gaining in trade since the fund infusion announcement has come in. Second stock on the list is Tata Chemical, and dealers are indicating that large HNIs have started to accumulate this counter in trade. Now the buzz on the street or the channel checks are indicating that there have been a price uptick when it comes to soda ash, and soda ash is one of the key segments for Tata Chemicals, so a price uptick could definitely benefit Tata Chemicals here. When it comes to SAIL and Dr. Reddy, dealers are indicating that there are sell flows on large HNI desk on anticipation of weak Q1 earnings. Dr. Reddy will be reporting its numbers today post-market, so keep an eye out for both these counters in trade.
Are you hearing anything at all on Paytm? If anything, the kind of response that came in the morning, some pick up now?
So for Paytm, the thing was, if you look at the 1 month share price move before the results were announced, it was up around 20-25%. So most of these positives were priced in for Paytm.
Something you also reported on this segment.
And also there was a buzz of Paytm getting included in the MSCI index, and now dealers are indicating that that actually might not happen with Paytm, because the last 2-3 days share price move, it's not qualifying into getting included into the MSCI index, and that might not happen, and hence we had seen that sharp downtick in the opening trade today. And now we are seeing a pickup in the share price, but that is largely because the numbers were actually good compared to what the street was estimating.
What's the cutoff for MSCI?
Well, 28th of July is the last date. We do not know the exact date, that the MSCI does not disclose that, but yeah.
Okay, bonus content today from Samit Sarkar on Heard on the Street on stocks that have been moving. Thank you so much, Samit. Kush Bora continues with us, joined now by Samir Dalal, Natwar Lal and Sun Stockbrokers. Samir, hi, great to have you in as well. Since we're talking about some of these platform companies, let's get your take on Eternal, Paytm and the others that have been in focus.
Yeah, hi. Thank you for having me on the show. And, so you've put me right in the line of fire, but my view is a little negative when it comes to some of these platform-based companies. Not because we believe that the growth is not there, not that we believe that the operating leverage won't play out, but we believe that valuations are far higher than what is justifiable, right? Now, I'm just going to first, since you said, let's talk about Eternal first. You're trading at a 3 lakh crore market cap, and your profitability is about 25 crores. Now, I'm not denying the fact that the profitability can scale up quickly, and they could probably reach 1,000 crores in the next 2 years. or maybe even 2,000 crores in the next 2 years. But even at a 2,000 crore profit and a market cap of 3 lakh crores, you're trading at extremely expensive valuations. So for an investor to make money, at some point, people are going to look at valuation. And I don't see that as something, if I have to put money at this price, that I would be able to generate decent returns. Simply put, after you reach a certain stage, growth can start slowing down. On a small base, you can show exceptional growth, but then on a larger base, it may not be that easy. And also, competition is not going to let you keep eating into their business, right? They're going to figure out ways to make sure that they remain relevant and they also are able to grow. So we believe the competition is going to remain intense. Profit is not going to come as easily as everyone in the street is expecting. So I am a little negative from the view that I think it's a bit overvalued. Paytm, yes, good set of numbers. I'm not denying that. They got 1,100 crores from their services business, that is your fee business, but they also have a huge amount of profitability coming from your funding business, which is buy now, pay later, and things like that. And so if I were to value the company on the basis of that business and just keep the fee businesses as a component growing independently, I think trading at about 5.5 times book value is a bit expensive. There are lots of companies which are doing similar business models, not exactly the payment gateway, but even banks are doing, the credit card, the collection and all of that. I think competition for them too is going to be intense. It's not going to be continually easy to keep just growing endlessly. So for me, I am someone who looks at valuation on a valuation basis. Very difficult to generate a buy on either of these two.
To generate a buy, I think you should not be apologetic about your hesitation. A lot of the street is feeling it as well, and you can see it in that stock price. For atak ke, Paytm is climbing up despite everything that's happened. What about an Infosys and a Dr. Reddy's? Some of those that are going to report, and we will hear from. Any views there, Samir?
Yeah, so on Infosys, for the entire IT sector, we've been quite negative. We've been saying for a while that look, this is a for the Indian IT companies, especially the larger ones, we are moving to a lower growth regime. So the growth is going to be between mid-single digit to max a low double-digit growth, right? So between 5 to 12% maybe the growth rate on the top line. Now, from these levels to keep increasing EBITDA for them margins is not going to be easy because of course competition is there for one, and two, you got a lot of benefits from the declining rupee. You may not be able to get that, and all of those, given the fact that you're growing at 10% and no margin expansion, your profitability is going to grow at a very similar rate, maybe 11, 12%. Now, when we factor in 12% profitability growth over consecutive years, and you're trading at 24, 25 times forward, it's difficult for a re-rating to happen. If anything, at best, you could get maybe, what the growth rate is, that kind of return from IT companies, and Infosys is no different. So Infosys might be able to post a slightly better growth than what TCS actually did. But still, we believe that, the US market, which they cater to in a large way, is holding back on spends till they get some clarity. And that clarity may not emerge anytime soon because there's constant movements of parts in the US with Donald Trump being active. So it's not going to be easy to assume that everything is going to become hunky-dory. Valuations remain fair and rich. So we believe consolidation, either stock price correction or time-wise correction, is still due for the IT companies, no different for Infosys. So for the time being, we feel it need not be a sell, but it's definitely not a buy. When it comes to Dr. Reddy's, yes, results for this quarter may not be great, but we still believe the long term is still very good for the entire pharma space, for the simple reason that there are lots of drugs coming off patent, and even Dr. Reddy's has a lot of ANDAs filed in the US. And as these drugs get approvals to start marketing them, we will see a good jump in their revenue and profitability. Of course, one overhang remains, the fact that Donald Trump is talking about imposing some sort of tariffs on pharma, but it'll be a delayed one, like a year, 2 years time for companies to set up in the US. So for the time being, at least it may not have an immediate impact. And by then, maybe companies will figure out ways to ensure that they have certain productions for large drugs which go through the US system, and some of the smaller ones going through India. So slight I mean, I'm not expecting great numbers this quarter, but I think the long term is still good, and Dr. Reddy still remains one of the stocks that we could invest.
So long term here is the key. Well, one stock which is having at least a bad day, and is there an opportunity there, is something that we'll go back and we'll ask Samir and Kush, of course, is Lodha. Now, the stock has dropped in trade today, but because of a block deal. So you should keep that in mind. 7% down on that clean out trade, which was being reported, and we told you about it this morning as well. What is the story about Anushi joining us? Lodha developers under pain because of the block deal, but much more anticipated from it, isn't it?
That's right. So today's reaction is majorly because of the block deal that we are looking at. In fact, it's a 1% of a equity change in hands which has taken place. So roughly, if you see, it's about 1% of shares that traded in the block. Now, if you see the total size of that, about 9.95 million shares or odd, so have traded in this block, which resulted in this downtick that we are seeing, about 7% down in trade. Now, the size expected is around the levels of $165 million as well. So it's a considerable big one that we are seeing. Now, floor price was also already at a discount of 4% as what was the expectation that we were seeing. Now, this is not the only counter in which the block deal had taken place. Oberoi Realty was the other counter as well. We are seeing cuts over there as well, and the seller in both of these deals likely is Invesco Fund, is what we had reported earlier, and Goldman Sachs acted as a broker to these deals is what we are seeing. So some bit of impact is what we are seeing on that, and that has an overall effect on the Nifty Realty pack as well, because that is down under pressure. In terms of how Lodha Developers is doing, if we just take the current or the recent updates in picture, they came out with their Q1 FY26 business updates as well, wherein they reported a 10% of a growth in terms of where the pre-sales are concerned, while for collections they saw about a 7% growth. Now, just taking this in consideration, if we see the past quarter's pre-sales number and see the kind of growth picture that were there, 17% was the growth that we'd seen in the first quarter of FY24, 20% in FY25. So compared to these two fiscals, we did see that pre-sales for this particular quarter has narrowed down as compared to the others. In terms of the peers also, if we see the likes of DLF or even Prestige Estates, they came out with stronger updates, just achieving about 50% of the guidance in this year itself. So that's the kind of outlook that we are building on. In fact, if we see the company's outlook on the same, they remain on track to achieve the FY26 pre-sales guidance, which adds up to about 21,000 to 22,000 crore. They've also added 5 new projects with GDV value of 22,700 crore. Now, this is a key positive considering that they've already achieved their 90% of the GDV guidance that they had given of 25,000 crore. So this is a big positive that we are looking at in terms of project additions. Now, the company does expect the collections to be stronger in the second half of FY25. So a pickup is something that we should be watching out for as well. Now, as far as where the analyst coverage is concerned, it's a mixed picture that we are seeing about 13 buys, 4 hold and 1 sell rating, which brings up to an overall potential of around 7%. Now, that's the kind of picture that we are seeing for Lodha Developers.
Well, unfortunate moves today for Lodha. In fact, for the entire real estate pack, the top loser. But Anushi, thanks for putting that into perspective, and which is why it becomes this space to focus on. Now, Kush, maybe we spoke about it briefly, but a lot of viewers tuning in right now and would want to know what to do with real estate in general and Lodha in particular.
So, Neeraj, I think as far as real estate pack goes, we'll have to be yet again, we'll have to take a very selective approach here. As far as Lodha goes in particular, no, I don't think this is the end of it all. Medium-term support was around the 1530 mark. That's been taken out. We know by the volumes have spiked up. But I would want to see it take support near the 1290 1300 zone, which is the next level of major support zone. If that is held, then perhaps some sideways consolidation, some uptake is likely, but very difficult to say that this will perhaps see a V-shaped kind of a recovery. So yeah, Lodha in particular, no. We have spoken a couple of times about Marathon, and while yes, Marathon has also seen some shave off, from the higher levels of 770. But mind you, this has come on the back of a very sharp up move where the stock went from 470 to about 770 levels. This drop also is not on the back of very heavy volume, so profit booking at best. If you want to consider some of these names right now, the likes of Oberoi Realty, even Brigade for that matter, are testing their support zones. In fact, the Nifty Realty index itself is testing that support zone of 960 965. If that is broken, I think some more pressure could come in. So a little circumspect, but if I have to see for a shining light, then Marathon, despite the kind of taunting that it's seen in the last 3 to 4 sessions, gives you that opportunity to re-enter. But other than that, I'm not sure if we can see a V-shaped recovery. So be a little circumspect on the moves in the realty space.
Okay, Mass Financial's numbers were out too just a minute ago. 27% uptick, I believe, in NII, if I'm not wrong, right?
Total income.
No, that's total income. Yes,
Total
that's
income.
correct. NII, I think, is a more muted number, and I would suppose that would be the case because obviously rate cuts, the full impact is not yet fully translating on the expense side, and therefore that is understandable. But even when I'm looking at the overall profit after tax number, it's a healthy kind of a growth, around a 19% YOY growth on the PAT number. I'd be more curious to understand what the AUM growth number is, because this one is a consistent, strong growth company, and therefore we'll wait for that AUM number to actually come out, Neeraj, before we can fully determine. But of course, you can see the spike on the stock on your screen, around 1% up on a Mass Financial on the back of those numbers. Samir, any NBFCs on your radar at all, the smaller ones? And okay, let me try and club this. We had Credit Access come out with numbers. That stock is perked up 5% in trade. The numbers were not particularly enthusing, but the commentary was. So maybe if you can give us perspective on some NBFCs and within the MFI pack, if you have a favorite.
We have a coverage on NBFCs, and we do think that there's a great opportunity for growth and stock appreciation as well. So, if you ask me, I think still the housing finance space, which is the secure lending space, is something that remains prime focus to me. That's something that we have always been saying for a while, that is a segment that can continue to do well. So in that space, the two companies that we kind of like and we've discussed in the past, one is LIC Housing Finance and the second is Sammaan Capital. Now for LIC Housing Finance, the big benefits that are going to happen is all the rate cuts that are going to come across because of the cutting of interest rates. So they are going to get their cost cut in early, and they will pass on their rate cuts, meaning maybe like a couple months or a quarter down, right? So you're going to see a decent amount of NIM expansion. They've done a lot of the provisioning that needed to be done. Yes, growth has been in the recent past a bit of a challenge for them, given the base has become quite large, but we believe they can continue to grow at about 10 to 15%. And given you can grow at 15% and you're trading at one-time book value, I think there is a re-rating possibility as well. So that is one of the counters we are quite positive on. When it comes to Sammaan, they're trading at half-time book value. We just discussed the kind of growth opportunities that are there. They've actually been on a much smaller base, been able to grow at a much quicker clip on their new books. Their old book is running down. So if you look at it, the new book, which is Prime Plus, is doing quite well. So we think that's a positive there. Now, when you come to the MFI space, well, unfortunately, for some reason, yes, the pain is continuing, but I think we're at the fag end of the pain, right? A lot of the pain has been taken care of and adjusted. So L&T Finance reported they have a good large exposure to MFI and they've done relatively okay in that space. Yes, we had Bandhan, which saw a little bit of negativity there, but we believe even Bandhan Bank is at the end of it. What you will see is the MFI business starting to see
one top pick.
So if you ask me a top pick in the large cap, I would stick with LIC Housing, and for the mid cap, I would go in with Sammaan Capital. Like I said, that is the space I'm very positive.
LIC Sammaan. Kush, on the charts?
No, for me, it's slightly different. L&T Finance has been, a pick for some time. I would continue a call on L&T Finance 220, 230. These are the next levels to watch for on the upside. Support near 205, so good risk-reward ratio. But if you're looking at it from a slightly positional standpoint, then I think AB Capital is consolidating. After nearly doubling in 5 months, mild consolidation is quite healthy for AB Capital. This is preparing the stock for the next leg of up move to 285, 300 plus kind of levels, and supports near the 250 zone, very healthy. So momentum pick L&T Finance, and a positional pick AB Capital.
Okay. L&T Finance, AB Capital, but we should talk a bit about Dr. Reddy, something that Samir spoke about in great detail earlier as well. But what are we expecting from the numbers which will come in later today? Let me go across quickly to Varsha, breaking it down for us.
Thank you so much for that. So steady numbers are expected when it comes to Dr. Reddy's Q1 FY26. Just to speak on the four numbers, revenue is expected to rise 13%, while EBITDA is expected to rise 9.4%. Margins are expected at 26.8 versus 28% last year, and net profit is expected to rise 8.7% year on year. Now, growth will be led by strong performance in India, Russia, and rest of the world markets. But the disappointing factor over here is the US sales is expected to decline 11%. Now, this is on the back of cancer drug Revlimid price erosion that the company is seeing. And that's the reason US business may decline, and India is expected to see growth of almost 11%. Now this will be driven by good performance in the key therapies. Profit may be under pressure because of the increase in the R&D expenditure and of course some of the operational cost. Key factors that investors should watch out when it comes to Dr. Reddy's is update on the potential launches in US, which is expected in next 12 to 18 months, and also the status of the biosimilar pipeline that the company has been indicating us. And the last is to track effect of licenses and partnerships formed in the recent years. So overall steady numbers are expected, but yes, US revenue may decline on the back of Revlimid pricing erosion.
I think the question is that is this a buy candidate ahead of the numbers? With some of these larger companies right now and the way markets are going, you need to get ahead in the queue. Vishal Manchanda, let me put that question to you. He's Senior VP, Institutional Research at Systematic Shares and Stocks. What are you looking out for from a Dr. Reddy's?
So we have a different view on the numbers. Probably we are expecting a strong set of numbers on back of generic Revlimid showing better numbers than expected. So our view on generic Revlimid is a large part of generic Revlimid sales will get booked in Q1 and Q2 of this financial year. So like what we have seen in the past is Revlimid sales getting staggered over 4 quarters. But now what we'll see, the full year sales of Revlimid will get booked in 2 or 3 quarters. So that will lead to higher sales in the US. And that's why we are expecting strong growth in the US for Reddy's. But we'll wait and see what happens there, because Revlimid remains a bit unpredictable on a quarter-over-quarter basis.
So if you're penciling in stronger results, do you think right now with the movement that we've seen in Dr. Reddy's, there's a positional trade here?
So fundamentally, our view on Dr. Reddy's is a hold rating on the stock. So basically, they have been highlighting certain growth opportunities in the US, where we think there are a lot of uncertainties, and we need to wait and watch how these pan out. And I don't think the risk reward is that great at this price. So that's why we have a hold rating here at this level.
Vishal, this is Harsh joining in. Vishal, give us the underlying for that. Your assumptions of front ending, is that largely tariff driven?
Sorry, I didn't get you.
Why do you suggest that Revlimid sales will be front ended this year? Is it tariff driven?
So what happens is, so one is tariff driven, that is true, and other is the Revlimid exclusivity expires in December. So we have 3 quarters, and then probably in the last quarter we'll see a lot of inventory destocking. So the channel getting cleared to kind of stock to be prepared for the generic entry where price erosion would be steeper. So people would stop buying generic Revlimid probably from the 2nd quarter of this financial year, and not the 3rd quarter. So that's why I think generic Revlimid will get kind of all of that will come in the first 2 quarters. The full year numbers will come in the first 2 quarters.
And Vishal, how are you seeing the India business do?
India, I think they've done a lot of in-licensing activities, in-licensing deals, the Sanofi vaccine portfolio, and some product level licensing also. So mid-teens, high-teens growth on the top line is something we expect. But the in-licensed portfolio will have lower margins than the base portfolio.
Okay, Vishal, just one last point, and I know we're talking about Dr. Reddy's, but in the broader space, what are you liking in the pharma space right now? We've already seen a lot of excitement on some players like Glenmark actually, because of innovation and some of those stories coming through. But what would be your top call right now in the pharma space?
So Sun and Cipla are the preferred names for us in the large cap category, and we have a buy on those two names.
Sun and Cipla is what you're sticking to. Thank you so much, Vishal Manchanda there. He's, of course, from Systematics and tracks the space very, very closely. He says it's a hold on Dr. Reddy's and don't expect fireworks, maybe strong quarters because of how Revlimid is going to pair out on their balance sheet. On the charts, Kush, is there a positional play on Dr. Reddy's? Let's add Sun and Cipla since you mentioned those specifically.
No. Very, very delicately placed. I wouldn't trade Dr. Reddy's because the medium-term trend is negative and it's dearly taking support at 200 moving average. Any negative surprises and you could see a sharp downtick to 1210 levels. However, if it does rebound, then immediate resistance is at 1265. So no, technically very delicately placed. I wouldn't really trade Dr. Reddy's. Even Cipla, for that matter, has been slipping lower. Sun Pharma also trying to take support. So no momentum per se, and nothing to suggest that there could be this immediate uptick. If I just broaden the horizon a little, to the pharma space, Syngene has had a good run in the last 3 days. Volumes also picked up rather well. There's a gap near the 715, 720 mark that could also be filled in this momentum. So yes, I mean if you broaden the horizon just a little, then yes, with the stop loss near the 665 mark, Syngene has a very good setup over the last 3 sessions.
Okay. All right, we'll take a very short break. Markets are perking up. The second half of the trading day seems to be better. We're coming back with what your top picks should be and more on the other side. Meanwhile, Kush and Samir, thank you so much for joining on this leg of the show. We're coming back with more analysis very, very shortly. Stay tuned.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए? तो
Welcome back. Auto is buzzing this morning. Look at Maruti Suzuki, look at Bajaj Auto, look at Tata Motors. Tata Motors, your top gainer this afternoon in trade. You know, some amount of buzz there. You're also seeing your NBFCs showing some action. Shriram Finance, Bajaj Finance, all of them up in the green. Adani Enterprises having a good day. Bajaj Finserv also doing okay. I want to pull up Bajaj Housing Finance and see what's happening there, because you're going to expect numbers to come in at some point. So at least a good perk up on the Nifty. Can we pull up Nifty contributors very quickly and look at what's powering out there? I presume it will be apart from the bank, some of the auto stocks, and RIL has woken up. Let's see the intraday chart of Reliance Industries and look at what's happening there. After 2 days of getting beaten down, just about less than 1% up, but a heavyweight is a heavyweight for a reason. On the losing side, some of our consumption plays are really not looking exciting at all right now in trade. Now, meanwhile, some of the other movers this afternoon, I think, continue to be financials. I mean, the kind of push that we're seeing in ICICI Bank, third day in a row, ICICI Bank and HDFC Bank, that's something which is turning out to be quite exciting. You know, if you look at the move over the last 4 or 5 days and put that into perspective, you realize that there's a lot of strength over there. In fact, let me take that question to Ambrish Balika, joining us now, independent market analyst. A very good afternoon, Ambrish. Great to have you. Let's start talking about the private banks and the continuation of that positive momentum there.
Right. I think private banks, I mean, earnings were fine. I mean, you look at ICICI, I mean, except for Axis, which was a bit of a disappointment. And going ahead, clearly we see the credit growth improving, and especially with the expectation of another 50 bips cut by December by RBI. I think, I mean, we should see the credit growth really improving if you're talking of towards the end of FY26. And that's what I think will drive these banks, especially the larger private sector banks and the larger PSU banks.
Okay, some numbers from Syngene, and they seem okay too. I mean, 10% for a CRO firm, 10% revenue growth, 14% profit growth, and it's okay. I mean, I personally don't think this has got the needle to move the stock, but it's an okay quarter. I think SRF numbers are out as well, and they are slightly below estimates if I'm not wrong. So that's the other set of numbers you got to keep in mind. But just remember, in SRF's case, the stock tends to make a move after the conference call, and therefore in the con call, which probably happen tomorrow, if they say something which is very dramatic, then the stock could have a meaningful move. So please be careful if you're trading SRF. But the Syngene numbers seem just about okay, so nothing too dramatic there. This whole space, Ambrish, CRO, CDMO, but we've spoken about CDMO enough. Let's talk about contract research firms, right? There is Syngene, there's a new one, Vida Healthcare, which is coming with their IPO, and a few others. Do you like this bucket, or is it too niche?
No, it is niche, and because of which it should get that higher multiple, no doubt. But clearly, I mean, we need to see as to how the earnings are for the companies, whether they are volatile or whether we are seeing a steady improvement. And I think that's what is to be seen as far as this space is concerned, because you need, consistency. I mean, that's what investors like. So unless you see consistency, it doesn't make sense really buying into these stocks.
Okay, we're talking about auto today, and auto is definitely buzzing, and new launch they're coming in from Renault. What's also striking is what the company is saying. They're saying they're not looking at any partnerships right now in India. This is coming from the managing director who spoke with us at the launch of their new car, Triber. Listen in.
We have the design studio, we have the engineering, we have the manufacturing, and we have the commercial with the 350 touch points. Do we need a partner? Is the first question which people have to answer.
And what will you answer to that?
I don't need.
You don't need a partner, so no more JV partners in India going forward?
Are we looking at it? No, we are not. At this point of time, we are going to be Renault in India. We have a Renault group in India. We have a CEO. So we are here to succeed and then perform. And with the first launch, and we have 3 more launches to go in next 2 years.
Right, so let's talk about performance for a second. Your share in the PV market has dropped to 0.93% in FY25 from 2.8% where it was in FY20. Now, a lot has changed since then. The Ukraine war has affected production. India sales have gone down. But you plan on selling 500,000 units annually by 2030, which is more than 10 times what's currently happening. So, how do you bridge the gap between the vision of a 5% market share by 2030 and where you're currently at?
Okay. First of all, it's not 0.93, it's 0.98. So that's the current market share. As I said before, that after last 5 years, we did not do any launches because of the Renault Group constraint. Now we have taken a lot of steps globally, and we are here with the International Strategy Hub. One of them is in India. The investments have started flowing in. As I said, 4 products in next 2 years, and this will continue furthermore. It's not the end of the story. With the 5,400 crores which we have invested, we are going to get those 4 products into production and then sales. It doesn't stop there with the domestic market, but it also goes into exports. So we have our plan to meet what is required and also to make sure that we capacitize the plant, which we are below 50% along with the alliance partner. And our first endeavor is to make sure that you fulfill your plant capacities. And that's the objective. And I'm sure, I'm very confident that with the new products and which are very unique in nature, and that will take us to the level where we had been talking about.
So what's the update on the plant capacity? I mean, with the JV partner, it was below 50%. And right now, you are saying that we plan to go forward. But any update on how much, on what's left of the plant deal that's going on, and where will the capacity be within, say, 1 year?
I think you need to understand a little bit differently. Nissan will continue to be our contract manufacturer. So the partner is still there. It's not that they have gone out from us. So the capacity doesn't change whether we acquire 100% or we don't. And they continue to work with us, and we will also continue to work with them. And they also have their product launches, which they should be talking about. We have our product launches. So both together, we will make sure that plant utilization is taken care.
Well, that's on Renault. Let's talk Paytm now, because that's our bull versus bear stock for the day. Let's pull out the first bull case. Of course, it's an EBITDA beat, PAT beat. I wouldn't really bet my horses on that one. That's the easiest bull case I've had in a while. The bear case, well, PBT is negative. And if that is, of course, it's negative adjusted for other income. So the other income is what's driving the PBT and PAT number, which could well be a bit of a concern. Now, bull case number 2, expect a QOQ improvement in margin in each quarter all through FY26. That was what the guidance was. How much? Non-committal, but a QOQ improvement nonetheless. Now, other income was 241 crore. What you want to see is operating profit positive. So I want to start to look at when does operating income turn positive. Outside of other income, can we have profit after tax only on the operating front? So that's really the question, and that's my bear case. Third one, there's scope for further OPEX optimization, and that is likely to drive margins forward. Mind you, margin guidance is 15 to 20% in the medium term, and that's going to hold the key, frankly, with regard to the re-rating on the stock from here on, because we've seen a very good rally. But the bear case here is operational profitability is still awaited. We want to see that operating profit number come into positive. Maybe a repetitive point, but nonetheless, that is something where we are far away from. We need to wait for that to come. Now, the bull case scope is there credit growth in personal loans is likely to have bottomed. Now we'll start to see credit growth pick up with regard to personal loans, and that is a big positive for Paytm. Could we see that pickup? Well, they were non-committal on the call. They said no visibility of the pickup yet, but yes, the likely bottom has arrived. Mind you, for Paytm, in terms of profitability, loan growth is the key metric to track, because that yields the best profitability in terms of the product mix, and therefore you want to look out for when does credit growth pick up in personal loans. Now, let's talk about the valuations. Currently trading at 96 times 1 year forwards as per Bloomberg estimates. Most market estimates are predicting the valuation at around 35 times FY28 EPS. So they're expecting a very strong tailwind in terms of profitability all the way through FY28. If you're looking at FY28, the 35 times multiple not looking as expensive. But at the same time, the average analyst estimates on Bloomberg see only a 2% upside. We have had a couple of upgrades and therefore looking interesting. We'll have to see maybe over the next couple of days what are the upgrades like. But largely, you're starting to see valuations looking full here.
I think you're far from the kind of valuations you're seeing on other platform companies. So maybe some room to grow there. Let's quickly get in Shivangi Sarda joining in and her view on this right now. Very good afternoon to you, Shivangi. Just let's start with your take on Paytm.
So we've seen that the indices have been, showing good signs of recovery from the last 3 trading sessions. Nifty put call ratio has improved along with the decline in the India VIX, which clearly indicates that bulls are in full comfort. Even at these levels, we're seeing that, the market has been witnessing a good run-up, and the banking stocks have also kind of contributed to this entire run. Talking about Paytm, of course, we've seen that this stock has been, a performer lately. And talking about the levels per se, we've seen that on the monthly basis, it has been forming higher highs, higher lows from the last 4 months. And it has surpassed its previous hurdle zones of 1060 levels as well, trading very comfortably above those levels. Of course, the volumes have also added in this accumulative zone, which confirms the up run. We are expecting a next levels of around 1100 for this one, with a support of 1050.
Okay. Just looking at Syrma, net profit in at 49.7 crores versus 19.3 crores. Revenues have come down though. You're seeing quite a bit of a zigzag there, small spike up and then the stock down again. EBITDA though is up nearly 91% at 86.6 crores versus 45 crores. Look at the margin jump. Wow. We'll get Puneet in just a bit to break this down for us and some of those details, but margins gone from 9.2% as well. So a big margin jump there on Syrma as well. A lot of numbers coming in at this point, and we'll get them all together for you on how they're looking at. In fact, if you can just pull that up, numbers which have come this afternoon, quick run through in case you missed it. PCBL, for example, weak numbers owing to lower product margins. Sapphire Foods, operationally in line. KFC same-store sales are flat year-on-year after 6 quarters of degrowth. Westlife, that's why I'm neutral there. Westlife Food is a thumbs down. EBITDA and margin expansion is limited mainly due to weak same-store sales growth performance. Sky Gold was a winner. EBITDA up 92%, margins expanded 110 basis points. Quite a few have come in. Syngene as well, I'll add to that list. Good numbers, EBITDA growth at 22%. SRF was a weak set, chemical segment especially. EBIT was down 35% quarter on quarter. Earnings stable for Mass Financials. You've given it a neutral, I believe.
Yeah, I mean, I'd want to wait, as I said, for the growth number. The positive is that provisions is absolutely flat on a sequential basis for a Mass Financial. Yes, please.
Yeah, now, just before we move ahead though, if we have Kush Bora, I want to understand if there is a trade on the Nifty, or rather Shivangi. I want to understand if she would go and buy the Nifty at this day's high, because at 0.7%, there is a conclusive upside or an uptick that we've seen in our markets today. So we'll get to the exclusive in a moment. But Shivangi, just trying to understand, would you buy or trade the index, either options or futures, at the current level? We are at the day's highs.
Talking about Nifty, we've seen a good recovery, and of course, the derivative data points have also indicated that the bullish undertone is being respected. And we're heading towards the July expiry next week, so of course there will be a lot of volatility which is expected. Swing trades in the option as well. But overall, historically, from the last 10 years, we've seen July has been fairly good. And we've, seasonality-wise, we've closed on a very positive note on the month of July. We are still seeing very strong support-based buying here, which indicates that, there is a very good base made by the put writers. So even at these levels, I would recommend a buy here with a target of 25,350 immediately, and then 25,500 levels. And 25,100 would act as an immediate, support, which will act, for tomorrow's expiry. But 25,000 is a positional level, which will be crucial to watch out for the monthly expiry. So yes, it is definitely a buy from here, with, of course, stop losses to be traded upwards.
Okay. Just let me go across to a quick NDTV Profit exclusive, important one actually. Smartphone makers are optimistic as government plans to resume Chinese tourist visas. I think there are two stories rolled into one here. Rishabh, let's start with what you've been covering.
Right, Tamanna, what we've been picking up on all of this is the fact that smartphone makers are seeing, of course, this Chinese tourist visa issuance being opened up. It is a positive as well for business visa issues, business visa issuance coming in. Why that is because firstly, it will sort of boost the sort of direct connectivity plans that there were between Beijing as well as New Delhi. The tourist visas are the tricky part because for Indians heading into China, it was easy. China did not ban any sort of entry. But for people wanting to come to India, the Indian government had imposed certain restrictions. Business visas were only available for those companies that were covered under the PLI scheme. So that is now set to be liberalized. A lot more talent could be seen coming from China. On this entire issue of, we saw how that Foxconn issue blew up with respect to talent being recalled. What we're seeing on that is that was a tactical sort of a move, but it was very limited in terms of scale and scope because only about less than 500 employees across various smartphone makers were recalled. So in terms of scale, it wasn't much, but it was tactical. And that is also seen as improving going ahead. You had External Affairs Minister S. Jaishankar also visit Beijing, and that was seen as a very positive sign of relations thawing between the two countries. So also what we're picking up from industry sources is the fact that if these issues continue to remain the way they are and they sort of are on the path of resolution, then India is very much on the track to become the world's second largest smartphone exporter and surpass Vietnam in that game, only to be left behind China. So that is what we're picking up from industry sources. Positive mostly. All of this, remember, comes when last Friday we reported on a letter that was sent by an industry body, the Indian Cellular and Electronics Association. This is a leading body of smartphone manufacturers here in India. And they had written to the government highlighting three major informal Chinese sanctions that had come in, one on talent being recalled, two on
So
the
you have to look at this as a chain of events. Thank you for that, Rishabh. Important story there. And we've been reporting that you might see a loosening up of nod coming in from the government as well to at least 6 to 7 companies. We spoke to Dixon about it today, Neeraj, and they talked about that they're waiting for those nods
for this to come.
Just roll back to the story of Foxconn engineers suddenly upping and leaving a few weeks ago. Okay, so I'm just trying to follow the trail over there of the news coming in, and I think there's a serious negotiation which has perhaps gone on behind the scenes. This is the outcome, and it's a very pragmatic view coming in that these two nations, the two largest economies in the world and most populated economies in the world, have to collaborate on some very key factors.
Yeah, can't be on the opposite side of the fence on everything under the sun. So I think, well noted. And as long as it's a win-win for both, why not?
So let's pull up Dixon. Because Dixon has reported today and very
wasn't
good.
The day's highs actually, just about a couple of hours ago.
Yeah, so let's pull up the Dixon chart and maybe we'll get you that conversation we had with Saurabh, the CFO, also in some time from now. A little off the day's highs, but yeah, nearly 3% up. Jefferies also has a note out on Dixon. They've upgraded the stock to hold and hiked its target price, which is way below its current market price, so no point there. But it's been quite a bit of a blockbuster Q1. Puneet, let me come to you on what Jefferies is saying, with the point of view also of what Dixon has told us today about its 5 joint ventures with various Chinese companies. It's waiting for permission in 3 out of those.
Well, definitely, and the talent is one of the key aspects for Dixon, which they highlighted in the call as well, that they've already hired a few people, but they want to hire a few more people which are expats from both Taiwan as well as China. So the story is very timely, to say the least. For Dixon as well, they did report a 95% revenue growth, and the note from Jefferies is largely they had some valuation concerns because business remains very solid. They, as you rightly said, upgrade to a hold from an underperform, still maintaining target price of 15,400. That's hiked from 13,300 earlier. 2 key points they're making: a very strong quarter is what they've said, along with the mobile revenue growth. But they've gone on to say that the mobile volumes are expected to double from 30 million in FY25 to 60 million over the next couple of years in FY27. They are factoring in this beat of Q1 performance and raising the EPS by roughly 3 to 4%, and now anticipate a 44% CAGR over the next 2 years for Dixon Tech, and hence the upgrade from Jefferies. And this is in line with what the CFO told us in the morning as well on doubling the smartphone volume as well as the components play, which he highlighted on while speaking to NDTV Profit as well.
Okay.
Yep. Thanks a lot for that, Puneet. And the point is, as Tamanna was saying, Puneet, thank you for that. We spoke to Saurabh Gupta earlier, right? And he spoke about how the point being that there's a strong order book coming in from the mobiles division, which led to the growth in Q1. That and more. Listen in.
We had a very strong order book. The momentum continued in our mobile business, which continues to be the largest piece for us. We see that momentum continuing in Q2 as well. Of course, our other verticals on washing machines, refrigerators did really well. And yes, we expect a strong order book. We have a strong order book ahead of this festive season in Q2. And there are some more customer acquisitions lined up. Third is our foray into this backward integration component should start playing out. Some of them will start playing out by Q3. Some of them will start playing out by Q4, Q1 of next financial year. So yes, we are sitting on a huge opportunity and exciting times ahead for us. Gradually and slowly, we'll keep taking some grabbing some export opportunities in mobiles, in lighting. So that also is on the anvil. And clearly, yeah, we're sitting on a very big opportunity right now.
Okay. So that's the opportunity coming out right now. And in fact, we spoke to them very clearly about what their margin guidance is looking like. Because while all numbers for Dixon were fantastic, their margins were completely flat at 3.8%. The word there is by FY28, you'll see about 135 basis points of incremental margin coming in as their backward integration and all of their contract manufacturing JVs start kicking in. So that's the Dixon story there. But what about the valuations? Amrish Baliga, we asked you this question yesterday, if I'm not mistaken, and you said some companies, and you were speaking in the context of Eternal, you said some companies you don't need to look at, you shouldn't look at the valuations for all companies. Is Dixon in that category?
To a certain extent, no doubt, but not exactly like Eternal. Eternal is different. But here, I think, like we are talking of huge volumes, huge volume growth. So I think the margins will follow. Like the management said, the margins should follow in the next possibly 6 to 8 quarters. And when we're talking of this, I think currently they have managed the supply issue. So the Visa announcement, the JVs, I think will have a positive effect on the output of smartphones. But then what about the projection of the demand? Because whatever orders they'll be receiving in the next couple of quarters would be actually based on the demand projection for FY27. And what I believe and I heard is that the projection demand for smartphones in FY27 is much, much better than what we are seeing in FY26. So that's another, I think, positive for Dixon. So overall, I think, this should be on the buy list, but may not be at the current levels. I think one should wait for some sort of a correction, whether it's a market correction or whether it's some news flow because of which Dixon would correct. I think you should utilize that to buy.
Okay, well, it's 2.72% and EMS is certainly the sector which is, you could argue, in focus too. What else? Today, when you look at stocks which are trading close to or at 52-week highs, Fortis fits the bill, couple of percentage points higher, and at the day at 52-week highs. GE Vernova TND at 52-week highs. We spoke about ICICI Bank. The one that has really done well is JM Financial. I don't know if it's got to do with the fact that they've been bankers to so many of these block deals and IPOs that the investment banking revenue for JM could be high, or is there some other reason? But that stock is up about 5% in trade today as well. And L&D Finance Holdings, the one that came out with numbers a couple of days back, is high. Lastly, we spoke about cement, and your Parag Thakkar said that he might be taking skimming money off the table, and maybe that's why Ramco may be down, but Ramco Cement at 1200 is very close to its all-time highs as well. Shivangi, 4 or 5 names out here. Any of these that fit the bill for you?
Cement space, of course, we've seen a lot of action of lately, but the stocks are still, we've actually seen a good steam up in the last 4 to 5 weeks. And Ramco Cement is actually one of the preferred pick, which is stronger out of the entire lot, and we could actually see. But then, of course, we've seen a good rally, a good wait and watch over here. A good consolidation would make a base and a good risk reward for this one.
In which case, Shivangi, what is your top BTST idea or STBT idea as the case may be? 5 minutes left.
So first up is, of course, Bajaj Finance, which has been an outperformer in its own space. And we've seen that the stock has consistently performed in the last 5 to 6 months, making higher top, higher bottom over here. Even on the daily basis, we've seen that it has tested its 50 daily exponential moving averages roughly from the last 150 trading sessions, taken multiple supports at this zone. And we've seen that the stock has actually accumulated good volumes while it was rising in the last 4 trading sessions. So this one is a buy with a target of 1000 and a stop loss of 950 levels. Second pick is Tata Chemical. We've seen that this one has witnessed a good short covering move, followed by long build up from the last 2 sessions. And we've surpassed its previous hurdle zones of around about 960 odd levels, and we've seen that there has been excellent follow-up buying even from the lower levels. In the last 2 trading sessions, we've seen a good pullback move. Tata Chemical has started to come out of its consolidative band of the last 5 weeks, and so we're recommending a good up move here with a target of 1010 and a stop loss of 950 levels.
Amrish Baliga, somebody's talking about how the F&O activity is very, very high today. Apparently at 10:35 a.m., I haven't analyzed this data, but it's coming from somebody who looks at markets very closely, that the 25,200 strike, and maybe Shivangi, you might have a view here, the open interest was 6.3 million at about 10:35. This is about 16.5 million as of 2:15. Even on the call side, 20 million calls were open at 10:15. Those fell to about 7 million as of 2:05 p.m. So this is not retail activity. I mean, what's happening here? Any thoughts here, Amrish Baliga? Very quickly, 20 seconds.
No, I mean, clearly, I think the downside for the market is quite limited from here. I mean, again, I'm not really talking about F&O, but overall, that 24,800, I think, is a very, very good support level for the market. And with the way the liquidity is coming in, despite the sort of negativity as far as the geopolitical issues are concerned and the sort of global news flows, despite that, if our markets are holding on, then I think it's very clear that I think the downside is very limited from here, whereas the upside can be the earlier highs which we are seeing.
Got it. Shivangi, very quickly, 20 seconds. Retail activity, or does this kind of look like a very heavy insti activity today on the call and the put side?
So, of course, there has been some sort of unusual activity happening. We've seen India VIX also sinking below 10.5 levels. So there is a mix of institutional as well as retail activity here. But of course, the buying can be seen very strongly with the unwinding seen at the high levels of call writers.
Okay, thank you so much, both of you, for joining us this afternoon, giving us all of those views. Let's quickly zoom in, see what's happening in markets, because it's been a really solid day of trade. We've recovered well from the lows. The Nifty is done well as well, around 0.6%. I reckon we're closing very close to the day's highs, 150 points up on the Nifty, 0.8% higher on the Bank Nifty. So that also driving the index higher. Let's pull up the intraday on the Nifty 50. That'll give us perspective. Very, very close to the day's high on where the Nifty is closing in at. Let's look at the heat map. Try and get some perspective. The breadth, of course, strong. So that's one factor which is aiding markets. The other one is some of the heavyweights participating today, and I'll pull out the contributors in just a moment. Tata Consumer in focus on the back of numbers which will come out. HUL, Infi as well in focus. So Infi and Tata Consumer, 2 out of the top 3 losers on the Nifty pack on a day like this will have numbers coming out. So something to keep in mind. But Tata Motors, 2.6% higher, was the top gainer in trade today. Outside of that, some auto names as well. We've closed for the day. Bajaj Auto was one. Auto financing names also doing well. To some extent on the way in which M&M Finance also delivered numbers. The growth doesn't seem to be all that bad. The asset quality problem doesn't seem to be all that bad. So all of that seems to be playing out to a certain extent. Maruti also up 1% in trade. Let's look at the contributors on the Nifty as well. Reliance was up around 0.9%. HDFC Bank is the other one which has contributed well on the index today. Bharti and ICICI are the other two heavyweights which have done decently well. Infi, HUL, well, just very, very small contributions. Not going to talk too much about that. Sectors, let's pull that up. And I'd be curious to know where auto has closed. Well, auto up nearly 1% in trade. One of the top gainers, healthcare is the top gainer. Nifty Bank up around 0.8%. Fin Nifty driving that. Private banking index doing fairly well for itself. The PSU banking index, which has been subdued over the last couple of days, also up around 0.5%. The Nifty Pharma, and you'll have DRL come out with numbers as well. That'll have some impact on the Nifty Pharma index tomorrow. So you want to keep your eye out on that one as well. FMCG and Realty are the two indices which have closed in the red. Not surprising given the kind of names that we saw on the Nifty 50. The Nifty Realty has closed over 2.5% lower. So that's where a large part of the pain today resides, and that's of course within broader markets. Let's look at the advanced decline. I reckon that would have improved. The market breadth would have improved right at the fag end. It has. 1:1 is where we close in at over the last hour or so of trade. Let's pull up the Nifty mid cap and small cap. There has been some bit of underperformance, but look at that. Look at that move in the last hour or so of trade. 1/3% higher on the Nifty mid cap. The small cap index also closing a nice 1/10%, but nonetheless, making that nice little move right at the fag end. So So a decent kind of move at the end, despite it being a dull day for a larger part. I want to look at the BSE 500 top gainers, top losers, and those are some names in focus. And MRPL, a credit access on the back of numbers. JM Financial doing well as well, 5% higher. DCM Shriram, Lakshmi Organics, Godrej Agro, all of those names on the list. Loda is the one which is the top loser, dragging the Realty Index down. Along with it, AB Realty also. Numbers were out, and that reaction on the stock. Z Entertainment, post the management commentary, is staring at a 4% down today, 4% lower on a Colgate as well that we saw today. A Brigade, among others, and a Prestige dominated by real estate, the losers at least in trade today, and that is reflecting on the Nifty Realty Index as well. 2.5% top sectoral loser. Let's look at what all to watch out for tomorrow, and there is plenty. Those are some adjustments for you. The large dividend by UTI asset, you will see that adjustment happen tomorrow. Crompton Greaves, Hudson Agro are the other two. Let me also call out another couple of stocks, Hero, Radico, as well as TCPL Packaging, all of those three also in focus on the back of dividend adjustments. There'll be that rights issue by Spandana, which you will also get to see, which will open tomorrow. Let me also take it to some of the earnings, and these are earnings today, and some of the larger ones coming in. Bajaj Housing, Bikaji, then you'll have a couple of big ones also, something like a Dr. Reddy's, a Force Motors, which has been a solid performer, will also come out with numbers. Coforge expected to deliver solid PAT growth. Maharashtra Scooters, I believe the numbers were out. Oracle Financial Services, the numbers also will be looked out for. I also want to pull out an Infi because that one's numbers will also be expected later today. So that's the other big one which I will be looking out for. Tomorrow though, tomorrow is another big day. SBI Life within the Nifty 50 pack, Bajaj Finance within the Nifty 50 pack. Those two will declare numbers as well. Bajaj Finance will have a knock-on effect on Bajaj Finserv. Among the NBFCs, it will be REC. Nestle will be the big one within the consumer basket. Adani Energy and Ather will be the other two. But let's keep flipping forward, and okay, so that's what we have in terms of earnings tomorrow. Lot to anticipate, lot to watch out for, but for the moment, we've closed for the day. We'll close India Market Close as well. Thanks so much for watching from Tamanna, Neeraj, myself, everyone who puts the show together. But you don't want to go away because Market Express will take the action forward. We'll give you a wrap of everything that's happened through the day. Stay tuned.
हेलो, बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, benchmark indices bounced back to recover throughout the day. Nifty 50 ends trade close to its intraday high with gains of about 0.6% and the 30-pack Sensex followed suit to conclude over 500 points higher. Bank heavyweights such as HDFC and ICICI uplifted the frontline indices, while a little pressure was seen by the FMCG majors like the HUL and Tata Consumers. Most sectors ended in the green, with highest gains recorded by finance, auto and banks. On the losing side were realty, media, FMCG and defense. The market breadth ended trading as highly skewed in favor of the bears. Paytm reports its first ever net profit of 123 crores in the Q1 of FY26. So revenue rises 28% year on year to 1918 crore rupees, driven by merchant payments, AI-led cost cuts, reduce expenses by 18.5%, boosting EBITDA to 72 crore rupees. Shares climbed 3.4% as the fintech firm strengthens its market lead. Jana Small Finance Bank's Q1 net profit fell 40.4% to 102 crore rupees. High operating expenses and provisions hurt the earnings. So net interest income dipped 2.4% to 595 crore rupees. But other income helped, so the bank expects margin improvement and better Q2 performance. JSW Infrastructure's Q1 profit jumped significantly. Revenue rose due to higher cargo volumes. Operating margins also improved with strong earnings growth. The company plans major investments to boost capacity by 2030. KEI Industries Q1 profit soared 30% to 196 crore rupees. Revenue also grew 25% to 2,590 crore rupees, led by cables and wires. Margins dipped slightly due to a shift in the product mix. EPC projects saw a sharp revenue drop. Denta Water secures new orders worth 183 crore rupees. So the orders cover irrigation, road and water management projects. So the company now has 21 ongoing projects. Its order book stands strong at 745 crore rupees. Kirloskar Ferrous Industries is preferred bidder for Jambunath iron ore mine. So the win ensures captive iron ore sourcing from pig iron production. Now the company's pig iron serves the auto, pump and steel industries. This strengthens KFIL supply chain and manufacturing efficiency. Oswal Pumps acquires 5.2 crore equity shares in the Oswal solar structure. So the deal worth 303.7 crore rupees makes it a wholly owned subsidiary. Oswal Solar Structure manufactures solar modules. Now this move strengthens Oswal Pumps' renewable energy portfolio. Shah Metallics reports strong Q1 results with higher profits. Stainless steel realizations rose 8.5%, aluminium up 4.3% quarter on quarter. So the company plans to raise 4,500 crore rupees via debt and equity. Board approves issuing 3,000 crore rupees in non-convertible debentures. Sri Lotus Developers files for a 792 crore rupee IPO. Bollywood stars Shah Rukh Khan and Amitabh Bachchan invest crores. Investor Ashish Kacholia also backs the Mumbai real estate firm. Funds will support luxury projects and subsidiaries. United Breweries report a 6% rise in Q1 net profit to 184 crore rupees. Revenue jumps 15% to 2,862 crore rupees, driven by strong beer sales. So premium brands like Kingfisher Ultra grow 46%, boosting volumes. Shares gain 0.75% after the results, despite a narrower margin. M&M Financial Services post a 3.2% rise in the Q1 net profit to 530 crore rupees. Higher provisions of 660 crore rupees, up 44.3%, hurt the profitability. So brokerages like Jefferies and Macquarie flag concerns over the credit cost. Shares remain under pressure with a cautious outlook for investors. Dixon Technologies shares jumped 3% after strong Q1 results. Net profit soared 68% to 225 crore rupees. Revenue also up 95% to 12,836 crore rupees. Brokerages like Nomura and CLSA are bullish, but Morgan Stanley flags risk. So the mobile segment drives growth, though valuations remain high. Jefferies turns cautiously optimistic on Dixon Tech, upgrading the stock to hold and hiking its target price to 15,400 rupees. So the electronics giant delivered a blockbuster Q1 with profit doubling year on year and mobile volumes also surging. Dr. Reddy's Laboratories is set to report steady growth in its first quarter results. The company expects revenue to rise 13% to 8,693 crore rupees, up from 7,696 crore rupees. EBITDA is also projected to increase 9.4% to 2,332 crore rupees, though margins may narrow slightly to 26.8% from 28% last year. Net profit is forecast to grow 8.7% to 1,514 crore rupees. Growth is driven by strong performance in India, Russia and other markets. And, viewers, we are getting to know that Infosys is out with its Q1 results, and I'm joined by my colleague Puneet here in the studio. So, Puneet, what are you picking up? What are the numbers suggesting?
Well, it looks likely a decent performance actually from Infosys in this particular time frame. We've seen the revenue for the company also come in quite in line with estimates. 42,279 crores is what we have. What's the actual number? We were going with 41,741 crores. So it looks like a beat on revenue. When you look at the EBIT performance of the company as well, 8,800 crores, again beating estimates of 8,700 crores. Margins were expected to come in at 20.88%. Likely it's come in at that range only, so again a beat there. And in profits as well, we were expecting a fall of about a couple of percentage points, and that has also largely come in much better than what the estimates were of about 6,700 crores. The number has actually come in at 6,900 crores as well. Just for, in this aspect, it largely looks in line in terms of performance for these four numbers. Let me actually get in Sushovan Nayak as well, the research analyst at Anand Rathi Institutional Equities. Now, Sushovan, a very good afternoon to you and thanks so much for joining in. Just in terms of the first four numbers, in terms of revenue, EBIT margins as well as profit, it likely looks largely in line. Would your assessment also be the same?
So, hi, I hope my voice is audible.
Yes, Sushovan, I can hear you. It's Puneet this side. Go ahead, please.
Perfect. Puneet, so basically, if we look at the constant currency growth of 2.6%, I think that is something that is a very good number. At least it's better than expected. That is one. And the other bit is the company has also raised the guidance from 0 to 3% to 1 to 3%. The lower end of the guidance has also increased, both of which I view are positive. So overall, I would say the numbers are better off than expected. It is a TCV is something that I am looking at that number as we speak. Yeah. So that I believe that's 11.3 on a LTM basis and 3,800 in 1Q FY26, which is better than last quarter, which is also a positive. And on a trailing 12-month basis, it is almost flat versus last quarter. So overall, it looks a good set of numbers.
So, Sushovan, in terms of constant currency, 2.6%, you rightly mentioned this is above estimates from consensus. What was the number that you were working with?
We were working with 1.3% actually.
1.3%.
So that's why it is, because that number is very good, and that's why That was the first thing that I was looking at.
Correct. And in terms of, you rightly also mentioned the deal wins as well. Over the last 3 quarters, it's largely been hovering between $2 to $2.5 billion. This time 3.8, in line with, as you rightly said, on a YOY basis as well. So that number also seems positive in terms of versus what your estimate was. How is that number looking at?
No, so if you look at the last 3 quarters, it has been always hovering between the around $2.5 billion. 3.8 is actually a very good number because last quarter, if you look at it, the numbers were in line, but this time it has beaten on a trailing 12-month basis. So the deal wins are looking very good. But obviously, this is just the initial view. We'll just have to go through the fine print of that.
No, absolutely, Sushovan, and we appreciate you joining in as well. I just wanted to ask you in terms of the guidance as well. Now, they have increased the lower end of guidance, similar to what the HCL Tech has also done. But there were a lot of consensus estimates of 1 to 4% of the guidance from 0.0 to 3%. What do you make of that? Do you think that the upper end being largely stagnant at 3% is slightly disappointing, or is that something that we were wishing too much from this result?
I believe the 1 to 3% is fair. In fact, that is exactly what we had built in, that they would move it to 1 to 3%. But given that there is still an overhang of uncertainty and tariffs that are going to come, so I think it's a conservative guidance, and we'll see as it evolves over the next few quarters, right? So as of now, I think that's a very fair thing that is from a guidance standpoint.
Right, Sushovan. And we've actually seen in this particular quarter revenue growth across some key verticals. We've actually also seen the manufacturing vertical come in at 6,800 crores. Last quarter, the revenue was 6,500 crores. The other vertical which was hampered was retail. So that's coming at 5,600 crores versus 5,400 crores as well. So Sushovan, my large question is basically from the press conference as well as from the conference call. What are some of the key aspects that you will be watching out for in terms of segmental performance for this quarter?
I would actually want to look at BFSI just to see how exactly is it going in life sciences, because a lot of large cap IT peers have basically mentioned that there have been some stress in the life sciences thanks to the payer environment. That is one. And the other would be high tech, because high tech is seeing some green shoots across the large cap IT players. This is something that I would also want to see more from a guidance perspective, what's happening there from the management. And obviously retail and manufacturing would be good to understand what's going on, but as you rightly mentioned, it's been more or less quite a negative commentary across most of the players, I guess with the exception of LTI.
Right. So, some more comments coming in that the operating margin largely seen at 20 to 22%, and that's something that has been known for a few quarters now. But Sushovan, just to wrap, you think that the numbers are largely in line, is that correct?
Yeah, the numbers are largely in line. In fact, the revenue, I was pleasantly surprised, the constant currency growth, because that is a number which I was looking at. At the end of the day, it is growth that would, differentiate the players, because everyone else has shown a negative constant currency growth in the large cap IT space with the exception of LTI. Right.
Fair point, Sushovan. Thanks so much for joining in, giving us perspective on a whole host of information coming in at a very thick pace. So thanks so much for joining in. And that's largely viewers. The key aspect of Infosys, the numbers largely seem in line. Revenue growth positively surprising on a constant currency basis. Deal wins positively surprising on both on a quarter-on-quarter basis and on a year-on-year basis as well. While the number was at over 3 billion last year, 3.8 billion for this particular quarter is also very strong. We have the press conference scheduled at 4:15, and that's one of the key lowdowns, Himashi, of that. It's a result that will positively surprise the market because of the performance versus other large cap IT players.
Yeah.
So definitely a very strong result for Infosys.
Yes. Thank you so much for breaking down those numbers there, Puneet, for our viewers. And with that, let's proceed further with Market Express. So, viewers, Dalmia Bharat also reported a mixed Q1 performance with flat revenue growth, but sharp improvement in the margins. Revenue edges up just 0.4% to 3,636 crore rupees. However, EBITDA rises a robust 32% to 883 crore. But, viewers, we're going to go back to my colleague Puneet because he's going to, add up more to the Q1 results there. Puneet, what are you picking up?
Just looking at the segmental performance and to come in as well, because it's a key result that we just spoke about in terms of constant currency as well. Infosys being the only one that's actually reported a positive one, and that's something that Sushavan also mentioned as well, of almost 2.6% growth on a constant currency basis in terms of segmental performance. And I just wanted to highlight that for a bit, and Sushavan also did highlight essentially what that could be. The financial services aspect was positive of 11,796 crores was of the financial services business. Compared that with what happened in the previous quarter, 11,600 crores. So financial services, as Sushman also highlighted, was positive. On manufacturing, the revenue has improved. On energy utility resources, it's come in at 5,700 crores, again improved from the previous quarter. And high tech and life sciences also have improved on a quarter-on-quarter basis. So we'll be getting in more perspective on this, post the press conference that's slated to start at 4:15 as well. But a lot of stocks, Himakshi, that were in focus on the back of results as well.
Yeah, Praneeth. So, Puneet is right here. He will be getting us all the updates as and when they are coming, and we will be catering it as and when the updates are there. And with that, let's proceed further with the show. So, talking about the brokerages note, so brokerages are kind of sharing mixed views on Colgate-Palmolive. HSBC has also cut its target price for Colgate to 2,600 rupees there, maintaining a hold rating. They also cite a more significant moderation in the performance than anticipated, with Colgate expecting only a gradual recovery in the second half of the fiscal year 2026. So HSBC believes that while some improvement is likely, the structural growth potential for the company remains low. And on the other hand, JP Morgan has trimmed its target slightly to 2,625 rupees but maintains an overweight rating. They acknowledge a tough first half for Colgate but anticipate a back-ended recovery in the second half of FY26. With volumes growth expected to improve, JP Morgan also projects that EBITDA margins will hold strong at 32 to 33%, though they have reduced their FY26 to 27 earnings per share estimates by 6%. So investors are weighing that these differing outlook as Colgate navigates is, its current market. Tata Consumer Products is also poised for double-digit growth, viewers, in its Q1 results, with revenue expected to rise 11% to 4,812 crore rupees from 4,352 crore rupees last year. So, however, EBITDA is likely to fall 3% to 648 crore rupees, causing margins to contract to 13.4% from 15.3% due to inflationary pressures and tea price increases. So, profit after tax is forecast to surge 23% to 356 crore rupees. Volume growth is expected in the mid-single digits, with India food segment and salt category driving performance, while beverages face tepid growth due to unseasonal rains. The international business is also expected to remain under pressure. Overall, Tata Consumer delivers strong top line and profit growth but faces margin challenges in the Q1 of FY26. Coforge is also set to announce strong Q1 results, with revenue expected to rise 9.3% to 3,727.5 crore rupees, while EBIT surges nearly 25% to 502 crore rupees. Now, margins are forecast to expand to 13.46% from 11.78%. This is driven partly by the sales of the loss-making Advantage business. Now, net profit is also predicted to grow 27% to 331 crore rupees. Constant currency revenue growth is estimated at 6.8 to 7.6%, with organic growth around 5% quarter on quarter. Investors will focus on updates regarding the Sabre deal, particularly any initial cost impact and the progress on the acquiring Cigniti. So additionally, strong deal wins continue, with bookings expected near $500 million and an order intake of $2.1 billion in the previous quarter. So underpinning confidence in the Coforge's growth trajectory, the board will also consider an interim dividend alongside results today. Orient Pro Solutions stock was on the back foot after a weak equipment segment performance. So the company still shows strong growth with a 1,460 crore rupees order book and 16 new clients. So it signed a major deal with the top African bank for its digital platform. Q1 revenue also jumped 28.7% to 337 crore rupees, though margins dipped slightly. Signed DLM's Q1 FY26 revenue rose 8% to 278 crore rupees, driven by strong aerospace and defense electronics growth. However, the net profit fell 29% to 7.5 crore rupees due to a less favorable revenue mix and soaring costs. Employee expenses surged 78% to 57 crore rupees, and other expenses jumped 140% year-on-year. Despite this, EBITDA grew 25% to 25 crore rupees, with margins improving to 9%. Syrma SGS Technologies Q1 of FY26 net profit surged to 49.7 crore rupees, which is up from 19.3 crore rupees last year, despite an 18.6% revenue drop to 944 crore rupees. So EBITDA has jumped 90.6% to 86.6 crore rupees, with margins expanding to 9.2% from 3.9%. So the Chennai-based electronics manufacturing firm benefited from a focus on high-margin industrial and auto segments. The company remains on track for 30 to 35% revenue growth in the FY26. President Trump announced a major US-Japan trade deal. It cuts tariffs on Japanese autos to 15% from 25%. So Japan will invest $550 billion in the US, including an Alaska LNG project. So the deal boosts trade, with Japan opening markets to US cars and agriculture. Well, with that, viewers, it's a wrap on this edition of Market Express, but please don't go anywhere as we have Profit 360 on the other side of the break.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and
Benchmark indices surge ahead of broader market peers during the session. The Nifty 50 rallies 0.6%, fueled by strong performances in the financials and auto sectors. Infosys posts its first quarter revenue and profit in line with expectations, bolstered by a robust large deal total contract value of $3.8 billion. Trump completes a massive trade deal with Japan as US imposes 15% reciprocal tariffs on the nation. Japan will invest $550 billion into the US and it will receive 90% of the profits. Meanwhile, India will formalize the free trade agreement with the United Kingdom during Prime Minister Modi's visit to the UK. A 3-year exemption from Social Security, contributions for Indian professionals temporarily working in the UK and their employers seen to be a key win. Technical glitches at MCX were building over 2 to 3 months, say sources, adding that the exchange was aware of them and was in touch with members, but they persisted. In a big relief for SpiceJet, Supreme Court dismisses the plea of Maran-owned KAL Airways seeking 1,300 crore rupees in damages, upholding the Delhi High Court's order dismissing the claim against SpiceJet. Myntra comes under ED's lens for alleged FEMA violations. The complaint filed for an FDI breach of over 1,600 crore rupees. Bollywood royalty Shah Rukh Khan and Amitabh Bachchan join ace investors Ashish Kacholia and Jagdish Master in backing the 792 crore IPO of Sri Lotus Developers and Realty. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Along the next half an hour, we're going to bring you the latest in markets as well as national and international news. So let's dive right into it and have a look at how the markets fared today. We saw some strong action, but select financial and auto stocks driving the benchmarks higher, even as broader indices showed mixed trends. Real estate and FMCG faced visible profit booking, while several sectors such as oil and gas, pharma, PSU Bank and IT reversed their losing trends. Here's Harsh with all the details.
It was a very interesting day of trade. We've breached a couple of key levels. We were just above the 25K mark, but we breached 25,100 and thereafter closed above 25,200. So we had a good day of trade overall, 0.6% higher on the Nifty 50 index, largely driven by financials and banks. So that was the pocket which did well. And it wasn't a day where either or private versus PSU participated. It was both which did fairly well for themselves. The PSU banking index was up 0.5% thereabouts. The private banking index obviously did much better, 0.8% higher on the Nifty banking index. So a decent day of trade where the banks are concerned. The other pocket which kind of did well was the auto space. You had some names which did extremely well. The top gainer was a Tata Motors, followed by a Bajaj Auto, which did fairly well for itself as well. Hero was in the fray as well. So the auto pack was the other one where there was some bit of zing. If at all any, it was FMCG which was languishing at the bottom. Tata Consumer earnings today, but one of the top losers in trade, and along with it you also saw the likes of an HUL and ITC, all of which were languishing at the bottom in terms of the Nifty 50 pack. I'll quickly switch to sectors and kind of already covered it to a certain extent, because some of the top gainers were within the financials, but outside of that you saw the healthcare index being the top gainer today. Not too much there, but that was the one top gainer. Outside of that, it was of course the financials, the auto, the Nifty auto, which took lead and did well for itself. The top loser today within the broader markets was the Nifty Realty Index, down over 2.5% in trade. So that was the one big loser, and it was led by the likes of a Lodha, which was Macrotech Developers. You also had a Prestige among the top losers within the BSE 500, and Oberoi, where there were block deals also seen. So some of those names dominated trade. In terms of the other big loser was of course FMCG, 0.5% lower on the Nifty FMCG index. We did see some of the names not doing as well, and that was reflecting on the index as well. Let me talk about the breadth. The breadth was decent as well. We for a large part of the day we consolidated 1,200 losers to 1,000 gainers. Thereafter, we closed 1:1. Around 1,100 each is where we closed in at. A fabulous recovery that we saw, especially in broader markets. The Nifty small cap and mid cap indices did fairly well towards the fag end of the day. We saw a decent recovery from the lows, so we saw that play out really well. And that was carried forward by the Nifty. That kind of reflected in broader markets as well. So it played out well. In terms of the BSE 500 top gainers, top losers, a couple of names from within the financials pack, broader markets, JM Financial, Credit Access did well for themselves on the back of earnings. Largely was Credit Access's reaction, or rather the commentary rather than earnings. And in terms of the losers, dominated by the Realty Index players, and some of those players really seeing or rather really getting beaten down today, and that reflecting on the Nifty Realty Index as well. So broadly, that's how we played out.
Thanks, Harsh, for that. Meanwhile, we also spoke with Nitin Bhasin of Ambit Capital, who said foreign investors are currently cautious on India, mainly because they view Indian stocks as overvalued. But he's not overly concerned because he also said that he believes foreign investment inflows into India are still strong and positive. Let's play that out for you.
If you look at the Nifty X banks or Nifty 100 X banks, and what you could see is the whole market at the large caps relatively is expensive. But, markets don't move to valuations. Markets also move to what is the expectations and how are the market results coming out or numbers panning out to the expectations. And clearly, one has to follow what's happening on the upgrade or the downgrade cycle. With sectors, what's happening to the upgrade and the downgrade cycle. So clearly what we are witnessing right now is though banks may be relatively inexpensive, performed very well in the last 1 year, but they are going through their own June quarter, perhaps even September quarter to some extent, sort of a moderation in credit growth, continued pressure on NIM or expected pressure on NIM, and hence margin pressures possibly over there. So I would say mid cap, small cap appear relatively more expensive to large caps. Overall, the whole market to its own history is expensive, but the flows in India, remember we have keep on talking about this in the past, the flows in India are strong, which is domestic. Hence, that is the elevated new price earnings multiple of India.
Right, let me quickly go across to my colleague Puneet now to look at the big earnings of the day. Infosys' Q1 profit that met estimates, and IT major also revising its FY26 guidance. Puneet, give us the detailed analysis. Over to you.
Well, thank you for that. So revenue was definitely coming at a very strong click, almost 42,279 crores. It's a 3.3% growth compared to the previous quarter, and that's much above the estimate of about a 2% gain that was expected. So it's definitely a beat there in terms of the EBIT as well. The margins have come in at 21%. Estimates were baking in roughly about 20.8% as well. So again, a number that's bang in line with the NDTV Profit estimate. In terms of profits, it's coming at 6,900 crores. It's a fall of 1.6%. But we were going with a larger fall of about 2.5 to 3% on Infosys. So at least on these 3 to 4 broad financial numbers, it is a beat, and Infosys has been the only large cap IT company to report positive constant currency growth. So they've come out with a constant currency growth of 2.6%. Just for viewers' perspective, constant currency removes any kind of fluctuations across different currencies that these IT companies handle in, which could be the dollar or the pound amongst other currencies. So that has been the highest at 2.6% for Infosys in this particular quarter. There are also other two key updates. One is, of course, of the guidance, as you rightly mentioned. It was 0 to 3% for FY26. Infosys has increased the lower end of the guidance now, so it's now 1 to 3%. So anticipating at least 1% growth. Most of the brokerages were going with this number, but there was some that also expected the upper end of the guidance to be raised to 4%. So 1 to 4% could be one of the key reasons, and we'll see if the management speaks about that. And finally, in terms of deal wins, it's a huge surprise: $3.8 billion in deal wins compared to the previous quarter, which was around $2.5 billion. It's a big jump for the company, and they've had 2 renewals, a couple of other deal wins in this particular quarter that's boosted that. So definitely on the 4 numbers, on guidance, on deal wins, all 3 numbers in line as well as beating estimates for Infosys in Q1 of FY26.
Right, Puneet, thank you so much for that update. Infosys' Q1 profit indeed meeting estimates and updating the FY26 guidance. Thanks so much for that. Moving on, the State Bank of India has closed its record-breaking qualified institutional placement, raising over 25,000 crore, the biggest ever in India. Listed today on the NSE, the QIP drew a massive 1.12 lakh crore in bids, with 64% of that from foreign investors. SBI Chairman C.S. Sethi revealed this. My colleague Vishwanath Nair caught up with him to discuss this milestone. Let's listen in.
So the growth chapter has been wonderful. I think it's not only about the short-term growth strategies. The long-term objective of SBI always has been to position itself as a preeminent bank and play an important role in India's economic growth story. And I think that is not affected in any manner That was not affected even earlier also, I think, but this capital raising reinforces the confidence of the investing community across the globe in India's story as well as SBI's story.
Meanwhile, US President Donald Trump has announced revised tariffs for Japan, the Philippines and Indonesia. Tariffs on Japanese imports will now drop to 15% from 25%, alongside Japan's commitment to invest $550 billion in the US, a move that has been praised by Japanese Prime Minister Ishiba as strengthening bilateral ties. Now, following the news, Japan's Topix index rose 2%. The Philippines tariff on exports to the US was cut to 19% from 32% following a recent White House meeting between Trump and President Marcos Jr. Meanwhile, Indonesia's tariff was slightly reduced from 20 to 19%. Meanwhile, B. Riley's Seth Freeman, who spoke with us earlier today, believes that the US government has been diligently working to finalize deals with various countries before the impending tariff deadline. He considers the agreement reached with Japan a significant indicator of positive momentum.
The volatility of various tariff rates is very positive, not only for the U.S., but for the global economies, because we saw the kind of disruption when the original tariff tantrum was announced several months ago. Yeah, I think the U.S. government's been working very hard to try to close deals by this August 1st deadline, because it's not helpful and it doesn't look good for the administration to have not achieved many deals. So I guess we could look at the Japan deal and hope that this is a sign of some momentum, which would obviously, should a deal be cut with other emerging markets countries, that would be very positive.
Meanwhile, let me quickly go across to my colleague Rishabh, who's going to break down the current developments and their impact across Asia and also in India.
President Donald Trump, we saw about 3 major trade deals being signed with various Southeast Asian countries, Philippines, Japan, as well as Indonesia. Now, in terms of Japan, which is considered to be the largest of these deals, Trump will slash Japanese tariffs to 15%. This is in comparison to the 25% threats that were given by Trump to the Japanese. And also, this is tied to a $550 billion Japanese investment that will come into the US as part of the deal. We saw today Japanese markets also surged because of this deal. Nikkei surged about 2.6%. Mazda as well as Toyota, large Japanese automakers, also saw about 17 and 11% jumps in stocks. We also saw that, and this was on the back of the auto duty, the sectoral tariffs that US has decided to relax in the case of Japan. These will be slashed from 27.5% to 15%, and that is the primary reason why the likes of Mazda and Toyota jumped in trade. What we're also picking up is that Indonesia, that tariff has gone down from the earlier threat of about 32%. It went down to 20. Now it is at 19%. And that is also, in return, Indonesia will open up all of its markets to the US. That is what Trump claims. And what we're also seeing is that nearly all tariffs on US imports will also be dropped by Indonesia. Philippines, also a similar case to Indonesia. We're seeing a 19% tariff being levied there. This is below the 20% tariff threat that Trump administration had imposed. And also Manila offering zero imports to US, zero tariffs to US imports. That is a part of these deals. We saw in the run-up to August 1st, Lutnick as well as various other senior officials of the Trump administration, all of them had said that there will be a bunch of deals coming in, and now we're finally seeing a bunch of deals coming in, a major amount of deals in terms of the record number of investment that is being tied into as part of these deals. What we're also seeing is that these are somewhat skewed in favor of the US prima facie because these deals are primarily coming in from the US. So that is something that is to be seen with respect to India also as we track up to this August 1st deadline. What sort of a deal will India be able to achieve as we go ahead?
Right, thanks so much for that, Rishabh. Moving on, India's cabinet has given its approval to a comprehensive free trade agreement with the United Kingdom, marking a significant step in strengthening bilateral economic relations between India and the UK. Now, the agreement, like we've been telling you, encompasses a broad spectrum of economic and trade components and is scheduled to be officially signed during Prime Minister Narendra Modi's visit to London. Now, he lands there tonight.
The India-UK FTA is set for its formal signing on July 24th. Prime Minister Narendra Modi will sign it in the presence of UK Prime Minister Keir Starmer in London. Also in attendance will be, of course, Commerce Minister Piyush Goyal. Now, this FTA will not go into effect directly. It will first go to the UK Parliament. It is learned to have already been approved by India's cabinet. Now it will be approved by the UK cabinet, and that ratification process might take about a year or so. And after that, we'll see the operationalization of the FTA. Now, in this FTA, this was considered a landmark FTA, one of the largest ever signed by India. Also,
to the press conference of Infosys right after the company released its Q1 earnings.
Are helping our clients drive faster decisions, improve customer experience, and improve operational efficiency. Based on our performance in Q1 and our current outlook, our guidance for growth for financial year 2026 is revised from where it was 0% to 3%. Now it'll be 1% to 3% in constant currency terms. Our margin guidance remains unchanged at 20% to 22%. With that, Rishi, let's open it up for questions.
Thank you, Salil. We will now open the floor for questions. Joining Salil is Mr. Jayesh Shangarajka, Chief Financial Officer, Infosys. The first question is from Ritu Singh from CNBC TV 18.
Hi, gentlemen. Thanks very much for the question. You're talking about how the numbers have been very strong. The performance has been good. The first quarter revenue is above what the street had factored in. Two questions on this. If the numbers are so good, why have you not raised the upper end of your guidance? Why just the marginal revision from 0.3 to 1 to 3%? And how much of this, upward revision that we're seeing, and including the kind of constant currency growth, 2.6% in this quarter, has come from your inorganic, from your acquisitions that you've made? That's one part of the question. Also, how would you guide the street to look at these numbers? Would you really say this is a turnaround that you're seeing, in the current macro environment, that going ahead this kind of performance would be sustained? And a word, last time we didn't hear much from you on the whole tariff conundrum and how that is impacting discretionary spend, specifically in sectors like manufacturing, retail. What's your sense on, the clients? And, if you could also add a word on your hiring plans for the year. Thanks very much.
Thanks. So first, on the guidance, what we have seen this quarter is a strong performance in terms of where we have delivered the 2.6%, as you pointed out. With that, and with the current outlook, where we have seen a lot of the discussions on the economy worldwide having come to more stable situations, but still seeing that it's not fully settled. Given that, we've increased the lower end of our guidance as we go closer into the, progress into the year, closer towards the end of the year. We typically narrow our guidance, and that's the first part of what we've done, which is increase the lower end. We still see things within our guidance where we look at some things which will give us good traction. For example, what we've seen in the consolidations, we've seen very strong work that we've done on AI with agents, and we see that. And we also see the economy globally, both in Europe, US, going through changes. So keeping that in mind, we've narrowed the guidance and increased the lower end. On the inorganic part, I'll let Jayesh mention how much of it is inorganic.
Yeah, so inorganic in this quarter has been around 40 basis points within our 2.6% that we reported. And for the full year also, it will be similar number.
And then back on the sort of economy, we talked about it last quarter and also in addressing it today. There are overall changes in the economic environment, and we mentioned last quarter, we share that again. We see some of that impact, for example, in logistics. We see some in consumer products and some in manufacturing. But equally, we have seen benefits, especially because we've seen good traction with the work we're doing with agents in AI, and a benefit from consolidation that we've looked at, that clients have looked at us and been positive. And that has given us some of the positive growth that we've seen in this quarter.
Would you call it a turnaround? Would you call it a turnaround? This is an exceptional quarter because you got the benefit of the acquisitions. Also, you still are certain about the demand environment.
So there, on the acquisition, as Jay shared, it's a small part of it. Even if you keep that aside, we are well over 2%, 2.2 in terms of constant currency growth in the quarter. The way I would look at it is it's very differentiated performance, because we have what we believe to be one of the best ways that we are deploying AI, enterprise AI, into our clients. So these are active projects where we are using agents, different types of agents that clients are leveraging, whether it's in their supply chains, in their customer experience, where they're getting productivity benefits, where they're getting improved customer service. That's one aspect of it. And the other aspect is we are seeing clients are selecting us more and more when they're looking at consolidation, because inherently we see clients see Infosys's delivery as very strong and stable, and also providing new ideas, especially on AI, for improvements into their business. So that's the differentiated performance that we are seeing in the way that we see it.
Hiring. So if you look at our hiring numbers, our overall headcount has remained constant at this point in time. Our utilization is at its peak at 85%. So we will continue hiring, and we expect to continue hiring in line with what we announced at the beginning of the year. There's no change there.
Thank you, Ritu. The next question is from Haripriya Suresh from Reuters News.
Good evening, gentlemen. One quick, I wanted to understand, America has not grown, growth has been sort of flattish, but Europe has grown really well. Just some color on those specific markets. Is Europe client specific? What is happening on that end? And, in terms of the employee headcount, like you mentioned, I know it's been flat, but I know there's a lot of talk about how Infosys is using AI. Do you see, if utilization's at its peak, do you see productivity increasing where you don't need to hire as much going forward? And will this sort of be the level that we will see it at? And I wanted to get some color on what the wage hike scenario will be for this quarter as well. Thank you.
So coming to your second question on headcount, as I said earlier, headcount has remained flat. Despite that, we've been able to deliver 2.5%, 2.6% on growth. Large part of that came from the RPP increase, or the pricing increase that we got, and the seasonality benefit that we got. 40 bips came from the acquisition, and the balance came from the volume increases, which we've been able to manage within our current headcount through utilization. Now that we are at a peak, any further volume increase will need to be, we do need to come from the hiring, right? So that's where we are. In terms of US and Europe, I think Europe has been strong footing for us for many quarters in the past. That's on the back of the investment that we made a few years back in Europe. We had identified Europe as a geography to invest into, and all of that I think is working well across sectors. And sorry. Is that geographical mix change between America and Europe? Because Europe is growing faster versus America, to that extent it's changing, but still US remains the largest sector for us, largest geography for us. Sorry, you had a third question.
Wage.
Yeah, so we did a wage hike already. First wage hike, first part was that effective January. The second phase is already rolled out effective April. First, the impact of that is already baked in the margin of this quarter. We had 100 basis points of impact on account of wage hike, as well as the higher variable pay that we paid to our employees this quarter. So that's already done. Having done the wage hike very recently, next one we'll have to decide when.
Thank you, Haripriya. Next question is from Beena Parmar from the Economic Times.
Hi, Salil. You mentioned about the revenue being stronger. Some of your peers have pointed out that there has been some revenue cannibalization that they are seeing. Are you also witnessing it, and are you seeing some productivity gains, benefits that you're passing on to your customers? And is that also leading to change in pricing? I think we spoke about it briefly, but has there been any change in the first quarter? And secondly, is that also impacting your margins? What were the factors that led to the margins? Because I think it has declined. So could you...
Let me start on the revenue one. I think we are seeing with AI a lot of productivity benefits. We also saw productivity benefits that we were already working on from automation and lean, which were coming through. Typically, all productivity benefits, a part of that is shared with clients and a part of that is shared with us. We see, if you look at the overall level, what Jayesh was sharing, we have seen our productivity of our revenue, the way our own pricing is working at a macro level, improving. And this is more because we are doing work which is creating more impact, in addition to the productivity which is making some of that benefit being shared with clients. So these are two different factors, but on balance, we see an improvement into the quality of the revenue that we are seeing now.
So what kind of productivity gains you're passing on?
So there, we are not discussing the amounts we are passing on, but in terms of what we're seeing as a benefit, we are seeing between 5% and 15% through AI programs where we are working with clients where typically there are disparate systems. Internally, there are some things we've done which are slightly higher than that, but those on internal, like if you look at our Finacle product, it's one uniform sort of a code base in which we can get better productivity. And the margin.
Yeah, and on the margin walk, if you the 20 basis points of decline, the puts and takes of that, 100 basis points of headwind came from compensation related factors, in hike that we gave in April, as well as the higher variable pay that we pay to our employees, or we'll pay to our employees for this quarter. 30 basis points was a headwind on account of currency, and 20 basis points for other factors. This was offset by 70 basis points of pricing benefit that we got, both seasonally as well as the benefit that Salil was talking about from productivity and everything that we've been doing under Project Maximus. 40 basis points came because of the acquisition related impairment that we did in the last quarter. That was a one-off in the last quarter, so that was a benefit this quarter. And 20 basis points because our third-party cost was lower. So just to highlight, our 2.6% of growth was despite the fact that our third-party revenue and costs were lower by 60 basis points.
Just one question, what conversations with the clients, has it improved in terms of the business demand? And, are you seeing that tariff-related uncertainty or the caution is now over and they are starting to kind of,
So on a macro basis, what we see is there are clients, all clients are quite focused on enterprise AI, where we can share what is working, where it's working, especially with agents. Then there are industries, specifically logistics, consumer product goods, manufacturing, where we see the impact of the changes in the economic situations. Where we were at this time last quarter, there's also been several things which have been done which gives more view and focus into what's going on, and yet there is still some open items which are going on. So we see, for example, from clients, there is quite a lot of attention on cost and efficiency of their own operations, even if they're not impacted by the changes in the economy. So that is all going on. Including some of the benefits that we're seeing from AI. And then finally, on a macro level, we, at this quarter, in our large deals, we've seen a lot of deals where we've benefited from clients making consolidation decisions.
Thanks, Beena. The next question is from Rishabh Shaw from Money Control.
Hi, gentlemen. Congratulations on a good set of numbers in a difficult quarter.
difficult macroeconomic environment. I have a couple of questions. First on financial services. 2 fiscals back, you had close to 28%. Now it's down to 27%. So is this a new normal? Is this a change in composition, or are you losing market share? Second, your active number of clients has reduced in the last 2 fiscals. So and this comes on the back of revenue growth in this quarter. So is there a pricing change? What are the benefits? What's driving this? And also, we see in the last 2 quarters that you have added in 3-digit numbers. So, is this a beginning of moving from pyramid to IP-led businesses? Thank you.
So let me start with some of that Jayesh will add in. I think financial services, we are seeing a very strong traction. So one of the things we've benefited from in financial services is, if you look at, let's say, a large 20 clients, we have in half of them, we are the AI partner of choice with those clients. In many of those clients, we see benefits from consolidation. In many of those clients, we are in the forefront when there's regulatory change or big transformation, which includes tech and ops. So in senses, we are well positioned in financial services. We are starting to gain much more traction, and we have a broad set of coverage, both in geography and in capabilities within financial services. On the client,
yeah, so on the active clients, you always have a long tail. They come for a small projects, and some of them eventually become larger projects. Some of them, eventually fall out, and after a few quarters, few months, they come back in a way. So I don't think the active client is a big matrix. Of course, it's a matrix to track, but more important in our mind is the 100 million, 50 million clients, how they grow and how they mine that once they become a sizable client.
That's right. We'll continue bringing you updates from this presser after Infosys leadership addressed it post the earnings press conference. Thanks so much for watching. We'll slip into a short break right now, but all the updates on the other side of that break.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI?
Hello and welcome. You're watching KYC. Today we're going to speak about a cable and wire company which has come out with numbers, and honestly, it does extremely well in terms of its return ratios. It's done 20% plus over the last 5 years in terms of ROCEs, and not just that, they generally guide extremely conservatively as well and generally exceed guidance. Now, some of these cable and wire companies in India are doing extremely well, even in general, given the macro tailwind. But this one is also going to do exports. So KEI Industries is what we're going to talk about. There's been a sharp ramp up in exports in Q1 FY26. And that is not just the only trigger, frankly. And what I want to know is the first piece is competition. Because you have a couple of players who are likely making large investments in cables and wires in India, given the setup that I've just given you. High ROCs, very good macro and strong tailwind, and there are maybe just 2-3 large players in the space, so the opportunity size is also quite large. But is competition a concern? One, to the industry, but also to KEI Industries. That's going to be my first question. Second one, will the 20% plus kind of ROCE number continue? Why? One, with competition coming in, could this be the new paints? Second, a fundraise. They've done a 2,000 crore rupee equity raise, and does that in some form or shape hamper the return ratios is what I'd want to understand better for FY26 and FY27 especially, because FY28 onwards probably growth will take care of that, but at least for the near term. Now, in terms of downside risk, is there a downside risk to export market? There's plenty happening on the geopolitical side, and therefore that could be one risk. Capex plan, whether that one is on track. It's a large capex that they are planning, and therefore we'll want to understand that. How quickly do capacities come on stream? Is all of that on track? Sadanand phase 1, that project should at least get done by H2 of FY26. So want to understand whether that is on track. Margins on export versus domestic, this I'd want to know, because they're shifting base towards exports in a big fashion. Now their export is around 13% of the mix. That will likely continue to inch higher. The aspiration is to get to 20% in the next couple of years. If export is going to do well, and if margins are better there, you could well see a margin upside from here. But there's a margin downside. Raw material prices is a key risk. For the moment, they've been able to hedge raw material prices, pass it through to the customer, but is that at all a risk going forward? Cash flow in FY25 was a concern. They reduced the number of or the amount of payables they had because of the large cash balances that they held. Well, is that likely to reverse at some point is what I would want to understand. Will they go back to increasing payables, and therefore will there be an unwind at some point of that large cash flow that went out from operations in FY25? So some of these I'd want to know better. But let's quickly understand the company, and Puneet will join me shortly with regard to this. It was founded in 1968. It's been public since 1992. It's the second largest cables and wires company in India. It commands around a 9% market share in India. They intend to rigorously defend that market share is part of the commentary that we've got. Supplies to infra, power, industry, real estate, exports and retail. So across the board, it has a pan-India presence and it has a growing global presence with 60 plus countries is what it is present in. Let's look at some of the products, and we'll quickly have that in one slide maybe. Okay, so let's look at revenue distribution first. Okay, 94% is from cables and wires. EPC has come down sharply to 4% now, and stainless steel wires is 2%. EPC at one point was late teens. In fact, not too long ago, maybe FY18 or FY19 was a large chunk of the top line, maybe 18 to 20%. Now it's just down to 4%. They are granularizing their top line more, and that granularity is giving them margin tailwind. So all of that has started to play out. Let's look at the revenue mix as well, and within that mix, retail is now 52, institutional is 48. That allows for better margin upside because retail will always give you better margins, the B2C. Now let's look at products, and let's pull up that slide, and that will give you a full picture of all the products they do. Largely into almost every product within the cables and wire space. So it has a large plethora of products. Wherever they don't have an R&D or they don't have a specialization, they have tie-ups. And that kind of helps, especially in the EHV cables, where some of the higher kilovoltage cables is where they have a tie-up. So well, that too is likely to drive numbers. When I'm looking at customers, retail customers through distributors is what they tap into. They currently have around 2,100 dealers, and they do both international as well as domestic. I did speak about the mix. Around 13% is what the international mix number currently stands at. In terms of value chain, they do manufacturing, warehousing, B2B and B2C, and thereafter also exports if at all. Now, they manufacture through 6 plants. One is in Rajasthan, Silvassa, Sanand. We spoke about the Sanand plant and the capex that it's going through. It sells via dealers, which is B2C. They also do direct to industries and governments, which is B2B. They do exports. 52% is retail, 35% is institutional, and 13% currently sits in that exports basket. Raw material is largely commodity driven, and it follows pass-through pricing, and therefore you'll see very, very limited impact on margins is what the management has guided for very, very comfortably. But that's the holistic picture with regard to what KEI Industries does. Let's get into the metrics now, and let's start off with the metrics themselves: income statement, balance sheet, cash flow, return ratios, shareholding, street cred, street coverage, and valuations. We'll cover all of those 8. And as always, Puneet joining me for that analysis. Puneet, let's start with the income statement.
Well, definitely, Harsh. And the key aspect is the strong growth in revenue that we've seen for the KEI Industries over the last 2 to 3 years. So it's definitely grown steadily, and post the slight dip in which we've seen post the pandemic, it has recovered very well. Like the other cables and wire companies, we've seen a 19% CAGR in terms of revenue. EBITDA has grown in line with a similar percentage. It's very difficult to do that because it's a very highly commoditized industry. Copper prices are very volatile, and we saw that impact post the pandemic as well. But company has been able to maintain that margins. Slight blip which we saw in FY25, and is expected to be around 11 to 12% in this year as well as the coming year as well. So that'll be something to watch out for. But that's driven by the profitability growth of 23%. So we've given this a thumbs up. No two ways about it. It's been a strong product profile over the last 3 years, and that's reflected in the growth in revenue as well as profits as well.
Okay, so that's with regard to the income statement. You can see the journey. Do we have maybe a 3-year or 5-year chart with regard to how the income statement, margins, etc. have moved? Let's pull that one up as well. That'll give our viewers better perspective on how the top line, the margins, as well as the PAT has moved. Okay, let's quickly move on to the balance sheet. And in that balance sheet, if you see the way in which your equity has moved, it's inched higher because of the 2,000 crore fundraise that happened in November of 2024. The other equity number also rising significantly as a result of, one, the strong profitability that we saw in FY25, but also as a result of that fundraise. So both of those reflecting on the book value currently, which is sitting at sub 6,000 crore. It's a 38,000 crore market cap company. Just something to keep in mind. The borrowing number is at around 178 crore, so fairly healthy balance sheet. They've repaid some part of their borrowing, post the fundraise, and the cash bank balance currently sits just below 2,000 crore at the end of FY25. Of course, the Q1 numbers still need to get adjusted in the balance sheet. We don't get that disclosure. So broadly, it's a thumbs up. No question, no worries with regard to how the balance sheet looks at the end of FY25. Cash flow, Puneet.
Well, cash flow is very interesting because, we've seen a slight impact in FY25 numbers. And that's largely because of what's happened, in terms of operating cash flow. It's visible that FY25 was only negative 32 crores, while over the last couple of years, it's been above 500 crores of cash generation from operations. Now, that was impacted due to working capital changes. Inventory has moved up to over 390 crores, and that's largely because of the volatile copper prices that we've seen the last year. So the company did go out to have higher inventory of copper. It's similar to what they did in 2022 as well. At that time as well, the copper price, the inventory was over 300 crores for the company. Because of that, there's been a delay in receivables as well as payables as well. So we've seen that impact happening on the company's cash flow to EBITDA ratio as well. But largely, this should be solved into this year because we've seen that within copper prices, it is still at a high, but the companies are managing their way into maintaining the inventory of copper in this particular quarter. So it will be something that we can quiz the management on as well. But largely, we've given this a neutral rating because of what's happened in FY25. FY22 to 24, this was largely stable in the metrics that you can see on your screen. But hence, the cash flow to EBITDA conversion was delayed because of working capital impact.
Okay, so that's with regard to the cash flow. We've given that a neutral. We want to see how quickly that unwinds. We spoke about that as well. Let me talk about return ratios. They've been consistently above the 20% mark. No concern there. Not going to discuss this too much. Going to give this a thumbs up and quickly move on to shareholding, Puneet.
Well, shareholding as well, largely been stable. We've seen the promoters maintain the 35% stake over the last couple of years as well. So we've seen a slight increase, and you can see that in the from what happened with domestic investors as well. In FY24, we did see some selling, and that could be one of the key reasons why we've seen an increase of that to 20%. But even from those levels, we've gone back to 26% of ownership from domestic individual investors. This includes all mutual funds amongst and HNI investors as well. So we're seeing that kind of positive impact. For the public, there's been some kind of selling, but that's largely because the stock has also done so well in the last 5 years. But overall, we've given this again a thumbs up, stable ownership by the management, maintaining that kind of view in terms of the strength towards the business, and hence giving this a thumbs up as well.
Yeah, we track number of shareholders as well. That's reflecting on your screen. See how the number of shareholders have inched higher. Let's look at street cred now. 1 month, 6 month, year to date, 1 year. You look at the performance, it's been okay. It's been a flattish kind of a move over the last year or so, plus minus 12%. But you look at the 5-year picture, and that's where you will really see the kicker. It's been a 11 bagger over the last 5 years. So some real solid tailwind, and that performance is reflecting on the income statement very, very frankly. So it's not a surprise to see the kind of compounding that we've seen. It's been one, a PE multiple re-rating that's happened, and you've seen very, very strong tailwind even in terms of growth. So both of those are playing out as we speak. But talking about valuations, Puneet.
And in terms of valuations, now it's important to look at the relative valuation of the other peers as well, because while KEI Industries trading at 35 times price to earnings for FY27 would seem expensive, when you look at the other players as well, they are valued very well as well. For someone like a Polycab, it is the market leader, has 26% market share, but maintaining that kind of valuation. And we've seen over the last 2 to 3 years, for KEI Industries, it has now become, in terms of valuation, on par with someone like a Polycab. It was always the second largest player, but we've seen that kind of valuation in terms of KEI to be maintained at 35x. Let's also look at the other players like Havels, as well as in terms of Finolex. And for Finolex, we see that valuation discount largely because of the company's slow growth. So the market not rewarding as effectively as someone like a Polycab and KEI. And for Havels, we've given this a comparison. But for Havels, there's also the consumer discretionary and the AC business that takes a higher valuation, and hence at 48 times. The wires and the cables is one part of that business now. So for Polycab as well as KEI, we've seen that inch up. For RR Cables, it was a stock which was trading around 24 to 25 times before the last couple of quarters, seen that inch up as well. So a high growth industry with industry leaders and players participating very well. So we've still given this neutral only because of the higher number, but the growth aspirations of the company to have till FY30 is what they mentioned as well, is very, very high. So we have to look at that aspect with the growth coming in. The market is hence okay to give us a slight premium to someone like a KEI Industries.
Absolutely. So that's the take with regard to valuations. And quickly on to what analysts are saying about this one. 18 buy calls, 4 holds, no sells, 1.5% upside. So the upside in that sense seems capped, which is why we've given this a neutral. Chairman, Managing Director, KEI Industries, to talk to us about, one, the quarter gone by, but overall, the big picture as well. Mr. Gupta, you set this up from scratch. You joined this place in 1979. What is your take with regard to incoming competition? You have a fantastic grip on the business as well as on the industry. Give us your honest take.
Good morning.
Good morning, sir.
So I think that we have established ourselves very strongly in this business. We know the business, how it is to be run in all fronts. So I agree that some big players are have announced their entry in this space, but the market is substantially growing. Economy is growing, and I think there will be a space for 1 or 2 large players to come in. Will not much make difference to us. We know how to diversify our product portfolio and diversify our markets and market geographies. So, even if we have to face competition in domestically a little bit, we will cover it up from other geographies for the growth purposes. But I'm sure that we will be able to maintain our market share and even grow our market share domestically as well.
Mr. Gupta, a very good morning to you. Thanks so much for joining in. It's Puneet this side. I just wanted to take a couple of questions on the new Sanand facility that's coming up. And, you've given a very detailed outlook in the past as well. But on phase 1 specifically, you will have, the low tension as well as the high tension cables coming in. In that context, what is that expected to do for KEI in the medium term? Because you've given a strong guidance till FY30 for about 20% revenue growth. So essentially, with the phase 1 coming in, how do you expect that to benefit KEI? Because there is some competition in this particular segments as well. So how would you be catering to that?
See, our phase 1 of this project is likely to be operational by September 25, and full project will be operational. So phase 2 will be operational by end of first quarter of FY27. But about the competition, I think the demand of our products is quite significant. We are actually, struggling to meet the orders timelines because of the capacity constraints. And a lot of international customers are waiting for us to start catering to them. We have a little bit slow down on our export customers because I don't want to lose our domestic market as well. So as soon as our capacities come up, we will full-fledged go for the grabbing the market in domestically as well as international.
So what is the
हेलो
हेलो
बोलिए मैडम डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको हम और आप तो जन्म भी नहीं हुआ था हमारा
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ कौन सा गलत काम कर रहा हूँ मैं
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो
बोलिए मैडम डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको हम और आप तो जन्म भी नहीं हुआ था हमारा
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ कौन सा गलत काम कर रहा हूँ मैं
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. That show should give you a sense of what we're talking about. Everything related to your money matters. And today I'd like to speak about investing in global equities. Now, if you've been following the show or if you're reasonably familiar with the landscape here in India, then you know that it's getting harder and harder for Indian investors to deploy money overseas. And that's because the Reserve Bank of India, and by extension the Securities and Exchange Board of India, has not increased the overall threshold for Indian mutual funds to invest in global equity. But there are a few options that are opening up. Among them, the DSP Global Equity Fund, which is going to be operating technically not in Indian shores, but in Gift City. And that, if you can think about it, like an island that is operating in India, that is separate from India, but actually allows you access to the global markets, then that's how you should think about it. Join me to talk about what this fund is all about, why it's different from everything out there, and whether it's an opportunity for you to consider. I'm joined by Vijay Mantri, who is an investment expert, as you know. Vijay, thanks as always for taking the time.
My pleasure.
So first, before we get into DSP and this new offering that it has, I described the Gift City in a certain way. I described it as an island that gives you access to the globe. Is that the right way to explain it?
I think this is fantastic. This is the crux of forget about the legality, but this is what it is. It is a window through which you invest in international market. It is a window through which international investor can also come in. So it's like a global financial center. It is at the initial stage, but I think over a period of time, the intent is to make it as competitive as Singapore or Dubai.
So, and to complete this point, from the lens of an Indian investor, and here I'm only talking about a retail investor looking to invest abroad, if they're going through GIFT, then effectively they would have to go through the liberalized remittance scheme route, which allows you to put $250,000 in assets abroad, take that much money out every year, correct?
That's right. Per PAN card, you can remit up to 250,000 USD. That translate into, at current exchange rate, around 2 crore rupees. Approximately 2 crore is the number per PAN card.
And that's the way that you invest through GIFT.
So this is the way you will invest in groups. So if I'm an Indian investor and I'm looking at international exposure, the easiest route earlier available to me was invest through fund of fund, which mutual fund offer.
Yes.
But there's $7 billion limit, which already we busted, and RBI is not allowing incremental money. And that is the reason you see all these funds have a difference between NAV and the price. Okay. Now, the Gift City routes was opened up, so you could invest through Gift City, but it is only through LRS route. Now the challenges with LRS route and Gift City is that the minimum investing amount is 150,000 USD. So that is around, the starting amount is 1 crore only. So it is away from many investors. And second problem is that in LRS, suppose your remittance is more than 10 lakh rupees, then there's a tax collection at source, which is 20%. Definitely you can take that claim in your income tax against advance tax and in your other things, but at least your cash flow get blocked for time.
20%, that's a lot.
Beyond 10 lakh rupees.
Yeah.
So if you are investing in Gift City fund, normal Gift City fund, then suppose your investing amount is 100,000 USD, that is 86 lakh rupees. So beyond 10 lakh rupees, 20% you have to put. Okay.
And that's earning you nothing.
That's earning you nothing, but see, you have advanced tax, you can use
You can set it off.
You set it off.
You can set it off. If you're operating at that level, perhaps you have that kind of stuff that you can do. But having said that, that brings us to this conversation, which is the DSP Global Equity Fund. And it is aimed at your retail investor because the ticket size is much lower. The minimum amount that you have to put in is $5,000. Is this the game changer that people are talking about?
I think this is a game changer because 5,000 USD means 4,30,000 to 4,50,000, depend on the exchange rate on that particular day. So it has come within the reach of middle classes. And suppose you have 4 members in the family, effectively you can do 20 to 25 lakh rupees annual, and you can go up to 10 lakh rupees without incurring TCS. So that way it is a game changer. And I also, hearing that the amount is going to go down further and further.
Okay.
Starting 5,000, perhaps they will make it 500 USD. So it comes within the reach of a normal investor. And the great advantage of investing through LRS, there are many competing platforms available through which you can invest in international through LRS. You can go and invest in fund in USA, you can go on asset or direct stocks. But the challenges is that these platforms are unregulated. Many of these platforms are unregulated, point number one. And we have witnessed that some of these platforms have closed down in between, so investors are left to grapple with it.
So what you're suggesting is that, of course, through the LRS, what a lot of people are saying is that, okay, the domestic mutual fund industry is not able to provide you with the option available. So what a lot of people that are seeking to invest in global equity, and particularly the US or in China or elsewhere, what they're doing is they're setting up accounts with global brokers or global providers or platforms. And they're facilitating your transactions.
Yeah, so one is that these platforms that are not regulated, tightly regulated entity. Second, which is very important thing, is inheritance tax. Suppose you invest through these platforms and invest directly in international market, then if beyond a certain limit, 60,000 USD, I believe, if something happens to you and the money has to be inherited to your legal heir, at that time, up to 40% can go in form of inheritance tax.
Wow.
Many people who invested internationally was not aware about these.
Right.
But through this DSP fund, through Gift City fund, if you invest in through LRS route, then there's no inheritance tax applicable.
Sure.
So that way it is much better.
There are several questions that emerge about this scheme, okay? And the reason, viewers, why we're focusing on this scheme in particular is because it is the first of its kind. As Vijay just pointed out, the others have a much higher ceiling or threshold for you to get past, for you to invest in. So the first and foremost question is, it was launched earlier this month, and it has a significantly large new fund offer period, as I understand it, right? So how is it going to work? They're in the process of collecting money right now. When will they operationalize?
So they will start collecting money and then they will start investing immediately. It may just a gap of 10, 15, 20 days. So they will start investing. And you need to go to your bank and convert your INR into US dollar.
Sure.
So that responsibility today is with actual investor.
Sure.
Earlier, what used to happen, you give money in INR to the fund and the fund will convert into USD and then transfer. Today, you need to go and negotiate exchange rate with the banker.
And you need an account in Gift City as well.
No, you don't need an account in Gift City. You go to your normal bank.
Okay.
And banks are authorized dealer. You fill a form and you get the INR transfer. But before that, the better thing to do is to connect with your mutual fund distributor, your investment advisor, create a zero balance portfolio in Gift City.
Sure.
Using DSP Mutual Funds Service Center. Open that. Once that zero folio get created, then you transfer the money. But in this, you definitely need to take a help of your advisor.
Sure. Okay. And so therefore, the onus of transferring that dollar is on you, that conversion rate is on you.
That is like any LRS product.
Got it. So now this is done. Let's assume that you've done that and you've put that minimum amount. You've said that they will deploy it over a period of time. It'll start more or less now, right?
Yeah.
But how does that work and what are the contours of that fund? It's actively managed?
So the brilliant part is that it is not an index fund.
Sure.
And it is not a country specific fund. So it is an index agnostic, it is a geography agnostic, it is sector agnostic. They very clearly define how they're going to look at investing, and that's why I found it very interesting, because most of the global funds are looking at investing in high-tech company, innovation. This fund is looking at a little differently. It is looking at the company in which you and me are using the product of these companies like Puma or like Lilly or like Airbnb or these kind of organizations. So large, well-established player. So instead of big innovation, iteration is a one thing. Longevity over growth and resilience is the kind of thing they're looking at. So they're very well defined that they're looking at 5-6 big market, US, Canada, Europe,
South Korea,
Japan, South Korea, a little bit in China. And they are saying that they will look at investing in a company with minimum $30 billion market cap. That is number one. Number two, 5 to 7% revenue growth, earning growth. 2 to 4% shareholders yield, which is in the form of dividend and buyback. And if you see today in international market, there are some fantastic stocks available at very high dividend yield. For instance, look at Altria, is one of the tobacco manufacturing company in USA, available at less than 10 P multiple and close to 7%, but close to 7% dividend yield in USD.
But this fund is not going to invest in banks or tobacco. That's what I read.
No, I don't know about that. So they may look at. So you have a big gaming company part of this portfolio. So one is that the in my opinion, you're going to get a genuine diversification.
Sure.
Today, suppose if you ask anybody international investing, you would like to own NVIDIA, you would like to own Amazon, you would like to own this and that.
But there are so many you don't know about.
Exactly. So when you look at Amazon, and when you look at Louis Vuitton, or when you look at Brookfield Asset Manager, now for one Amazon, you need to search 100 companies to find one Amazon which made it big. But when you go to these well-established companies, even 50% strike rate makes you a good investor.
Yeah.
So people need to keep that thing in mind.
And 30 to 50 stocks is what they will
30
have.
to 50 stock, they are looking at investing. Sizing is 3 to 5% in individual stocks.
Yeah.
Buying companies at 30 to 40% discount to a fair value. And in the global market, beyond this big tech company, it is available. And if you look at, very interestingly, in US market, you have top 5 tech company, 35% of S&P 500. Top 5 companies are, if you look at tech, top 5 company in USA, they are 5 times bigger than Russell 2000. It's an incredible number.
Yeah.
And if you look at return, these S&P 500 is available at 30 P multiple. If you look at other indices, they're available at 18 P multiple. And if you look at return, in India, small cap has delivered fabulous return compared to Nifty, but in US it is absolutely the other way around.
Yeah.
The Russell 2000 has underperformed by 7% in last 10 years.
Yes.
So I believe there's opportunities beyond the big tech name, in my opinion.
Yeah, the size is something that you just can't wrap your head around. NVIDIA market capitalization would capture the market capitalization of a large part of our markets, right? All of it. NVIDIA
is 65% more. You put the entire Russell 2000, NVIDIA is 165% of that alone. Now the problem with these companies that if one quarter disappointing result,
then it's a significant wealth erosion.
You have challenges.
Yeah. Okay. So then a few more questions arise. Regulatorily, domestic mutual funds are governed by the Securities and Exchange Board of India. There are contours that are defined. For example, a flexi cap fund is open landscape, or a multi-cap fund has 25, 25, 25 in each large, mid and small. How does this work? Who's regulating it?
It is the GIFT City regulator, IFSCI, so International Financial Service Cap.
And how is that going to work?
So it is, they have taken by and large, exactly not regulated by SEBI, but it is, since it is offered by DSP mutual funds, so they will follow the best practices of Indian regulation. So they are not going to take advantage since it's listed in GIFT City, we can't do anything. Absolutely not at all. So by and large, it will be managed as per SEBI regulation. No, not strictly, but in the spirit they're going to follow as far as diversification is concerned, and all these things they'll take into consideration. And they are offering 2 share class, one direct and one normal. And expenses are 1.75% for a normal.
1.5, I thought direct.
25 basis, 1.5 is direct, but 175 is normal if you offer.
And I thought it was 2.5 for
no, regular. That has come down to 175. So they're not offering it 2.5%. So again, it is very competitive as far as pricing is concerned. And third is that it is governed by the GIFT City regulation. So it is a regulated product, it's not an unregulated product.
1.5 and 1.75 to invest in global equities at this juncture with our current context is not too expensive.
It's very good.
Yeah.
And you get the professional fund management team, you get a brand like DSP managing your money, an entity which is always err on the side of caution.
Do you think that more mutual fund houses will contemplate this?
Yes, I think they should, and they should come out with a differentiated product. Then it makes sense. Because if you're using GIFT City to feed into index fund, you can't charge 1.5%.
Okay.
And there are fantastic opportunities available in international market if you go beyond indices.
Now, so that's about the DSP option. I want to also talk about the investing in international equities as a concept. A lot of people tend to want to do this, and now through DSP as well, to manage currency risk. Directionally, over the last 25 years, and even before that, you've seen the decline of the Indian rupee, the depreciation of the Indian rupee. It's anywhere between 2 and 3% on an annual basis. Is that one of the best reasons to invest in international assets?
Interestingly, yes. And which currency will do which way, we don't know.
Yeah.
So today we are talking about Indian INR is holding strong against USD, but not against Euro. Euro has appreciated much more. So there's definitely currency is one part. So second is that Indians send 11 lakh students every year, and that amount is pretty big. So if you look at education, inflation has been 4%, currency depreciation actually has been 3 to 4%. So if you want to send your kids abroad for higher education, 8% is a minimum threshold you should look at. This fund, in my opinion, look at 10 to 12% kind of dollar return in 3 to 5 year period. So if you want to take international exposure, if you want to protect your money against the international currency as well as education costs, then this is one of the product you could look at examining.
Okay, couple more questions. 4 lakh plus rupees, not a small amount. Of course, if somebody's been investing for some time, they will have a sizable corpus. But if you're starting out, what is the kind of exposure that you should be willing to take as a part of your entire portfolio?
So in my opinion, one should look at investing at least 10% into international market because we consume the product of these companies.
Sure.
So today, if you look at consumption pattern, we consume, India does consume, we live in a global village. So I think 10% is a good idea. And 4,30,000 is not a big amount because look at iPhone is 1,50,000 and how many people are buying iPhone?
Yeah, well, that's a strong argument to make.
Yes.
But having said that, overexposure is something to also avoid. So 10% is what you're saying is an ideal. How much is too much?
I think 10%, in my opinion,
is correct.
You can, in this market condition, you can take at 20% as well because Indian markets are very funny. They don't look at Nifty P multiple, which is 2022.
Yeah.
But if you look at average P multiple of 750 companies in India, the average P multiple is 40.
Yes.
At 2026 earning.
Yeah.
So we are not cheap.
No, you're seeing practically every day, Vijay, the margin for error for a company posting results is just wafer thin. If you miss even on one parameter, you're going to get trounced in the market, and that is evident. So anyway, the point is well made. Look for diversification. Hopefully more mutual fund houses will come out and give this option, and hopefully that ticket size also comes down further.
Exactly. So and you also need to keep in mind that what is cheap today? Debt is offering very low because after the interest rate has come down, gold and silvers are at hitting the high every day because of dollar. Real estates are not cheap. Equity markets are not cheap. Indian equity markets are not cheap. I don't think Indian equity markets are going to fall any which way in big time because it is today become frontline on assets and we have huge inflow coming from various sources. So I don't think we see big correction, but from here onward, at least for 2-3 years, to make double-digit return will be a toss in the air.
Yeah, all right. On that note, Vijay, thanks so much as always for taking the time.
My pleasure.
It's all about diversification on today's show. We spoke about investing in international equities, and now I'd like to talk about investing in gold and silver. I'm adding silver into that conversation as well. Navneet Damani, Group Senior Vice President and Head of Commodities Research at Motilal Oswal Financial Services, joining me now. Navneet, thanks so much for taking the time. Let me start by asking about that gap between silver and gold. It's closing because silver has played catch up, and a lot of people who managed to catch the bus early are benefiting.
Well, hi, and the last time I was on the show, the gap was around 100, 102. The gold-silver ratio was getting around those levels. And ever since that, we've seen the ratio skewed by about 20%. And now, as we speak, it's about 82, which was about 102 about 3 months back. So a massive catch-up rally has been witnessed in silver prices along with gold. What predominantly has happened is silver had been a laggard as far as the price trend was concerned since the start of the year, but in the last 2 months have been very interesting, where about $36 where it was trading has now become $39.50 and has inching higher every day by day.
Okay, so what do you think is the strategy on gold right now, Navneet? Because it took a bit of a pause. It ratcheted up very fast, and because of that drop that the dollar had, you saw interest and you saw an increase in gold, or directionally you're expected to see a further increase in gold. Is that the right thesis right now? Would you continue to buy gold even at these levels?
Well, let us take 2 steps back and understand that what has happened in gold. So over the last 2-3 years, we've seen massive central bank buying getting accumulated into gold prices, 21, 22, 23. All through these years, we've had every successive month of central bank buying anywhere between 50 tons to about 70, 80 tons. But that has now reduced to about 5 to 7 tons per month. So that is a very significant drop that we've seen in the last few months because the prices have become very higher. We've had 3 ongoing wars and couple of wars already settled, which typically indicate that massive geopolitical stress was already in the price, which led the prices to move from $2,800 to about $3,500. But some of it is already built into the price, and some of it will continue to have an overhang time and again on the prices over the next few weeks and months as well. Along with that, the US has struggled with massive inflationary concerns. Inflation is now within their control at about 2.5%. But interest rates have not been brought to the fashion or the trend that they would have appreciated. They are having a huge deficit budget bubble, and which is kind of an overhang in their framework, and it is due about in the next 60 days. About $9 trillion worth of debt is due for servicing, which kind of has been already factored into prices. So all in all, I believe major positive factors are kind of discounted in the prices, and the market will need some major fresh triggers from here to move on to significantly higher. In the last 40 years history, there has been not a single year where market has moved beyond 30% in one single year and closed there. We are already at 30% year to date, and I don't see any significant rally or maybe a kind of breakout from these levels. Maybe we can take a pause around these levels, we can consolidate around these levels, but any incremental upside would require some massive trigger, which we are not able to envisage at this point in time.
You know, sports fans and market participants will know not to count out the completely unexpected happening, but with that context, and of course, this could be that 1 year that moves beyond 30%. Who knows? But the chances are not very high. Point well taken, Navneet. So therefore, you're suggesting you hold your horses. You don't deploy a whole hog into gold. But is that the same argument for silver? Do you think that more of a catch-up is on the cards?
Well, a lot of people are living in FOMO at this point in time as far as gold is concerned, and time and again we are receiving massive queries, and people on other channels also posting very significant queries about buying gold at these levels. But I'm a little concerned for retail investor, because something like gold, which has already rallied by 120% in the last 4.5 years, significant upside from here on will be little questionable. There could be about 5-7% upside. I cannot rule that out, but I think you kind of missed out on the cream, and now what you're trading for is the froth, which can or which cannot evaporate. I don't know. So I would rather hold my horses at this point in time, whether investing is gold in concern. If you are sitting on significant profits, some bit of profit taking also can be done. Well, as silver is concerned, you've seen significant catch up in the fag end of 2024, and now in 2025 also. For the last couple of months, we are seeing a catch up in silver. This rally could extend towards $42.5, or typically another 5-7% from here on also. So I wouldn't be surprised to see silver on the domestic front anywhere closer to $125, $130, $130,000 by the end of the year.
Okay. 135,000 by the end of the year. And do you have any levels in mind for gold? You've said that you anticipate a bit of a pause, and so therefore, am I right in assuming that end of the year target would also be more or less where it is right now?
Well, I would wish that it is a little lower than where we are today, maybe around 3,200 or lower is where we would be more than happy to advise that investors once again to start looking out for gold as an investment. But at $3,400 or $3,450, what we are trading today, maybe a $50 upside could be in store. We would again kiss the magical number of 3,500 and then probably start to correct or consolidate. We'll have to see there. But if I have to put my money, I would rather bet on silver from a 6 to 12 month perspective.
Yeah, you know, Navneet, if you were wishing, then I would wish that during the festive season it should fall dramatically. A lot of people go out and buy the gold that they have to, and then it rises again. So if wishes were horses, then everybody would have one. Thanks so much for joining me today. Always a pleasure speaking with you.
Absolutely. Thank you.
All right, let us know what you think. Are you going to hold your horses? I know I've stretched that analogy quite a bit, but what do you think about gold and investing in silver? Let us know in the comment section. And what do you think about the investing in international equity as well? Let us know in the comments, and tell us what you'd like to discuss or what you'd like us to discuss on this particular program. It's been an absolute pleasure bringing it to you. Do stay tuned. Lots more coming up on NDTV Profit.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio.
Thanks for tuning in to Talking Point Unfiltered. And my guest today is Ravi Dharamshi of Value Quest. And the idea of doing the conversation with Ravi, as I told him as well, was to try and understand that how do large investors think of mega trends? And how do they chase these mega trends? How do they diversify their portfolio between 4 or 5 concurrent mega trends that they might be seeing at any given point of time? Ravi, such a pleasure having you here.
Thanks, Neeraj. It's my pleasure to be here.
So, you've always spoken about these mega trends all through the times that we've spoken. Back from 2015-16 when I first started talking to you, when I think we were in the midst of the chemical mega trend, if you will, and the pharma mega trend, you kind of try to identify some of these and then maybe invest early in them and then ride the whole wave till you can. Would that be a good summary of one basic investing style?
So let me try and explain a bit with a little bit more nuance and a little bit more in detail. See, in any particular industry, there are phases, right? You have a tough phase, struggle phase, then you hit that inflection point, you have the great growth phase, and then you reach a kind of a plateau, then again you have a growth phase. Idea for us is to identify which that growth phase is. Everybody can name a lot of mega trends today, but even within a mega trend, you make money only when you are invested in that particular growth phase. And for that, you need to be very clear in your mind what stage that particular mega trend is. And there are markers that we keep track of, whether it is the technology curve, the cost curve, behavioral shifts, regulatory shifts, capital flow, talent flow. All these things tell us which way the wind is blowing, how strong that wind is. Is the mass adoption reached that kind of an inflection phase? Are we going to see a J-curve kind of a growth phase? If yes, then that is the phase in which the maximum value creation tends to happen. And that is what we want to capitalize on. A mega trend can last 20 years, 30 years, 50 years, but the phase of making money might not last that long. That might be a 5, 7, 10-year phase, and that is what we want to capitalize on. I hope that's a small nuance that I had about investing in megatrends.
No, it is a good one, but just trying to probe that a bit. So this would be different for different industries, right? The growth phase, if you will, because I read a chart in your presentation that there is a start phase, a growth phase, and a scale phase, if I'm not wrong. So for every industry, its growth phase would be different.
Absolutely.
In terms of the timing.
Oh yeah, for sure. In terms of the timing, in terms of the duration, in terms of what kind of delta we can see, how much of that value can actually be captured by the participant, everything differs from one trend to another, one industry to another industry. And one trend can spawn many sectors also. It is not restricted to one sector. And for example, we have spoken a lot about energy transition, but it is actually a trend that encompasses 15-20 different sectors. It is not restricted only to solar. Solar might be the biggest, but there is power transmission, there is biofuels, there is nuclear, there is hydrogen. So many other sectors are also part of the energy transition, and not every sector hits that inflection point at the same time. Solar probably has hit that inflection point 3, 4, 5 years back. Nuclear is probably some time away in terms of hitting that inflection point. So you need to be able to identify that inflection point within a mega trend to be able to ride that extraordinary growth phase where the value creation tends to happen.
What are the markers for this growth phase? I mean, are there common markers which people can take kind of?
No, so let's go one by one. I already mentioned them, but let's say technology curve. So for example, lithium-ion battery technology has hit that inflection point 3-4 years back, and it is expanding it is getting adopted very, very quickly. However, there is a competing technology called sodium-ion technology. Now the problem with lithium is that lithium is short in supply, and we might not have it in our country. So then you might still end up being facing the same problems that you face with fossil fuels, that you are at the mercy of some other nations who will, whether they will supply or not, like it is happening in the case of rare earth elements right now. Now, sodium ion is freely available, but that technology has not reached that inflection point because the lithium ion by nature tends to be very dense. Sodium ion is not that dense. If it is not that dense, then you need more of the material to produce the same unit of power. And for that means maybe the size of the battery expands. So if that is the case, then the applications will be different. It might not be applicable in a transportation kind of a thing, but more stationary kind of application might be there for sodium ion. So where are we on the technology curve? Then where are we on the cost curve? It is not only about technology. Nuclear might be a mature technology, or solar, for example, is a 70-year-old technology, but it hit that cost inflection point few years back when China mass adopted it. And once China mass adopted it, the prices crashed. And when prices crashed, that's when the mass adoption everywhere else in the world has begun. So along with the technology, you need to hit that point in cost also. Then regulatory tailwinds need to be in favor. Governments need to be supporting that, no, we are going to adopt this particular technology and we are going to incentivize the user industry to deploy that. Then you need to see the money flowing in, that people deploying the money need to be able to see the IRRs, and if they can see IRR, that's when the money will flow into it, and that's how everybody will plan their capex and their capacities according to the opportunity. So a confluence of a lot of things need to happen for you to say that this particular technology has reached the takeoff stage and now money can be deployed. From a primarily a listed market investor's point of view, investing in something that is 10-20 years out is not a prerogative. We don't invest in something that is loss making or not reached that kind of an inflection point. So we have a very time limited view of these trends. In next 5 years, which are the technologies which will hit that inflection point where we can make good money, and that is how we narrow down our focus.
Got it. Okay. So so okay, let me, so by the way, viewers, we've done a very exhaustive conversation with Ravi and his colleagues on the energy transition piece. So I'm not going to spend so much time on this episode talking about energy transition as much as I thought we'll talk about 2 other themes and 2 other mega trends and try and take Ravi's understanding of those mega trends and want to understand whether the technology markers or other markers, if permissible in these industries, how do they suit or how do they fit in. So let's talk about financials and a particular subset of financials, Ravi. You've been selectively constructive in that bucket. 2025 has marked a new Reserve Bank of India and people are very constructive on NBFCs. But I remember a conversation with you wherein you spoke about how the non-lending financials and particularly the capital marketplace is a mega trend that people should have caught ideally early, but maybe right now, is it too late to latch onto it or is it still in the early cycles?
So definitely we are not at the beginning of it, but at the same time I don't think we are at the end of it also. I think this particular trend has a long way to run and we will see a lot many more players emerging out of here, and case in point, my own firm, which is an AMC, right? We might see a lot of AMCs. We are witnessing one of the first private equity, pure play private equity player filing for DRHP, and they might get listed. Tomorrow there will be other alternate asset managers that will also get listed. And I think this is still the beginning of the trend. But let me dial back. What are the drivers of this trend? Number one, India is getting formalized. India used to have a huge informal economy. With the advent of GST, with the informal sources becoming less and less because we are going towards cashless, less cash economy, let me put it that way. So the avenues for the cash deployment are going down and down, and that means you have to go through the formal channels in terms of borrowing or lending or doing any kind of business transaction. So formalization is underway. Second trend is the financialization is underway. And when I say financialization, essentially India used to be a 35% savings economy. We have dropped to being a 25% savings. 25% of the GDP is what we save, but 25% is also a huge number when you put it in context with some of the developed nations. They barely save. So of that 25% bucket, large part of it used to go towards real estate, gold, nothing against that. But as you create more and more wealth, it's only so much real estate that you can handle and it's only so much gold that you can have. All these, the billionaires and the wealth family offices that have come up in the last 5 years, they are not incrementally going to buy more and more real estate or more and more of gold. So they naturally are gravitating more towards financial assets. Now it might be so that some people might prefer alternate assets, some people might prefer mutual funds, some people might want to invest overseas, but that's fine. Incrementally the money is going more towards the financial assets. So one is the formalization, second is the financialization. So any financial product which is fee based will see a big tailwind over the course of the next 10-20 years. In some way, this is a moment you can compare with the 1980s in US, where in their what is it called, 401k. They were allowed to invest in equities, and that trend caught up and it became bigger and bigger portion of the American public's portfolio. And I think it went from some less than 10% to more than 40-50% kind of a number in a 20-year time horizon. I think we are in year 4 or 5 of this. The way we have seen the money come into equities and particularly in SIPs and mutual fund is, I believe, a beginning of a trend. For a long period, since say 2008 till 2020, almost a 12-13 year period, we did not see that pie grow at all. Markets were more driven by foreign flows rather than by domestic flows. But because of allowing EPFO money, because of more money getting into the financial channels and into the market, now we have enough pools of capital domestically to be the main driver of this whole trend. And I think this is still the beginning. So any business that is in and around the capital markets, it could be bond markets for all you know, but in and around the capital markets should do well over a 10-20 year period. And of course, like any other industry, we will also have our cycles and there will be consolidation also at some point of time. Right now it is all very fragmented because the numbers are large. More and more people. In fact, we are going to witness one of the largest top 3 players in the AMC industry getting listed. If this is the beginning of the trend and the player is still getting listed, I mean, I'm sure the trend is not over. But of course, it doesn't mean you will make money necessarily from the next 1-2 years perspective. You have to have a slightly larger perspective over there is what I feel.
The technology impacting this sector has had if you will, a contrasting impact, right? If it made sourcing capital into the funds for AMCs a lot easier, it made the broking fee for brokers a lot more difficult to earn. So in that sense, technology was different for different players. So within this wide bucket, I heard you say that fee-based would be the winners. Can you elaborate?
So the profit pools tend to shift, right? It's not a stagnant thing. And market share also tends to shift. So you are absolutely right. Even within the broking industry, it's not like the pie has not grown, but we have seen the birth of 2-3 large players, right? Zerodha, Grow, these guys have come and their sizes are way bigger than some of the conventional brokers that we have seen. Some of the conventional brokers have done well because they diversified in terms of services into wealth management, into asset management, into various other things. But had it not been the case, the broking on its own is not anymore a sustainable piece. But that was the core around which most of the players developed. That is now a commoditized piece, and in fact that cheese has already moved. The technology based, if you are offering only execution services, then the tech based no brokerage model are the ones that have taken away all the cheese in the last 5 years, and I think that will remain. So you will have to find out where your value proposition lies, and you will have to keep moving up the curve in terms of your offerings. You diversify your product offering, diversify your geography, and maybe move from, if you can't compete with the technology guy, maybe make it more touch based, more relationship based, more those kind of business models will also exist. It's not like they are going to go out of business. But yes, the kind of profit pools, maximum profit pool is getting created for the tech-based or app-based guys in the broking industry, so to speak.
And what about the asset management side out there? Because there are various kind of fund managers and asset managers and asset management firms coming up. Is that an industry that you reckon will gain larger share of profits because more money comes in to be managed, and thereby would market caps significantly go higher over the course of the next 5, 10, 15 years?
There are 2-3 things that have happened. I mean, we have seen the advent of Jio BlackRock. So that is going to be a seminal moment in the industry, because we are going to witness hyper competitiveness at the base of the pyramid of the thing, wherever very cost conscious assets are going to move, definitely gravitate towards the, we don't know what the offering is going to be exactly, but you can presume that it is going to be very cost competitive. Yes. And if that is the case, the bottom of the pyramid is going to be a challenge. So if you are a mid-sized guy who's looking at this, you might as well, of course, you have to first have the hygiene factor in terms of technology, but at the same time increase your engagement levels with the clients, or expand your network enough so that you can sustain this onslaught. I think from One is the growth in the industry. Second, the competitiveness on the industry is also going to grow. So it is a bit of challenge. The yields will keep dropping. So you have to diversify your product basket, come up with other higher yielding products, and that's where alternates come in. Most of the mutual funds, the yields have been dropping. There is a TER ratio that has been prescribed. So increasing the yields over there is not going to be possible. But the beauty of this particular business model is the scale. 100 people can manage $100 billion for all you know. So your costs are not going to increase that way. But of course, regulator also is very keenly aware of it, and they would want you to pass on the benefit of this operating leverage largely to the public. So that is where the push and pull will happen. But everything said and done, it will still remain very, very profitable industry.
You know, within this large healthcare and pharma bucket, the one which has suddenly caught everybody's imagination is CDMO. And I call it suddenly because for the longest time, Indian CDMO was probably in the built out stage, maybe my presumption, but I would love to know from you. And now suddenly the market feels that, okay, are they ready to start delivering? It's showing in the way the prices are moving as well. But tell us a bit about why do you like CDMO, GLP, etc. within healthcare?
So this CDMO is actually a relatively new term. It's probably last 4 or 5 years that CDMO has come up. I remember way back in 2002, I started off as a pharma analyst working for Rare. And at that point of time, the term we used was CRAMS, Contract Research and Manufacturing Services. Essentially, everybody knows that developing a drug is a very tedious, time-consuming and a very expensive exercise. It takes 8 to 10 years to develop a drug, and it costs anywhere from $600 million to $1.5 billion in terms of a drug to be discovered. And if that is the case, if you can find a partner who can bring your costs down, crunch your timeline, it can come in very, very handy. So the entire pharma value chain has developed in a way that these partners are available, and primarily they are available in countries like India, China, Israel, because that's where most of the scientific talent is available, which is cheap. Only thing that was probably missing, especially in India, was the regulatory tailwind, because we are always scared of subjecting humans to a trial on trial, and there is a possibly a political fallout that can happen out of that. So the political will is not there to allow that clinical trials. But China, on the other hand, has no such consideration. They allowed clinical trials, and we have seen what fantastic transformation has happened in Chinese market over the course of last 10-15 years, where they have gone from being commodity players in the place doing only key starting raw materials and intermediates to now actually discovering new drugs. Did you know there are 160 drugs in the pipeline in anti-obesity in China alone? Forget the US, I'm sure there are other drugs in pipeline in US also. So of course this industry has become so big. GLP-1, the first drug, semaglutide, which is Wegovy, got approved in 2021, and we are in year 2025, and it has become a $25 billion industry. Wegovy plus Mounjaro combined, and of course with the diabetic indications, it's a $25 billion industry in a 4-year time frame. And that $25 billion is slated to go to $100 billion by the turn of the decade. Now, everybody underestimated the kind of demand that can come out of this. So nobody is prepared with the capacity, nobody is prepared. And now suddenly there is a huge pipeline developing of in China, in US, of potentially competing product in the obesity. Now such a large pie, everybody wants a piece of that pie. But coming back to the CDMO question, so what has happened over the course of last 20 years is that the innovator companies have developed that level of comfort with some specific companies in the country. It's not that India specific thing, it is more that particular player. If a company's culture has developed or around cutting corners and doing more for Indian markets, they will find it very difficult to adapt to the innovators' requirements, sticking to the FDA, sticking to very high cost structures, because this is a very, very long gestation game. You need to invest for 5, 7, 10 years before you see the light of the day in terms of first contract. Now, the thing is, there are some few small and mid-sized companies that have gone through that phase of journey and are now reaching that stage where we are seeing some monetization of some of those molecules.
So let's say, I mean, if I look at CDMO companies or CDMO CRO as people like to call it, right? And if there is something else, then please enlighten us. But those market caps between, let's say, 15,000 to 50,000 crores, give or take, right? You think this is still the start of this trend? And can some of the good players, depending on how well they do, become multiple times their size currently?
So let me just put things in context for you.
Yeah.
The kind of profit pools that are available, that we are going to address, is just US pharma market is $1 trillion, out of which there is a potential that one particular category of drugs can become $100 billion by the turn of the century. I'm taking only one example of GLP-1, glucagon-like peptide, essentially anti-obesity drugs. Now, out of that $100 billion, there will be a rest of the world market as well. We will see at least between $5 and $15 billion the size of the rest of the world market. It could be more also, but if that is the size of the market, in context to the size of these players, it's a huge market, and this is the revenue. The margins are such that the profits will also be very high. So if this is a business with high entry barriers, because this is not only about that you have one product and you commercialized it. It is about innovation, it is about technology, it is about relationship, it is about investing in that business for a 7-8 year period of time before you finally see the light of the day in terms of commercialization of products. So a lot of things have gone into it. It's a high entry barrier business and a protected profit pool to that extent. The US generic opportunity has run its course. Over there we are commoditized and there are not going to be too many opportunities over there. Now this is one protected profit pool that is available to Indian players, and they are just getting into it's the start of the game. So from that perspective, I do feel $3 billion to $5-7 billion kind of a market cap is absolutely a small absolute size compared to the kind of opportunity that it can possibly address.
Okay, and Indian companies have finally come of age and will be able to tap into those.
The challenge over there is identifying which player, because you never get to know what is the kind of pipeline, which drug they are working on.
I'm not asking for names.
That's a secret sauce. No, it is a challenge. I think when you see, I think the biggest validation over here is the customer. If a customer has passed you through multiple audits, if a customer has given you pilot scale, and if customer is willing to move to a commercialization level in a particular product, and you see, then you take a look at what is the kind of funnel that they have built of products or the projects that are going into this. That will give you a lot of sense into which are these players which can possibly emerge, that have shown some signs of success and have a huge pipeline available to them. Those are the ones that can emerge as the big winners over the next 5, 7, 10 years.
Okay. Well, this was informative, but before we wrap up, Ravi, just two pieces, viewers. One, we'll be doing a very special show with Ravi and his colleagues on defense in about a month's time from now to try and understand the whole defense opportunity. So we'll spend a whole show on defense. So I'm really looking forward to that. But before we end, you've been at the forefront, to my mind, of identifying and talking about this whole energy transition piece from amongst the investing side, right? Amongst the first ones, if you will, and you've invested in some of those as well. As we wrap up, while we spoke about energy about 3-4 months ago, what is the current status? You reckon that between solar, nuclear, and you always spoke about the NIMBY effect and how nuclear may not stand, or wind, etc., and stuff like that. Does that opportunity size still look as attractive to you?
See, I think the solar penetration in the country is barely at 5, 7, 10%. And I think this will become, in my opinion, between 60 and 70% of the energy basket. So there is absolutely no doubt, and forget India, it's going to be the case world over. And if that is the case, then the trend has just begun. But an absolute physical growth in a particular sector does not necessarily mean stock price return. For that, you need protected profit pools. So if the profit pools are protected and allowed to grow, they will continue to do well. As you can see, China might be ahead of our curve, but Chinese solar stocks have not given positive returns because the motivation over there is not return on capital. The motivation is something else. It is driven more by the state's need to capture market share or wield some kind of a leverage vis-a-vis their trading partners. While over here, it's the capital is being put by the entrepreneur and he is looking to earn return on that capital. And as long as that is the case and the government provides that protection in terms of allowing them to make profits and cash flows so that they can invest in the backward integration and scale up, then we are on absolutely safe. But that is the assumption that we are working with. The trend is there to see, and the new profit pools will keep emerging. There will be other pockets within the sector, within the trend also. So I don't think we are anywhere close to end of that trend. But just one correction, we are not going to talk only about defense. It's defense and aerospace. And a lot of people think aerospace is only defense, but there is a civil side to it as well, commercial side to it. And that is actually a much bigger piece of the pie. Having Boeing and Airbus and all as their customer is a much bigger thing than having Rafale or MOD or Department of Defense as your client. So we will talk more about it when we come to it, but it is an exciting space and we are really excited about it.
Yeah, so fabulous show, Ravi. Thank you so much for this one today. Lovely conversation. And imagine, viewers, what a conversation the defense and the aerospace one promises to be. I look forward to doing that, and I'm sure you all look forward to tuning in for that. But thanks so much for tuning in today, and Ravi, once again, thank you so much.
Thank you so much for having me.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI?
Good evening, you're watching The Big Question. I'm Sanjana. After years of negotiations and several political changes on both sides, the India-UK Free Trade Agreement is finally ready to be signed. The deal aims to double bilateral trade to $120 billion by 2030, eliminate tariffs on key exports, and open up new investment corridors. But this isn't just about trade. It's also about trust. Two nations choosing to deepen ties at a time when the global order is shifting and China's influence is looming large. This agreement is a strategic signal and a statement of intent in a world increasingly defined by economic diplomacy and regional alliances. To unpack what this deal means for exporters, markets, and India's global positioning, and you, we're joined by a diverse and distinguished panel. I have Ambassador Ashok Sajjanhar, former diplomat, someone who's tracked India's foreign policy moves closely and sees this as a positive step forward. I have Gaura Sengupta, Chief Economist at IDFC First Bank, offering a very nuanced view of how this deal fits into India's macroeconomic strategy. Ajay Sahai, Director General and CEO of FIO, representing the Indian export community who have long awaited clarity on tariff relief and market access. Welcome back to NDTV Profit. And Dr. Rajat Kathuria, Dean at Shiv Nadar University, an economist who brings a cautiously optimistic lens to India's FTAs and their long-term impacts. So good evening to everybody. Thank you so much. And before we kick off, a message to our panelists like we do every evening. Request if you can keep your reactions concise and easy for a wider audience to understand, because we'd love for everybody to be part of this discussion. Ambassador Sajjanhar, let's start with the broader lens before we dive into the numbers. How important is this FTA as a geopolitical signal, especially as India looks to forge closer ties with the West while also counterbalancing China's influence?
Yes, thank you very much, Sanjana, for having me on the show. I think it's a very important deal. You know, it's been in the making for the last, 3+ years. You'd recall that when Boris Johnson had come some years ago, he had said that, you know, by Diwali, we'll have this deal ready. But of course, the circumstances today are very, very different from what they were at that time. But that having been said, I think in the bilateral context, India-UK context, in the overall India-EU context, in terms of geoeconomics, in terms of geopolitics, I think this is a very good deal because it's a very comprehensive package. You know, it is not only trade in goods, trade in services, IPRs, large number of other issues. And you know what, I was surprised to find that it is also includes environment, government procurement, and labor. These are some of the issues that, during my negotiations at the WTO, we did not agree. And for many years after that, we did not agree. But the world is changing. India also needs to change. So I'm very happy that this has happened, and particularly, you know, in continuation of our deals with Australia, with UAE, I2U2, the impending deal with the European Union, and of course the big bilateral trade agreement. It's not an FTA, but a mini trade deal with the United States. I think it fits in with all this, because if India wants to become now a $10 trillion economy and beyond that a $30 trillion economy, we need exports are a very important element, a very important segment of that growth story. So this 99% of our tariffs are going to be duty-free in the United Kingdom. And I think it sends out a message to other partners that we are dealing with that India is serious as far as its external trading regime is concerned. Sanjana.
Right. Thanks so much for that perspective. Gaura Sengupta, let's step back to the macroeconomic lens. The headline goal here is to double trade to $120 billion by 2030. So based on current trends, how realistic is that, and what sectors do you think will drive it?
I would stay away from trying to actually question the target. It's good to set targets. Whether we'll be able to achieve it is a combination of a lot of factors. Right now, the export market is very, very volatile. We've got tariff uncertainty unleashed by the current US regime. We are also facing a much slower global economy and a highly volatile environment. But what's good about the agreement, as the previous panelists mentioned, that almost 99% of Indian exports to the UK will become duty-free. India has also reciprocated on majority of its imports from UK, which will be around 90%, which will be duty-free. on a net basis, this will benefit India because we have a net trade surplus with the US, and also the fact that this agreement also covers some parts of the services segment, which is also key. This basically ensures or tells you that this is going to be the way forward. In a way, this is an unintended consequence of the Trump trade war that was unleashed by the US. Is the fact that it has given a sort of a momentum to bilateral trade agreements between countries with, let's say, excluding the US, but you are beginning to see that this year, India has been able to reach agreements bilaterally with many other trading partners, though these agreements were under discussion for years. These are not agreements that started the talks in 2025, which has been the case with the trade agreement with the US, but these agreements have been under discussions, under talks for years. And the good part is that we are going to see more such agreements. It also indicates that the tariff barriers is going to be much lower, especially for the merchandise exports. One, obviously, when you have lower import barriers, it also means your domestic industries will have to compete at a level with our external partners because you're not getting the tariff protection. So your companies will be forced to become more efficient, cost effective, better quality. Also, we'll have to move up the value chain.
Sure.
So all of this increased competition will spur that movement up the global value chain. So in a way, this is the right way to go. Rather than creating barriers, this is the sort of bilateral agreements that India is trying, especially with, let's say, the EU, which is a much larger trading partner for India. For example, UK is around 3% of our total exports. It is a significant partner, but it's 3% of our exports. So this is basically, I would say, a blueprint of what you can expect, and that what we are actually seeing with India's negotiation with other trading partners. What I would like to get to know is how they're going to manage the agriculture segment. In the case of the UK deal, it's not too much of an issue because the UK accounts for just 2% of our total agriculture exports. So it's not that big a problem. But how they tackle the agricultural exports with other countries, that is yet to be seen. That's one of the sticking points that we are hearing could be between the India and the US deal.
Absolutely, absolutely. Definitely a sticking point across the board, and thanks for that very nuanced perspective. Ajay Sahai, you speak to Indian exporters on ground every day. Which sectors do your members expect to benefit the most? Textiles, pharma, gems and jewelry, or are there any new winners in this deal?
In fact, if you look into the profile of India-UK trade, this is dominated by the services, unlike our overall trade, where merchandise sector account for roughly 55%, services 45%. In India-UK trade, services are dominant factor accounting for roughly 58% and goods around 42%. So we are seeing much more growth in exports, and that's why I firmly believe that the target of $120 billion is easily achievable, as in the services it's quite easy to clock the double-digit growth as against the goods exports. But when it comes to the goods exports, probably in the employment-intensive sectors, we will be much gainer, because whether it's footwear, whether it's textile, gems and jewelry, toys, sports goods, marine products, they are contributing a lot in India-UK trade. Though, of course, we are exporting auto component, organic and machinery also. So probably the labor-intensive sectors will gain a lot, but I'm also pinning my hopes on the services, not just on the IT and IT-enabled services, but financial services, professional services like architecture, engineering, as well as the other services. I'm pretty sure that with these kinds of growth in the services, probably the target will be quite easy for India to achieve so far exports are concerned.
Let's bring in Dr. Kathuria and see what he feels about all of this, because coming to the policy and the implementation side, India has signed FTAs in the past, like we just spoke about, with ASEAN, with Japan and more, but many haven't delivered. So what needs to be done differently this time, you would say?
Well, you know, as I think, Sanjana, you hit the nail on the head. It's the execution, it's the implementation of the FTA. And by implementation of an FTA, I don't mean simply an execution of what has been signed into the agreement or will be signed into the agreement, but an execution of an FTA really is the utilization of the FTA. And what we've seen in the past with India, South Korea, India, Japan, India, ASEAN, in the initial stages, the awareness of the existence of the FTA seemed not to be very high, in the sense that exporters and importers were trading, but we were trading outside of the agreement, which means utilization rates of the FTAs were very, very small. And I think that will change now, because this information now is going to be made available to an extent, to a larger extent, and it will be socialized and all. So by implementation, execution, I think one is spreading awareness and getting people to utilize the FTA. Apart from awareness, the other thing that was important in the past was the find of trade facilitation of the exporters and importers, which means, the paperwork, the sort of bureaucracy that existed in order to be able to utilize. And often exporters and importers came back and told us, when I was sort of working intensively in this area, that the compliance requirements were fairly high, and therefore they found it more easy to sort of go to the multilateral route, or to sort of go and trade under the WTO. Of course, I think all that will change, but execution and implementation become important in this context. The other context in which I think this is important, and I think this has been said by the other panelists, is the fact that now India needs FTAs, India needs sort of engagement with the outside world much more than it has ever done in its life as a nation. If you look at the example of China in the 90s, it grew on the back of its export market, but it was much more than that. It became competitive on the back of its export markets. And of course, it attracted FDI. And for India to therefore be able to leverage and to achieve all those targets that it has in mind, $5 trillion economy, FDI targets, foreign exchange targets, etc., it needs to become competitive. And I think the only way India can become competitive, both domestically and outside, is by engaging more with the outside world. No country in the world has become competitive by only relying on its domestic market. You can look at the history of nations, and this is a simple sort of international engagement that brings in competition, that forces companies to become more competitive. Of course, we have to do it in a much more calibrated way, and which is what we've been doing, is this agreement has been a long time in the making. But I think what is important, and why you said that I was cautiously optimistic about this deal, is exactly that, is how much are we going to be able to leverage the agreement. Of course, we'll get more access to UK, we'll get more access to other markets that we are negotiating with, and that's important. I think India needs more access. But I think equally, if not more important, is for India to become more competitive. And I think the only way we can become more competitive is by using these trade agreements with the UK to start with, and then subsequently the EU and the US, etc., to force domestic reform as well. Remember, in the doing business indicators, we are still languishing, and we need to improve. We know that domestic exporters and domestic manufacturers face a lot of problems, face a lot of issues, handicaps. Those need to be addressed. And we've been saying this for 20, 25, 30 years. Why hasn't manufacturing in India picked up in the labor-intensive sectors like China did, like the other countries did? Why hasn't it happened in India? And it needs to happen because the FTAs will eventually speak to competitiveness. And I think competitiveness will eventually speak to the gravest problem that India confronts today, which is employment, productive employment. So I think giving a boost to labor-intensive manufacturing through an FTAs by pursuing domestic reform like textiles, toys, gems, jewelry, leather exports, etc., to make them more productive, to make them more competitive, and therefore to then generate productive employment in these sectors. And that's the way we should utilize these FTAs. So we should not sort of try and hide ourselves like we've done in the past under a wall of tariff barriers, reduce the tariff barriers, be cautious on standards, labor, competition policy, IPR. We should liberalize, but I think we should liberalize slowly in terms of standards, because we can't harmonize everything with the West immediately. But what we can do is we can reduce tariffs almost immediately, phase in tariff reforms, and then try and harmonize labor standards that Ambassador Sajanhar was talking about. Eventually try and make our standards, both in terms of government procurement, in terms of competition policy, in terms of environment, in terms of labor standards, in terms of intellectual property standards. We've often shied away from this, but I think it's time now that we need to also be able to upping some of these standards and using these agreements to try and infuse in some sort of domestic reform in India.
All right. Great point then. I especially like the bit about getting people to utilize the FTA. I think that's something that will definitely speak to everybody watching. I'm going to quickly go across to a ground report by my colleague NDTV's Radhika Iyer. She actually had a chance to speak with Richard Heal, the current chair of the UK-India Business Council, on what this deal means for both countries. So let's quickly listen into that.
It's been a long time in coming. 22, I think, was when the negotiations started, 14 rounds of negotiations. I understand that the treaty has got, or the agreement has got a big thud factor, 2,000 pages. And really, I think it is transformational in relation to the relationship between UK and India. I think that in many ways, people focus on the tariffs, the amount of tariffs that are going to be adjusted, and eventually both for Indian companies and also UK companies are going to be eliminated as well. Projections are that £42 billion worth of trade at the moment in goods and services may double by 2040. So very significant impact. And what this means is not just about tariffs, but also about ease of doing business. The fact that customs and regulations are going to be eased. It's going to be easier for people to move backwards and forwards because of the social agreement for temporary people, temporary visas as well. So a lot of things are in this agreement which are going to make a substantial difference to how we interact as business.
Ambassador, I'm going to address the elephant in the room and just come out and say it. From a long-term competitiveness angle, could this FTA push Indian industry to upgrade quality, standards, and scale? Or do you think that we are at risk of being flooded by UK imports?
Well, let me put it this way, exactly what Rajat said, and what you mentioned, I think, Sanjana, at the beginning, that has been our experience. And, whether it's with ASEAN, whether it's with Japan, Korea, basically we brought down our tariffs, and what we saw was our markets getting flooded. And we were not really able to adequately utilize these agreements. That's why you have this ASEAN-India negotiations going for reform of the India-ASEAN FTA that we've been having. That has not really served us well. Also, as far as the FTA with South Korea. But I think as far as with UK it is concerned, it is. I feel that we have come a long way because we have signed these agreements with the UAE, with Australia, and we have been able to, they have been able to serve us well. And as far as, some of the agricultural sector on quota basis, that we were able to include in our negotiations in our FTA with Australia. So I think we have some experience where some of these FTAs have stood by us, have done us well. The problem, because I was in the ASEAN and I negotiated for the India-ASEAN FTA also, is that when we signed this agreement 2009, 2010, number one, services was not included. Investments were not included in that. It was only goods, and that is, we couldn't get services into that agreement with ASEAN. We were not able to get that, and what Mr. Richard Hill was talking about, movement of Indian professionals. We were not able to get that even into the RCEP, and that is why in 2018-19, we had to move out of RCEP. We decided not to go in with that, although we had been negotiating very sincerely from 2012-2013 onwards. Basically because the tariffs in ASEAN countries were already low. So the advantage that we got in terms of signing the FTA was rather minimal, while the ASEAN countries were able to get access to the Indian market in a big way. And also there has been, from China, the Chinese products coming through the ASEAN into India. So I think all that experience has been with us. We are in a much better shape. So coming to your question, are we going to be flooded by the US, by the UK products from there, goods from there? I don't think so. I think we should be able to stand our own because in terms of what the United Kingdom is offering is, what I hear, what I read is in terms of, the spirits, liquor, whiskey, gin, cosmetics, in terms of cars, high value, high end cars. So I think, there is a niche market for those items. But what we will be able to get access both in goods and services, I think that is going to be pretty significant. And as Rajat very correctly said, competitiveness is the name of the game. And if this FTA and the other FTAs can improve our competitiveness, then of course, in terms of manufacturing, we will move up the ladder. In terms of providing good paying jobs and employment, we'll be able to move up the ladder. And that is the real crying need of the hour. Sanjana.
Okay, all right. Ajay Sahai, I think a key concern has been non-tariff barriers and compliance hurdles in the UK market. Does this deal do enough to ease that burden, do you think, for Indian MSMEs?
I personally feel that any country will provide the national treatment, and whatever regulation applies to the domestic industry, we have to follow those standards to get the market access. I'm not expecting any relaxation to come in that way. The good thing is that Indian industry generally is improving the quality. Government is imposing the quality control order, and it is bringing the results also. So I'm pretty sure that so far as the market access is concerned, it's not that we are not exporting to UK, we are already exporting to UK. All that is required is to definitely exponentially increase our exports. And I don't think these kinds of barrier will come into the way. Though, of course, on the larger issues, whether it's an issue of EUDR or CBAM, whether we are talking about agreement with UK or with EU, probably we have to find a way. But I'm pretty sure that we still have time. So far as the EUDR, ESPR regulations are concerned. On the issue of CBAM, as of now, only the steel and aluminum may be impacted to some extent. So I'm not expecting much to happen on that. Let me just quickly touch the issue about the FTAs also. Please look into that. The FTA which is being signed by the government now are with the complementary economies who are on major market. In the past, we have signed FTA with the countries who are very strong in manufacturing, and therefore we ended in a situation where export growth never kept pace with the import growth. But now, whether it's Australia, whether it's UAE, whether it's NAFTA or with UK, probably we are addressing that concern. And I'm pretty sure that these kinds of deals will provide a great push to India's exports. And in this particular agreement, I'm looking more in accelerating our services exports.
Okay, I'm cognizant that we have only about 3 minutes left. So Gaura, I'm going to quickly get perspective from you. Like we all have been saying, India's services exports, particularly IT, are already doing well in the UK. So do you think now this FTA will tangibly enhance that market access for them, or are we then just reaffirming existing flows?
It will, since we are waiting the details, but since they do facilitate visa applications, movement of people from India to the UK, it will definitely help not just software services, but financial services. I think from the UK, our relationship will be stronger via the financial services. Software services, around 80% is still going to the US. So, and it's very important for our services, which is right now we are generating, overall, India is generating services surplus of $15-16 billion per month post-COVID. Before COVID, we were around $7 billion per month overall. This is so post-COVID, there has been a structural shift on our services, and it's one of the reasons the current account deficit of our country has gone only 0.6% of GDP, which is very, very low. We used to be a more than 2% deficit country, but we have gone below 1%. And that's one of the reasons is services and the fact that post-COVID, we are seeing not just software, there's also professional services, which has seen a sustained pickup, and that's where this agreement can be leveraged. For example, you have your global capability centers, the ease of movement of professionals as well as financial services. I think this is a very, very positive aspect of the agreement. And the fact that for services, it's essential we diversify away from not just concentrated in the US, but also diversify towards other countries. It will make our services exports much more resilient and less linked to, let's say, just the specific performance in one particular country. For example, right now 80% is going to the US. So whenever the US economy starts slowing, we will see a sort of a headwind to our exports. So this sort of diversification, especially in services, is very essential.
All right. Thank you so much to all my panelists, and I'm afraid we've completely run out of time. This deal is a moment of opportunity, but also a test of execution. Tariffs may go down, but expectations will only rise. So as India moves to position itself as a trusted trading partner in a fragmented world, the India-UK FTA is more than a handshake. It's a signal of where we want to go next. Thank you to all of our guests for joining us, and for you joining us every evening. We'll keep tracking this very closely. Thanks for watching.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to this Wednesday edition of the World Report with me, Arjun Samar Mahindra. Kisdain Maxwell, who was convicted of helping financier sexually abuse underage girls and is currently serving a lengthy prison sentence. If Maxwell has information about anyone who has committed crimes against victims, the FBI and the DOJ will hear what she has to say. Deputy Attorney General Todd Blanche said this in a post on social media platform X, adding that President Donald Trump has told us to release all credible evidence. A lawyer for Maxwell has confirmed that there have been discussions with the government. And it's another day and another Donald Trump claim. The US president has now claimed yet again, that he in fact was responsible for calling a stop to the India-Pakistan conflict. Now Trump's comment in fact they come only hours after the Indian envoy clearly stated that it was Pakistan and only Pakistan at whose request did India agree to the ceasefire. Listen in to the bite of the Indian envoy at the UNSC.
Recently, consequent to the gruesome terrorist attack in Pahalgam, Jammu and Kashmir, on 22nd April 2025, that led to the killing of 26 innocent tourists, and based on the Council statement of 25th April, where members of the Security Council underlined the need to hold perpetrators, organizers, financiers, and sponsors of this reprehensible act of terrorism accountable and bring them to justice, India launched Operation Sindoor, targeting terrorist camps in Pakistan and Pakistan-occupied Jammu and Kashmir, which was focused, measured, and non-escalatory in nature. On achieving its primary objectives, a cessation of military activities was directly concluded at the request of Pakistan. Mr. President, I am constrained also to respond to the remarks made by the representative of Pakistan. The Indian subcontinent offers a stark contrast in terms of progress, prosperity, and development models. On the one hand, there is India, which is a mature democracy, a surging economy, and a pluralistic and inclusive society. At the other extreme is Pakistan, steeped in fanaticism and terrorism, and a serial borrower from the IMF.
My colleague Mohammad Ghazali joins us for more on this. Ghazali, you heard the Indian envoy to UNSC there, and we also know about what Trump has again reiterated. Where do you see this headed? And also, we are getting information that the US administration is in fact meeting the Pakistani administration on Friday. Are there any dots here that need to be connected?
See, we know US has its own interests in siding with Pakistan when it comes to strategically start its operations either in Afghanistan or Iran or to counter China. And we also know that how Mr. Trump also harbors its ambitions to have his ambitions to be awarded Nobel Peace Prize. He has been obviously been nominated by two strange politicians, one Asim Munir from Pakistan, and another Benjamin Netanyahu. But India has always maintained its stand that whenever it comes to the dispute or conflict with Kashmir, with Pakistan, it is going to be resolved by the two countries itself, and India doesn't need any mediator. So this was the case even when the Operation Sindoor was launched by India, and Indian envoy made it very clear that it was Pakistan which had requested India sort of to bring down all the hostilities, and there was no role of the United States as being claimed by Mr. Trump, that he sort of gave a bait of trade, that he won't have trade with either India or Pakistan, and that is why the Operation Sindoor came to an end. But that has been categorically rejected by our External Affairs Minister as well as the government of India on multiple occasions, that US had no role to play when it came to bringing down hostilities between the two countries.
Now, shifting gears, but staying with India now, viewers, the strength of the Indian passport dropped 5 spots last year, but this year it has made the largest jump by climbing 8 places. That's correct, it has climbed from the 85th place to the 77th place now. This is according to the Henley Passport Index 2025 that in fact was unveiled on the 22nd of July, that's Tuesday. Now, the report ranks all the world's passports based on the number of destinations their holders can enter without a prior visa. Now, currently, India has visa-free or visa-on-arrival access to 59 destinations across the world. Malaysia, Indonesia, the Maldives, and Thailand are some countries that offer visa-free access to Indian passport holders. Meanwhile, countries like Sri Lanka, Macau, Myanmar, etc. also offer visa on arrival services. Now, the latest insights from the Henry Passport Index reveal a significant transformation in mobility across the globe, also within the Asian countries taking the lead. My colleague Vishal Vivek explains.
This is India's biggest leap as far as the index of the rankings of the global passports are concerned. So India has climbed 8 spots on the global index published by Henley, as you mentioned earlier. Earlier, India was ranked 85th, and now it's moved to the 77th spot. This comes after, a few months ago, India had dropped in the ranking. So this is a welcome news. And this means visa-free entry to 59 countries. So Indians will be able to fly out to as many as 59 countries without the requirement of any visas. And this also means visa on arrival to countries such as Sri Lanka, Macau, and 57 other countries. Both Sri Lanka and Macau are some of the most important tourist destinations in Asia. So that's a shot in the arm for both tourism in those countries and also Indians who want to travel to those countries. So these rankings also showcase that Asia has dominated the global mobility rankings, and also at the same time showed that US and UK powerhouses in their own right, they have dropped in the rankings. So what does this actually mean, these rankings? The first one is that travel freedom. The higher you are in the rankings, the easier is for Indians to go to as many countries. The number of countries you can explore significantly increases. The second one is global mobility. It shows that stronger passport means fewer visa hassles for work, study, or tourism. Then there is national soft power. This is about diplomacy, how India has portrayed itself on the international arena through soft power. That is also signified through these rankings. And lastly, economic opportunity. So ease of doing business, international jobs and investments. These are some of the things that Indians can really benefit as far as these rankings are concerned. And the higher the rankings, the more beneficial it will be for Indians.
Shifting focus to the Middle East, viewers, where Israel's state-owned Khan TV News reported on Tuesday that progress has in fact been made in indirect negotiations between Israel and Hamas over a Gaza ceasefire agreement. Now, this also includes the release of hostages and prisoners as well. According to this report, the talks focus on a key dispute regarding the presence of Israeli forces in the Gaza Strip during the proposed 60-day ceasefire. Over in Washington, President Donald Trump's special envoy, Steve Witkoff, is headed to the Middle East as the U.S. tries once again to reach a ceasefire deal between Israel and Hamas. Now, a breakthrough that has eluded the administration for months as conditions only have worsened in Gaza. Now, Tammy Bruce, the State Department spokesperson, told reporters on Tuesday that Witkoff was going to the region with a strong hope that the U.S. can in fact deliver a ceasefire deal as well as find a new humanitarian corridor for aid distribution. Here's what he said.
What the Secretary indicated was, again, an aid corridor that needs to be set up, that both sides have agreed to, that the humanitarian situation, of course, has been a main focus of what our concern has been, obviously. And so I'm hoping, as I've mentioned to some of you earlier in the day in our conversation, that each day has the potential to have this be better.
Staying with the Middle East now, viewers, Syria is reeling from a new round of sectarian violence in the south, which again, in fact, has threatened to upend the country's very fragile recovery from nearly 14 years of dragging civil war. Footage obtained by AP shows dozens of bodies still lying on the ground at the Sweda National Hospital following days of deadly clashes between the Druze and the Bedouins, and later with Syrian security forces in the city as well. The head of the Syrian Arab Red Crescent, Mohammad Hazim Bakleh, told AP on Tuesday that the situation in the city of Sweda is grim. It still remains grim, particularly in the main hospital, where some 300 bodies have piled up during the clashes. The city had, in fact, been almost entirely cut off from supplies during the almost 2 weeks long fighting. Shifting focus to the other war, where Russia said on Tuesday its forces took control of another settlement in Ukraine's Donetsk region, while Ukraine on the same day reported 176 clashes along the front line. Russia's Ministry of Defense said in its latest briefing that its forces had seized a residential area in Donetsk region over the past 24 hours and destroyed 10 Ukrainian electronic warfare stations and 13 ammunition depots. Meanwhile, on the same day, the General Staff of the Ukrainian Armed Forces said in its battlefield updates that 176 clashes had in fact occurred along the front lines in the past 24 hours. Also, Ukrainian forces targeted concentrations of Russian personnel, weapons, military equipment, and missile artillery units, and they continue to engage Russian troops in the northern Kursk direction, the Ukrainian side has said in a statement. Staying with the Russia-Ukraine conflict, where the new round of peace talks between Russia and Ukraine due to take place in Istanbul on Wednesday are just a performance for one spectator for Trump, according to Ukrainian analysts. Now, Zelensky has meanwhile announced that the Secretary of the National Security and Defense Council, Rustem Umerov, will lead the Ukrainian delegation at the talks. They will be focused on prisoner exchanges, deported children, and possibly a ceasefire. Meanwhile, Ukrainian experts opine that the focus of the talks to fall on more prisoner exchanges as priority for Ukraine. Meanwhile, US President Donald Trump has suggested that he might visit China in quote-unquote not too distant future. Now, this comes following an invite from Xi Jinping as the superpowers gear up for fresh trade talks. Meanwhile, Washington has softened its approach towards Beijing in recent weeks. The US Treasury Secretary also said that negotiations in Stockholm next week will likely be aimed at extending a US-China trade truce beyond the 12th of August. Trump had in fact adopted a more conciliatory tone towards Beijing to secure a trade deal and an in-person summit with Xi, which analysts predict could take place during the APEC summit in South Korea as soon as this fall. Meanwhile, Trump's toned-down approach, though, has ranked some China hawks in Washington. Staying with the US, where Coca-Cola has said it plans to launch a beverage for the US market with cane sugar instead of high fructose corn syrup. Now, the announcement, which comes as the company reports second quarter earnings, follows a social media post by none other than President Donald Trump last week, claiming that he had persuaded the company to use real cane sugar in its US cola. Now, the company, or Coke, said the new product will use cane sugar produced in the US and will expand its product range as well. Over in Europe, Athens residents and tourists crowded beaches on Tuesday, as you see that on your screens right now. This as temperatures crept up across the country. Elsewhere in Greece, a major forest fire has also broken out, and authorities have in fact ordered several villages near Kornet, the village west of Athens, to in fact evacuate. There are no immediate reports of any casualties. Meanwhile, weather conditions are particularly tough for the 180 firefighters at the scene. Meanwhile, an intense and prolonged heat wave has been forecast in the upcoming days, with temperatures expected to reach up to 44 degrees Celsius in some parts of the Western European country. Now, this is according to the National Observatory of Athens. Here's more.
Αλλά εδώ με πολλά νερά, πολλά υγρά, τα σώσαμε λιγάκι δηλαδή και η βουτία στη θάλασσα είναι το καλύτερο. Για μένα τουλάχιστον είναι το καλύτερο και το συνιστώ σε όλους.
Now, news from the world of business, where US President Donald Trump says the US, or Washington in this case, has rather agreed to a massive trade deal with Japan, one of the country's largest trading partners. Now, the plan would result in Japan investing around $550 billion into the US and paying a 15% reciprocal tariff, Trump said in a post on social media. Now, he also added that Japan would in fact open its economy to the US goods, including cars, trucks, rice, and even certain agri products. Meanwhile, Japan's chief trade negotiator, Raviosi Akizawa, has said in a Facebook post that he had visited the White House with the hashtag mission accomplished. Across the border, with an August 1st deadline looming, Canadian Prime Minister Mark Carney has called trade negotiations with Washington complex and has said we will agree to a deal if there's one on the table that is in the best interest of Canadians. Now, Carney spoke to reporters after a meeting with provincial premiers in Ontario, saying we'll use all the time necessary and agree to something that's in fact in the interest of Canadians if that's available. Here's more.
Our phone is ringing off the hook from other countries who want to do more with Canada. I've had over 80 bilaterals with world leaders since I became Prime Minister. A number of those premiers have been on major trade missions. We have other things to do, and so we're going to focus more and more of our time on those positive aspects going forward.
The US Olympic and Paralympic Committee has effectively barred transgender women from competing in women's sports, telling the federations overseeing swimming, athletics and other sports it has an obligation to comply with an executive order issued by President Donald Trump. Now, viewers, he was the Prince of Darkness, but Ozzy Osbourne showed us the light with hard chaos and an unforgettable sound. Now, the godfather of heavy metal has taken his final bow. We leave you with this look back at the man behind the music.
Mama, I'm coming home. The words that once echoed across arenas now echo in our hearts as the world says goodbye to Ozzy Osbourne. The Prince of Darkness, the godfather of heavy metal, and an unlikely icon of heart, humor and grit, who passed away on July 22nd at the age of 76. Just weeks ago, Ozzy sat beneath a back-top throne in Birmingham, surrounded by the thunder of 40,000 fans. It was his final bow, fittingly titled Back to the Beginning. And oh, how far he came. From biting bats to breaking barriers, turning pain into poetry and noise into legacy. I'm going off the rails on a crazy train, he once howled, and wasn't he ever? But behind the screams and spectacle was a man who embraced darkness to show us the light. Struggling with Parkinson's, nearly paralyzed, Ozzy still gave us everything in those final 9 songs, including Iron Man, Mr. Crowley, and the anthem of rebellion, Paranoid. More than a musician, Ozzy was a mirror, reflecting our wildest selves, our broken selves, our hope. He reminded generations that maybe it's not too late to learn how to love and forget how to hate. His last Instagram post was also a nod to beginnings. A silent goodbye from a man who was never silent and always unforgettable. So tonight, we don't mourn just a rock star. We remember a fighter, a father, a flawed and fearless legend. And as his music plays on, we take this moment to ask, what are we doing with the time we have? Because if Ozzy taught us anything, it's this. You can't kill rock and roll. It's here to stay. And now as he joins the great gig in the sky, Mama is coming home.
Nice, dear.
हेलो
हेलो
बोलिए मैडम डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए ये तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations?
That our audience is ditching the sofas finally for theatre seats as well, and is the Sayyara fever real? Now it's minted almost 100 crores on day 5. What are some of the movie trends as well as some of the other aspects for that to watch out for? My colleague Aishwarya is now joining in with Sanjeev Kumar Vijli, who is the Executive Director at PVR Inox. Aishwarya.
Well, this film has touched a nerve, it struck a chord. The reactions and expressions of fans have been going through the roof. Some of them have been crying, carrying even their IVs to the theatres. And very, very heavy emotions coming through from Sayyara. The poster, big poster is right behind us. We're at director's cut, and joining us on this live is Mr. Sanjeev Kumar Bijli. Thank you so much for joining us here, first off. At the counter, I was just asking one of your colleagues here, and you know, she's told me the whole film booking that has been done for the day, at least it's midweek Wednesday, and everything is houseful.
Yes, yeah.
Right?
Yeah.
But first impressions of Sayyara and the freedom of expression that's coming through from the audience and fans of this film, what are your first few thoughts?
Oh, it's incredible. Actually, I think it's a phenomena. We've been in this business for like 25 years and we haven't seen such hysteria that has surrounded the film, especially for debutants. You know, I mean, these kind of hysteria normally comes for established actors when they come out of film after a long time. But to new faces and making such waves across the country is just incredible and something we haven't seen in a long time. Of course, my heartiest congratulations to the Yash Raj films, Adi Chopra, Mohit Suri, and of course his brilliant, talented two new actors, Ahan Pandey and Aneet Pada, for just like making this movie not just a success, but a total phenomena.
In fact, while we were in a conversation earlier, Sanjeev did tell me that he did have a little bit of a tear at the side of his eye. Emotional point for you, and what do you think Sayyara did right to get this kind of audience, fan base and kind of, so much love for this film?
Well, guilty as charged, and I'm exposing my vulnerability and emotional quotient here. But of course, I was teary-eyed for a large part of the film, and I think it all goes down to the writing, the way the film was written. The direction by Mohit Suri and the exceptional visceral performances by these two new leads. And the music, of course, which really in our films also just uplifts the emotions and accentuates it even more. I mean, all of that put together was something that's resonated with not just the Gen Z, but even people of my age and demographics, and made us really sit up and notice the kind of film that's been made. and the kind of emotional roller coaster that the film takes you through. Yeah.
Let's also talk about footfalls and some of the numbers. Where does it stand at? I believe as of yesterday, it had crossed about 100 crore or so. For PVR, what are the footfalls so far? How has it been received so far?
Oh, brilliantly. I mean, it's only, the fourth day now, fourth or fifth day, and I think the box office numbers, all India I'm aware of, not the overseas numbers right now, and it's about 165 crores already, which is a phenomenal number. And we've done about more than 50-60 lakh admissions since Friday, which is just incredible, yeah.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Benchmark indices surge ahead of broader market peers during the session. The Nifty 50 rallied 0.6%, fueled by strong performances in the financials and auto sectors. Infosys Q1 profit and revenue meet estimates. Large deal TCV comes in at $3.8 billion. Company revises FY26 guidance to 1 to 3%. Tata Consumers Q1 profit grows by 15% but misses estimates. Coffee revenue sees strong growth of 67%. India business growth enabled by strong growth in tea and salt. India smartphone manufacturers hopeful of easing of informal Chinese sanctions as India resumes issuance of tourist visas to China's tourists from 24th of July. Smartphone makers see this as a positive sign for business visa issuance as well. India likely to sign the free trade agreement with the United Kingdom during Prime Minister Modi's visit to the UK. 3-year exemption from social security contributions for Indian professionals temporarily working in the UK and their employers seen to be a key win. In a big relief for SpiceJet, Supreme Court dismisses the plea of Maroon-owned KAL Airways seeking 1,300 crore rupees in damages, upholds Delhi High Court's order dismissing the claim against SpiceJet. Myntra comes under ED's lens for alleged FVMA violations. Complaint filed for FDI breach of over 1,600 crore rupees. Hello and welcome. Good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will be bringing you the latest on markets as well as national and international news, so stay tuned. Markets closed higher for the day as the benchmark outperformed the mid and small cap indices. Nifty gained on the back of gains in financials as well as auto sector. Most sectors, however, ended higher, but Nifty IT snapped its 2-day losing streak. Nifty Realty fell more than 2% for the day, emerging as a top losing sector. And on to an NDTV Profit exclusive, viewers. SEBI is likely to take action against MCX after a trading halt triggered concern among investors. The regulator is expected to seek a detailed report and may impose penalties based on the severity of the glitch. My colleague Charu now joins in with more details on this. Charu, over to you.
Hi, so as we all know that for over an hour during the market open hours, the Commodity Exchange of India, NCX, was facing some technical glitches because of which trading on it was halted. Now, as per several sources that NDTV Profit spoke to, an action could follow from the market regulator, Securities and Exchange Board of India as well. Now, this is not something that is going to happen immediately because as per a 2024 circular that is supposed to deal with these issues, gives a 90-day time to the exchange to come out with a report that they will submit to SEBI. SEBI is going to analyze that report and then decide based on the gravity and severity what kind of penalty can be imposed. So if it was something that is, leading to a technical glitch for a few minutes only, no severe action would have actually taken place. But in this particular issue, the glitch had been persisting for a few days, and then there were also some delays in, sending out the margin or the settlement report during the morning time where it was usually supposed to be sent. There was also an error found in one of these settlement files that was sent to commodities brokers or the trading members of the exchange, and that is why there is a likelihood of a SEBI action on this particular case. While the regulator has to wait for the report, there is a likelihood of an investigation as per several officials that NDTV Profit has spoken to.
Right, Charu. Thank you so much for bringing us those details in the case. Now, bringing back your focus to an important voice on the markets, Nitin Bhasin of Ambit Capital says foreign investors are currently cautious on India, mainly because they view Indian stocks as overvalued. But he is not overly concerned. He believes foreign investment inflows into India remains strong and positive.
If you look at the Nifty X banks or Nifty 100 X banks, and what you could see is the whole market at the large caps are relatively expensive. But markets don't move to valuations. Markets also move to what is the expectations and how are the market results coming out or numbers panning out to the expectations. And clearly, one has to follow what's happening on the upgrade or the downgrade cycle. with sectors, what's happening to the upgrade and the downgrade cycle. So clearly what we are witnessing right now is though banks may be a relatively inexpensive, performed very well in the last 1 year, but they are going through their own June quarter, perhaps even September quarter to some extent, sort of a moderation in credit growth, a continued pressure on NIM or expected pressure on NIM, and hence margin pressures possibly over there. So I would say mid cap, small cap appear relatively more expensive to large caps. Overall, the whole market to its own history is expensive, but the flows in India, remember we have keep on talking about this in the past, the flows in India are strong, which is domestic. Hence, that is the elevated new price earnings multiple of India.
And let's now look at the big earning results of the day. Infosys' Q1 profit met estimates, and IT major also revised its FY26 guidance. Let's now go across to my colleague Puneet, who closely tracks the space for a detailed analysis on this.
So revenue was definitely coming at a very strong click, almost 42,279 crores. It's a 3.3% growth compared to the previous quarter, and that's much above the estimate of about a 2% gain that was expected. So it's definitely a beat there in terms of the EBIT as well. The margins have come in at 21%. Estimates were baking in roughly about 20.8% as well. So again, a number that's bang in line with the NDTV profit estimate. In terms of profits, it's coming at 6,900 crores. It's a fall of 1.6%, but we were going with a larger fall of about 2.5% to 3% on Infosys. So at least on these 3 to 4 broad financial numbers, it is a beat, and Infosys has been the only large cap IT company to report positive constant currency growth. So they've come out with a constant currency growth of 2.6%. Just for viewers' perspective, constant currency removes any kind of fluctuations across different currencies that these IT companies handle in, which could be the dollar or the pound amongst other currencies. So that has been the highest at 2.6% for Infosys in this particular quarter. There are also other two key updates. One is of course of the guidance, as you rightly mentioned. It was 0 to 3% for FY26. Infosys has increased the lower end of the guidance now, so it's now 1 to 3%. So anticipating at least 1% growth. Most of the brokerages were going with this number, but there was some that also expected the upper end of the guidance to be raised to 4%. So 1 to 4% could be one of the key reasons, and we'll see if the management speaks about that. And finally, in terms of deal wins, it's a huge surprise: $3.8 billion in deal wins compared to the previous quarter, which was around $2.5 billion. It's a big jump for the company, and they've had 2 renewals, a couple of other deal wins in this particular quarter that's boosted that. So definitely on the 4 numbers, on guidance, on deal wins, all 3 numbers in line as well as beating estimates for Infosys in Q1 of FY26.
Right, Puneet, thanks so much for that. And after Infosys viewers reported its Q1 results, Salil Parekh and Jayesh Sangrajka of Infosys discussed the company's inorganic growth and the revised guidance. Let's listen in.
We've seen very strong work that we've done on AI with agents, and we see that. And we also see the economy globally, both in Europe, US, going through changes. So keeping that in mind, we've narrowed the guidance and increased the lower end. On the inorganic part, I'll let Jayesh mention how much of it is inorganic.
Yeah, so inorganic in this quarter has been around 40 basis points. Within our 2.6% that we reported. And for the full year also, it will be similar number.
And US President Donald Trump announced revised tariffs for Japan, the Philippines, and Indonesia. Tariffs on Japanese imports will drop to 15% from 25%, alongside Japan's commitment to invest $550 billion in the US, a move praised by Japanese PM Ishiba as strengthening bilateral ties. Following the news, Japan's Topix index rose 2%. The Philippines' tariff on exports to the US was cut to 19% from 32% earlier, following a recent White House meeting between Trump and President Marcos Jr. Indonesia's tariff was slightly reduced from 20% to 19%. And B. Riley's Freeman, who spoke to us earlier today, believes that the US government has been diligently working to finalize deals with various countries before the impending tariff deadline. He considers the agreement reached with Japan a significant indicator of positive momentum.
The volatility of various tariff rates is very positive, not only for the U.S., but for the global economies, because we saw the kind of disruption when the original tariff tantrum was announced several months ago. Yeah, I think the U.S. government's been working very hard to try to close deals by this August 1st deadline, because it's not helpful and it doesn't look good for the administration to have not achieved many deals. So I guess we could look at the Japan deal and hope that this is a sign of some momentum, which would obviously, should a deal be cut with other emerging markets countries, that would be very positive.
And let's now go across to my colleague Rishabh, who would help us break down the current developments and their impact across Asia. Hi Rishabh, thank you so much for joining in. Tell us, what could the influence of these revised tariff rates be on Asia particularly?
Right, Malika. Trump has set out a set of new tariffs aimed at Southeast Asian countries. Remember, all of this comes right before the August 1st deadline and in the run-up to August 1st, there was supposed to be a bunch of deals coming in. That's what Commerce Secretary Howard Lutnick had been saying, Treasury Secretary Bessent had been saying, as well as Trump himself, all of them proclaiming a bunch of deals coming in. But we finally have three major deals come in: Japan, Philippines, and Indonesia. Japan, a major point of the Japan deal is the fact that sectoral tariffs have been reduced here, and given that Japan is a major producer of automobiles, Trump has decided to lower those tariffs down from about 27.5% to 15%. So that is a major win for Tokyo's auto giants. In that context, we also had Toyota go up by about 11% in trading, Mazda go up about 17% in trading, and Japan's overall tariffs are also down to about 15%. Coming to Indonesia, they've settled for a 19% tariff, down from an earlier threatened 32%. And in return, Indonesia has cut almost all tariffs on US goods. Similarly, for Philippines, a 19% tariff, which is just under the 20% threat that they received. What this means for India is that this is a key tracking and a monitoring factor for India, by the way, given that these are prominent manufacturing economies that are directly in competition with India for various labor-intensive goods like leather, textiles. And so it is a very, very key monitoring factor in terms of the tariff rate that India will receive now. We have no clarity what that bracket might look like. We have no idea what sort of market access India is willing to give as part of this trade deal. So talks are on, and we will continue tracking that ahead of this crucial August 1st deadline.
Right, Rishabh. Speaking of India, actually, India's cabinet has given its approval to a comprehensive free trade agreement with the United Kingdom, marking a significant step in strengthening bilateral economic relations between the two nations. Now, this agreement, which encompasses a broad spectrum of economic as well as trade components, is scheduled to be officially signed during Prime Minister Narendra Modi's visit to London. Let's take a look. And Rishabh, by the way, could you give us more information on this? What are you picking up? And can you give us the latest developments on the India-UK FTA, please?
Right, Malika, what we know is that this is set for July 24th signing. Prime Minister Modi is currently on his way to London as we speak. He will be meeting with the UK Prime Minister Keir Starmer. What we know is that Commerce Minister Piyush Goyal will also be in attendance. It is under his ministership that we're seeing the UK FTA getting concluded after about 2 years of negotiations back to back. What's also important to remember is that the FTA will not go into operationalization effectively. Like you said, the cabinet has approved it. India's cabinet has approved it, but the British Parliament has not approved it yet. So only once they approve it, it will go into operationalization, and that is expected to be about a year. What we know of this pact is that tariffs on 99% of Indian exports will be eliminated. This includes everything from textiles to auto parts to marine produce. What we also know is that tariff on UK imports like whiskey, gin, as well as auto parts will fall. And these are under a quota, and these are major imports that India does from the UK. What we also know is that furniture, cosmetics, medical devices, lamb, chocolates, all of these will also see tariff cuts. And a very important part of this FTA is the social security agreement that is also done. And this is a 3-year temporary sort of a relief for those Indian professionals that go and settle down in the UK for a temporary period of up to 3 years. So they will get some sort of a monetary benefit as well off of this. Again, this deal, very crucial, aims to double bilateral trade to about 120 billion pounds by 2030. So that is what we expect from tomorrow, a formal signing and a formal announcement of the UK FTA closure with the prime ministers of the both countries.
Right, Rishabh. Thanks for that. And viewers, let's also get you an NDTV Profit exclusive. Smartphone makers are optimistic as government plans to resume Chinese tourist visas. Sources told NDTV Profit that they are hopeful that China will ease informal sanctions. And my colleague Rishabh again gives us more details on the story. Rishabh, what are you picking up on this front?
Right, Malika, this is a story coming in from the electronic sector of India. What we're seeing is that with China set to India set to ease tourist visas for Chinese starting tomorrow. What is expected is that now business visa issuance will also pick up. Now, what is important is that India, New Delhi and Beijing were planning a lot of direct connectivity, but obviously now with a tourist visa clarity, direct flights and direct connectivity will really receive a boost. What we're seeing right now is that India does issue business visas to Chinese, but that is only if Indian companies here are covered under a PLI scheme, and that is what really is the factor currently of getting business visas for Chinese, but that is now set to liberalize in some sense. What we're also seeing is that the issue of that talent recall that we saw come in the case of Foxconn, that was also seen as very limited in scope. What we're also seeing is the fact that that entire staff being recalled is expected to be somewhere around 500 people and not more than that. So it is seen as tactical in that sense.
Right, Rishabh. We'll come back to you. But in the interim, viewers, there's been a major relief for SpiceJet from the Supreme Court. The top court has dismissed a plea by Sun TV owner Kalanidhi Maran and KAL Airways seeking damages of 1,300 crore rupees from SpiceJet. This brings an end to a long legal battle that began a decade ago when Maran sold the airline to Ajay Singh. Nupur Dogra has the details of the verdict.
In a major setback to Kalanidhi Maran and KAL Airways, the Supreme Court has rejected their appeal against the Delhi High Court decision where it had dismissed the 1,300 crore claim in damages against SpiceJet. Now, the core issue of the dispute was between Kalanidhi Maran and SpiceJet, specifically regarding the non-issuance of warrants after the transfer of ownership of SpiceJet to Ajay Singh. Now, both the parties have been embroiled in a legal battle over the years, but today the Supreme Court verdict rejecting Kalanidhi Maran's appeal against the Delhi High Court order seems to have brought in a conclusion to this prolonged legal battle. The Supreme Court has today rejected the appeal by Kalanidhi Maran seeking damages worth over 1,300 crores. Now, implication of this decision of the Supreme Court is that the demand, the appeal by Kalanidhi Shriti Maran for additional damages beyond what the initial arbitral award had granted. It has been rejected by the top court today.
Right, and the Enforcement Directorate has intensified its crackdown on alleged foreign direct investment violations in the e-commerce sector. The ED's Bengaluru office has filed a formal complaint against Myntra and its associated entities alleging contraventions of approximately 1,600 crore rupees. My colleague Rishabh again joins us with more details on this. Rishabh, what is the exact update?
Right, Malika, I'll tell you a bit about this case. It is what it looks like prima facie is it is a violation of India's FDI norms. Now, India's FDI norms are built in such a way that it is much easier for a wholesale business to receive money rather than a retail business. So that is what most companies register as. In this case, Myntra, instead of operating as a wholesale business, it chose to only sell all of its merchandise to a group company that belongs to its own group, and then that group company found involved in retail trading. So it is a clear contravention of that norm. And what we're seeing is that only about 25%. Myntra could only sell about 25% of its merchandise to its group company, but it went ahead and sold about 100%. So all of its merchandise to its group company, and so thereby it breached that 25% limit. It sold 100% of its stock to its group company, and that is the exact contravention that we've seen. According to the Enforcement Directorate, there will be legal proceedings going ahead, and we'll be tracking those very keenly as well.
Right, Rishabh. Thank you so much for bringing all those important stories to our viewers. And moving on, in a setback for Turkish firm Celebi, the Bombay High Court has lifted the stay that had blocked Mumbai Airport's operator from finalizing new tenders. The move clears the way for fresh contracts after Celebi's challenge to its termination failed in court. For more details on this, let's go across to my colleague Charu joining in. And as I mentioned before, this case is a setback for Turkish firm Celebi as the Bombay High Court, I'm repeating, lifted the stay that had blocked Mumbai Airport's operator from finalizing new tenders. The update is that the move clears the way for fresh contracts after Celebi's challenge to its termination failed in the court. Now, a couple of things to note here is that the court has recorded no grounds to delay tenders. Delhi High Court had earlier dismissed a similar plea, and Celebi has been barred from airport access. And now to get us more clarity on this case, I'm being joined by Charu. Hi Charu, can you hear me now?
Yes, so Turkish-based Celebi, an aviation-related firm that has been operating in India for quite a while now, has been facing a lot of setbacks since Operation Sindoor. So these were the times when India was facing a lot of geopolitical tensions with its neighboring country, Pakistan, and Turkey as a nation had come out in the support of the neighboring country. And during those geopolitical tensions, the airport authorities, within the country had decided to not let Celebi continue with their ground and bridge services within the Indian airports, for example, Mumbai Airport Authority Limited, as well as in Delhi. And that is why the firm had gone up to the Delhi High Court as well as the Bombay High Court. Previously, Bombay High Court had given relief to the firm by staying Bombay Airport Authority's decision to, go for new tenders to provide these services. However, that relief has now been taken away. And in a setback, Bombay High Court has now been allowed to sort of go ahead with, their motives to, sort of release new tenders and get some new player to provide these services. So Celebi does not really have a remedy for now. Let's see how further developments roll out, because a more detailed order is awaited from the High Court as well.
Right, Charu, thank you so much for explaining that to us. And we at NDTV Profit viewers are striving towards spreading consumer awareness on various aspects of investor protection and education under our campaign, Spot the Scam. Here's OpenAI's Sam Altman talking about how banks can defend themselves against AI-facilitated fraud and impersonation. While speaking at US Federal Reserve's event, he called current technologies fully defeated by AI. He pointed towards an imminent fraud crisis unless banks upgrade their security. Let's listen in.
Speaking of personal information and those kinds of things, I might just pull a thread on that. And you may not know much about this, but this is something that the banking industry is really, really interested in right now is fraud and the impersonating individuals to facilitate fraud. Are there ways that we could mitigate that kind of activity, or that we should safeguard if there is the use of AI or identification of that type of impersonation?
Great question. I am very nervous about this. A thing that terrifies me is apparently there are still some financial institutions that will accept a voice print as authentication for you to like move a lot of money or do something else. You say a challenge phrase and they just do it. That is a crazy thing to still be doing. Like AI has fully defeated that. AI has fully defeated most of the ways that people authenticate currently, other than like passwords, but all of these like fancy, take a selfie and wave or do your voice or whatever. I am very nervous that we have a significant impending fraud crisis because of this.
And let's give you an insight into a very bizarre case that has caught attention. 2 Rolls-Royce cars have been fined in Bengaluru by RTO officials for non-payment of road tax in Karnataka. One vehicle is registered in the name of actor Amitabh Bachchan, a Rolls-Royce Phantom, and the other in the name of actor Amir Khan, a Rolls-Royce Ghost. According to officials, both vehicles were being used by a businessman and politician known as KGF Babu. RTO officials conducted a raid this morning after confirming that the cars had been operating in the state for over a year without the required road tax payment. The department has collected fines amounting to approximately 18 to 19 lakh rupees. Officials also stated that the vehicles had not yet been officially transferred to KGF Babu, as a no objection certificate from the Maharashtra RTO was not obtained. And with that, viewers, it's a wrap on Profit 360, but do stay tuned as we have Ask Profit lined up for you right on the other side, so stay tuned.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers.
Hello and welcome. You're watching Ask Profit on NDTV Profit and I'm your host Himakshi Bahugna. Along the next half an hour, I'll be taking up all your stock related queries. So don't forget to WhatsApp us or call us directly. The numbers are there flashing on your screens right now, viewers. And on the show, I'm joined by Vaibhav Vidwani on the fundamentals, and our technical guest will be joining us very shortly. So welcome to the show, Vaibhav.
Thank you.
Yes, so let's get started with the queries. So first up, we have a caller from Gwalior. Okay, so Jai Kishan is joining us on the phone line at the start itself. So Jai Kishan, good evening.
हाँ जी, हाँ जी, हाँ जी।
जी प्लीज बताइए क्या समस्या है आपकी?
मैम, कैन आई स्पीक इन हिंदी?
या बिल्कुल।
हाँ मैडम, मैंने ना स्पंदना स्फूर्ति लिए हुए हैं 1000 से 600 रुपए में।
ओके।
अभी वो 300 के आसपास आ रहा है, आधा हो गया है।
हाँ।
और राइट इशू भी लेके आया है वो 225 में।
तो जय किशन जी, आपने कब खरीदे ये शेयर्स?
ये हो गया 1 साल हो गया, 1 साल।
1 साल हो गया और आपने 1 साल में मैं देख पा रही हूँ कि आप 3 लाख करीबन के नुकसान पे हैं।
हाँ जी, हाँ जी।
हाँ जी, ठीक है। तो मैं आपकी जो डाउट है वो मैं क्लियर करती हूँ। वैभव, you know, Spandana Spurti is the counter and he has made some significant losses there. So I would request you to please answer in Hindi so that he's able to understand what advice you have for him.
ओके, सो अगर हम देखें तो जो स्पंदना है ये एक माइक्रो फाइनेंसिंग कंपनी है एंड अभी भी जो मतलब पहले एक्सपेक्टेशंस थी कि ये वाले क्वार्टर में माइक्रो फाइनेंसिंग में थोड़े इम्प्रूवमेंट दिखेंगे, बट स्टिल स्ट्रेस इज देयर, स्ट्रेस है अभी भी माइक्रो फाइनेंसिंग में और इसी कारण ये स्टॉक में भी हमें गिरावट देखी है, जिसके कारण इनके एसेट क्वालिटी पे इम्पैक्ट आया है, निम से स्ट्रेस हुए हैं। तो ओवरऑल इस पर्टिकुलर सेगमेंट में स्ट्रेस तो रहेगा, पर एक्सपेक्टेशन ये है कि 2 से 3 क्वार्टर के बाद ये पर्टिकुलर सेगमेंट में हम थोड़ा इम्प्रूवमेंट एक्सपेक्ट करें। साथ ही में जो कि अभी हमारा रेपो रेट रिड्यूस हुआ है तो कॉस्ट ऑफ बोरोइंग फॉर एनबीएफसी जो है वो कम हो जाएगी। तो ये जो एक ऐसे फैक्टर है ये इनके निम्स को थोड़ा सपोर्ट कर सकता है, बट मैं कहूंगा कि नियर टर्म हमें इस पर्टिकुलर स्टॉक में स्ट्रेस दिखने वाला है। फॉर लॉन्ग टर्म अगर हम विजन देखें, अगर हमारा व्यू यहाँ से 2-3 इयर्स एटलीस्ट होल्ड करने का है तो हम होल्ड कर सकते हैं। वी कैन इवन डू बाय ऑन डिप, बट नियर क्वार्टर्स में स्ट्रेस रहेगा। अगर व्यू इन्वेस्टर का शॉर्ट टर्म है तो उन्हें एग्जिट कर लेना चाहिए।
Okay, thank you so much for that, Vaibhav. Now we are joined by Sanjay on the phone line from Thane. Hi Sanjay, good evening.
Hi, good evening. I have a query regarding Pidilite.
Okay.
I bought it about a year ago at about 3,000 rupees.
Yeah.
The entire market has moved but this share, so it seems like Fevicol is kicking it at the price. I want to know what should I do further? Should I hold on or should I just leave it?
Okay, I'll get your query answered. Vaibhav, Pidilite, you know, he bought it a year back, but now it has fallen even below those levels. He bought it at 3,000. It's currently trading at 2,919. So, and even if I look at the chart, so it's on a downside. So, fundamentally, if you view the counter, how is it?
First of all, that stock is trading at a very, I will say, expensive valuation of PE 70, where industry PE is only of 35. So inka jo means overall the valuation is, I will say, is of 2x, while they have delivered a very mute growth in FY25. So I will say that means it will take time, means that business is quite expensive. So we should be little cautious for this business.
Okay, okay. So a bit of caution is advised on Pidilite. With that, we have Suresh joining us on the phone line from Hyderabad. Hi Suresh, good evening.
Good evening, ma'am.
Yes, please go ahead with the query.
Yeah, I am holding 1,000 shares of G Entertainment Limited.
Okay, okay.
Recently I purchased it and, at 145.
Yeah.
So from past couple of days after these results, yesterday and today it came down.
Yes.
And almost 10% corrected yesterday and today.
Yes.
But I can hold it for next 6 months to 1 year.
Okay.
Just I wanted to know, can I hold this one or can I add more in dips? If I can average it.
Okay.
What is the best level to average and what could be the target which I expect in the next 1 year?
All right, all right. So Vaibhav, like you heard, Suresh talking about Z Entertainment, and he is incurring a loss currently, and especially after, the result, there's a steep downfall that we are seeing there. So, but, is it like a buying opportunity? And fundamentally, how do you view it for like, let's say, a year and a half view on the counter?
It is more about the competitiveness in the market. So Z Entertainment recently have done infusion of funds in their business because they want to compete with Geo Disney. So that's why they recently have done infusion. But I will say, what will be the response of public regarding their that channel and how the investors will get attracted. So these all things will matter in upcoming quarters. So still their business have not shown any robust improvement. So we should wait for the upcoming quarters that how that these investment will impact the business and how these things will support their revenue.
Right, right. Okay, so with that, we have a WhatsApp query with us. Satish from Vishakhapatnam has written to us saying that he's bought 5,000 shares of LIC at 820 a piece. And he has made some significant profits there, over 5 lakh rupees. So Satish, if you're watching the show right now, so many congratulations on this achievement. And so, he's also looking for a long-term view on LIC. Vaibhav, are you optimistic on LIC for the next 1 to 2 years as well? Or do you advise him to book his partial profits at the current juncture?
I will say investors should book partial profit in this stock because LIC always have delivered a good numbers, but still their revenue from the core business is always less. So I will say investors should book partial profit and they can look for the other stock in this particular segment.
Okay, okay. And with that, our technical guest is also joining us. Sarvendra Srivastav is there with us on the show. Hi, Sarvendra. Good evening.
Hi, good evening. Good evening, everyone.
Yes, so Sarvendra, we were discussing about one query. So Satish from Vishakhapatnam actually holds 5,000 shares of LIC and he bought it at 820 and he has made some significant profits of over 5 lakh rupees there. So what advice would you have for him? Vaibhav is suggesting that he should be partially booking his profits. What do you suggest?
See, money on the table is always good. If you take some money home, it's always good. It's only when you sell that you get credit in your account. Rest, everything remains paper wealth. So in that sense, yes, profit taking time to time is always advisable. But in this case, I would tell him, since the stock is making some good setups, so next 3 to 6 months, he can hold. My reading here will be hold, but I will give him a very tight stop loss. And I'll say that he should be keeping a stop loss at 898 on a closing basis. So 24 points from here, just to play out, maybe if this pattern breaks on the upside, he might get targets in the region of around 980,000. Around 1,000, I would tell him to book some profits and keep some dry powder, yes.
Okay, so around 1,000 levels, you can book your profits. It's what Sarvendra is suggesting. With that, we have Pradeep joining us on the phone line from Bengaluru. Hi, Pradeep. Good evening.
Good evening, ma'am.
Yes, please go ahead with the query.
I'm having 200 shares of Marksans Pharma.
Yeah.
Bought at 116 rupees.
Okay.
Now, the profits have nearly doubled. The price has nearly doubled, and I would like to know whether I should hold on for another 1 or 2 years.
Yeah.
Or whether I should book profits at this stage.
Okay.
And if I book profits, at what level?
All right. Okay. So there are 3-level questions there. Firstly, we'll cater to the fundamentals of Marksans Pharma. So Vaibhav, if I look at the valuations and, if I also compare it with its peers, so it's positioned very well and it's very attractive there. So considering all these aspects in mind, do you still suggest that Marksans Pharma is a good bet for a long-term investment purpose?
For long term, I will not recommend Marksans Pharma because companies have exposure in US are facing stress, which is impacting their revenue and their margins. And we don't know what will happen in upcoming quarters. Till the time dust is not getting settled, we should be away from these type of stocks.
Okay. So with Trump tariffs looming, and especially in the pharma space, it's anticipated that there might be some 200% tariffs in the pharma space. But hence the experts are suggesting a bit of caution in the space, viewers. And Sarvendra, and quickly I'd like to come to you as well. How are the charts of Marksans Pharma looking like? Are they pleasing?
See, within that space, I think it will be a smaller name within the pharma space. I think better plays and better stocks there. But since he almost doubled his money here, I would tell him to book half the profit. Half of his stocks always become free. And then possibly if you want to hold for long term, for your free shares, you can possibly hold. And remaining what you book as profits, you can keep as dry powder for next 3-6 months. And definitely within that space, you can look at other names also. I always go with the liquid names. So the top 4-5 liquid names, I think those would be better plays. In a correction, you need to go and look at those large cap names also there.
Okay. Thank you so much for that. Now we are joined by Venkat on the phone line from Chennai. Hi Venkat, good evening.
Hi.
Yes, please go ahead with your query.
This is regarding City Union Bank. I am holding 100 shares at the rate of 220.
Okay.
I need for short term actually.
And when did you buy it?
And maybe a week or 10 days back.
Okay, understood. So a short term outlook, are you looking for a 6 months picture?
Yeah, maybe 6 months, and I need idea on accumulation also. Can I buy now?
Understood. So Sarvendra, City Union Bank is the counter, currently it's trading at 214. Firstly, he bought it at 220 levels just a week back. So although it has dropped down, but still do you suggest that it's a buying on dip opportunity, and should he be accumulating more at these levels?
Buying on dip, certainly not at these levels. You would want a fairly decent dip here. I'll give him a devil's advocate kind of view also here. See, the stock topped out in 2020, and in the entire bull market, when Bank Nifty kept on making new highs, and both the indices gained a lot of ground and almost doubled. Nifty almost doubled from 12K, in fact, from 18 to 26. That would be more comparable here. So from 18 to 26, and Bank Nifty almost doubled from there. So I think this is a laggard, and laggards I don't like. Till you don't get fresh breakouts on volume, I would say that you need to possibly get near your cost. I would say you try and exit and look at better names within that space.
Okay, so exit from City Union Bank is what our experts are suggesting. With that, we have a caller joining us from Hyderabad now. Hi Ashok, good evening.
Good evening.
Yes, please go ahead with your query.
Is it the right time to take the entry in the Lemon Tree Hotel? And it's not for long term, it is this for 6 months time period.
Okay.
And what could be the best level to take an entry on that when seeing the chart, like it is trading at 52-week high?
Yes.
So recently I took a position on that at lower level, and I exited at 150 range. But still it's staying trading in the same range. So is it showing a bullish on technically it is showing the bullish momentum, or if I take an entry on this level,
Yeah.
Can I expect around 10 to 15% in next 6 months to 1 year?
Understood, understood. So, Sarvendra, you've heard the query there. Rightly said, it has seen a bit of a spike on the charts, and it's currently trading near its 1-year highs there. Today it was trading at 157. So do you think that these are the correct levels for somebody who hasn't invested in it and still they can make 10 to 15% of profit in the next 6 months, or these are the elevated levels and they should avoid at this point of time?
See, these are risky levels, no doubt. At a 63, 64 PE multiple, things are not cheap. So that's very, very clear here. And hotel stock at those numbers is definitely more risky and not cheap. The data here is less in the sense that the stock, whatever I can see, the data on the stock is more from the 20s, the 2020 low, and from there it's been a vertical rise up. I think the stock has performed fairly well from 25 odd levels to 150. It's already a six-bagger. I don't see much more headroom for him. Maybe a 160, 165, that's doable. But I would say it's a risky bet, and his time frame is also of less than 1 year. So within that zone, I think there's definitely a risk to a fallback towards 130, 135. So I think these are not the safer levels to buy more. And in fact, if he has the stocks, I think 165 would be a good area to book some profits.
Okay. So now we have Prasad on the phone line from Bengaluru. Hi Prasad, good evening.
Hi, good evening. Well, my question is to Mr. Sarvendra, sir.
Yeah.
I hold around 25 shares of Azar Engineering, bought at a price of 1,700.
Yeah.
Certainly, it was for a medium to long term. No doubt the valuations are off the roof. And what I'm looking is, I'm thinking to add a few more quantities at the current level.
Okay.
Now, I'd like to know what will be his views on this.
Okay, so Azad Engineering, quickly, Sarvendra, if you could just tell us that currently it's trading at 1,585. Okay, so are these the correct levels to enter and accumulate more?
See, it's a very illiquid stock. It's a very, very illiquid stock because it trades around 50 or 1,000 shares per day. So I would put it in the category of slightly liquid stocks. In that sense, you always carry more. You carry more the basis risk, and the beta is also always higher for these kind of stocks. Data is only from 2023, what I can see on NSE, and broadly, I think it's been struggling around that 2,000 mark. 3 attempts at 2,000, slightly one tick higher than there, but could not close above those numbers. And once it does not do that, it usually slips towards the 1,350, 1,400 mark. So 1,400 to 2,000 is the last 12-month trading range. So I think you are just in the middle of that range. So if you want to do anything else in this, I think you will have to let it cool off towards 1,350. If you want to do something fresh, else around that 2,000 mark, you should be booking some profits till you don't get a decisive breakout going forward.
Absolutely. Thank you so much, Sarvendra. And with that, we have Murli joining us on the phone line from Bengaluru. Hi, Mr. Murli. Good evening.
Good evening, ma'am.
Yes, Mr. Murli, quickly today, if you could just ask your question because we are running short of time.
Yeah. I have bought I am holding 1,300 shares of Triveni Turbine.
Yeah.
At the rate of 653.31.
Okay.
While investing, I was looking at the 5-year CAGR, the PE of other like BEL, BHEL, Thermax and all. It is a debt-free company. It's a 50% CAGR growth and turnover and profit.
Yes.
It is high PE company compared to others. What shall I do now? I am willing to wait for a long term.
Okay.
It is in steam turbine manufacturing.
Understood. Vaibhav, quickly, I want you to take this doubt of Mr. Murli. Triveni Turbine is the company's name and he's incurring a loss currently. So what's your fundamental outlook on the counter?
Surely we can hold this stock as this stock is trading at a very attractive valuation of 56, and this company is into the power generation and equipment solution. So we can expect good growth in this particular segment, which will support its revenue growth and its valuation in the upcoming quarters.
Right. Thank you so much, Vaibhav, for that. And with that, I'm afraid that we are running short of time. But thank you so much, Sarvendra and Vaibhav, for being there and patiently solving our viewers' queries as always. Thank you so much. And viewers, Dr. Reddy's Q1 profit has grown over 1%, but they have missed the estimates. So US business degrew by 11% due to increased price erosion in certain products, while India business witnessed 11% growth. Meanwhile, margin also have declined on the back of price erosion in the generic segment. Have a look.
I'll start with the US business first. We saw a decline of almost 11% in US revenues on the back of pricing erosion when it comes to Revlimid. What is the outlook for US for the whole year, that is FY26?
Sure. So what you saw is something that we had expected, which is pricing pressure around the generic Revlimid and also some of our base products. However, as we go along, we do expect to see that we would be in the US flat, maybe slight amount of growth. But overall, the company also has been able to deliver on a double-digit growth. This is thanks to the rest of the businesses, whether it is India, emerging markets, Europe, PSCI, all growing well. And as we go along, these businesses are expected to contribute to the rest of the year as well.
Got that point, sir. Also, you've launched 5 new products in US. Just wanted to know, when can you see the ramp up of those 5 products?
So we launch products normally about 15 to 20 products in the US. Normally they do have a ramp up. The first products that we launch in the quarter ramp up over the next few quarters, and then you have some of them that we launched in the last year that will start to show the growth in the current year. So this is something that is normal in the US, and we expect that ramp up to also contribute to improving the growth in the US.
Okay, so sir, now the main point behind asking this question was the fall in the US that we have seen. Will this be compensated by the new products that you have launched for FY26?
So if you see at an overall company level, we have grown well in terms of a double digit. And the way to look into it is that US has got both new products as well as volume growth. We do have lenalidomide that would be meaningful for another quarter as well. And on top of it, the India business, the emerging markets business, the Europe business, along with the NRT, will continue to drive double digits. So at an overall company level, you would see a healthy growth.
Got that point. Sir, on the NRT business that you were speaking about, can you just give us the update there? How is the business going on, and how is FY26 looking when it comes to the NRT business?
Sure. I think the integration is going well. In the markets where the transition has already taken place, we have been able to take the business, and the recent transition has been in North